kindly do not skip this introduction what I'm talking about. Fine. This is income tax marathon which is newly done, completely applicable for May 26, September 26 and Jan 27 exams. Even if you are a CMA student, for you also the same marathon is equally applicable for June 26 and December 26 exams. Guys, this marathon is going to be totally in two parts. Almost 21 hours I did this marathon. I'm telling you, you are going to experience income tax like never before. I made very detailed marathon this time. All the CA Inter and CMA Inter students, I'm telling you, you will really love the content like anything. Now, look at the timestamps below. We have given timestamps, right? Look at below the timestamps. You will find which part marathon you're watching. For example, part 1 marathon will have these topics: basics, which has a weightage of 6 marks, agriculture taxation, which has a weightage of 4, sometimes even 6 marks, PGBP, almost 5 hours I discussed PGBP chapter in depth. Capital gains, immovable property taxation is discussed in this part 1, TDS, TCS. Guess what? This time I'll tell you one point. There are 7 chapters where amendments happen. 7 chapters amendments happen, guys. This time 7 chapters. Substantial number of amendments happen, guys. So don't take it granted. For example, in basic topics, default tax regime, complete rates were amended. Rebate provision under default tax regime is fully amended. It's not even like what you think. The substantial amendment. Salaries chapter, specified employee limit is amended. Medical facility travel reimbursement exemption limit has been changed. House property, unoccupied property amendment, PGBP 43B, micro small enterprise limits have been changed. Chapter 6A, ATCCT, very minor amendment, not a big deal at all. TDS, TCS, again, substantial amendments happen. Many sections, more than 15 sections were amended in TDS. Substantial amendment, guys. And return of income, a biggest provision in return of income is updated return, and that got amended. And guys, what topics I'm going to cover in the marathon? 100% of the income tax except one topic, that is return of income. Only return of income I have not yet covered in the marathon in these 2 parts. Part 1 will cover these topics. Part 2 will have residential status, salaries, house property, IFOS, clubbing, set off and carry forward, chapter 6A, AMT. Now, here I just want to give one small disclaimer. IFOS, clubbing, set off, and then chapter 6A. These 4, literally we don't have any amendments. For these 4 topics, I'm using for now my previous version recording, which is as part of part number 2. Okay, again I will do new version marathon and again post it again along with return of income. But I need one favor from you. Please like the video. Many of you are appreciating my content and sharing to your friends. All that is good, but please show by liking the video and commenting. Definitely you will be learning a lot of new points in this marathon. I will be very happy if you comment and appreciate, because that motivates us a lot to do more and more videos, and share it to your friends also. Guys, please, there is a couple of introduction that is there, continuation, where to download the books, what is the weightage available, all that were discussed in the part 1 video. Please watch the part 1 video. If at all any of you are directly watching part 2 video, please go back and watch part 1 video, guys. And one more important clarification, below timestamps were given. Okay, in the part 1 video, these are the topics which are covered. In part 2 video, these are the topics which are covered. Remember, your income tax paper with choice will be 65 marks, guys. It's not 50. With choice, it is 65 marks. 100% syllabus I'm covering in this marathon. Total marathon, including return of income, upcoming, going to be put together will be 22 to 23 hours, guys. Exhaustive mega marathon, which is what I'm giving you. Okay, that's it. Continue watching. Do not even skip 1 minute. Okay, continue watching. You will experience income tax like never before. That's it. All the very best. Yeah, before we even discuss about this marathon, the first and most important rule, when you're listening to the class, or those of you online who are watching the class, every minute is important. First, watch at standard speed. I mean, those of you in face-to-face, you don't have an option. You have to watch at standard speed, obviously. Online also, it's already a marathon. Please watch at standard speed, first point. every minute. Don't skip it. In whatever order I have given this marathon, whatever the order I uploaded the video, in the same timestamp order you follow. If at all you are trying to follow in a different order, nothing, you will understand everything clearly, but that comprehensive learning cannot be established. For the income tax, whatever this 14-15 hours of income tax marathon I'm going to give you, completely surrender, and I will show you a different version of income tax to you. Complete whatever exam, whatever the level of hardness the paper is going to come for, you will find it with utmost ease. It's not at all difficult. So listen in the same order, because now every chapter is linked with every other chapter. So it's not learning PGBP directly, learning capital gains directly, learning TDS chapter directly. Listen in this order, you will understand income tax in a different dimension. Many students, they will be very hurry. They want to straight away open income tax marathon. TDS, where is it? Where TDS has amendments, they'll directly go there. And again, they'll suddenly remember, oh, I'm weak in capital gains. They'll go back to capital gains. Again, they'll remember a house property, one point I forgot. They'll go back to house property. Their learning itself is not structured. When the learning is not structured, when they see question also, they can't apply structured thoughts on the question. Remember, a question, total income, 15 marks question is very structured. Yes or no? You have a method to apply. In fact, in my particular GOAT notes, if you look at 200th page, I have given one format, how to solve a total income question. What are all checkpoints in total income? I gave a checkpoint. Understood? Like for example, when you're reading the question, identify residential status. When you're reading the question, identify the regime. Identify which head of income they are predominantly testing. Like that, we will discuss in total income topic. When I'm discussing total income topics, when you're doing tax computation, what points you should check. How to check AMT and how tax computation format should be presented. Entire approach to total income solving. How to solve total income problem approach just given in one page. Understood? So like this approach you can understand, you can apply the provisions correctly only when you listen in a structured manner, only when you listen in the order I uploaded. And trust in this order, trust in this particular marathon for next 14-15 hours, you will see a different dimension of income tax. You will understand everything very clearly, all the dots connected easily. Understood? Yeah. So let's begin the income tax revision session which is applicable for May 26, September 26 and Jan 27. For all the 3 attempts, this revision session will be useful. Okay. Now, first of all, what is the paper structure? Taxation paper structure. Let's look into that. So this is group 1, paper 3, part A. But total paper 3 is completely, we have something called taxation, which has 2 parts. One is income tax and another one is GST. If at all any of your CMA students, and in part B you have GST plus customs, but customs weightage in CMA Inter is somewhere around 5 to 10 marks only, not more than that. Okay, so GST is what predominant weightage place. So income tax and GST, you know how many marks taxation paper will come with choice? Close to 124 to 130 marks. With choice, the total taxation paper, be it income tax and GST put together, with choice will be 124 to 130, which means minimum income tax will come minimum weightage for 62, GST minimum weightage of 62. And within this, how they will ask you? 15 marks MCQ. If you look at income tax, 15 marks portion will be MCQs. Rest of the 47 to 50 marks will be for descriptive, and in that 35 marks only you have to attempt. Rest of the 15 marks approximately will be choice. Understood? Now, how this 35 marks will also be tested in exam? Out of this 35 marks, 15 marks will be a total income question. First question, which is compulsory question, in the sense there is no choice on that. Compulsory question means what? If you do not write, your exam paper will not be valued. Not that. Compulsory question means it does not counted. It will not be counted for choice purpose. That's what the meaning of compulsory question. So 15 marks. Then you have 20 marks, right? You will have 10 marks questions of 2. 10 marks questions you will have. Again, within this 10 marks question, 2 questions will be there, right? For example, it may be question number 2A or 2B, and 3A and 3B. Understood? Now this will be for 6 marks. This will be for 4 marks. This will be for 6 marks. This will be for 4 marks. Apart from these 2, there will be one more question. So this is question number 1 in descriptive. This is question number 2 in descriptive. This is question number 3 in descriptive. Then you will have question number 4. This is also asked for 10 marks to 14 marks sometimes. It will also be asked for 10 to 14 marks sometimes. Understood? Now, this question will have a weightage of approximate, this question also will be, and between 2, 3 and 4, you will have to attempt any 2. That's how the paper will come. So, that's how here 10 to 14 marks choice will be there. Approximately 10 to 14 marks of choice will be there. Understood? Generally, the last question, fourth question will always have return of income question. Fourth question will always have return of income question. Fine. So this is how the paper composition of income tax. Now, so this is regarding paper composition. Okay. I'll just stop the video and then immediately we'll continue. Yes. So just now we understood what is the paper weightage, like how income tax paper will be set, in the sense 15 marks MCQ we understood, and how the descriptive paper comes. Now, for May exams, for May 26 or September 26 or Jan 27, for these 3 attempts, what income tax law is applicable? The income tax law applicable is Income Tax Act 1961 only. Okay. Whatever is applicable for September May attempt, the same is applicable for September, the same is applicable for January 27 as well. Okay. And Income Tax Act 1961 is only applicable. And further remember, Finance Act, I hope you know, right? Every year the tax law gets updated with the latest Finance Act. Every year, any amendments government want to bring in the income tax law, how they will amend it? They will not amend directly the act. They will amend it through Finance Act. Yes or no? They will present every year finance bill, and through the finance bill amendment will be brought, that is called as Finance Act. Now, for May 2026 and September 2026 and Jan 2027, Finance Act 2025 gets attracted. That is applicable. First point. Second one, many of you would have seen new income tax law, which is applicable from 1st April 2026. New income tax law, which is applicable from 1st April 2026. What about that? New Income Tax Act 2025 is there, right? What is actually, it's actually called as Income Tax Act 2025. That is not applicable till January 27 exams. Income Tax Act 2025, that is applicable only from May 2027 exams onwards. So next 3 attempts, May, September, Jan 2027. Right now in this marathon, whatever I'm going to discuss in this particular marathon, the same provisions will apply. Now further, now for May 2026 exam, if at all you ask me which book is relevant in ICA resources, direct study material of ICA is there, right? Whatever the study material of ICA is there, right? That itself is relevant for May 2026 exams. If any of you are writing September attempt, there might be a possibility of a supplementary material gets released. That too 2 months before exam. Maybe after you write May attempt, no. For September attempt, supplementary material will come. Maximum amendments will be in 1 or 2 pages. That's it. For September attempt. Because for September and January, you will not find any amendments. Generally for September and January, you will not find any amendments. Basically, you will find substantial amendments only for May. Why? Because the Finance Act gets attracted only for May. Very simple. Right now, what I told you, Finance Act 2025. Tell me, in your exam, what is the previous year assessment year is tested? In the May 26, in the September 26, in January 2027. Which previous year gets tested? Previous year 25-26. This previous year is what get tested. Nothing but assessment year 26 and assessment year nothing but 26 and 27. Now for previous year 25-26, which Finance Act is applicable? Just before starting this year, which Finance Act came? Finance Act 2025 came, right? That is applicable. Finance Act 2025, when, in which month it will become an act? In February 2025, this has been released in the budget, in the parliamentary session. In March or April, it would have got approved by March itself. March itself, it would have got President's approval. Understood? So it is applicable for the immediate year. Tell me, can a law bring amendment for the past period, or the law is bringing amendment generally for future period? For which period they bring amendment for? Exactly. Finance Act 25 is applicable for which year? Upcoming financial year. Able to understand? So Finance Act 25 is applicable for 25-26 financial year. Nothing but in income tax, we don't use the word financial year word, right? So what we use? Previous year 25-26. Agreed? Now, for your exam, how do we know? How do we know which previous year, which assessment year is applicable? How do we know that? Simple. Suppose you are writing May 26 attempt. Okay? In exam, they can test question related to a previous year which is already completed in reality. In reality, which previous year is already completed? Suppose you are writing exam in May 2026 exactly. You are writing exam in which year? Which year? May 2026. Tell me, May 2026 comes under which financial year? Which year it comes under? 26-27? Which means your question paper will be based on assessment year 26-27. Suppose you are writing exam in September 2026. Which year it comes under? 26-27. Which means again your assessment year is 26-27. You are writing Jan 27 exam. It comes under which year? 26-27. Which means even for Jan 27 attempt, Jan 27 attempt, assessment year that is tested in exam is 26-27. Do you understand? For all these three, corresponding previous year is what? Previous year 25-26. For previous year 25-26, which Finance Act is applicable? Finance Act 25 is applicable. That's how we derive. Do you understand that? So which Finance Act is applicable for your attempt? Simple. That year, which assessment year writing the exam? You are writing exam in which assessment year? For that assessment year, what is the relevant previous year? For that, what Finance Act is applicable? That's how you can derive it. Suppose if you are writing exam in May 2027, it comes under which year? 27-28. Which means for 27-28 assessment year, which income tax law is applicable? That income tax law which is applicable for the previous year 26-27. For previous year 26-27, new income tax law is applicable. That's it. Do you understand? Nothing to break. No need to break your head. This is how the concept you have to remember. Clear? That's it. So for you, May 26 and September 26 and Jan 27 attempt, or for CMA students, June 26 and December 26 exams. Okay? CA up to Jan 27. CMA up to December 26. The Finance Act applicable is Finance Act 2025. The previous year applicable is 25-26. The assessment year applicable is 26-27. And the conclusion is New Income Tax Act 2025 is not applicable for this. So you don't have to worry up to Jan 2027 attempt. Clear? So this is the first clarification. Okay, that's it. I'll just stop the video and then continue. Yes. Now coming to, in this marathon, what resources I'm going to use? I'm going to use two main resources. One is my GoTo Notes, which is exactly 200 pages. Entire CA Inter and CMA Inter income tax is exactly presented in 200 pages. 200 pages. Now, within this 200 pages, do we cover entire ICA study material? More than that we cover. More than that we cover. For example, you see any MCQ in the case scenario booklet. I hope you know, right? In CA Inter, we have 25 case scenario booklet. Okay, for May 26 attempt, I think Institute have not yet released. But for Jan 26, September 25, May 25, old attempts, no, they have released a case study booklet. In that case study booklet, so many questions are there. So many new unique points will be there. Even those points we covered. Past exam questions, critical adjustments, they were also covered in this particular GoTo Notes as an adjustment. Okay, for example, I'll show you how in this notes the speciality. Okay, we have a section called 40B, right? Just an example of 40B I'll show you. Yeah, you see here, there is one provision. For example, if you observe, there is a section called 43B in PGBP. Okay, I hope those of you who didn't remember 43B, in PGBP, some expenses you get deduction only if you actually pay them. MSME, SNO, interest on borrowed loan, like that, some expenses. If you observe here, you know, I just mentioned like this notes, 43B and 40A3, 40A3A put together, one adjustment has been asked in September 24 attempt. A very complicated adjustment. Only a student who really understood all these sections in depth with the concept, only they can answer that. Others, it's very tough. Like this, you will find at so many places references. Not just that reference, you will also find a crisper version. And again, I'll show you. For example, you see there is a section called 40B, firms. Partnership form, interest on capital paid to partner, remuneration paid to partner, yes or no? There also, this point is there. This is actually a case study. Income tax case study booklet is there, right? In that, in one of the MCQ, they test this level, this depth they will test. That depth, no, many students will not have clarity at all. Even those points we have added in this book. Even you take house property chapter, you take salaries chapter, everywhere you take. We designed this entire book. Absolutely keep in mind, 1, ICA provisions 100%. 2, past exam questions. 3, case scenario booklet. All adjustments, critical adjustments, which you generally cannot understand quickly. Those adjustments were also summarized and then kept here as a reference. So at that level, this book was prepared. Then another resource which I will be using in this marathon occasionally is my question bank. Okay, and this question bank, if you see, you can see, by the way, these PDFs are absolutely available at free of cost. You can happily take, go to our website CA.com. You go to free resources, you can download the PDF and you can take printout also. You don't have to buy the color book also. Your choice, absolutely. PDF is, that's why open PDF we always keep. Okay, now look at. So in this question bank, you will have all ICA related questions 260 in all the chapters put together. And we have selected 115 past exam questions, MTP questions, RTP questions, past exam questions, which are unique. These questions, no, they were not in this 260. These are absolutely unique questions. Total in this question bank, only under income tax, you are going to solve 375 questions which are unique. You get in every dimension tested. In every dimension you will be tested. And the specialty in this question bank is, you can see this is multicolored one. And for example, I'll show you total income questions. For example, if you go to total income chapter, you can see here total income questions. For example, this question is related to some May 2025 15 marks question in MTP. For May 2025, which finance act is applicable? 25-26 assessment year, which means 24-25 previous year, which means finance act 24 is applicable. Am I right? But we updated this question completely. We updated this question completely as per the latest assessment year. We updated the question and answer as per latest assessment year. As per latest provisions, we updated the entire answer. Understood? Every question is updated with entire latest provision. With all, even tax liability computation, everything is computed based on latest provisions. So you don't have to worry about any question bank in the market. You get 100% coverage in this question bank itself. Understood? With updated answers, which is applicable for your May 26, September 26 and Jan 27. If you are CMA, June 26 and December 26. Clear? So that's it. So these resources I'm going to use. And apart from that, I will be using the notes here. I'll be scribbling something here. But some students ask me, sir, can you give me this PDF scribbled notes? I scribble worst handwriting. Okay, I'll just randomly scribble. It will not be useful to you later. While you're watching the class, it will feel like it's good. But when you're subsequently opening it and referring it, you will in fact have a confusion. So you can better maintain your own notes when you're watching this marathon. Okay, in a neat, see, 99% focus on listening. When I'm solving, you also solve along with me. For every provision, I will solve, a practical question on that. I will solve a practical question while I'm discussing you. And I bet May 26 attempt or September 26 attempt or Jan 27 attempt, any attempt, whatever, you will find every adjustment in that question papers, something reference in this marathon. I bet you will not find a new question in that. You can check my previous marathons also. This is what I did. Even the Jan 26 tough paper came right. Even those different kind of questions we covered in our previous marathon. And this time I'll be little more detailed. Clear? That's it. So this is regarding the books and PDF resources that you can use. And if at all you want a hard copy, on the same website it is available, hard copy also. That's it. Yeah. Now let us proceed with the first chapter, that is basics of income tax. This chapter is most important. If you do not understand this chapter, 6 marks you can't attempt. In MCQ, you will have one tax computation problem. Pakka. In 15 marks question descriptive, in that also you have to compute the tax. where the tax computation will have a weightage of 4 marks, which means the basic concept chapter has a weightage of 6 marks literally. Understood? And only if you understand this, at some other problems also they will ask you on a tax computation, so that you can answer. So in the basics of income tax, we are actually going to compute tax liability, how to compute the tax. First of all, we have totally 13 chapters. First chapter is basic concepts, last chapter is total income concept. Understood? How to solve problems on total income. I'll tell you the first and most important thing. In income tax, it's not how many problems you solve, it's what level of command you have. That's proved once again in Jan 26 attempt. There are many students who solved top 50 problems, top 100 problems, yet they could not even understand the question in Jan 26. The only reason, because in Jan 26 they tested literally the concept. They didn't test whatever you solved earlier. A student who really understood the provision can write that. And I'll tell you what exactly understanding of provision means. Everywhere you will find all your gaps, whatever that are there in your learning, I will close that gaps. Every dot I'll connect in taxation. Clear? Now, so you know, in our CA Inter, we predominantly discuss about individual taxation and HUF taxation. See, there are various types of SSEs: individual, HUF, partnership firm, company, society, and charitable trust. These are 6 major types of SSEs, mainly under income tax law important. Apart from that, artificial judicial persons, local authorities like that and all were there, but they are not that important. Even at CA final also, they were not that important. At CA Inter, we predominantly focus on individual taxation and we also focus on firms taxation. We do not have corporate taxation. We do not have companies taxation, companies assessment we do not have in our syllabus. We only have individual taxation. Now, what are the amendments that are applicable for May 26, September 26 and Jan 27? What amendments are applicable? Because no, for every May, it's a new law which is applicable. It's a new finance act which is applicable. No, like suppose you wrote September attempt and you're writing Jan. What amendments will be there? And nothing much. 1 or 2 amendments, that's it. But Jan 26 to May, substantial amendments will be there. So many amendments will be there. And this time, for May 26 exams, almost in every chapter you will find an amendment. Almost in every chapter you will find an amendment. And in a chapter like TDS TCS, there is a chapter called TDS TCS. Almost every section is amended. 10 sections, more than 10 sections you will find amendment. 3 or 4 sections they deleted. Understood? I'll tell you, once we start revision of TDS, you will understand. Okay? Now, amendments. Now, in the basic concepts, where amendments are available, first of all, where amendments are there in the basic concepts topic. The amendments that are there in basic concepts topic is, first of all, default tax regime. What is default tax regime? They discussed in basic concepts chapter only, but we should not discuss DTR directly at first chapter. We should discuss it slowly at various heads of income. You should not discuss DTR at a time in basic concepts. Fine. This default tax regime, the tax rates were amended. What is amended? Tax rates were amended. Then 87A, rebate provision for default tax regime cases, substantial amendment, major amendment that was. It's a substantial amendment. These are the 2 amendments that happened. Apart from this, there is also third amendment. There is a third amendment on special tax rates. What is it? Some special tax rate, a slight amendment is there, which is already there in Jan attempt also, which is there already for Jan. The same is carry forwarded now. But we should discuss this separately, exclusively once again. These are the 3 major amendments. Now, in the basic concepts of income tax, tell me what is the objective of learning? What is the objective of learning in the basic concepts of tax? You should compute, you should know how to tax computation. This is the main objective in this chapter. Another objective of learning in this chapter is agriculture income taxation. So what is agriculture income? What is not an agriculture income? What to do? How to compute tax if agriculture income is there? That we are going to learn. These are the 2 important things that we are going to learn in the basic concepts chapter. Okay, and wherever amendment comes, that I will give you crystal clear idea on how to read, how to apply that amendment exactly. Understood? That's it. Now, just a minute. So tell me, what are the learning objectives in first chapter? One is tax computation. How to compute the tax. Then the second objective is agriculture income taxation. Correct? And how should you compute the tax? First to know, when you are computing the tax, see, obviously tell me, tax is computed by us on what? Total income. Correct? Tax is computed by us on total income. Fine. So there is a tax computation format which I gave. You have to follow in exam the same format, the same steps you should follow. Then you will compute the tax without a mistake. Understand? See, when you are learning income tax, the first rule, you need to understand how to apply the provision. Two, there is a way to present. There is a way to write the answer. That steps of writing the answer, if you do not miss, provision clarity you have, steps of writing the answer also, you are following exactly the step. Wrong question, the answer, answering, deriving, arriving a wrong answer, 0% probability. You will get a right answer, obviously. If you follow, if you understand the provision and application correctly, and also follow a systematic presentation pattern, the chance of wrong answer is 0. So both are required. Some students, they understand provision, but they don't know how to present it systematically. Best example, how to compute tax. That itself is a best example. First of all, tell me, tax is computed on what? Tax is computed on total income. Am I right? What do you mean by total income? Gross total income minus chapter 6A deductions and 10AA deductions. Am I right? Once you reduce this, then what you derive is called as total income. On this total income, we compute first basic tax. By the way, on this total income only we should compute tax liability. Am I right? Now, what is meant by tax? What do you mean by tax computation? Now here there are 2 points. One is gross tax liability. The meaning is different. Tax payable, the meaning is different. Tax payable is different. Gross tax liability is different. Now in the exam, when you say an MCQ, what the information they'll give you is total income. Sometimes what they do, they will give you information about gross total income. They will give you information about deductions. They will also give you information about regime. Using that, you should derive just total income information you should derive. Then you should apply tax rates and then compute the tax. Now, when you're computing tax on total income, the first thing what you should compute, basic tax. The first thing what you should compute is basic tax. After you compute basic tax, then you should add surcharge. Sometimes surcharge may not apply there. Sometimes you might have a rebate. Sometimes you might have a rebate under 87A. Rebate might be there. So basic tax, add surcharge, less rebate. Either of this only. In between these two, any one only will come. Yes or no? Then what you will get is subtotal. Am I right? On this you should add cess at 4%. Some students, what they do, they add cess on basic tax, then add surcharge, then rebate. So after reducing either rebate or after adding surcharge, then what you get is subtotal. On that you will add, cess. Further, sometimes you will not reduce rebate. Sometimes you will reduce something called marginal relief. Don't worry, in this year we have given. So first what you should compute? Basic tax. How should we compute basic tax? We will discuss with numbers now. Then add surcharge if applicable. Then what you will get is subtotal. Then from the subtotal, you have to either reduce rebate if rebate is applicable, relief if relief is applicable. Then again you get subtotal. Which means right now, this is the tax amount after considering surcharge, after considering rebate, after considering relief. On that tax only you should add education cess. Then what you get is gross tax liability. Now, what do you mean by gross tax liability and tax payable? Gross tax liability and tax payable, what is the difference? The difference is minus from gross tax liability, you reduce advance tax, minus you reduce TDS, TCS information given in the question. So, what you will get is called as tax payable. Sometimes in exam, in MCQ, they will ask you tax payable information. Whereas in all the 4 options, in one option they'll give you gross tax liability answer. Another options they'll give you tax payable option. When the question is tax payable, you should figure out what is tax payable. You should select that option which is tax payable. This is the first difference you should understand. Tax liability means what? How much tax you should pay. Tax payable means what? How much tax you are yet liable to pay, balance amount after reducing advance tax, after reducing TDS, TCS, all that. Do you understand? Fine. Anyhow, when advance tax topic comes, there I will discuss much about this difference between GT and TP. What is gross tax liability and tax payable? I will discuss there. Now, first, what is the first thing we need to understand? Basic tax computation. How should we compute basic tax? Okay. Now, I told you, you should compute tax on what? Total income. Suppose they gave you total income of, let us assume 20 lakh. They gave you a total income of, let us assume 20 lakh. Now you should compute the tax. The first thing you should understand is what regime they are asking, what regime they are testing us. There are two regimes. One is default tax regime. Another one we call it as optional tax regime or normal tax regime or regular provisions of Income Tax Act. How optional tax regime is referred as? Either they can refer as optional tax regime, or they can refer it as normal tax regime, or they can refer it as regular provisions of income tax law. Any of these words they can refer. Sometimes they will not even tell you directly like this. What they will tell you, SSC opted out. What they will mention? SSC opted out. Even that easy sentence also they'll all use. They'll use a complicated sentence. SSC exercised. SSC exercised the option of shifting out. The SSC has exercised the option of shifting out under 115 BAC. They will mention this word, but our students, they look at 115 BAC and they will compute answering on default tax regime. They will compute answer based on default tax regime, which is absolutely wrong. SSC exercised the option of shifting out. Tell me, default tax regime, what do you mean by that? By default, 115 BAC regime is only applicable. Am I right? If at all you didn't choose anything, if SSC does not explicitly choose anything, what tax regime is applicable? What tax rates are applicable? Default tax regime, 115 BAC tax rates are applicable. Am I right? That's why it's called default. By default, this regime is only applicable. You don't want to pay like this? Then exercise the shifting out option. Under 115 BAC, one of the subsections says how to shift out. By default, you are part of 115 BAC. You are an individual, you are a HUF, you are an AOP, you are a BOI, you are an artificial judicial person. 115 BAC is a by default option for you. You are by default covered under 115 BAC purview. You want to come out of it? Exercise the shifting out option. Exercise the shifting out option. Correct? So SSC has to exercise shifting out. If you don't exercise, you are in default tax regime. If you exercise, you are out of default tax regime. In exam, they will not tell you whether you are in the default tax regime or out of default tax regime directly. They will tell you, SSC exercised the option. Which option you exercised? Shifting out option you exercised. You exercised shifting out under 115 BAC means you are going with normal provisions of income tax law, which is also called as optional tax regime. Are you clear? Which is also called as what? Optional tax regime. If you exercise the shifting out. Now, how do they say that you are choosing default tax regime? In exam, how do they say SSC is choosing default tax regime? How they say SSC not exercised? Here the word they will use is not exercised. That's it, which means default tax regime. You see how complication? Instead of directly saying 115 BAC DTR, they say SSC not exercised. Shifting out means shifting out you didn't choose, which means you chosen to be in the default tax regime, which means it is default tax regime. Understood? Now, why this differentiation is required? Why this? Why this regime? What is the impact of this regime? The impact of the regime is the slab rates are different. I hope you know, right? Individuals, HUF, artificial judicial persons, AOP, BOI, they are all liable to income tax at slab rates. Yes or no? They are all liable to income tax at a slab rate. Now, you know what? Default tax regime has another name, concessional tax regime. It also has another name. What? Concessional tax regime. Tell me where the tax liability, basic tax answer will come lower. Optional tax regime, you get a lesser answer. A basic tax, default tax regime. Default tax regime. Because in default tax regime, the slab rates are very small. In the sense, the tax rates are very small. Yes or no? We'll understand that. We'll understand that. Getting it? Whereas in optional tax regime, the tax rates are higher. Tell me, what are the tax rates first of all under optional tax regime? Under optional tax regime means regular provisions of income tax. Optional. Why they said optional? You have to choose it. That is your option. Yes or no? You have to exercise the option of shifting out. You exercise the option of shifting out, then you choose an optional regime. You didn't exercise the option of shifting out, then you didn't choose the option. Means default tax regime. You choose the option, optional tax regime. You didn't choose the option, default tax regime. You understood the wordings, how it came? Able to understand? So, optional tax regime. What are the tax rates basically? What are the tax rates basically? Now, before I even further discuss, in exam they will give you total income. Am I right? Or you might have to compute total income. Am I right? Whenever you compute total income, no, before you compute tax, the first and most important check is you should split this total income into two types. You should split this total income into two types. One, normal incomes. What is it? Normal incomes. And another one, special incomes. What is a normal income? What is a special income? Normal incomes are the incomes which are taxable at normal rates of tax. These are taxable at what rates of tax? Normal rates of tax. Whereas these incomes are taxable at special rates. What do you mean by normal rates? What do you mean by special rates? Now, for example, every one of you know, right? Long-term capital gain 112. Long-term capital gain 112A. Short-term capital gain 111A. Winnings income 115BB. Yes or no? Or any other winning and 115BA. Okay. All these incomes, for example, long-term capital gain under 112, the tax rate is 12.5%. I'm only discussing new tax rate. I'm not discussing the old tax rate of 20%. I will come back to that in capital gains chapter. Right now, I will not touch that. Long-term capital gains under 112A, even that also taxable at 12.5%, exceeding 1.25 lakh worth of capital gain. If at all you have a long-term capital gain under 112A, suppose I'm having 3 lakh, or let us assume I'm having 2.25 lakh. There is a long-term capital gain during the year for me, and that long-term capital gain is taxable under 112A. How much amount I got? 2.25 lakh I got. 1 lakh only taxable. How much is taxable? 1 lakh only taxable. Up to 1 lakh 25, the tax rate is 0. Beyond 1 lakh 25, the tax rate is 12.5%. Fine. When I am discussing that special rate of tax computation, there I will in-depth focus on that. Then 111A, the tax rate is 20%. Right now the tax rate is what? 20. Old rate is 15. Again 115BB, all that winnings, the tax rate is 30. Now these are all special rates of tax which are applicable for the respective special income. Am I right? Now these tax rates are constant. Whether the SSC is an individual, a partnership firm, a company, a society, or an AOP, or a BOI, or a political party, doesn't matter. These incomes for every type of SSC, they are taxable at the same rate. That's why we can call them as income specific tax rates. What are they? Income specific tax rates. These are the tax rates which are based on type of income, not based on type of SSC. Whereas normal incomes are those incomes which are taxable at rates applicable to the SSC. These normal income tax rates are also called as SSC specific tax rates. What is it also called as? SSC specific tax rate. Now here, at what rate normal income is taxable? It depends on the type of the SSC. Individual, slab rate. Partnership firm, flat 30%. Company, flat 30%. Foreign company, flat 40%. A society, again slab rates. So which incomes are taxable at these rates and all? Normal incomes. The special rates are not relevant when you are computing tax on normal income. Do you understand? Normal incomes are nothing but those incomes which are taxable at SSC specific rates. SSC specific rates means what? What is the tax rate for company? What is the tax rate for firm? What is the tax rate for individual? When you say what is the tax rate for so and so SSC, you are asking tax rate of incomes which are chargeable to tax at normal rates based upon type of SSC. Are you clear? Now, with respect to individuals, or HUF, or BOI, or AOP, or artificial judicial person, what is the tax rate applicable for these SSCs? When I say tax rate applicable for these SSCs means I am worried about normal incomes or special incomes. Normal incomes. Special incomes I will not discuss. SSC name itself not required for me. Who is he? I don't require. Yes or no? You got long-term capital gain. I won't ask you who is he. Who is he? Company or firm, unnecessary for me. 12.5% tax rate. If it's a long-term capital gain 112A, 12.5% tax rate. That's it. Sir, you didn't ask who am I? Company or firm, you didn't ask. It doesn't matter for me. Suppose you are saying normal income. Normal short-term capital gain you asked me. Sir, I have a short-term capital gain, not a 111 year, sir. Normal short-term capital gain. Or I have received a gift, sir. Now, tell me what is the tax rate. Then I'll ask you, who are you? Individual, BOI, AOP, company, firm, who are you? I'll ask you. So, only for normal incomes which are not taxable at special rates, I want to know the status of the SSC. Are you clear? Now, so individuals, for them know what is the tax rate that is applicable? Slab rate. What is the tax rate applicable? Slab rate. Now, within that, I will focus on individuals the most because this is what important for us. Okay. Now, individuals. Now, when you are computing tax, you should first identify, did the SSC choose in the option or not? Choose in the option means shifting out he chosen, means optional tax regime. If at all he didn't choose the option, means default tax regime. Am I right? Now, SSC choose in the option to shift out. For example, so that means SSC is choosing for optional tax regime or SSC might choose for default tax regime. Now, what is the tax rate under optional tax regime? Whenever you are thinking of optional tax regime, one more question you should see. Residential status. What you should see? Residential status. Is the individual resident or non-resident? You should see. Under optional tax regime only that information is relevant for us. Under default tax regime, no relevance at all. Whether you are a resident or non-resident. When I say default tax regime, we are discussing about 115 BSc default tax regime because we have various default tax regimes. For companies, different section is there. For society, different section is there. For various other SSCs, different sections of default tax regimes were there, but which are not there in our syllabus. I'm only talking about default tax regime applicable for individuals and HUFs and AOP, BOI, AJP. Are you clear? Now look at. So optional tax regime. When I say optional tax regime, before you compute tax, second question you should ask, what is the residential status? SSC is a residence. Then the tax rate is up to 2.5 lakh 0. Whereas 2.5 lakh to 5 lakh 5%, 5 lakh to 10 lakh, 20%, more than 10 lakh, the tax is 30%. Suppose if the SSC is a resident, senior citizen or super senior citizen, we should see. Yes or no? Now, for example, SSC is a resident. Then look at the age. As on 31st March of 2026, because for us the problem is always based on 25 and 26. Am I right? For us the problem is always based on 25 and 26. If at all, up to 31st March 2026 or up to 1st April 2026. Remember this date only. 1st April 2026 only. Nothing but first day of the assessment year. First day of the assessment year. If at all he has celebrated 60th birthday on 1st April of the assessment year or before 1st April of the assessment year, he celebrated 60th birthday. He's a senior citizen. Are you clear? He's a senior citizen. If at all on the same 1st April 2026 or before that, he celebrated 80th birthday, 80, then he's a super senior citizen. Which means by 31st March, he completed the age of 60. By 31st March, he completed the age of 80. So how do I know whether SS is a senior citizen or not? On which date he celebrated 60th birthday? Look at. He celebrated on or before 1st April of the assessment year. Whatever the problem you are solving for that respective assessment year, 1st April is there, right? On or before that day he celebrated 60th birthday, he's a senior citizen. On or before that he celebrated 80th birthday, he's a senior citizen. Simple logic. On 1st April you are celebrating 60th birthday means you are entering into 61, which means you completed 60 by 31st March, over. As on 31st March, how many birthdays you completed? That is what we will see. How many years of birth you completed? That's what we will see. Tell me, birthday we celebrate when we born or after 1 year? Exactly. 60th birthday means after completing? Exactly. Do you understand? That's it. So senior citizen. Suppose if the SS is a senior citizen, then the first slab limit exemption is up to 3 lakh 0. Then 3 lakh to 5 lakh, how much more? 5%. Then 5 to 10 lakh, 20%. Then more than 10 lakh, 30%. Are you clear? If it's a super senior citizen, then first 5 lakh 0. Then 5 lakh to 10 lakh, 20%. Then beyond 10 lakh, 30%. Am I right? Yes or no? Now, how should we compute the tax? For example, I'm just taking one small example. Okay, here. Remember, if the individual is a non-resident, we don't ask his resident. We don't ask his age. It doesn't matter. If the individual is a non-resident, straight away his tax rate is up to 2.5 lakh 0, 2.5 to 5%. Beyond that 20%. Beyond 10 lakh 30%. Here, in case of non-resident, age doesn't matter. Senior citizen, super senior citizen, these words we will use it only for resident SSC. We will use it only for resident SSC. And remember, there is one more word called specified senior citizen. Specified senior citizen. This is different. Normal citizen, senior citizen, super senior citizen, and specified senior citizen. All these are different. Specified senior citizen means a person who is aged more than or equal to 75. A person who is aged more than or equal to 75. This point is covered under 194P TDS sections. This point is covered under 194P TDS sections. Pensioner. Okay, if a person is receiving pension, 194P, one section is there. There they will use the word specified senior citizen. There they will use the word a specified senior citizen. There what is the age factor? 75 years and above. Are you clear? Whereas super senior citizen means 80 years and above, 60 years and above. Remember, for tax computation, we only want 60-80 criteria. 75 criteria irrelevant for tax computation. 75 criteria is relevant for TDS under section 194P. Are you clear? Now look at, suppose an individual said, I have an income of 15 lakh. Okay, and he is a normal citizen. He is a normal citizen and age is 43 and he is a resident. Now, how much is the basic tax as per the slab rate? Some students know, they don't understand slab rate concept. 15 lakh, no. Since it is more than 10 lakh, they apply straight away 30% and they'll say 4.5 lakh. Wrong. How you should compute? You should split this into multiple slabs. First 2.5 lakh. Yes or no? Then the next 2.5 lakh. Next 2.5 lakh. Next 5 lakh. Above 10 lakhs, balancing figure how much more? 5 lakh. Now, this is taxable at 0%, this is taxable at 5%, this is taxable at 20%, this is taxable at 30%. Yes or no? Now, 0, this is 12,500, this is 1 lakh, am I right? Whereas this is 1 lakh 50,000. Therefore, the total is, so 2 lakh 50 plus 12, 2 lakh 62,500 rupees. This is how you should compute. Are you clear? Now, further. I'm not going in depth again. Suppose if at all the SSC is a senior citizen, then here 3 lakh, 3 lakh. Yes or no? Yes or no? Sorry. Here it is up to 3, here it is 2 lakh will come. Here it is up to 3, then here it is 2 lakh. Up to 0 to 3, 0. 3 to 5 means 2 lakh. Into 5%, 10,000. 5 to 10, as usual, 20%, which is again 1 lakh. Beyond 10, 30%. For example, if I compute the same tax liability for a senior citizen, how much tax you will get? First 3 lakh, 0. Next 2 lakh means 3 to 5 lakh, am I right? Everybody with me? Next 2 lakhs is taxable at 5%, which is 10,000. Next 5 lakh is taxable at 20%, which is 1 lakh. Above 5 lakhs, nothing but 5 lakhs is there, which is taxable at 30%, which is 1.5 lakh. Total 2.6 lakh. So if it's a normal citizen, 2 lakh 62. If it's a senior citizen, 2 lakh 60,000. And in case of super senior citizen, it is 2 lakh 50,000. How much you will get? 2 lakh 50,000. The basic tax difference between normal citizen and senior citizen, 2,500 will reduce. Between normal citizen and super senior citizen, the basic tax will be 12,500 difference. Very simple. For a normal citizen up to 5 lakh, 12,500 tax will come. Whereas in a super senior citizen up to 5 lakh, 0. That's why for a normal citizen, the basic tax is 12,500 rupees higher than super senior citizen. Whereas for a normal citizen, basic tax is 2,500 rupees higher than senior citizen. For a senior citizen, basic tax is higher by 10,000 rupees compared to super senior citizen. Do you understand this logic? That's it. I'm not discussing on normal tax rates. Further example, one example, solid. Now let us look at default tax regime. Let's look at default tax regime. What is the tax rate under default tax regime? What is the tax rate under default tax regime? New rates I'm telling you. For Jan attempt, no, 0 to 3, 3 to 4, sorry, 0 to 3, 3 to 7, 7 to 10, 10 to 12, 12 to 15, 15 above. Like that some rates were there, right? Ignore that. Never compare with old rates. For every May attempt, you have to learn afresh. Getting it? What is old rate? What is new rate? Don't try to first remember new rate. Why you remember again old rate? Remove that. From now, whatever I'm discussing, just keep that in mind. First 4 lakhs, 0 to 4 lakhs, 0% tax rate. 4, 4, 4, 4, 4, you just add. Okay? 4 to 8, 5%. 8 to 12. Yeah. 8 to 12, 10%. 12 to 16, 16 to 20, 20 to 24, more than 24. That's it. The moment it starts 20, the moment it reaches 24, that's it. More than 24, balancing figure. Okay. Now what is the tax rate? What is the tax rate? Okay. What is the tax rate? 0, 5, 10, 15, 20, 25, 30. That's it. Understood? So tax rate is 5555, exactly difference. Whereas income is 4444 lakh. For every 4 lakh, you just increase up to 24 lakh. First 0 to 4, 0. 4 to 8, 5. 8 to 12, 10. 12 to 16, 15. 16 to 20, 20. 20 to 24, 25. Above 24, 30. Don't try to mug up like that. Just observe the pattern. You will understand. Okay. Now, so what is the tax rate? First, how should I income? First 4 lakh, 0 to 4. 4 to 8. 8 to 12. 12 to 16. 16 to 20. 20 to 24. Balancing figure. Beyond 24 is nothing but balancing figure. Based on the income, we get that. What is the tax rate? 0 to 4, 0. 5, 10, 15, 20, 25, 30. Easy. These are the new tax rate applicable under the default tax regime, applicable for May 26, September 26 and Jan 27 exam. If you are a CMA student, June 26 and December 26 exams. Clear? Now, for example, by the way, remember, these tax rates are constant. Whether you are a normal citizen, senior citizen, super senior citizen, doesn't matter. These tax rates are constant. Under default tax regime, your residential status is irrelevant. Your age is irrelevant. Are you clear? Okay. By the way, tell me, 115 BSc is not only dealing with individual. It is also applicable for HUF, AOP, BOI, AJP. But in our CA Inter, HUF taxation, AOP, BOI, AJP taxation is not popular here. It's not there also. Depth provisions were not there. Only individual taxation is there in our CA Inter. Are you clear? Now, for example, there is an individual whose total income, fully normal incomes. Tell me in exam, no, if they say total income 20 lakhs, they didn't mention any breakup. We assume that is completely normal income. In the absence of special income information, we always assume that it is normal income. Am I right? Yes or no? Now, suppose if the total income 18 lakhs, they said, how should I compute? First 4, next 4, next 4, next 4. Are already 16 came, so balance is 2. Am I right? Can I split like this? Every 4, 4, 4, 4 I should split. Yes or no? Now, first 4, 0, 5%, 10%, 15%, 20% over. Now, what is the answer? 0, 10,000, no, 4 into 5, 20, 20,000, then 40,000, then 60,000, then 2 lakhs into 20 again, 40. So, what is the answer? 1 lakh, 1 lakh 40, 1 lakh 60. Easy. Everybody, suppose, again another question, 13 lakh is the total income, completely normal income. Again, first 4 lakh, correct? Next 4, are already 12 came, so balance should be 1 only. I cannot put another 4, yes or no? Every time. You understood? 4, 4, 4. If at all, again if I put 4, no, it is coming total 16, so wrong. So therefore last column you should allocate how much? How much you should allocate? 1 lakh. Again, 0, 5%, 10%, 15% is equal to 0, 20,000, and here it is 40,000, here it is 15,000. What is the total basic tax on this? 75,000 over. Easy. Suppose now I have an income of 48 lakhs. I have an income of 48 lakhs. Same 4, 4, 4, 4, and 4. 4. Am I right? Now you see 1, 2, 3, 4, 5, 6. Array 6 4s are 24 already game. Beyond 24, there is no 4, 4 option. Beyond 24, balancing figure. How much is the balancing figure? How much is the balancing figure? Out of 48, 6 4s we allocated here. 24 we allocated. Balancing figure 24. Hello everyone? All of you are with me? Yes or no? Yeah, 24 lakh, correct? Now apply the rate. 0%, 5%, 10%, sorry, 15%, correct? 20%, 25%, and then balance it's at 30%. Tell me what is the amount? 0, 20,000, 40,000, 60,000, 80,000, 1 lakh, 24 into 30, 7.2 lakh. Hello? What is the total tax? 10.2 lakh. What is the total tax? 10.2 lakh. 10.2 lakh. Thumb rule. Up to 24 lakhs, 3 lakhs is the tax liability. Up to 24 lakh. What is the tax liability? 3 lakh. Simple. 0, 20,000 plus 40, 60. 60 plus 60, 120. 120 plus 80, 2 lakh. 2 lakh plus 1 lakh, 3. If at all your income is up to 24 lakh. If your income is up to 24 lakh, your tax liability will be 3 lakh. If at all your income is beyond 24 lakh, simple. 3 lakh plus extra income multiplied by 30%. Over answer. Easy or not? By the way, until now we computed, no percentages, all that. What we computed? Did we compute gross tax liability or did we compute basic tax? Basic tax we computed. In this format, what we are learning right now is basic tax computation. Everybody is strong in basic tax computation right now with respect to normal incomes? Everybody? Now, let's bring the special income concept. See, when you're computing tax, you have normal income, special income, unutilized basic exemption limit, rebate, so much is there. One after one, I'm just telling you. Clear? Now come to a special income. What are special incomes? I already told you. Yes or no? Long-term capital gain under section 112A. This is taxable at 12.5%. Hello? And long-term capital gain under section 112A, it is also taxable at 12.5%. Sorry, 112. Yes or no? Am I right? 112. Now immediately some students are here, no, if it is a land and building sold on or after 23rd July 2024 for a building which is acquired before 23rd July, tax rate is 20% with indexation, 12.5% without indexation. That option is there, right? Delete that option. Delete that option by default. You have to see that only a tax computation when you're doing tax computation, right? That time only you should see that. As a second option you should see. That option we will discuss in capital gains. Generally, what is the tax rate on long-term capital gain? By default it is 12.5%. That's it. 112A capital gain. What is the tax rate? 12.5% exceeding 1,25,000. If at all the long-term capital gain under 112A is exceeding 1.25 lakh, then the tax rate is what, ma? 12.5. Extra income only taxable at 12.5. Then long-term capital gain under 112, what is the tax rate? 12.5. A short-term capital gain, 111A income, what is the tax rate? 20%. and all other winnings, all that, they're taxable at 30. For example, there is a problem they gave. Okay, the total income of the SSE is 65 lakhs. They said. What is the answer? What is the total income you computed? 65 lakh. Are you clear? Now, by the way, here one more checkpoint I'll tell you. When you're doing problem, sometimes an MCQ will be like this, where they will give you gross total income information directly. They'll give you chapter 6 deductions details. They will also give you special income details. Now, for example, chapter 6A deductions are 2 lakhs. Okay? Chapter 6 deductions are 2 lakhs. Gross total income is just 12 lakhs. And you know what? Long-term capital gain under 112A, I mean within this gross total income, they're giving breakup now. Long-term capital gains under 112A, let us assume it is 10.5 lakh. This is how information is given. What many students do, 12 lakh minus 2 lakh is equal to 10 lakh. Wrong answer. Your total income is wrong. Whenever you are reducing chapter 6 deductions, gross total income, split it. How much is long-term capital gain? How much are the special income? Long-term capital gain 112A, how much they have given 10.5 lakh. Okay, only one special income is there in this question. Okay, what is normal income? They didn't tell anything. Balancing figure is what normal income, which is 1.5 lakh. And guess what? Chapter 6A deductions shall not exceed. Normal income total. In this question, how much is the chapter 6A? 2 lakh. Your chapter 6A deductions, maximum you can now claim how much? 1.5. Therefore, balance normal income 0. Now, whatever income is there, this balancing figure is special income. Remember, this process, we do at where? We do this process at where? Chapter 6 deduction. Now, total income, tell me. 10.5 lakh. What is the total income now? 10.5 lakh. Do you understand how to compute total income from gross total income if chapter 6 deductions are given? That too, one more point. Suppose in this case, if the SSE is a default tax regime, then chapter 6 also you won't get. Whatever gross total income 12 lakhs is there, the same will be the total income. Generally, chapter 6 deductions will not be given under default tax regime except these. 80 CCD subsection 2, 80 CCH subsection 2, 80 JJAA, only 3 deductions you will get. Except that you will not get any other chapter 6 deduction. Am I right? If at all there is a chapter 6 deduction, you should reduce it only from normal income. You should not reduce it from special income at all. You should not touch it. Special income you should not touch. Because 112, 112A, 111A, 115BB, 115BA, in all the sections, common point. These incomes are not eligible for chapter 6A deductions. Means these incomes are taxable directly at the special rate. They are not eligible for chapter 6A deductions. They are not even eligible for basic exemption limit. Special incomes are not eligible for basic exemption limit at prima facie. At prima facie level, special incomes are not eligible for basic exemption limit. Now look at the question. Suppose SSE total income is 35 lakh. SSE total income is how much 35 lakh. In this 112A income is 5 lakh. 112 income is 3 lakh. 111A income is 7 lakh. And 115BB, nothing but winnings, lottery, crossword puzzle, online games, whatever it is, okay? Whatever it is, some 3 lakh. This is the total income, and this is the breakup which they gave. Now, how should we compute the tax? This is the question. How should we compute the tax? By the way, tell me, what is the income? 35 lakh. Okay? Now, I will now allocate. First, I should look at special incomes, right? First, I should split special incomes. Special incomes, 112A, how much 5 lakh. How much it is? 5 lakh. Remember, this is total income, not gross total. Means total income. We are now computing tax directly. Okay? Total income. 112A, how much? 5 lakh. 112, how much? 3 lakh. 111A, how much? 7 lakh. Then lottery winnings and all, 3 lakh. Now, 5 plus 3, 10, 10 plus 7, 17, 17 plus 3, 20, whereas total income is 35 lakh. Out of 35, 20 lakhs are special income, then balancing figure is what, ma? 15 lakh. This is normal income. Are you clear? Now, this normal income is taxable at what rate? Slab rate. If at all nothing is mentioned in the question, then we assume that it is default tax regime. Now, how should I compute? Now, look at this 15 lakh is taxable at normal rates, right? How should I divide this 15 lakh? How should I divide? First 4 lakh, next 4 lakh, next 4 lakh. Array, next 4, if I put 16, it will come. But I have how much here? Normal income is how much here? 15, which means 4, 4, 4, 3. Am I right? Everyone? So, how much is that? 3 lakh. Now, 0, 5%, 10%, yes or no? Then this is 15%, correct? 0 is equal to 20,000, 40,000, 60,000. Hello, everyone? So, what is the normal income related tax amount? What is the normal income related? Okay. 3 lakhs into 15%. What is it? 45,000, right? I'm sorry, it is 45,000. Now, how much it is? 85 plus 20. 85,000. Are you clear? No. 1,05,000. You can be louder, no problem. You can be louder. Sometimes my processing will be fast. Okay. So, how much is the total? 1,05,000. Are you clear? Now, this is, remember, only normal income. You have special incomes. Now, what is the tax on special income? 3 lakh, 30%. Am I right? This is 111A, 20%. 112, 12.5%. 111A, 112A. Minus 1.25, you remove it. Balance amount is 3.75 lakh. This is taxable at 12.5%. Do you agree? Because 112A capital gain up to 1.25, tax rate is 0. Many students here, biggest misinterpretation. 1.25 lakh is exempt, they say. No, it's not exempt. Tax rate is 0. There is a difference between exempted income and tax rate is 0. Do you agree with me? Do you agree with me? Agriculture income is exempted. Agriculture income will not come in this 35 limit, correct? Whereas this 5 lakh is fully taxable. Yes or no? 5 lakh is fully taxable. Now tell me, in slab, no, first 4 lakh 0 tax you are calculating. Does it mean this 4 lakhs is exempted income? Exactly. In long-term capital gain under 112A, first 2.5 lakh is slab limit, 0 tax rate. Beyond 1.25 lakh, straight away slab rate is 12.5%. That's how you should interpret that. Many student thinks this is exemption. No. Up to 1.25 lakh, tax rate is 0. You see the wordings in 112A. Any long-term capital gain under 112A is taxable at 12.5% for the gain exceeding 1.25 lakh. They didn't say up to 1.25 lakh gain is exempted. They never said that. What they told, if the gain is more than 1.25, then extra amount is taxable at 12.5%. Sir, why this is not exemption? If that is exemption, this 4 lakhs is also exempted according to me. Are you clear? Now 4 lakhs, no, your tax rate is what? 0. It is not exempted. In GST also you have exempted supply, zero rated supply. Are they both same? Exempted supply means GST will not apply. Zero rated supply means it's a supply where tax rate is 0, which can be increased later. Hello? So 112A up to 1.25 lakh, the tax amount is 0. Beyond 1.25 lakh only the tax amount. Why this discussion is important? Unutilized basic exemption limit concept, when we are applying, you will understand this. Until now, clear. Okay, just another 10 more minutes we will discuss and then we'll take a break and then get back. Okay, now what is the tax amount here? Tell me. 3.7 lakh, 3.75 lakh into 12.5%. Am I right? 46,875, right? Now 3 lakh into 12.5. How much it is? 37,500. Now this one, 7 lakh into 20%, 1.4 lakh, 3 lakh into 30%, 90,000. Am I right? Hello? Now, what is the total tax amount? 1,05,000 plus 46,875, 37,500 plus 1,40,000 plus 1,40,000 plus just a minute. Yeah, sorry for the interruption. Look at what is the total basic tax? 1,05,000 plus 46,875 plus 37,500 plus 1.4 lakh plus 90K. How much is the total basic tax? 4 lakh 90 na 19 comma 375 That's it. This is the basic tax. Now I will think about surcharge. Until I compute basic tax, you should not think about surcharge. At every stage, that point only you should think. You should not think about the next step. Many students do biggest mistake, they think about the next step. That's a problem. Now you see the tax computation format. So first I compute. In this example, right now I computed. How much is the answer? 4,19,375. Are you clear? Now I will think about surcharge. Now I will go back to the question. What is the total income? 35. Since it is 35,000, surcharge is not applicable. Okay. I will tell you when surcharge is applicable, all that I will tell you. Accordingly, again subtotal how much? 4,19,375 minus rebate also not applicable, relief also not applicable in this question. Therefore again 0. Again subtotal 4,19,375. Now add 4%. 4,19,375 plus 4% is equal to 4,36,150. So this is my gross tax liability. Do you understand? This is how you should compute gross tax. Clear? Until now clear? Everyone? Now tell me, in case of normal tax regime, 2.5 lakh is basic exemption limit. In case of default tax regime, 4 lakh is basic exemption limit. This basic exemption limit is primarily should be utilized for normal incomes only. Do you agree? Only normal incomes are eligible for basic exemption limit. Suppose if your total of normal incomes, if the total of normal incomes is less than basic exemption limit, then the difference is called as unutilized basic exemption limit or unavailed basic exemption limit. Unavailed basic exemption or unutilized. Now this unutilized basic exemption limit, how we should utilize? Unutilized basic exemption limit, how we should utilize? You can use this unutilized limit. Basically, special incomes are not eligible for any exemption. Straight special income multiplied by rate. That's it. However, if in a given question, unutilized basic exemption limit is there, you can set off. Remember, unutilized basic exemption I'm saying. I'm not saying basic exemption limit. Basic exemption limit, first I will set off with normal income. Are still there, sir? Still basic exemption limit is there. Then that you should set off for first 111A I will set off, which is taxable at 20%. I will set off unutilized basic exemption limit against 111A. Then I will set off against 112, which is taxable at 12.5. Last priority I will give for 112A, which is also taxable at 12.5%. Which is also taxable at what rate? 12.5. For example, look at, there is an SSC who is a very small employee. Okay, what he is having, he is having an income of, let us assume 12 lakh. He is having income, total income, how much is having? 12 lakh. Most important concept, unutilized basic exemption limit concept I'm telling you. Okay, now just a minute. Now look at, let's continue UBL, unutilized basic exemption limit concept. Let us assume there is an SSC, individual, normal citizen. Okay, it doesn't matter also, default tax regime. What is it? Default tax regime. Okay, his total income is 12 lakh. And what is this? His income comprises, 112A income, 1.5 lakh. His 112A income is how much? 1.5 lakh. His 111A short-term capital gain income, let us assume approximately 3 lakh. And he is having long-term capital gain of 112, which is having 4 lakh. And apart from that, he is having 115BB winnings income and all 2 lakhs. This is the information given. Are you clear? Now tell me. Now this total income I should split, right? Yes or no? Now how should I split? First 112 4 lakh, then 111A. No. First I will put it from high rate of order. Okay. 115BB. How much is the tax? How much is the income? 2 lakhs. Hello everyone, 2 lakh. Correct? Then 111A special income how much? 3 lakh. Then 112 income is what? 4 lakh. Yes or no? Then 112A income is how much? 1.5 lakh. Now tell me, what is the balancing figure? 5 plus 4, 9, 9 plus 1.5, 10.5. Ayyo, normal income is 1,50,000 rupees only. Are you clear? Now Out of 1,50,000, by the way, tell me, this SS is having a basic exemption limit of 4 lakh. First 4 lakh is 1.5 lakh only getting allocated. 2.5 lakh. What is it? 2.5 lakh is unutilized basic exemption limit I have. Am I right? Now tell me, unutilized basic exemption limit, if it is there, you should first use it for 111A purpose, because 111A is taxable at 20%. Hello? Then if I still have in this amount, if I still have unutilized amount, then I will allocate it for 112. If I still have, then I will allocate it for 112A. Now here, by the way, lottery income, I cannot allocate, am I right? Lottery income and all, winnings income, no exemption at all. Straight away tax rate is 30%, 60,000. Do you agree with me? Now, 111A income is there, and I have unutilized limit of 2.5 lakh. I can use it here. Entire 2.5 lakh I can use it. So balance 111A income is how much? Just 50,000. Am I right? Now I will tax it at respective rate, which is 20%. Now here, no more basic exemption limit. It's already exhausted. Unexhausted basic exemption, unavailed basic exemption, unutilized basic exemption, all the three are same. Unexhausted limit, unavailed limit, unutilized limit, all the three means the same. Are you clear? Now look at 4 lakhs, no more basic exemption. As usual, special rate. What is the rate? 12.5%. Now balance 1.5. Ayo, up to first 1.25 lakh, zero tax rate ma. But extra amount is how much? 12.25. Now 12.5%. Now tell me, what is the tax amount? 4 lakh into 12.5. How much it is? 4 lakh into 12.5% is equal to 50,000. Okay. Now here 25,000 into 12.5. How much it is? 3,125. Now what is the tax rate? Here it is 10,000. Correct? Here it is 10,000. 60 plus 10 plus 50 plus 3, 170. 1 lakh 20. 1 lakh 23,125. Do you all agree? Do you all agree? Yes or no? Now in this question I will slightly change it now. I will change slightly the data. Okay? How I will change? Same. Total income is how much, you know? 12 lakh. Now in this, winnings income is 9 lakh. How much is the winnings income? 9 lakh. And he is also having 112A capital gain. How much is he is also having? 112A capital gain. How much is having, you know? 2 lakh. How much is having? 2 lakh. Now let us assume his total income, just a small correction, 14 lakh. Just a small correction. Total income right now is 14. Winnings income 9. 112A income 2. Balancing figure is 9 plus 2, 11, 3 lakh. Okay. This is normal income. That's it. He don't have 112A. Sorry. He don't have 112 111A. But 112A is there. What is 112A 111A, by the way, guys? Listed equity shares, equity oriented mutual funds, units of business trust. Am I right? If at all you are transferring these three assets where STT is paid at the time of sale especially, then they are taxable at, if it is a long term asset, 112A applicable. If it is a short term asset, then it is 111A which is applicable. Am I right? This is what the brief section is about. Yeah, now look at. Now I have to compute the tax. This is where many students do mistakes. Now look at how this 14 lakhs I will split. First, normal income, then special income. First you should always allocate special income zone. Special income zone you should allocate. Normal income is always computed as a balancing figure. You should never apply allocation here. Never. Even though you're right. Don't do that. Process is wrong. Maybe the number gets right, but sometimes process is wrong. If process is wrong, at somewhere you will do wrong number. If process is right, no chance for mistake at all. First always allocate for special incomes. Now tell me, in this case, special incomes, winnings, how much more? 9 lakh. Then 112A long-term capital gain, 3 lakh. 2 lakh. Okay, fine, very good. So how much it is? 2. So 9 plus 2, total 11 lakh is allocated. Am I right? Out of 14, no, 11 allocated. So what is the balance normal income? 3 lakh. Array, SSC default tax regime. Basic exemption limit applicable is 4 lakh. Ayo, unutilized basic exemption limit is 1 lakh. Now, unutilized basic exemption limit, if it is there, first I will use it for 111A income. Here I don't have. Then I will use it for 112 income. Here I don't have. Then I will use it for 112A income. Oh, 112A income 2 lakhs is there. Now the biggest question is, first 1.25 lakh we should reduce. Am I right? Everybody? Wrong. This is the biggest mistake everybody do. 1.25 you should not reduce. You should set off against income, guys. You should not set off against taxable income. You should set off against income. How much? 1 lakh you set off now. Still, what is the balance income? 1 lakh. Now, up to 1.25 lakh, tax rate is 0. Balance figure, tax rate is 12.5. This itself is not there. Therefore, the tax is 0. Do you understand this? This many will not have the clarity. First, should I apply basic exemption limit before reducing 1.25, after reducing? People only mug up this. They won't understand concept there. Do you understand now the concept meaning? Able to understand? It is tax rate. There is a difference between exempted income and zero tax rate. Please understand that. 112A capital gain up to 1.25 lakh, tax rate is 0. Beyond 1.25 lakh, tax rate is 12.5. That's about tax rate discussion. It's not exemption discussion. Do you understand? If at all, do you think exempted means why it will come in 14 lakhs first of all then? If 1.25 lakh is exempted, you should have taken here 75,000 only, right? Hello? If at all 1.25 lakh is exempted according to you, you should have taken then 75 only, income computation. Why you took total amount? Because that is not exempt. It is fully taxable. Sir, 112A, 2 lakhs income I got, sir. How much is taxable income? 2 lakh is taxable income. How much is the tax amount? Up to 1.5, 1.25, 0 is the tax rate. Then beyond 1.25, tax rate is this much. Taxable income is different, tax amount is different, tax rate is different. Do you understand? Just like how basic exemption 4 lakh is there, in 112A basic exemption 1.25 lakh is there. Able to understand? So, if you have unutilized basic exemption limit, should I apply set off? Should I apply set off after reducing 1.25 lakh, before reducing 1.25 lakh? Before reducing 1.25. Then balance 112A income is there, right? From that, first 1.25 apply 0 tax rate, balance 1.25 apply 12.5% tax rate. That's the logic. Able to understand? Clear? That's it. Unutilized basic exemption limit concept is over. Understood? That's it. So we'll take a break and get back, and then we'll continue discussing rebate concept. Rebate, biggest amendment, landmark amendment, biggest amendment. Again, they're reverting it in the next financial year. Fine, leave it anyhow. That irrelevant. May 27 details irrelevant for you. May 26, September 26, Jan 27. That is what our agenda of discussion. Clear? That's it. So after break, we'll discuss rebate concept and surcharge concept, relief concept. Once that is over, agriculture income concept, agriculture income taxation concept. Once it is over, this chapter gets over. Okay? Yeah. Yes. Let's continue the discussion of rebate under section 87A. Okay? Now, if you observe, how should we compute basic tax? Until now, we understood basic tax computation under different circumstances. Okay? In normal citizen, in case of optional tax regime, normal income is there, how to compute basic tax we saw. In case of default tax regime, how to compute basic tax we saw. When special incomes are there, how to compute we saw. Unutilized basic exemption limit we saw, right? Now let's look at rebate concept. What is rebate? Rebate under section 87A. This is to support middle class people, all that. Okay, the main objective of this provision is so that low income group people need not pay tax at all. So for that reason, the concept of rebate has been brought. Now, under optional tax regime, you know, right? Rebate is how, what is the rebate criteria? If the total income is less than or equal to 5 lakh, nothing but if total income is not exceeding 5 lakh, if at all crosses 5 lakh, no rebate at all. Even if your total income is 5 lakh 1,000 rupee, no rebate at all. Only if the total income, remember when I said total income, it includes normal income, it includes special incomes. By the way, total income means what? Gross total income minus chapter 68 deductions, correct? If that total income is within 5 lakh rupee, then up to 12,500 rupees rebate is applicable, which can be reduced from basic tax. The rebate shall be reduced from what tax? Basic tax, not gross tax. Be careful. After we reduce the rebate, if any tax is there, then only on that you have to add cess. Are you clear? Everybody, generally after we reduce rebate, tax will not be there basically. Why? Because rebate is applicable up to 5 lakhs. If at all within 5 lakhs, your general tax liability will be sometimes 12.5 only, but unless you have a special income. Clear? Now, first of all, if your total income is up to 5 lakh, then up to 12,500 from the basic tax you can claim rebate. Do you agree? However, note 112A tax is a right. This is not eligible for rebate. Do you all agree? 112A tax. Any tax liability that you are computing under 112A section, that amount will not be liable for. That amount is not eligible for rebate. 112A tax is not eligible for rebate. Now, for example, look at SSC total income is 4,90,000. SSC total income, or else let us look at this way. SSC, he is having income from salary, computed income. Income from salary, computed income. 1,50,000 per annum. His income is 1,50,000 salary income, which is per annum computed. This SSC also won a lottery of 2 lakh rupee. The SSC also won a lottery of 2 lakh rupee. And the SSC is also having 112A tax. What is it? 112A income. 112A income is 1,40,000. That's how the total income of the SSC is 4,90,000. The breakup is like this. No chapter 6A reductions, assume. Or chapter 6A we already reduced. After that only balance salary income is 1,50,000. Chapter 6A, if it is there, we reduced it. After that only 1,50,000. It's a normal tax regime, optional tax regime. Remember? Hello? Now look at how much is the tax. First, how to compute basic tax? First, total income 4,90,000. First, what are the steps? Special incomes and balancing figure. Special incomes, winning, first high rate of tax you should apply. How much it is? 2 lakh. Hello? Yes or no? Then 112A, how much it is? 1,40,000. Everybody. Now, balancing figure how much? 1,50,000. Do you all agree? Now, SSC, optional tax regime, only for resident rebate is available. 87A rebate is only available for resident individuals. HUFs also, they don't have rebate. Only individual SSC is eligible for rebate. That too, if at all, he is a resident only. Non-residents are not eligible for rebate. Do you agree? Now, let us assume in this question, the SSC is a normal citizen. Age is less than 60. Age is less than 60. Now tell me, what is the basic exemption limit applicable? Everyone, 2,50,000. Yes or no? So after I set off basic exemption, still I have 1 lakh unutilized basic exemption limit. Do you agree? Now, unutilized basic exemption, I can set off with 112A. Am I right? Now, after setting off, still my 112A income is how much? 40,000. Now, basic exemption, now I fully utilized, set off. Now, first 1.25 lakh, what is the tax rate? 0. Balance amount, what is the tax rate? 12.5. But here, since it is only 40, the tax amount is 0. Do you agree? Now, winnings, straight away tax rate is 30 is equal to how much? Whereas on the normal income, tax amount is 0. Now, what is the total basic tax? 60,000. Do you all agree? Now I'll go to this format. What is the total basic tax right now? We got 60. Surcharge not applicable. Again it is 60. Now I need to check whether rebate is applicable or not. Look at the problem. What is the total income? 4,90,000. What is the provision that we discussed? If the total income is up to 5 lakh and up to 12,500, you can claim rebate. Yes or no? Look at here. Here, look at here. So here total income is less than 5 lakh. Am I right? So how much rebate you can claim? Up to 12,500. Therefore, balance tax. Therefore, balance tax is how much? 47,500. Add 4%. This is the gross tax liability. Answer. Over. Able to understand? Now here, what are the conditions I should check? Did I compute the answer right or not? I will check. In this 60,000 rupees, is 112A tax included? No. There is no tax in this question on 112A because 112A income is less than 1.25 lakh. Therefore, the tax amount is 0. So, first condition, 112A income is not eligible for rebate. Am I satisfied? Second condition, total income should be not exceeding 5 lakh. Did I satisfy? Now, maximum rebate 12,500. Did I satisfy? That's it, which means my answer is right. Able to understand. Sir, this is lottery income. No. Is it eligible for rebate? The section is silent. Therefore, eligible. The section is silent. Section specifically told what? 112A income is only not eligible for rebate. Indirectly, remaining special incomes are eligible for rebate, right? Yes or no? That's it. Are you clear? This everybody knows. Now, the new tax regime, default tax regime, how to compute rebate. Now, under default tax regime, how to compute rebate. Again, 87A, it is applicable only for resident individual under default tax regime also. Hello. Now, what is the rebate? 60,000 rupees. How much is the rebate? 60,000 rupees provided. Condition. Total income shall be less than or equal to 12 lakh. Total income should be less than or equal to 12 lakh. Then the rebate will be how much ma? 60,000. Remember, the rebate is 60,000 rupees only when the total income is not exceeding 12 lakh. Then only 60,000 rebate will come. Now, under default tax regime, all special incomes, what is it? All special incomes, whether you call lottery, whether you take 112, whether you take 111A, whether you take 112A, if at all the income is taxable at special rates, if at all the income is taxable at special rates, rebate will not be there on that. No rebate on special incomes. All special incomes not eligible for rebate. This is the biggest amendment. You know, in Jan 26 exam before attempts, no. If it is Finance Act 2024, no, this is not applicable for you, by the way, okay? That time, what is the old answer? Old provision is what? This is 7 lakhs. This is 25,000. Am I right? This is 25,000 old provision, whereas this is 7 lakhs. And here, 112A income is not eligible. Here, 112A income is not eligible. Am I right? So, all the three conditions changed here. Rebate amount changed. Rebate applicability threshold limit is changed. Which incomes are not eligible for rebate, that is also changed. These changes are applicable only for default tax regime. Under optional tax regime, old provision of rebate 87A, the same provision is now applicable. Whereas under default tax regime, old provision of rebate is different, new provision of rebate is different. Are you clear? Everybody. Hello. Now look at the same problem I will do. The same problem I will do. 4,90,000. What is the total income right now? 4,90,000. Now this is a default tax regime. Guys, please remember. Default tax regime. Now 4,90,000. Correct? Now in that, winnings income how much ma? 2 lakh. Yes or no? Then 112A income is how much ma? 1,40,000. Balancing figure is 1,50,000. Do you all agree? Now I am computing first basic tax. I am not worried about rebate right now. I don't even worry about rebate right now. When I will worry about rebate, in the steps, no, in the tax computation, no, when I come to rebate step, that time I will think about rebate. Why should I think about rebate right now? So my objective is not rebate right now. My objective is computation of basic tax. You see, you should think like this in exam. Whatever the step you are computing, don't think about the next step. Compute only about that step. Clear? Now look at balancing figure. Well, tell me, what is the basic exemption applicable? 4 lakh. Unutilized basic exemption limit is how much? 2.5 lakh. You can set off with 112A. Absolutely. Yes or no? Here 111A is not there, 112 is not there. You can comfortably set off. Your balance 112A became 0. Still I have 1.1 lakh unutilized basic exemption. After setting off with, long-term capital gain 112A, still I have 1.1 lakh. I can't use it for winnings, ma. Unutilized basic exemption limit is not eligible to set off against winnings. Are you clear? Now therefore, on winnings, I have to compute tax at what rate? 30%. Therefore, winnings, what is the tax amount? 0. Normal income 0. Other income 0. Therefore, total basic tax is how much? Now plus surcharge how much? 0. The subtotal how much? 60. minus rebate under section 87A. Now my conditions. Is total income less than 12 lakh? Yes. Yes or no? Now total income less than 12 lakhs. Is assessee eligible for rebate basically? Yes. Now I want to reduce rebate how much amount? 60. But remember, I can reduce that rebate only related to tax component on normal incomes. I cannot reduce rebate related to special incomes. All special incomes related tax component is eliminated. Am I right? Now, in this basic tax, how much of the basic tax related to normal income? 0. How much of this basic tax related to special income? 0. Therefore, rebate will be 0. Able to understand? So rebate is 0. So again, balance tax is 60 plus 4%. The answer is over. Able to understand? All of you, if the total income is less than or equal to 12 lakh, this is how rebate has to be computed. You see, I'm not worried about rebate until rebate step comes in. Only when the rebate step comes in, I'm worried about it. So when the rebate step comes in, what I should do now in default tax regime? Now, the tax amount, I will split it. How much of this tax belong to special incomes? How much of this tax belong to normal income? Only normal incomes is eligible for rebate. Special incomes are not eligible for rebate. Do you agree? Now, I will take one more example. Same example I'll take. Now, same example, little slight modification. Okay? Lottery income, 2 lakhs. Understood? 112A income, 1 lakh 40,000. Now, income from salary, computed income from salary. Let us assume that is 8 lakh rupee. What is the amount? 8 lakh rupee. Now, what is the total income? Now tell me. 9 plus 2, 11. 11 lakh 40,000. Can I proceed? Yes or no? Can I proceed? Now, 11 lakh 40. Now tell me, what is the basic tax? Now, for that, I have to use working note. What is my total income? 11 lakh 40. What are my special income? Lottery, 2 lakhs. Hello, everyone? Yes or no? Then, yeah, 112A income, 1 lakh 40. Then balancing figure, 8 lakhs. I told you normal income, you should only apply it as a balancing figure. It will never be an actual amount. It is always a balancing figure. Now, this is taxable at slab. Very simple. First 4 lakhs, next 4 lakhs. This is 0. This is 5%. What is the amount? Everyone, do you agree? Now, there is no concept of unutilized basic exemption. Therefore, I will apply this on this straight away. 30 is equal to 60. Now, in this, first 1.25 lakh, 0. Balance 15,000 at 12.5. Do you agree with that? Yes or no? So 15,000 into 12.5% is equal to 1,875. Do you agree? So whereas this is 60, whereas this is 20, total 81,875. Hello? Yes or no? 81,000, correct a total? 875. 81,875. Surcharge, we know it's not applicable. So directly I will reduce rebate under section 87A. Now, though I will not put the amount directly. I have again checkpoint. First checkpoint, total income less than 12 lakh. Yes, which means section is applicable to me. 2. Rebate amount maximum 60,000. I will not reduce it. 3. Rebate amount should not be reduced from tax related to special income. Tax related to special income. In this, how much of the tax is related to special income? 61,000. How much it is? 61,875. Remaining income is how much? 20. Now, rebate, how much I can claim? 60 I can claim. But it should only be reduced from normal income related tax. Ayo, in this question, my normal income tax is just 20,000. But I can claim rebate 60. No use. You can claim rebate right now. How much? This rebate you can't claim here. Therefore, rebate right now is 20. Therefore, balance income 61,875. Are you clear? Plus 4%. Now, therefore, the answer you will get. Now look at the checkpoints once again. Is the total income not exceeding 12? Yes. Did you claim rebate maximum 60? Yes, I claimed rebate within 60 only. Did you reduce rebate from special incomes tax portion? No. I didn't allocate any rebate here. All the conditions satisfied. Therefore, my answer will be right, obviously. Do you understand? Yes or no? This is how you should apply the logics. Understood? That's it. So, therefore, rebate under 87A provision is also over. one more point is there. Suppose in the same question, I'm slight changing. Okay, slight changing. Okay, now my salary income right now, I said what? 8 lakh. Okay, I will make my salary income. 8 lakh. So how much is that right now? 11 lakh 40, right? 8 lakh 70,000 I will make. My salary income, how much I'll make? 8 lakh 70. Okay, wait a minute. So 8 lakh 70. Again, lottery income 2 lakhs. Lottery income 2 lakhs. Then again, 112A income, how much it is? 1 lakh 40. Now my total income 10, 11, 12 lakh 10,000. My total income is how much? 12 lakh 10,000 rupees. Are you clear? 12 lakh 10,000. Now how should I calculate rebate? Look at. Now first of all, basic tax. How much is the basic tax? I will do working note. Am I? So how much is the total income again? Total income is 12 lakh 10,000. Now look at. So special incomes. Lottery is how much? 2 lakh. Yes or no? Then 112A income is how much? 1 lakh 40. So balancing figure how much? 8 lakh 90. Correct? Now I will split this into 4 lakh. 4 lakh 90,000. Am I right? Okay, 8 lakh 70. Yeah. Okay, ma. 8 lakh 70. Okay, 8 lakh 70. So 4 lakh 70. Now 0, 5%, 10%. Am I right? 20,000, 7,000. So total basic tax is 27,000. Correct? 27,000. Correct? Now here 30% is equal to 60,000. Whereas here first 1.25 tax rate is 0. Remaining 1.25 tax rate is 12.5. 1,875. Am I right? Hello? Now what is the total basic tax? 88,870, 875. Do you agree? Now I will go back and substitute. My basic tax is 87,875. Do you all agree? 88. Okay. 88,875 minus rebate under section 87A. Now if you see, the total income is crossing 12 lakh. I will not compute rebate in the way which I told right now. I will compute the rebate in a different way right now. I will compute the rebate in a different way. If the total income is exceeding 12 lakh, no, my rebate computation is different. My rebate computation is different. Now look at how I will compute the rebate. How I will compute. First, step 1. Total income minus 12 lakh. Step 1 is what? Total income minus 12 lakh. Now here you see, just because total income is crossing 12 lakh, you are cancelling entire rebate. 10,000 rupees only income is extra. But for that you are cancelling entire rebate, original provision if you see. But considering this, department put one relief. Relief under the rebate. What is this concept is called as? Relief under the rebate. Okay, sir, basically speaking, as per the first provision of rebate which we discussed, if the total income is crossing 12 lakh, no rebate at all. But that is undue. That is very unfair on the SSE. Sir, SSE got just 10,000 rupees extra, sir. For that also you will cancel the rebate. No. Here I will have an option. You compute rebate as below. You compute rebate as below. Like how? Step 1. Step 1. Total income minus 12 lakhs. How much is the extra income you got? 10,000. Step 2. What is the tax on total income of 12 lakh 10,000? 88,000. How much is that? 88,875. Basic tax only. Are you clear? Now in this, no, eliminate special tax. Eliminate special tax. Special tax eliminate how much if it is? 61,875. 61,875. So balance normal related tax is how much? 27,000. Now tell me, okay, special income anyhow not eligible for rebate, that I agree. Just because this 10,000 extra income I got, you are asking me to pay 27,000. Correct? Is it fair? So I want 17,000 rupees at least rebate. Why I want 17? I don't want 60,000. 17,000 you give a rebate. Why? Sir, the extra 10,000 income I got, no, you take that, you take it. On 10,000, I will not pay tax. I will pay income itself. I will pay what? Income itself to you I will pay. Take my income as 12 lakhs only. Take my income as 12 lakhs only. The 10,000 you take tax. I don't want it. Are you clear? Indirectly, actually my normal tax is how much? 27. But I'm not asking 27,000 rebate. I'm asking only 17,000 rebate. So 17,000 rebate. So step 2 minus step 1 rebate is equal to step 2 minus step 1. No, actually this is not how you should compute. In the step 2, you should only compute which tax, ma? Normal tax only you should consider for rebate calculation. Special tax, you should not consider for rebate calculation. Suppose, in the entire step 2, this total tax amount is normal income only. Then step 2 minus step 1 rebate. Then the rebate is how much, ma? Step 2 minus step 1. But here special tax is also involved, right? Therefore I will not consider special tax related. Then tax on total income is only normal income. I will look at how much is the rebate now. 17,000 is the rebate. Do you understand? 17,000 is the rebate. This problem you will not find anywhere. Able to understand this right now? Whatever I told you will not find anywhere this problem. Everyone, if you look at everywhere the problem is, right? Normal income only, entire 12 lakhs is there. How to calculate rebate? That only will be there. You will not find special income related problem. Okay. Therefore, rebate is only 17 because when I'm computing rebate, special income tax not at all eligible for rebate. So why will I consider in step 2 special income related tax? I will only consider normal income related tax. 17 is the rebate. So therefore, I'll go back and then reduce how much, ma? 17,000. Now if you see how much tax you are getting, you see. How much is the tax? 71,875. Correct? Huh? If you interpret this balance tax, 61,875 rupees is the tax related to special income. That extra 10, whatever I got, I'm paying you, Yes or no? The 10 itself I'm paying you. Don't ask me tax again. If you treat the 10 also as income and then ask me tax, my tax is 27,000 I'm getting. Who will pay for 10,000 rupees extra income, 27,000 rupees tax? You take income. This is what the logic. Do you understand? Now, therefore, my computation, is it correct or not? Logic. Is my computation logic correct or not? Now, therefore, plus 4%. Therefore, the answer is arrived. Now, look at again, is our computation right or not? Basically, if the total income is exceeding 12 lakh, I am not eligible for rebate. But if the total income is exceeded by some, if the amount of 12 lakhs is exceeded by very marginal total income, then consider whether relief can be provided or not. Able to understand? Relief can be provided or not. For example, one more example I'll take. Okay, here one more example I'll take. With that the answer will be over. One more example. Suppose my total income is completely 13 lakh. There is no special income at all. Let us assume there is no special income at all. Now I will try to compute tax as per rebate provision. 4 lakh, 4 lakh, 4 lakh, 1 lakh. Do you all agree? 0, 5%, 10%, 15%. Tell me what is the amount? 0, 20,000, 40,000, 1 lakh into 15%, 15,000. What is my total basic tax? 75,000. Agreed. Minus rebate under working note 1. When the total income is more than 12 lakh, rebate has to be solved in a different way. How to solve the rebate? Step 1, total income minus 12 lakh. 13 lakh minus 12 lakh is equal to 1 lakh. Now step 2, what is your basic tax on total income? How much it is? 75,000. Right now we saw 75,000 is the basic tax. Am I right? Enter here which basic tax I should take? Only that basic tax which is chargeable tax on normal rate. Only that tax I should take in step 2. But here fortunately entire basic tax is normal only. Step 3, rebate is equal to step 2 minus step 1. Always the answer is step 2 minus step 1. Rebate is equal to minus 25. Tell me, will anybody give you discount minus 25,000? Sir, product is 1,000 rupees, sir. Can you give me discount? Pay me 2,000. Will anybody give minus 1,000 discount? Exactly. If the rebate is negative, the answer is 0. Are you clear? Therefore, here there is no rebate. Therefore, you pay 75,000 basic tax plus 4% cess. Do you agree? Yes or no? Step 3, only if it is positive, you take rebate. This step 1, step 2, step 3 logic, when I should do? When my total income is more than 12 lakh. In the step 2, tax amount I should compute, right? Tax on total income. Which total income? Normal income related tax only I should consider. Understood? If at all special income related tax is there in step 2, I will not consider. Now rebate is equal to step 2 minus step 1. If positive, reduce it here. If negative, ignore it. That's it. Clear? Rebate 87A is fully done. Okay, so the same thing is given also in our book. So look at it. Rebate provision completely was given here. Rebate for individuals. Rebate under default tax regime. If total income is up to 12 lakhs, how much is the rebate? 60,000 or basic tax amount, whichever is lower, which is a Finance Act 25 amendment. Earlier this is 25,000 rupees only. Then if total income is more than 12 lakh, then part A, first compute A, total income minus 12 lakh. Then B, tax on total income, basic tax. Then C, if B is more than A, then only you should apply rebate. B minus A is equal to rebate. It should be positive, then only rebate is there. If it is negative, ignore. Yes or no? Now, biggest controversial amendment I said. What amendment? Special incomes are to be considered. Tax on special income is not eligible for rebate. This is the biggest amendment which is brought now for May 26 exams or September 26 or Jan 27. Are you clear? Yes or no? Special incomes are considered while calculating 12 lakhs limit. Total income is total income only. But when you are reducing rebate, reduce rebate only from normal taxes. Are you clear? That's it. So rebate shall not exceed. You know how they said special incomes are not eligible for rebate? They actually did not say in the law 115 BS. If you see, they never said rebate is not eligible for special income. They said like this: rebate shall not exceed income computed under 115 BSc subsection 1A. What is 115 BSc subsection 1A? Tax amount on normal income under default tax regime. What is the tax amount on normal income? Rebate cannot exceed that amount. Indirectly, what are they saying? You can claim rebate only from normal income. You cannot claim rebate from special incomes. Are you clear? That's it. Then, under optional tax regime, we don't have all this controversy. Same old provision. If at all total income is not exceeding 5 lakh, rebate is lower of income tax at 12.5. Sir, suppose if my total income is 5 lakh 10,000, sir. Can I apply step 1, step 2, step 3 logic here? No. Step 1, step 2, step 3 logic is applicable only for default tax regime. It is not applicable for optional tax regime. Sir, my total income is just 5 lakh rupee, 500 rupee. 5 lakh 500, just 500 rupees extra. No rebate at all. Further, under optional tax regime, rebate is not eligible under 112A tax. Rebate is not eligible under 112A. Therefore, important note, rebate under 87A is allowed from basic tax before adding the cess. Correct? Rebate under 87A is not available in respect of tax payable on 112A. However, other special incomes are eligible for rebate under 87A under optional tax regime. That's it. Over. Rebate provision is over. Understood or not? Now we need to discuss surcharge. Now we need to discuss surcharge and marginal relief. Once that is over, the answer is over. In this chapter, major portion will be over. Agriculture income discussion will be there. That's it. So I'm stopping this. Okay. Now if you look at the tax computation format, we understood how to compute basic tax. We understood how to compute rebate and rebate with relief concept. We understood. Now we need to understand one more element, surcharge, and one more element, marginal relief. If these two elements are over, tax computation discussion will be over. Correct? Now, surcharge. What is the surcharge? We have a discussion on that surcharge here. Okay, look at this surcharge. Yes, so let's continue surcharge discussion. Now, if at all you are thinking more examples are to be solved, remember this is a marathon class. Yes or no? This is a revision class, not a regular class. Okay, I'm already giving the best examples, topmost examples where all the dots gets connected. You apply the same logic which I told on any problem, you'll get the right answer. You have to get the right answer. That's it, because process is most important in solving. Next, now look at surcharge. Surcharge for individuals and HUFs, all that. Now, when surcharge is applicable for high income individuals. People who are having high income, government decided to collect more tax from them in the form of surcharge. Surcharge is like a tax on tax. Understood? Now, when surcharge is applicable, surcharge is applicable if your total income, total income is total, that's it, no more breakup, nothing. If your total income is more than 50 lakh, but not exceeding 1 crore, then surcharge is to be calculated at 10%. Tell me, surcharge is calculated on basic tax. Surcharge is calculated on basic tax. Rebate also will be reduced from basic tax. Be careful. Will both the situations come in the same place? Common sense. Surcharge is applicable when 50 lakh income crossed. Rebate is applicable when your income does not cross 12 lakh or 5 lakh as the case may be. Correct? That's it. Now what is the rate of surcharge? Whether you are paying under default tax regime, whether you are paying under optional tax regime, the surcharge rate is 10. Sir, my total income is more than 1 crore but not exceeding 2 crore. Then surcharge rate is 15 and 15. Suppose if your total income is crossing 2 crore, now I should be careful. If the total income is crossing 2 crore, now I should see total income composition. I should see total income composition. What total income consists of, I will see. It consists of dividend income. It consists of 112A. It consists of 111A, or it consists of 112A. That's it. Remember, winnings is not there here. Winnings point is not there here. Are you getting it? Winnings point is not there. Then, if my total income, after eliminating these 4 incomes, which 4 incomes you should eliminate? Dividend, 112A, 112. Remember, simple logic. If your total income is up to 2 crore only 2 or less than 2, you don't have to worry about composition. You don't have to worry about composition. How do we compute basic tax? Normal incomes, special incomes. On special incomes, apply special rate. Normal income, apply normal rate. You compute basic tax, add surcharge 10%, add 15%. Easy. Yes or no? Hello? Suppose if my total income in the problem they said 2 crore 10 lakh, they said. That's it. The moment 2 crore crossed, I should see the breakup of the total income. In this total income, is there a dividend? Is there a capital gains? Is there a dividend? Is there a capital gains? That which capital gains? 112, 112A, 111A. Not normal short-term capital gain. Normal short-term capital gain, I'm not worried because normal short-term capital gain is taxable at normal rates. Yes or no? Lottery also I'm not worried. Lottery also I'm not worried. If the total income, which is 2 crore 10 lakh, minus dividend, minus this one, minus LTCG 112A, minus STCG 112, sorry, minus STCG 111A, minus normal LTCG, which is 112. If I exclude that, if I exclude dividend, if my total income is more than 2 crore, then third criteria surcharge will apply, where the surcharge is taxable at what rate? 25% under both the regimes. If my total income, excluding dividend, excluding long-term capital gain 112, 112A, excluding short-term capital gain 111A, excluding those 4 incomes, if my total income is crossing 5 crore, then surcharge rate is 37% under optional tax regime, whereas under default tax, maximum surcharge rate is 25%. Are you clear? Tell me, excluding this point, I will apply when? When I will apply this point? I will apply this point only when my overall total income cross 2 crore. So, surcharge, if you see, part 1 surcharge rates, where surcharge rate is constant irrespective of your income. Whereas part 2 surcharge rate, if part 2 you see, if your total income is crossing 2 crore, excluding 4 incomes, excluding 4 incomes itself, your total income is crossing 2 crore. Or excluding these 4 incomes, total income is crossing 5 crore. Yes or no? Then the rate of surcharge is like this. So under optional tax regime, it is 25. If it is more than 5 crore, under default tax regime 25, but under optional tax regime it is 37%. Are you clear? Now, one example I will solve. Only one example I will solve. Look at. For example, my total income, okay, my total income is 3 crore. My total income is how much? 3 crore. But when I look at this breakup, dividend income 20 lakh, long-term capital gain 112, 10 lakh, okay, 112 a long-term capital gain, some 10 lakh is there. Then winnings, how much is the winnings? 40 lakh. How much is the winnings, ma? Or else let us assume 70 lakh. How much is the winning? 70 lakh. What is the balancing figure? 30 plus 10, 40 plus 70, 110. So is equal to 1 crore 90. Yes or no? Now immediately tell me which category is applicable. Balancing figure is how much, ma? 1 crore 90. Which category is applicable? 1 or 2 or 3 or 1 or 2 or 3 or 4 or 5? You should not check like that. What is my total income excluding 4 incomes? Which incomes? Dividend, LTCG 112, LTCG 112A, STCG 111A only I should exclude. This I should exclude, this I should exclude, this I should exclude, this I should not exclude. Hello? This I should not exclude. Am I right? Now, my total income minus dividend 20 lakh minus long-term capital gain 10 minus long-term capital gain 10, which means 45 reduce. Okay, my total income is 2.6 crore, which means my total income excluding all that is exceeding 2 crore but not exceeding 5 crore. Third criteria of surcharge is applicable for me. What is the rate of surcharge in both the regimes? It is 25%. Understood? Now look at how I will compute. Now let me compute this. Let me compute the tax on this. Okay. Actually, here is a very complicated problem. Okay. Now, when I am computing tax, right now, surcharge analysis I told. But when I am doing basic tax computation, I should apply basic tax logic. I should apply basic tax logic. I should apply. I should not apply surcharge logic. I should not apply surcharge. All that. Am I right? Now, first I have to compute basic tax. Remember, basic tax. What is my total income? Everyone, 3 crore. Yes or no? Now, special incomes are what? LTCG 112, LTCG 112A, winnings. Am I right? Winnings. Am I right? Is dividend special income? Never. Dividend is taxable at normal rates only. Is there any special rate of tax we discussed for dividend? Nothing. So, winnings how much here in this example, by the way? 70 lakh. Correct? Winnings is how much? 70 lakh. Now, by the way, tell me what is the long-term capital gain tax here? By long-term capital gain how much? 10 lakh. 10 lakh. Whereas this is 70 lakh. This is 12.5%. First 1.25 lakh. First 1.25 lakh 0. Next 1.25 lakh, which is taxable at 12.5%. Yes or no? Then this 70 lakh is taxable at 30%. Hello? Then what is the balancing figure? What is the balancing figure? 3 crore minus 10 lakh minus 10 lakh minus 70. 90 if you eliminate. What is the balance tax? 2 crore 10 lakh. Do you agree? How much is the balance? Balance income 2 crore 10 lakh. Correct? Now tell me. I need to check now which regime it is. Before I apply the tax rate slab rates, I should check it which regime. Let us assume it is default tax regime. Let us assume it is default tax regime. So SSC is choosing default tax regime. Now how will I apply? 4 lakh, 4 lakh, 4 lakh, 4 lakh, 4 lakh. Extra up to 24 lakh is there. Yes or no? 1, 2, 3, 4, 5, 6. Then balancing figure. How much is the balancing figure? Is equal to 1 crore 86 lakhs. Yes or no? Now this is taxable at 0, 5%, 10%, 15%, 20%, 25%, 30%. I'm taking the most complicated problem in surcharge calculation directly. Able to understand? Now what is the tax? 0, 20k, 40k, 60,000, 80,000, 1 lakh into 30% is equal to 55.8 lakh. What is the total basic tax? 20,000. Okay, 3 lakhs. 58 lakh. Hello? Yes or no? This is total basic tax related to normal income. Now, what is the basic tax total as a whole? 58 lakh 80. This one 112 1 lakh 25,000. Am I right? 0 1 up to 10 lakhs minus 1 lakh 25,000 into 12.5%. Correct? Yeah, 1 lakh 9,375. How many of you have computed correctly this one? Yes, very good. Then 30%, which is 21 lakh. So special incomes related basic tax how much? 1 lakh 25,000 plus 1 lakh 9,375 plus 21 lakh is equal to 23 lakh 34,375. Do you agree? Total basic tax is equal to 58 lakh 80,000 is equal to 82 lakh 14,375. Yes or no? This is the total basic tax. Now I computed basic tax successfully. Now I need to add surcharge. Now when I have to add surcharge, I have to look at the breakup again differently. What is my total income? What is my total income excluding dividend, excluding capital gain, excluding 111A? Including winnings 2 crore 1 lakh. What is it? 2 crore 1 lakh. for the sake of convenience, I will put it here. So these three, yeah, no problem. So these two I'll keep it here. Winnings I'm keeping it here. Understood? Now tell me, for the purpose of surcharge application, no, I'll just a small change again. So, okay, for the purpose of surcharge application, because no, my total income crossed 2 crore, guys. Yes or no? Since it crossed 2 crore, I should observe the composition. When I saw the composition, winning 70 lakh, dividend 20 lakh, LTCG 10 lakh, 1128 10 lakh, and remaining income is 1 crore 90. Hello, everyone. Now, what is my total income excluding dividend, excluding capital gain, excluding STCG? What is my total income? 2 crore 10 lakh. Now go back to this table. 2 crore 60 lakhs. Fantastic. 2 crore 60 lakh. Now my total income excluding dividend capital gains is exceeding 2 crore but not exceeding 5 crore. Therefore surcharge is 25%. But I will not calculate on this 25, guys. I will have to calculate 25% on basic tax. Yes or no? Now I want to know how much this basic tax, how much this portion's related basic tax, how much this portion related basic tax, how much this portion related basic tax, how much this portion related basic tax. Should I first compute that? Yes or no? Now look at one more provision I'm introducing now. Dividend income 112, 112A, 111A. On these 4 incomes, you will have basic tax, right? On that basic tax, surcharge can never exceed 15%. Surcharge can never exceed 15% on these 4 incomes related basic tax. Remaining incomes basic tax, it can be 10%, it can be 15, it can be 25, it can be 37 also surcharge. But these 4 incomes related basic tax, surcharge cannot exceed 15%. Now let me calculate. Winnings related basic tax, array we computed 21 lakh. Long term capital gain, this related basic tax 1.25 lakh we computed. Yes or no? And for this 1 lakh 9,875. Am I right? Basic tax. Hello? Now what is dividend related basic tax? What is remaining 1 crore 90 lakh related basic tax? We know 20 plus 190, 2 crore 10,000 total basic tax, 58.8 lakh we know. But dividend amount related basic tax how much? Remaining 190 related basic tax how much? We don't know. By the way, why should I split like this? Why should I split like this? Because here surcharge rate is 25. On dividend, surcharge rate is 15. For that reason, I must know what is the basic tax related to dividend, what is the basic tax related to 1 crore 90 lakh. But I don't have breakup like that. Both put together normal incomes only. Hello? Both put together normal incomes only. Both put together basic tax 58.8 lakh I know. Dividend related basic tax how much? Remaining income related basic tax how much? So that remaining income surcharge rate is 25%, dividend related surcharge rate is 15%. To apply that basic tax of these breakup I should know, which I don't have information. I will apply averaging method. I will apply what method? Averaging method. Remember, do I know what is the basic tax for these two put together? Hello? What is the basic tax? 58 lakh 80,000. Now simple logic. Oh, 58.8 lakh is for 2.1 crore. For 1.9 crore how much? For 20 lakh how much? If I do like this, can I get the answer or not? Yes or no? Simple arithmetics, no mathematics, no scientific calculation here. 2 crore 10 lakhs related basic tax. 2 crore 10 lakhs. This includes what? Normal income plus dividend income. Dividend is also normal, guys. First of all, understand. Including dividend, total basic tax is 58.8. Now on dividend 20 lakhs, in this 58.8 lakh, how much is the tax? On this 1.9 crore, on 58 lakh, how much is the tax? Simple, calculate it. 58 lakh 80,000 into 20, correct, dividend related, divided by 210 is equal to how much is the basic tax here? 56,000. Sorry, 5,60,000 is the basic tax related to dividend. Now this one 58,80,000 minus 5,60,000 is equal to 53,12,000. 20,000. Abba, now we computed basic tax correctly. Now I know basic tax related to normal incomes excluding dividend, I know. Basic tax on dividend income also I know. By the way, tell me why I did this kind of breakup. Because I don't know how much exact tax I'm paying on dividend. I don't know how much exact tax I'm paying on 1 crore 90, I don't know. But both put together how much I'm paying, I know. So I allocated proportionately. Are you clear? Now you might get a doubt. Sir, I can calculate basic exemption on this, no? Directly on 20 lakh I can apply 30% tax rate, no? Dividend income, what it did to you? Dividend income is also eligible for basic exemption, right? Remaining income is also eligible for basic exemption, right? You should treat them equally, right? Yes or no? You tax dividend at 30%. What is that? Well, it's inequality, yes or no? Dividend is taxable at normal rate. It also need basic exemption. Remaining income also is taxable at normal rate. It is also taxable at, it is also having basic exemption. Now, where basic exemption I should allot? No such clarification. Therefore, I will apply average everywhere. That's why I computed average tax here. Are you clear? Now I will see the surcharge. You see, now you apply surcharge. Now I computed basic tax on all the levels. Now I will apply surcharge. Now, at what rate? Again, my surcharge logic will apply. What is the rate of surcharge? If total income, excluding dividend, excluding capital gains, nothing but including winnings, and then this is exceeding 2 crore but not exceeding 5 crore, the surcharge rate is 25%. Now I already computed basic tax ma. Now surcharge is 25%. Here it is 25%. Yes or no? Whereas this is on dividend income, surcharge cannot be more than 15. 15 plus 15. Easy or not? Over. You get subtotal. Now how much is the subtotal? Tell me now. How much is that subtotal? Tell me now. 53,20,000 plus 25% surcharge. Correct? 66 lakh 50,000. Am I right? Then 21 lakh plus 25%. How much it is? 21 lakh plus 26 lakh 25,000. Correct? Then 5 lakh 60,000 plus 15% is equal to 6 lakh 44,000. Hello everyone. Then 1 lakh 25,000 plus 15%, 1 lakh 43,750. Hello. Then this is 1 lakh 9,875 plus 15%, 1 lakh 26,356. Correct? Whatever I have rounded, please. 66 lakh 50,000 plus 26 lakh 25,000 plus 6 lakh 44,000 plus 1 lakh 43,750. Yes or no? Plus 1 lakh 26,356 is equal to subtotal 1 crore 18 lakh. Yes or no? Sorry, 1 crore 18,000. No. 1 crore 1 lakh. 1 crore 1 lakh 89,106. Everybody got this? This is nothing but basic tax plus surcharge. Now you apply the rates. You see the rate basic tax. Did I compute it separately for special incomes and normal incomes? Yes. Did I apply surcharge on normal incomes plus winnings at 25%? Yes. Did I apply surcharge at 15% on remaining incomes? Yes. Every equation I'm satisfying now. Therefore, my basic tax computation is right. Surcharge computation is right. Are you clear? Yes or no? That's it. Surcharge main discussion is over. Now, depending upon total income, if it is more than 5 crore, optional tax regime 37%. Here if it is, here it will be 37%. Whereas remaining will be 15. Yes or no? Suppose my total income is more than 2 crore. My total income is more than 2 crore. Okay? And when I say category 3, category 4, when I try to apply category 3, category 4, I'm not getting it. If I exclude, no, my total income is reducing less than 2. If I include it, my total income is more than 2. If I include dividend, lottery, winning, all that, my income is exceeding 2. If I exclude them, it is less than 2. Now, if it is less than 2, no, here category 1 and 2, you should check everything put together. Category 3 and 4, you should check excluding dividend, all that. If I exclude dividend, if I exclude all that, it is not coming under 3 and 4. If I include dividend, if I include all that, it is not coming under 1 and 2. Then it will come under 5 category. Then it will come under which category? 5th. Simple. 15% surcharge on all. What is the rate of surcharge on all incomes? 15%. That's it. So look at maximum surcharge rate, the rate of surcharge shall not exceed 15% in respect of dividend tax, in respect of capital gain tax under 112, 1128, 111A. It can be 10 or it can be maximum 15. If it is coming under 1 and 2 category, 10. 10 and 15. If it is coming under 1 and 2 category, 10. Yes or no? If it is coming under 3 and 4 category, then this is the rate. Are you clear? 1 and 2 category 10 and 15, 3 and 4 category 25, 37. If it is coming under 15th, 5th category again, it is again 15. Are you clear? That's it. So no more in-depth discussion required until now, clear or not. Then how to calculate relief? How to calculate relief? This is again one more area where many students do mistakes. Okay. Now look at the relief calculation. Just 1 minute. Yeah. Now let's understand margin relief concept. Okay. Margin relief concept. A simple example I'll take. Okay. What is marginal relief? Very simple. Look at my total income is 1 crore 1 lakh. Let us assume my total income is 1 crore 1 lakh. Only one example I'm taking. Understand the concept behind here. Okay. 1 crore 1 lakh including everything. Assume that everything is a normal income. Assume that everything is a normal income. And that too, default tax regime I'm assuming. Okay. Default tax regime I'm assuming. Now, what is the basic tax? Basically tell me what is the basic tax? Up to 24 lakh, the tax is 3 lakh, correct? Beyond 24 lakh, which means 77 lakh it will come, right? Minus 24 lakh is equal to 77 lakh at 30%. Yes or no? Is equal to 23 lakh 10,000. Total basic tax is 26 lakh 10,000. Do you all agree? 26 lakh 10,000 plus surcharge. Since my total income is crossed 1 crore, including everything, second criteria will apply. 15% surcharge. What is the 15% surcharge? Yes or no? Into how much is the surcharge? 15%. How much it is? 3,46,500. What is the surcharge amount? 3,46,500. What is my subtotal? 26 lakh 10,000 plus all this. 29 lakh 56,500. This is the subtotal. Do you all agree? Yes or no? What happened? 26 lakh 10,000 into 15% surcharge, guys. 3,31,500. Correct? Oh, 391,500. 3,91,500. 3,91,500. 26 lakh 10,000 plus 15% is equal to, okay, fine. Okay, fine. The computation mistake. 3,01,500. Correct? 3,01,500. This is the subtotal. Now look at 30 lakh 1,500. Okay, this is the this is the subtotal. Now look at, suppose if my income is just 1 crore, if my income is exactly 1 crore, how much would be the tax I will see? Okay, how much would be the tax I will see? If my income is like 1 crore 1 lakh, this is what you are getting, right? If my income is 1 crore 1 lakh, correct? This is. What if my income is exactly 1 crore? What if my income is exactly 1 crore? Fine, again I will compute the tax. 1 crore means what? Up to 24 lakh 3 lakh. 20 is remaining 76 lakhs into 30%. Yes or no? So which is 22 lakh 80 plus 3 lakh. How much it is? 25 lakh 80,000. Am I right? My basic tax is how much? Now tell me, if my total income is just 1 crore, not more than 1 crore, my surcharge rate is just 10%. What is the 10% value? 2 lakh 58,000. Am I right? What is my subtotal? 25 lakh 80,000 plus 10% is equal to 28 lakh 38,000. Am I right? Now tell me, right now my income is increased by how much? 1 lakh. Because of this, my total tax increased by 30 lakh 1,500 minus 28 lakh 38,000 is equal to 1 lakh 63,500, which is unfair, no? Just my income is increased by 1 lakh. For that you are asking me to pay extra tax 1 lakh 63. I'll do one option. Let's have a deal. I will pay you this 1 lakh. You take it. I don't want this 1 lakh. If I have that 1 lakh only, you're asking me 1 lakh 63. No. I'll do one thing. Don't ask me this 1 lakh. I'll pay you this 1 lakh. Extra 63,500, no? Don't ask me. You want, see, you're asking me tax on income, surcharge on income, right? I'll give you income itself. I will not pay income tax. I will pay income itself. Are you clear? I'll do one thing. On 1 crore, no? Let us assume my income is only 1 crore. Plus, I will pay this 1 lakh as tax to you. Don't ask me 1,63,000. I will pay 1 lakh. Don't ask me 1,63,000. Indirectly relief 63,500 over. Do you understand? Indirectly relief is how much? 63,500. Now tell me what department is asking me actually. Step number 1. Department is asking me tax on total income including surcharge. They're asking me originally actual tax on total income including surcharge. They're asking me 30 lakh 1,500. Am I right? But what is my argument? Step number 2. Look, I will pay tax on 1 crore. In this example, I will pay tax on 1 crore. How much I will pay tax on 1 crore? 28 lakh 38,000. Yes or no? Plus, I will pay extra whatever income is there. Extra whatever income more than 1 crore. How much is the extra income? 1 lakh. So how much is that? 29 lakh 38,000 I will pay as basic tax to you. Basic tax plus surcharge I will pay this much only. Don't ask me this. Step number 3. I want relief. How much I want relief? 63,500. Since it is positive, I will claim relief. If it is negative, I will ignore. If it is negative, I will ignore. Now again look at what is my original basic tax. My original basic tax is 26 lakh. Hello? Yes or no? My original basic tax is 2610. Original surcharge applicable how much? 3,91,500. You are asking me originally 30,01,500. Correct? But I am asking you relief of. I just did computation of working note. As per your calculation, if I go, I am unnecessarily has to pay extra. That 1 lakh have to pay. 63,500 also extra have to pay. But what is my argument? I am ready to pay 29 lakh 38. Don't ask me 30 lakh 1,000. Am I right? Please take from me 29 lakh 38. What is 29 lakh 38? It is tax on 1 crore. Extra income above 1 crore. Yes or no? Therefore, please give me relief of 63,500. So, as I agreed, how much I'm agreeing to pay? 29 lakh 38,000 I'm agreeing to pay. What is this 29 lakh 38,000? What is this actually? It's tax on 1 crore with surcharge at lower rate. Am I right? Plus that extra 1 lakh whatever is there, I'm ready to pay. Am I right or not? Now plus 4%, you will get the answer. This is what the steps for computation. In exam, you should give like this steps only. Presentation. Look at, we have given formula also. Right now, we did this problem only. Am I right? First, no. We computed what ma? Tax on total income. Total income in our example, 1 crore, 1 lakh. Plus, what is the surcharge rate? 15%. Step 2, what we did? Tax on 1 crore at 10% surcharge. Plus, I am also ready to pay whatever total income minus 1 crore, 1 lakh. Step 3, relief is equal to 1 minus 2. If negative, ignore. If positive, reduce it. Are you clear? Where you should reduce? In tax computation format, you should reduce. Where you should reduce? Tax computation format. I showed right. Tax computation format. Here you should reduce. Yes or no? So, first department is asking me originally. What they're asking me originally? Yes or no? 26 lakh 10,000 plus 15%. Then they're asking me 30 lakh 1,500. Right now I computed step 2, which is positive 63,500. Therefore, 29 lakh some amount. Therefore, balance amount I'll get. That's it. Easy. Surcharge and relief over. So very simple. Sir, what if my total income is just more than 50 but not exceeding 1 crore? That time how to compute surcharge? Very simple. That time also the same logic. Yes or no? First, step 1, compute tax on total income at applicable surcharge rate. Step 2, compute tax on 50 lakh plus surcharge is 0. Up to 50 lakhs, what is the surcharge? 0. Therefore, here surcharge is not there. Plus total income minus 50. Accordingly, you will get. If total income crossing 2 crore but not exceeding 5 crore, same compute tax on total income plus applicable surcharge is 25. Then compute tax on 2 crore plus up to 2 crore surcharge rate is 15 plus total income minus 2 crore. Exact logic everywhere. Are you clear? Whether you take default tax regime, optional tax regime, the computation of surcharge, the computation of marginal relief, the process remains same. That's it. With this, surcharge and marginal relief is also completed. Now we understood what are slab rates. We understood slab rates under optional regime, default regime. We understood what are special rates. Then we understood how to compute tax on special rates. We understood how to compute basic tax. We understood what is unutilized basic exemption limit. We understood rebate. We understood surcharge. We understood relief. What else is there in tax computation? Everything is done. Clear? Now we are just left with agriculture income. And if agriculture income is there, how to compute basic tax? If that is over, this particular provision will be over. Clear? That's it. Yes. Let's proceed. Discussion of agriculture income. Okay. Discussion of agriculture income. In our book, it is 10th concept. What is agriculture income? Very simple. If you are getting any rental income from the agricultural land or any revenue from the agricultural land, whether in cash or in kind, doesn't matter. That's an agricultural income, provided the land is situated in India and the land is used for agricultural purpose. That's the first condition. Now, from agriculture, what is agriculture income? Three types of incomes are agriculture income. One, rent or revenue from agricultural land. Two, you are involving in agriculture activity. You are not leasing the land. You are only involving in agriculture activity. Income derived from agriculture activity. What do you mean by agriculture activity? You are carrying out basic operations and subsequent operations. You are carrying out basic operations and subsequent. Basic operations are absolutely necessary. Tilling the land, sowing the seeds, yes or no. Subsequent operations, weeding and harvesting, all that comes at a subsequent. Both constitute agricultural activities only. And when you do agriculture activity, raise the produce and sell the produce and get the money, that income is treated as income derived from agricultural activity. Remember, animal husbandry is not agricultural activity. Poultry, dairy, not agricultural activity. Suppose I am rearing cows and buffaloes and donkeys or whatever it is, but I'm getting the milk from them and I'm selling in the market. That's not agriculture. That's a dairy business. Are you clear? I'm poultry, I have farm. Yes or no? Hens, whatever is there, I'm rearing a flock of hens. Yes or no? That hens farming, whatever is there, that's not agricultural activity. Are you clear? So farming, poultry farming, animal husbandry, all these will not constitute agricultural activity. Dairy, that is not agricultural activity. That's it. Next up, what about nursery, where I will not grow the plants on the land, I will grow the plants in the pot. Nursery where they sell plants and all, saplings and seedlings, yes or no, where they deal, it is still treated as agriculture, even though it is not directly on the land, but it is in a pot. Able to understand? So, income from nursery will be treated as what? Agriculture income. Then third type of income is income from building, farm building. What is the third type of agriculture income? Income from farm building. What is income from farm building? Very simple. In the agriculture land, I have a building. That building I'm renting. I'm getting rental income. Basically, from a building, if I'm getting any income, that is taxable under house property. Basically, building means it's a house property head of income that will apply. But since this building is in the land, is in the immediate vicinity of the agricultural land, and if that building is used for residential purpose of the farmer, if that building is used as a warehouse for agricultural produce, and for agriculture purpose they are using ultimately and paying me rent, that rent income is also treated as agricultural income. So agricultural income is three types. One, by renting agricultural land. Two, by renting a building for agriculture purpose, provided, most important condition, the building should be in the land. Sir, I have a building in heart of the city, Chennai, commercial complex. That building, a farmer is taking that on rent, that building. No, that's not agriculture income, because that land, that building is not on agricultural land. First most important condition, rental income from building. Is it agriculture income? Only if that building stands on the agricultural land. Are you clear? If the building is not in the agricultural land, then that is not an agriculture income. Are you clear? Rental income from corporate office. Rental income from a building which is given to an agriculture company. That is still a rental income taxable under house property. That is not agriculture income. When do I say income from farm building is agriculture? First of all, the building is occupied by either receiver of the rent or by the cultivator. Then the purpose of the building, it is used for agricultural purpose. That is either residence or business purpose, which is for agriculture. Farmer is residing there, then no problem. It must be, the building must be on the agricultural land. It must be the agricultural land. Further, the land is then agricultural land. On that land, no, you should be paying land tax. You should be paying land tax. Land revenue should have been paid on that tax as agricultural land tax. If at all that land is not subject to agriculture tax, then that land and building should not be situated in specified area. Then that land and building should not be situated in specified area. Specified area means urban area. What is urban area? Very simple. If at all you have agricultural land, if at all you are having agricultural land within the municipality limit, that's an urban land. Then the land is said to be situated in, yes, if the land is not situated, if the land is in the specified area, and on that you are paying tax, and you are using that land for agriculture purpose, on that there is a building, that building is paying you rent, still it is an agriculture income, provided the land is paying tax to the government. If it is, since it is an urban area or specified area, suppose you are not paying tax on land, then the land must be situated in outside the specified area. What do you mean by specified area? For example, what do you mean by a specified area? Look at this. What is meant by specified area? For example, so this is municipality. Okay, if land is anywhere here, yes or no, this is within the municipal limits, the land is anywhere within this locality, it must be liable for tax. And if you are paying tax on that land as agriculture tax, okay, I mean generally as per land revenue, government will collect tax, property tax from the land. If at all you are paying property tax, no problem. And the land is used for agriculture, yes. And the on that building is used for residential purpose, yes. Then the rent is agriculture. Sir, land is not in the specified municipality limit, sir. Land is outside the municipality limit. The land is outside the municipality. But guess what? It is within 2 kilometers. It is within 2 kilometers from municipality border. From municipality limits, no, it is situated within 2 kilometers. And guess what? This municipality population is more than 10,000. This municipality population is more than 10,000. If that is the case, up to 2 kilometers any land is there, that is also urban land only. If at all the municipality which I am talking about, if that municipality has a population of more than 10,000, any land from that municipality up to 2 kilometers is also specified land, is also a specified area. Are you clear? Suppose if that municipality has more than 1 lakh population, if that municipality has more than 1 lakh, then the limit is up to 6 kilometers, guys. Then the limit is up to 6 kilometers. Are you clear? If at all the municipality has more than 1 lakh population, then easily the city can expand up to 6 kilometers, no problem. Suppose if the municipality has more than 10 lakh population, if the municipality is this one, if this municipality has more than 10 lakh population, then any land up to 8 kilometers, any land up to 8 kilometers, yes or no? Any land up to 8 kilometers is an agricultural land. Are you, sorry, any land up to 8 kilometers is called as specified land, nothing but urban land. Able to understand? Many will not understand this point correctly. The point is, this is how you should understand. Municipality limit is this only. If this population is just 10,000 or less than 10,000, doesn't matter. If the land is situated here, no, it doesn't matter with the population. But the land is situated outside the municipality limit. Then if this population is more than 10,000, then up to 2 kilometers is specified area. If this municipality has population more than 1 lakh, then up to 6 kilometers is a specified area. If the municipality has a population more than 10 lakh, then up to 8 kilometers is specified area. As the population increases, specified area increases. Are you clear? That's it. Now, if the population in the example, for example, you see, suppose no, shortest aerial distance 1 kilometer outside the municipality limit, aerial distance means how flight travels, not Google map distance. Able to understand? So aerial distance, if it is 1 kilometer, which means outside the municipality. Outside municipality is there. Minimum municipality population should be 10,000. Then only it is urban land. Then only I will call it as land situated in specified area. Am I right? Now, is it the land treated as agricultural land? You know, urban land means land situated in specified area. Rural land means land not situated in specified area. When do I say outskirts? Array, here population is very less, that's why it's called outskirts. Yes or no? Outskirts of a city. Now here the land is situated in outskirts and the municipality population is just less than 10,000. It is outside. Okay, this is not a specified land. This is not an urban land. Yes or no? Is it an agriculture land? Yes. When I say agriculture land, the point is it's not a specified land. That's the meaning. It's not a specified land. Specified land means what? Land situated in specified area. And if you remember, capital asset covers only that land. Capital asset definition under capital gains chapter covers only the land which is situated in specified area. If the land is not situated in specified area, if the land is not situated in specified area, then that is not treated as a capital asset. When I say agricultural land means it is not a capital asset. Are you clear? When I say it is not an agricultural land, it means it's a capital asset. Are you clear? Now, suppose, sir, my land is situated just within 2 kilometers. And how much is the municipality population? More than 10. Yeah, then that's an urban land. That's an urban land. So is it rural land? No. Rural land means agricultural land. See, agricultural land in my book refers to rural land. It refers to not situated in specified area. Are you clear? Next, sir, my land is situated exactly at 2 kilometers. And what is the municipality limit? Ayyo, 11 lakhs is there. Automatically, it is not a rural land anymore. Yes or no? Next, sir, my agricultural land is situated exactly after 2 kilometers, sir. There, how much is the municipality population? Array, 80,000 only, yeah. Up more than 2 up to 6 kilometers, I will see only when the municipality population is minimum 1 lakh. Here it is not there. Therefore, it is a rural area. It is a rural area. Do you understand? Then, suppose my land is situated at 4th kilometer. I will see the population. Oh, more than 1 lakh is there. My land is situated at 4th kilometer. Municipality population is how much? More than 1 lakh. Therefore, up to 6 kilometer, any land is there. That's an urban land. That's not an agricultural land. Therefore, the answer is no. It's not an agricultural land. Are you clear? Next, 5 kilometers. Actually, here instead of using the word agricultural land, you can use the word rural land. Is it a rural land? That's the question. Agricultural land means what? Is it a rural land? That's it. Sir, my land is situated at 5th kilometer. Okay, within 6 kilometers. Population, minimum 1 lakh should be there. Oh my God, 12 lakhs is there. So automatically, it is not a rural land. Yes or no? It is not a rural land. Am I right? Next, suppose my land is situated at 6th kilometer after municipality. How much is municipality population? Array, just 8,000. It's a rural land, yeah. Yes, it's a rural land. Now, sir, my land is situated at 7th kilometer. Beyond 6 means minimum population should be 10 lakhs. Minimum population should be 10 lakhs. Here, 4 lakhs. Again, it's not a, it is a rural land. Am I right? It is a rural land. The moment it crosses 6 kilometers, municipality population should be minimum 10 lakh. Sir, my land is at 8th kilometer. Municipality population 10 lakhs crossed. Therefore, it is not a rural land. It is again a urban land. Sir, my land is situated beyond 8. If it is beyond 8, population limit does not matter. It is always a rural land. Are you clear? Yes means rural land. No means not a rural land. Yes means urban. Yes means rural land. Yes or no? Rural land is not a capital asset. Able to understand? The same logic is what discussed in capital gains chapter also. Now this 2 kilometers to 6, 6 to 8, up to 2, up to 10,000 to 1 lakh, 1 lakh to 10 lakhs, 10 lakhs above. This point how to apply, you understood? Yes or no? That's it. So agriculture income topic is almost over. Now sometimes what happens is, remember, if the land is used for film shooting and then they're paying you some amount, or the building is used for some film shooting or commercial purpose and they're paying you amount, that is fully taxable. That is fully taxable and that is not treated as an agriculture income. Are you clear? Sometimes, no, you know, there is a farmer, okay, there is a farmer who is producing sugar cane. Sugar cane he is producing, and using that sugar cane, what he is doing, you know, 50% he is selling in the open market. Another 50% he is what, you know, further processing he is doing and then manufacturing jaggery or sugar. He is manufacturing jaggery or sugar. He is using, now, you know, here there is a composite activity involved. What is it? Composite activity is involved. When a composite activity is involved, how should we calculate agriculture income? In this basic concepts chapter, we have a question on that. Directly we'll solve that, okay? We'll directly solve that question. You will get a fantastic idea. Like, it's not, I mean, instead of explaining the provision, I'm directly giving you the problem here. I think in the illustrations itself, there is a question on that. Yes, look at this. Look at this question. Can I? Okay. How should we compute agricultural income? I'll tell you. Mr. B grows sugarcane and uses the same for purpose of manufacturing sugar in the factory. 30% of the sugarcane produce. How much it is? 30% of the sugarcane produce is sold for 10 lakh. And cost of cultivation of that sugarcane is 5 lakh. Okay. The cost of cultivation of balanced sugarcane 70% is how much ma? 14 lakh. And the market value of the same is 22. What he did after spending 1.5 lakh in manufacturing process on the balanced sugarcane, which is 70%, the sugar was ultimately sold. The sugar was ultimately sold for 25 lakh. Compute his agriculture income how much and taxable income how much they're asking. Basically, see, if at all I am growing sugarcane and selling the sugarcane in the open market completely, whatever profit I made, that's an agriculture activity income. And agriculture activity income is an agriculture income 10 clause 1 exempted. As per 10 clause 1, agriculture income is exempted. Remember, agriculture income is exempted by constitution itself. It's not in income tax. Entry number 82 or 83 we have, right? Tax on any income other than agriculture income, constitutional provision. You government can levy tax on any income except agriculture income. That's why in income tax specific exemption is given under 10 clause 1. Agriculture income is exempted. Are you clear? Now look at. So, just a minute. So now tell me how much sugarcane he produced. Let us assume he produced 100% sugarcane. 100% is what his production is. What he did, 30% he sold it in open market. 70% he did further processing. Am I right? Hello, everybody? Now tell me how much, at what price he sold it for? Where is it? Yeah. So at what price he sold it for? 30% of the sugarcane is sold for 10 lakh, correct? 30% of the sugarcane is sold for, sale value is equal to 10 lakh. Can I? Yes or no? Now, what is agriculture income here? See, revenue is 10 lakhs. Income is not 10 lakhs. For this 30% sugarcane, no, I spent cultivation cost. How much is the cultivation cost? Cultivation cost is 5 lakh. The cost of cultivation of such a sugarcane is 5 lakh. How much is the cultivation cost? 5 lakhs, correct? What is my agriculture income in this case? 5 lakhs. On 30% of the sugarcane, my agriculture income is what? 5 lakh. This is agriculture income as per 10 clause 1 right now. Clear? Now 70% of agriculture is there. 70% of sugarcane is there. 70% of sugarcane. What I did? I didn't sell it. I converted that into sugar. And I sold sugar. Yes or no? What I sold is actually sugar. Now look at. So how much is the sugar sale value? Sugar sale value, if you see how much is the value, sugar sale value, oh, after incurring 1.5 lakh, okay, sugar was ultimately sold for 25 lakh. Sugar was ultimately sold for 25. But tell me, to sell this sugar, I have incurred further processing expenditure, 1 lakh 50. Do you agree? Yes or no? And to sell this sugar, raw material is sugarcane cost. Am I? The raw material is what? Sugarcane. Now, how much is the cost of the sugarcane raw material? How much is the cost of the raw material sugarcane? I didn't purchase it. I produced it, and that only I am using it for self-consumption, captive consumption. Am I right? It is I am using it for self-consumption. Now tell me, what is the sugarcane cost of cultivation? What is the sugarcane cost of cultivation? The cost of cultivation of balanced sugarcane is 14 lakh, whereas market value 22 lakh. You know what the rule says? There is a rule called rule number 7. There is a rule called rule number 7. What rule number 7 says? You know, if a producer an agricultural produce, using it for further processing, then the raw material cost to be computed, the raw material cost to be considered for calculating PGBP income, taxable income, should be not actual cost but market value. What you should consider? Market value. Raw material, sugarcane, 70% of the sugarcane market value is 22 lakh. Cultivation cost is 14 lakh. Should I reduce cultivation cost? No. That's where many students do wrong. You should reduce what? Market value of the input raw material. Input raw material is here 70% of the sugarcane. 70% of the sugarcane cost of cultivation is 14 lakhs only, but market value is 22 lakh. 22 lakh I should reduce. This is rule number 7 rule. This is rule number 7. Look at the rule number 7. Here it is there. Yeah, rule number 7. Look at, for income from growing and manufacturing. You grown sugarcane and manufactured sugar. Yes or no? The market value of the agricultural produce. Look at market value of the agricultural produce used as raw material in business is deducted from total income computation. Nothing but if you are calculating profits, no, market value of the raw material used shall be reduced, not the cost. Yes or no? Are you clear? Yes or no? So therefore my business income is how much? My business income is how much? So 22 plus 1.5, 23.5 minus 25. Just my business income is how much? 1,50,000. Now if you observe, agriculture 70% of the sugarcane I spent 14 lakhs. But in my business, no, in my agriculture, from my agriculture records to I transfer to my business. In my business books, no, how much I recorded as cost of purchase? 22 lakh. In my agriculture also sale value, how much I should record? 22 lakh. 22 lakh I will record sale. Therefore my agriculture income on self consumption is how much? My agriculture income on self consumption is how much? 8 lakhs. My total agriculture income is how much? 13 lakh. My total business income is how much? 1.5. This is how you should compute. Are you clear? Which means when you are using agricultural produce for business purpose, manufacturing, further manufacturing purpose, market value is treated as sale value of agricultural produce. Market value is treated as sale value of agricultural produce in your agricultural records. Minus cost of cultivation is equal to agriculture income. Suppose, no, if the market value is 10 lakhs only, then agriculture income will be 4 lakhs loss. Agriculture income will be 4 lakhs loss, and positive agriculture income 5 lakhs, loss of 4 lakhs agriculture income, net agriculture income 1 lakh. That's how I compute. Are you clear? Everyone. Now here there is a solid logic why they did like that. If I purchase sugarcane in the open market, how much is the cost I have to pay? 22 lakh. If I want to manufacture the sugar at 25 lakh, if I want to sell sugar for 25 lakhs, I should buy first sugarcane, no? In the market, if I purchase, how much I should pay? 22. That only you should reduce, no? What if I will do one thing? I'll sell to somebody 22 lakhs. Then I will again buy from somebody. Now my income will be like this only, no? Yes or no? The same logic is applied here. Able to understand? When you are selling to somebody at 22 and again buying, I mean, your cost of cultivation 14 and you are selling to somebody at 22, then agriculture income is 8 lakhs, no? Here, instead of you selling it to somebody, you are only using in your another business. From your business point of view, this is purchase. So from business point of view, what is the purchase cost? Market value of the produce used. You have in 28, when a stock in trade is converted into capital asset. When a stock in trade is converted into capital asset, not capital asset into stock in trade. Stock in trade into capital asset. Charging section 28, what it says? Market value on the date of conversion is PGBP income. Market value is on the date. For example, I'm a furniture manufacturer. I manufacture one sofa for 40,000 rupees as a manufacturing cost. I'm using it for my customers. Whenever my customer visits, they need to sit, right? I'm using it for my fixed asset purpose. This furniture, I should add it in the block. At what price I will add in the block? Market value. At what price I sell it? I sell it at 70,000. Then 70,000 is added to the block. Now in PGBP income, how much I should show? 70,000. Sir, I didn't sell it. No, it is deemed to be a PGBP income. It is deemed to be a revenue. Are you clear? Hello, do you remember this first of all provision? Yes or no? 28 charging section, conversion of stock in trade into capital asset. Same way, when you are converting capital asset into stock in trade, 45 subsection 2. Market value on the date of conversion is full value of consideration. Market value on the date of conversion is full value of consideration. That's it. Anyhow, when I come there, I will discuss that. This is how agriculture income has to be computed. Are you clear? Further, there are few more agriculture incomes where there will be deemed to be a composite activity. What are they? When you are growing the rubber and then selling it, 35% of the net income, 35% of the net income. Net income means what? Sale of rubber minus cultivation of rubber minus all other expenses. Depreciation you should reduce. Net income you compute, right? On that 35% is taxable, 65% is not taxable. Agriculture. If it is coffee grown and cured, 75 is not taxable, 25 is taxable. You are doing roasting and grounding. Further process is more. Then business income will be more. Agriculture income reduced. Are you clear? Then T 60-40. Are you clear? Yes or no? Now, when you are having agriculture income, how to compute the tax? When you are having agriculture income, how should we compute the tax? For example, SSC total income is 14 lakh. SSC total income is 14 lakh. SSC's agriculture income is 5 lakh. Remember, when I say total income means it is only taxable income, not agriculture income. Are you clear? Only taxable income is 14 lakh. Agriculture income is 5 lakh. Now, how should we compute? Now, first step 1, basic tax. 14 lakh agriculture income plus non-agriculture income. Both you should put together 19 lakh. On this you apply basic tax. Default tax system I'm applying. Okay. Now 4, 4, 4, 4 and then 3. Yes or no? 0, 5%, 10%, 15% and then 20%. 0, 20k, 40k, 60k, 3 into 20, 60k. Correct? Total basic tax how much? 1,20,000 plus 60, 1,80,000. Step 1, 1,80,000. Step 2. Now what is the tax on basic exemption limit? Basic exemption limit for the SS is 4 lakh. Agriculture income is 5 lakhs. So right now step 2 income is 9 lakh. Now on this what is the tax? First 4 lakh 0. Next 4 lakh 5%. Next 4 only 1 is there, which is 10 is equal to 10,000. Step 2 is how much? 10,000. Step 3. Step 1 minus step 2. 1,80,000 minus 10,000. How much it is? 1,70,000. This is how basic tax has to be computed when agriculture income is there. Very simple. First step. Compute tax on total income plus agriculture income. Put together total income you compute. On that basic tax you compute. Step 2. Basic exemption limit plus agriculture income you take. Then compute basic tax. Step 3. Step 1 minus step 2 is equal to balance basic tax. Here department logic is what you know. Sir, you said agriculture income is exempted. No. Then why are we computing tax here on agriculture income? Yeah, step 1 you are computing tax on agriculture income. In step 2 also you are computing tax on agriculture income. In step 2, step 1 minus step 3 means this and this cancelled. No, indirectly. Indirectly, where am I taxing agriculture income? Where am I taxing it? That's the department logic. But you are taxing it indirectly. How? Suppose no, I don't have agriculture income at all. If I don't consider agriculture income is exempted, no, I will not consider. How much is my tax? 4, 4, 4 and 2. Am I right? 0, 5%, 10%, 15%. 20,000, 40,000, 2 lakh into 15, 30. Total basic tax is how much? 60 plus 30, 90k. But how much you got here? 1,70,000. Indirectly, department is collecting tax on agriculture income. Sir, what is this? Unfair? No. Hello, Mr. Constitution intention is what you know. If you are having only agriculture income, no other income, then it is fully exempt. I will not touch you. But you are doing other activity also along with agriculture. Constitution intention is not that. Constitution intention is to give exemption from income tax for those who are pure farmers. You are getting other incomes. So for you, I will not give absolute exemption. I will collect tax from you indirectly. Are you clear? Here, no. So I will give exemption. See, if at all you are having only agriculture income beyond basic exemption limit, then different story. But you are having many other incomes along with agriculture income. I will not give exemption. That's what the concept. Look at aggregation concept at the last we have given. Aggregation concept. After surcharge, at last it will be there. Look at how to calculate aggregation, integration. What is this concept is called as? Integration of agriculture. How many of you know this provision first of all? Oh, majority not aware of it. Oh my God. Fine. So, partial integration of agriculture. What is this? Agriculture income is exempt. But indirectly, indirect taxation is allowed. Now, how to calculate tax when agriculture income is there in the question? First, compute basic tax. On what and of what? Total income, 14 lakhs in our example, plus net agriculture income, 5 or 10 lakhs, whatever is there. total it, and then compute basic tax as per slab rates or special rates, whatever. Step 2, basic tax on net agricultural income plus basic exemption limit. On that you calculate. Then final basic tax is equal to step 1 minus step 2. Then that's the basic tax. Now add surcharge, same surcharge logic. Then rebate, as usual logic. Are you clear? This is how indirectly government is collecting. Suppose if at all net agriculture income is exceeding 5,000 only, you should apply this aggregation. If the net agriculture income is not exceeding 5,000, no need to apply aggregation. And non-agriculture income, that should be more than basic exemption. If at all non-agriculture income is less than basic exemption, no need to pay tax. Are you clear? That's it. So enough, clear. With this, entire basic concepts including agriculture income taxation is completed. That's it. So we will continue in the next session with residential status. Until now, clear. That's it. Okay, guys, this is a revision session. Remember that. Okay, yeah. Even though it's a revision session, I'm giving you in-depth clarity. Yes or no? You are getting, like, those who at least studied once the subject will know it, what I'm doing. If at all you don't know anything about the subject, I can't be held responsible. Yes or no? Still, I'm trying my level best to give you all the dots connected. Okay, that's it. Yes, just now we completed salary set of income. For a change, I am starting with PGBP chapter. Okay, because after PGBP, we'll discuss other sources. After it, we'll discuss house property. Okay, fine, we'll see. I'm telling you guys, PGBP is what something like everybody feel complicated, but it is not that complicated according to me. After this 2-hour session of PGBP division, you will also tell me that. Okay, now. So, profits and gains from business or profession. Remember, the moment you think of PGBP head of income and other sources head of income, the first thing that you should think of is what is the method of accounting. What is the method of accounting? You know, how should we compute income under PGBP? Even in salaries topic, charging section, I just told about employer-employee relationship, but I didn't tell you recognition method in salary. In salary, the salary income is taxed on due or receipt, whichever is earlier. The salaries, the taxability is based on due or receipt, whichever is earlier. Due basis is different from accrual. Due is different from accrual. Both are not same. Correct? Now, for example, what exactly the due basis and how it is different from accrual? I hope every one of you are aware on that. Due, for example, no, April month salary, 1st May it became due. Means as per company policy, current month salary I will pay on next month first date. May month salary, 1st June it is due. June month salary, 1st July it is due. August month salary, 1st September it will be due. March month salary is due on 1st April. This is how the due. Now in salary set of income, taxability is based on due dates. Taxability is based on due dates. For example, employee is having for 23-24, April 2023 to March 2024, his monthly salary is 50,000 rupees. April month to March month, his salary, monthly salary is 50,000. But as per company policy, salary is due on next month first. Salary is due on next month first date. Are you clear? Or let us assume next month 5th date. Further, from April 24 to March 25, his monthly salary was 60,000 per month. His monthly salary was 60,000. Here also, April current month salary is due on next month 5th. Clear? Now, on accrual basis, tell me, on accrual basis, how much is the salary in 23-24 year? 6 lakhs. Am I right? Accrual. 12 months multiplied by 50,000. Accrual. How much salary accrued in that year? Accrual. Accrual means due date concept is irrelevant. How much you earned, that is important. Now, April 24, 7,20,000. Am I right? But on a due basis, April 2023 to March 2024. April 2023 to March 2024. Within this 12 months, how many due dates came? 5th April, 1st due date. 2nd due date, 5th May. 3rd due date, 5th June. 4th due date, 5th July. Last due date, 5th March. On these due dates, which salary became due, Suppose, first due date is what? 5th April 2023. Am I right? On this first due date, first due date, you are having March 23 salary being paid. Last month salary is paid in the current month 5th. March month salary is how much, 40 only. March month salary is how much? 40. Are you clear? So 40,000 is due on 5th April. April month salary is due on 5th May. April month salary monthly how much? 50. Which is due on 5th May. Again, May month salary 50, which is due on 5th June. February month salary, which is due on 5th March 2024, which is again 50. March month salary is not due in that year. March month salary became due in the next year. Therefore, 5,90,000 is the total salary due during the year 23-24. 7,10,000 is the salary that is due during the year. 7,10,000 is salary due in the year 24-25. Accrued salary is this much, whereas due salary is 7,20,000. In salary set of income, salary is taxable on due or receipt basis, whichever is earlier. Are you clear? Sometimes in the problem, 12 months data they'll give you. Further, they will also give you one more point. Next year, 2 months salary was received in advance by employee now. You should tax it in the current year, because you received it in the current year before it became due. Salaries, how it is taxable? Either when it become due it is taxable, or when you received it, it becomes taxable. Due or receipt, whichever is earlier, it is taxable. Yes or no? Now, next 2 months salary, current year you received it, it is taxed. Will you consider this 2 months salary you received in advance, right? Will you consider this in HRA calculation? Will you consider this in RFA calculation? No. Suppose I was given RFA from April to March. Only that 12 months salary only I will take. I was taking RFA for 5 months. November, December, Jan, Feb, March. Only these 5 months salary only I will take. I will not take remaining months salary. Able to understand. Salary for the purpose of RFA, salary for the purpose of HRA, I will only take relevant month for which I am using accommodation. Only that month related salary I should take. Are you clear? That is for RFA HRA. Now, how much basic salary you will tax it? Due basis you will calculate. If you receive it before it became due, then on receipt basis you will calculate whichever is earlier. And tell me, once a salary was taxed on due basis, will it be once again taxed on receipt collection subsequently? No, double taxation will not be. 5th April it became due. On the day bank holiday, 10th April they paid me. Will you tax on 5th April for 50,000? Again on 10th April I received 50,000. Will you tax twice? They same amount? No. That's it. This is due basis. Now, what is accrual basis? What is accrual basis? How much you incur? That is what accrual basis decides. Now, from business point of view, SSC who is engaged in PGBP, for him, how much he can claim deduction? Salary he accrued 6 lakhs in that year. How much he accrued for 24-25? 7,20,000 he accrued in that year. He will claim deduction of accrued expenditure, if at all his books of accounts are maintained on accrual basis. Are you clear? So in PGBP, right now I told you salary charging section related due or receipt concept I covered. Now I'm also telling you PGBP, how expenditure we can claim deduction. Now in PGBP, how do we calculate? How we calculate PGBP head of income? You can calculate PGBP head of income either on accrual basis or on cash basis, whichever is regularly followed by the SSC. Whichever is regularly followed by the SSC. What do you mean by regularly followed by the SSC? Very simple. Books of accounts, how are you maintaining? Sir, I'm maintaining books of accounts on accrual system. Then PGBP income compute on accrual. If you maintain books of accounts on cash, then PGBP income also compute on cash. Simple. If you are maintaining on accrual, PGBP income compute on accrual. If you are maintaining books of accounts on cash basis, then PGBP income also you should compute on cash. That's it. Sir, I maintain books on accrual, sir, but PGBP can I calculate on cash basis? Not permitted. 145 section, this is what they say. The method of accounting for computation of income under PGBP or other sources will be such method of accounting which the SSC regularly follows. This is the first important learning. Now, why this is important? Now, in PGBP, what are the sections that are available? What are the sections that are available? How to calculate PGBP income? Tell me, anywhere the income is calculated like first revenue minus expense is equal to income. Am I right? Hello? Revenue minus expenditure is equal to income. Salary set of income. Revenue means gross salary. Expenditure means deduction. Income means income from salary. Am I right? house property. Revenue means gross annual value. Net revenue means net annual value minus deductions, 30% deduction, and we have interest on loan. Then you get income from house property. Capital gains, revenue minus expense is equal to income. Revenue means what there? Full value of consideration. Expenditure means what? Cost of acquisition, cost of improvement. Therefore, it is capital gain. The computation logic is same everywhere. Revenue minus expense is equal to income. Maybe the names are different. In house property, we call it as net annual value, gross annual value. Deductions, we call it as 30% interest. In salaries, revenue means gross salary minus deductions means expenses. Then you get net salary. The same is applied in capital gain. The same is applied in other sources. The computation logic is same, but the names are different. Are you clear? Now, PGBP. How should we calculate PGBP income? First, incomes you should calculate. Correct? What incomes are taxable under PGBP? 28 and 41 sections dealing with that. What are the incomes that are taxable under PGBP? Which sections are dealing with that? 28 and 41. These two sections are dealing with incomes. Then, what expenses you can claim deduction under PGBP? What expenses? I can claim all business expenses. I can claim all business expense. 30 to 37. They are dealing with expenses under PGBP. This is dealing with income under PGBP. Are you clear? How to calculate income under PGBP? Income minus expense is equal to PGBP income. Am I right? But for these deductions, 30 to 37, you have deductions, right? Expenses, right? There are some conditions. Tell me, generally, suppose no, I am a seller of goods. I buy the goods from somebody and then resell it. This is what my business is. Typically, that is my business, and I don't have much premises, everything. I just go to railway station, I buy some novels, diaries, or some books, and I will sell it to the passengers in the railway station. This is what my business typically is. Now, I buy books at 10,000 rupees in a day, and I sell them at 20,000 rupees. Therefore, my PGBP income is how much? 10,000. Now, my revenue is 20,000. My expense is how much? 10,000. Now, can I claim this expenditure or not is the question. My revenue 20 minus expenditure is how much? 10,000. Generally, revenue minus expenditure is equal to income. But tell me, in PGBP, we will not call it as expense. We call it as deduction. We call it as what? Deduction. Under entire income tax, we don't use the word expense. We use the word deduction. Yes or no? Incomes minus deductions is equal to net income. Revenue minus deductions is equal to net income. Do you agree with that? Now, one day, I sold novels for 2 lakh. I sold novel for 2 lakh. But how much I paid for these novels? 1 lakh I paid. How much I paid actually? 1 lakh I paid. Now, what is my income actually from business as a layman if I compute 1 lakh? But guess what? When I'm buying this 1 lakh novels, I paid fully in cash. What I did, I paid fully in cash. Tell me, is this 1 lakh rupee expenditure to me or not? Is this 1 lakh expenditure to me or not? Tell me. Right. But you can't claim deduction. From the revenue, you can't claim this 1 lakh deduction. Why? Because you paid this entire 1 lakh to a single person on a single day in cash you paid. The condition, there is a condition. There is a section called 40A subsection 3. What that section says, if any expenditure that you incur, more than 10,000 rupees on a day in cash, then that expenditure is not allowed as deduction. Now, this is 1 day related activity. 2 lakhs rupees worth of novels I sold. 1 lakh rupees is the expenditure I incurred, but I can't claim deduction. Why? You incurred expenditure? No. Yes, I incurred. But condition I failed. I spent it in cash. Since I spent it in cash, my PGBP income is not 1 lakh. My PGBP income is 2 lakh. Do you understand? This is how PGBP mechanism works. Now look at. Okay, I'm erasing this. Now look at. So, how to calculate income? Basically, PGBP income, how do I calculate? Incomes minus expenses is equal to PGBP income. Simple. But when you are reducing this, you need to look at certain conditions. Only when you satisfy those conditions, you can reduce this. If you do not satisfy those conditions, you can't reduce it, even though you incur it. Here, are you spending it or not is not the matter. Of course, that is important. Your spending is important, no doubt. Not only spending, you should also satisfy conditions. Conditions were given under 40 series. Conditions were given under 40. What are the sections conditions were given under? 40, 40A, 40 subsection B, 43B. These are the 4 sections which are talking about various conditions. 40 subsection A, 40 subsection A 1, 40 subsection B. No, I'll just keep it in order. Okay. So what are the conditions that you are having? 40 subsection A, which talks about certain conditions. 40 subsection B talks about conditions for firms. 40A, it talks about some expenses. It talks about 43B. These are all sections talking about conditions. They're typically condition sections. That's it. They won't talk about any deduction. 40 series is not talking about deductions. 40 series is talking about what? Conditions for these deductions. Deduction you will claim only under 30 to 37. Should I claim deduction or not? 40 series will talk about conditions. If I satisfy all the conditions, then I can claim this deduction. Just example, I sold newspapers worth of 2 lakh, where I purchase, my purchase cost is how much? 1 lakh. Purchases, where deduction I can claim? 37. Deduction for purchases I can claim under which section? 37. Now, can I reduce it like this is the question. Have you satisfied 40A? Yes, I satisfied. Have you satisfied 40B? Yes, I satisfied. Have you satisfied 40A? Yes, I satisfied. 43B, have you satisfied? Yes. Then you can reduce it aram se, no problem at all. Now, what is the balance PGBP income? 1 lakh. Suppose you didn't comply. You didn't comply with any of this. Yes or no? They tell you how much deduction you will not get. They will tell you. At some sections, they say 100% no deduction. Some sections will say 30% no deduction. Okay, we'll discuss that later. If at all, if any condition you didn't comply, you don't get deduction. Are you clear? You don't get deduction. If you don't get deduction, how much is your income? 2 lakhs. In this example, it is 2 lakhs. Are you clear? This is how the PGBP mechanism operates. Do you understand? So which means the third segment in PGBP is conditions for deduction. Do you understand? Do you understand? Conditions for deduction. Then in the PGBP, we have fourth segment, administrative provisions, or we also called as machinery provisions. We also call them as what? Machinery provisions. Books of accounts, who should maintain, who should get audited, presumptive taxation, all that. Administrative provisions. That's it. This is what PGBP total breakup. Are you clear? Now, which incomes taxable? All business incomes taxable. What is it? All business incomes taxable. Don't even read charging section. Okay, don't even read charging section. I will tell you, not required. In charging section, there are 3 or 4 clauses which are there. That alone you should read. That you will understand later while we are discussing deductions itself. Now tell me. So PGBP income, how to calculate? Simple. Sale of goods, take it. Sale of services, add it. Any other business income, add it. Minus all business expenses, you should reduce it. By the way, when I am reducing, I should be careful about conditions. I should see condition. Did I satisfy or not? I should see, and then reduce it. Simple. If I satisfy condition, I will reduce it. If I do not satisfy the condition, I will not reduce it. I know, sir, in exam, they will give you P&L account. You take net profit as per P&L account. We have to adjust it. No. We have to adjust it. No. This is where the problem comes. Am I right? For example, they gave you P&L account right now. 2 lakhs is the sale of newspapers. 1 lakh is the purchases. What is the net profit? 1 lakh. Am I right? Hello? This is what the P&L they gave. Now, net profit as per P&L 1 lakh. Is this PGBP income is the question. Is this PGBP income? No. This is as per books of accounts. PGBP income, how to calculate? Very simple. I can calculate in 2 ways here. One method. Take income. PGBP, how much income is taxable in this P&L under PGBP? 2 lakhs. How much expenses are there? 1 lakh. Now, before I reduce it here, I have to check conditions. I saw the condition. I failed. Can I reduce it? No. Therefore, my PGBP income is 2 lakhs. This is one way to derive the answer. Another way to derive the answer. Sir, my net profit is 1 lakh, sir. As per books of accounts. Can I show as it is net profit as PGBP income to income tax authority? Array man, no. You calculated net profit as per your accounting principles. You need to calculate net profit under PGBP as per PGBP provisions. Okay, fine. My net profit is 1 lakh. How did this 1 lakh is arrived? 2 lakh sale minus expenses you debited, which is 1 lakh. Tell me, did you comply with this 1 lakh all the conditions, sir? No, sir, I didn't comply. I dissatisfied. I have not satisfied. I have not satisfied with the condition. Now tell me, when I have not satisfied with the condition, but tell me, when you are calculating this net profit, you already reduced it. Yes or no? Tell me, can you take as it is as PGBP income? No. Because no, you reduced this 1 lakh while calculating P&L profit. But under PGBP, when you are calculating profit for the PGBP, should you reduce it? No. Should you reduce it? No. What I will do? I will add back. What I will do? I will add back. Therefore, my PGBP income is coming again. Matching it or not? So fine. Anyhow, this disallowance concept, I'll come back to disallowances. When I'm discussing that disallowance concept, I'll tell you there. Okay. Now, first of all, so how to calculate PGBP income? First, incomes. What incomes are taxable under PGBP? First, add it. Minus what expenses we can claim deduction subject to 40 series conditions. You claim deduction. Yes or no? Now, what deductions that we have? We have section 30, section 31, section 32, section 35, then 35 AD, then 36, then 37. These are the sections we have for deductions. Correct? Huh? What section 30 says? Expenses in relation to building. Expense in relation to building. 31. Expense in relation to plant and machinery. Expenses in relation to plant and machinery and furniture. Section 32. Depreciation. Section 35. Scientific research related expenditure. 35 AD. Specified business expenditure. 36. Some specific deduction. Some specific deduction. Some deductions were there. List they gave specific deduction like bad debt, bonus, commission, like that. RPF contribution, like that. Some deductions they give. 37. Any other business expenditure. What is it? Any other business expenditure. Fine. Let us discuss one by one what are all various business expenses so that we can claim deduction. First, we will discuss what expense you can claim deduction. Then we will go back and discuss conditions for the deductions. Are you clear? Now, first one, section 30. 30. This section is talking about expenditure in relation to building. This section is talking about expenditure in relation to building. Now tell me, building means which building? This is the building which I am using it for my business purpose. This building is used by me for business purpose. Only then that business expenditure, only then that building related expenditure I can claim deduction. Tell me, for a building, what expenses I will incur? Before you think of this, first you should decide who is the owner for the building. Are you owner or tenant? Sir, I'm a tenant, sir. Then building first expenditure, rent. Rent paid is allowed as deduction. Now if you observe in the law, no, in the income tax, no, at many places the word paid will be used. Sometimes the word payable will be used. There is no meaning to it. Okay. If the SSC is following accrual method, then rent expenditure incurred is the meaning. If the SSC is following cash basis, then deductions are claimed on cash basis. What do you mean by cash basis? Only you will get deduction. You will show it as expenditure only when you actually pay. And tell me, if it is a cash basis of accounting, are you bothered about accounting period? If it is a cash basis of accounting, are you bothered about which year it belongs to expenditure? No. Cash basis means what? Sir, I paid today 10 lakhs on raw materials, sir. Sir, I paid today 10 lakhs as an insurance policy premium, sir. This policy 5 years active. It doesn't matter. Entire 10 lakhs you will claim expenditure in the current year. Am I right or not? Yes or no? Accrual basis means what? They don't look at how much you paid, whether actually you paid or not. They look at how much you incur, how much obligation you have. What is the obligation? That obligation they look at. Yes or no? So in PGBP, if the SSC following books of accounts, if the SSC maintaining books of accounts on accrual basis, if the SSC is maintaining books of accounts on accrual basis, all the deductions he can claim on accrual. You incur, that's enough. Array, whether you paid or not, we don't even ask. First point this is, we don't even ask whether you paid or not. Sir, I know 43B one section is there. There are some expenses which you will get deduction only when you actually pay. That I'll come back later. Accrual basis means what? You will get deduction when you actually pay. Sorry. Accrual basis means what? You will get deduction only when you incur. Cash basis means what? You will get deduction when you pay. Incomes. Accrual means what? When you earn the income, it is taxable, whether you received it or not. Credit sales. I sold goods on credit to customer. Taxable in PGBP. Sir, customer did not pay money yet. It doesn't matter. It doesn't matter. Are you clear? Cash sales. Only when I collect the cash, yes or no, I will show it as income. Are you clear? Interest income. Only when I collect, I will tax it. Cash basis means, I'm telling you, by the way, interest income is another sources income. Therefore, I will not tax it under PGBP. So, I hope you understood regarding accrual and cash. Clear? Now, with respect to building, rent paid means what here? Depends upon the method of accounting. If it is accrual basis, paid means incurred. If it is cash basis, paid means paid. Do you understand? Next, repairs. Repairs means what? Some issue, some building related, some issue, some whitewash you did. Just routine maintenance. So, no, repairs and maintenance routine. Whatever actual expenditure you incur, you can claim deduction. Property taxes. Obviously, for building, commercial properties, business related purpose when you are using, tenant only will pay taxes. Tenant only will pay property taxes. Whatever you paid, property tax, whatever insurance expenditure you do, or any other expenditure related to buildings, premises, you can claim it as deduction. Are you clear? Sir, suppose I'm a owner, sir. I'm a owner. What about owner? Owner, no. Only rent will not be there. That's it. Rest all other expenses, common. Yes or no? I have my own house. I have a flat in one commercial area. Now, I started practice there itself. I'm using that entire flat for my practice. Now, that flat related expenditure I can claim deduction. What expense I can claim? Any repair I'm incurring for that. Insurance I am taking for that. Yes or no? Any other incidental expenses I'm incurring for that. Property taxes that I am incurring for that. All that I can claim deductions. And if you observe here, for property taxes, within the bracket some word is there. 43B. Subject to 43B. And here also you see property tax, one word is there. Subject to 43B. Are you clear? So, what I can claim deduction? All revenue expenses related to building. I can happily claim deduction. Sir, what do you mean by subject to 43B? I'll come back to it later. Okay. Accrual means you incur, that's enough. Cash means only when you pay, you get deduction. Clear until now? Next. Now here, the one main twist. Suppose no, I have a house. Okay, I have a building. Ground floor, I am running my practice. First floor, it's my house. Okay, it's a single property, only one registration is there. It's not like ground floor separate registration, first floor separate registration. No, they're not like two different flats. It's an independent house property. Are you clear? And guess what happened? Municipal taxes paid. What is it? Municipal taxes paid in the current year. In 25-26 year, municipal taxes paid is 10,000 for this house. Interest on loan, when I constructed this house long back, that time I borrowed some loan. On that, even today I am paying interest, because typically building property loans will be 20 years, 25 years. Loan tenure will be 20-25 years. Interest on loan, I am paying 2 lakhs a year. Are you clear? Then insurance, I am paying 20,000 for this. Repairs and maintenance, I am paying 30,000 per annum. This is the expenditure which I incurred relating to this house. Now, how much I can claim under PGBP? This is the question. I noticed ground floor 50% share. First floor is also exactly 50% share. Same SFT. Ground floor, how much SFT is there? Same SFT. First floor is also there. Are you getting it? Square feet ratio we call. Generally in exam, they won't give you square feet and all. They will simply say 50-50, 1/3, 2/3, like that they'll give you. So you don't have to worry. Now, how much expenditure I can claim? Municipal taxes, 1/3. How much it is? 3,333. Interest on loan, 1/3. How much it is? 66,000. Sorry, half no. I'm just checking whether you're alert or not. You people are sleeping. Yes or no? Municipal taxes paid, how much it is? 50,000. Very good. Again, I'm testing you. So fine, 5,000. Second one, interest on loan, how much I can claim related to PGBP? 1 lakh. Insurance, how much I claim relating to PGBP? Then repairs and maintenance, how much I can claim? This is correct with respect to PGBP. Do you agree? Now, on house property, under house property, how much I can claim? This is a question. Under house property, municipal taxes paid, 5,000. I will reduce it from gross annual value, if at all. That's a rented property. But guess what? This house is self-occupied. First floor, I'm using it for my residence. Balance 5,000 rupees municipal tax is there, right? I will ignore. Why? Because for a self-occupied property, I will directly take NAV is equal to 0. So the 5,000 rupees municipal taxes paid will not be useful. Understood? Then insurance under house property, insurance is not considered. Repairs is not considered. Why? In house property, once you calculate net annual value, you have only two deductions. One, flat 30%. Two, interest on loan. Now here, since first floor is self-occupied property, I took NAV is equal to 0 minus insurance, repairs, whatever it is, 30% of 0, 0 minus interest I can claim again. What I can claim? Interest I can claim. How much interest? Array, total interest for the property 2 lakh, man. For first floor, how much interest? 1 lakh. Only 1 lakh I will claim under house property. How much I will claim under house property? 1 lakh. That too, if it is an optional tax regime. Because that's a self-occupied property. Yes or no? If it is a self-occupied property, NAV is equal to 0, you can claim interest deduction under optional tax regime. If it is default tax regime, if NAV is equal to 0, you claimed self-occupied property exemption, no deduction for interest. Are you clear? Now, same expenditure, same building, but different treatments in different head of incomes. Do you understand? Hello, everybody? Now, under PGBP, municipal taxes related to business portion, how much? 5,000. Municipal taxes related to business portion, 5,000. What about this 5,000? Subject to 43B. Remaining accrual basis. Are you clear? And here one more point is there. 1 lakh interest is there, right? Interest is deductible under section 36. Interest on loan is not covered under section 30, guys. I took a loan for building. Business building, I took a loan. On that, I'm paying interest. Okay, that interest amount is deductible under 36 ma. It is not under 30. Again, this interest, no, I am paying to a bank and FI. That time again, 43B section will apply. Interest on borrowed loan, 43B. Municipal taxes, 43B. Sir, what is 43B? I'll come back to it later. Do you understand right now? Everyone? Sir, this is my own building, no? I constructed this building with 50 lakh rupee. Only construction cost. Land anyhow, I will ignore land. Land value I will ignore. 1 crore land value. In house property also I will ignore land. Here also I will ignore land. But building construction cost, total building is 50 lakh. Which means my house property value 25 lakh. Whereas my shop value 25 lakh. What about my capital expenditure, sir? You are giving expenditure for all revenue. What about capital expenditure? On capital expenditure, you can claim depreciation under section 32 by adding that value in the block. Do you understand? Hello? Everyone until now? That's it. Now this is regarding section 30 buildings. Now look at next one. Entire provision is over. You see, if share of expense related to business purpose is allowed as deduction. Further, if house property is partly used for business, actual repairs only can be claimed. Whereas in house property, actual repairs portion will be ignored. Remember, under house property, the deduction is flat 30%, but under PGBP it is actual expenditure. This kind of observations you will have in many places. Able to understand, because this is how in exams they'll test. In exams, you know, they test a property, same property will be used for business purpose, will be used for house property. Like that they'll be giving you. Next. Then next section 31. What is this section is talking about? Expenditure in related to machinery, plant and furniture. Expenditure in relation to plant and machinery and furniture. Simple. Expenditure in related to movable assets used in business. Section 30 talks about expenditure in relation to immovable asset. Factory, office building, corporate office, admin office, warehouses, all that comes under 30. 31. All machineries, furniture, yes or no? That's it. You know, in income tax, we have only 4 types of assets. Under PGBP, any asset you use for business, any asset that you are using for business, you name it, whatever it is, we classify that into 4 categories. In PGBP, 1, intangible. One is intangible. Another asset is building. Another asset is furniture and fixtures. Another asset is, that's it. For business, you use any asset. Calculator. I'm using it for my business purpose. It's not an intangible. It's not a furniture. It's not a building. So it's a plant and machinery. What is it? It's a plant and machinery. Mobile phone, plant and machinery. Car, plant and machinery. Yes or no? Camera, plant and machinery. Lights, furniture and fittings, it might come. Lights will come under generally under furniture and fittings. Okay, it comes under furniture, fitting and fixtures. Okay, there it will come under. Laptops and computers, plant and machinery. Books I am purchasing, plant and machinery. Which books, ma? Not inventory. Not inventory. The books which I purchase and sell, no. That is inventory. That is not a fixed asset. I am talking about assets used for business. I am not talking about assets held for sale. There is a difference between assets used for business and assets held for sale. Yes or no? I am talking about assets which are used for business. Suppose I purchase research books, I purchase author books. Suppose I am a faculty, I am purchasing some Income Tax Act, Bear Act, Master Guide on Income Tax, all that I am purchasing. Big books. Each book's costing 7,000, 8,000. Guidance. They are guidance related books for my practice and research purpose. They are all plant and machineries. Are you clear? Able to understand? Now, any expenditure related to furniture, fixture, plant and machinery, any expenditure related to furniture, fixture, plant and machinery, except capital expenditure. I'm not worried about capital expenditure. We have a separate section altogether. My discussion is not about capital expenditure. Repairs and maintenance, insurance, yes or no, any other expenditure, I will claim deduction under section 31. That's it. I will claim deduction under section 31. Sir, plant and machinery, I am leasing it, sir. And I'm paying rent on plant and machinery. What about that? That amount you will get deduction under section 37. Because 31 is dealing only with own plant and machinery, own furniture. It is not dealing with rented. See, at the end of the day, own or rent, leave it. You are incurring, that's it. You will claim deduction. Are you incurring expenditure? Yes, you will get deduction. That's it. Is it business expenditure? Yes, you can claim deduction. No need to worry about 3031. 3031 section will not have any impact when you are solving problem. All the deduction sections will not play major impact when you are solving problem, but you must know it in order to solve the problem in a better way. Understood until now? 31 everybody understood? Sir, intangible is there. Intangible, there is only one expenditure, acquisition cost. There is only one expenditure for intangible, purchase cost, acquisition cost, which you will capitalize. What you will do? Capitalize. But you know what? Intangibles, if at all, it has to be in your name forever. Every year, you have to pay some license renewal charge. Patent is there, renewal charge you have to pay. Copyright is there, renewal charge you have to pay. These renewal charges are revenue expenditure related to intangible. That you can claim deduction under section 37. Why 37? 37, every one of us know, it's a residuary section. Residuary section means what? Any expenditure that I am incurring related to business, but not answered. It is not covered under 30, 31, 32, 33, 34, 35, 36. All that business expenditure, all those business expenditure which are revenue in nature, which are related to business 100%, I can claim deduction under 37. Fuel, 37. Power, 37. Telephone expenses, 37. Salary paid to employee, 37. Raw material purchase cost, 37. Are you getting it? Hello? Enapa, what happened? You're all okay? You're able to follow? Give some reaction, no? Yeah, next. 30, 31 over. Do you understand? Now, 32, depreciation. What is the next section? 32, depreciation. In depreciation, we have a format. First, I will open you with the format. If at all you follow this format thoroughly, if you follow this format correctly and as it is in exam, 0% probability for wrong answer. 0% probability for wrong answer. Okay? You have to follow this format as it is. Now, look at. Generally, how do we calculate depreciation in accounting? How do we calculate depreciation in accounting? We calculate depreciation in accounting asset-wise. Am I right? I purchased an air conditioner. From date of installation till 31st March. How many days further I will see? 270 days further. For example, from date of installation, 270 days further. Divided by 365. Multiplied by Companies Act, some scheduled rate will be there. Depreciation rate. Like, original cost plus installation expense plus any other expenditure is equal to total capitalized cost. Am I right? Multiplied by 10% is the rate of depreciation, multiplied by 270 days divided by 365. This is first year of usage. So this is how I calculate depreciation under Companies Act asset wise. Correct? But in income tax, we don't calculate depreciation asset wise. We calculate depreciation group of asset wise. We calculate depreciation here block wise. Group of asset is called as what? A block of asset. What do you mean by a block of asset? 2 clause 11 under Income Tax Act talks about block of asset meaning. What is block of asset? Asset, one or more assets falling under same category, one or more assets which are falling under same category and carrying same rate of depreciation. One or more assets falling under same category and carrying same rate. All those assets will be grouped into a single block. Sir, same category means what? As I already told, we have 4 categories of depreciable assets. We have 4 categories of depreciable assets. What are the 4 categories of depreciable assets? Intangible, building, furniture and fixture, plant and machinery. These are the 4 categories of assets, 4 categories of depreciable assets. Suppose calculator, plant and machinery, computer, plant and machinery, books, plant and machinery, car, plant and machinery, mobile, plant and machinery, two-wheeler, plant and machinery, pollution control equipment, plant and machinery, ship, plant and machinery, aeroplane, plant and machinery. Sir, ship, airplane, whom it will be there, sir? Reliance company, they have ship. They have their own yachts, whatever that boats and all is there. They have their own chartered flights. They are all fixed assets in the company books of accounts. They capitalize it because they are using it for business purpose. Understood? All these are under same category. Now, sir, does it mean all this come into a single block? No. Whether they all come into single block or not is influenced by one more condition. They all should carry same rate. But here, for example, no, books carry 40% rate. Car, 15% rate. Mobile and two-wheeler, 15% rate. Ship, 20%. Aeroplane, some 20%. Yes or no? The rate of depreciation, even though all are plant and machineries only, but rates are different. Now, I will show you depreciation rates here. Look at it. Depreciation rates. Depreciation under income tax law, under plant and machinery category, maximum 5 blocks only will come. Maximum how many blocks will come? 5 blocks. Why 5 blocks are coming? Though it is only one category, 5 different rates are there. Am I right? Am I right? Under plant and machinery, 30, 5 blocks are there. You see, 5 blocks. Why 5 blocks? Because 5 different rates are there. Because 5 different rates are there. For example, plant and machinery 40% block. Many students computer block they'll write, mobiles block they'll write, books block they'll. No, it's a plant and machinery only. 40% block. Plant and machinery 15% block. Plant and machinery 20% block. Plant and machinery 30% block. Plant and machinery 45% block. Are you clear? Here, plant and machinery, how do we identify each plant and machinery? Based on rate. Based on rate we identify. Until now, clear? Yes. Now look at, what do you mean by plant and machinery 40% block? Aeroplanes 40% rate. Okay, I think before I told airplane 20%, by mistake rectify. Airplane how much? 40%. Pollution control equipment, solid waste test equipment, containers 40%. Renewable energy devices, in that first and most important, electric vehicle, which may be pure battery or which may be fuel cell powered. Fuel cell powered means what? Hydrogen. Fuel cell powered means hybrid cars. What is it? Hybrid car. Yes or no? Where it can run on electricity, it can also run on fuel. That's called fuel cell powered. Means it is fuel powered, it's cell, battery powered, both. Or pure battery based. Yes or no? So electric vehicle, by the way, remember they said vehicle, not car. Yes or no? So they all carry, what is the rate? 40. And again, books, whether they were used for lending in libraries, whether they are professional books, are they annual books, non-annual books, that and all doesn't matter. What is the rate of depreciation? 40. In Jan 26 attempt, in the 15 marks question, books annual publications point they give. Many students have treated it as 100% expenditure. You should only claim what? 40% depreciation only you should claim, because any books, is it annual, semi-annual, whether it is like a forever same book will be there, it doesn't matter. Books, that's it. You have to claim depreciation at 40%. Now, energy saving devices, computers, including computer software, including computer printer. Some students might interpret software as intangible. No, computer software should be classified under PGBP. Able to understand? And printers, computer printers, so they all will carry what rate of depreciation? 40%. We all classify them into a single block. Now we calculate depreciation based on block. Are you clear? Now how do we calculate depreciation? This is the question. How do we calculate depreciation? This is even most important. Now how can I, when will I calculate depreciation? When will I calculate depreciation? Two conditions has to be satisfied. You can claim depreciation. First of all, everyone understood what is block of asset? On a particular block, when I can claim depreciation, remember in PGBP, you should always compute depreciation on 31st March only. You will not. When you will compute depreciation in the previous year, in a relevant previous year, right now the relevant previous year is what, ma? 25, 26. Assessment year is 26, 27. In a relevant previous year, 25, 26, on which date you will compute depreciation? I know you will compute depreciation. I am asking which date you will compute depreciation? 31st March. In income tax, you should calculate depreciation on which date? You know, 31st March you should calculate. On what you will calculate? Value in the block. You should calculate depreciation on value in the block. What do you mean by that? You know, there are two conditions has to be satisfied. There are two conditions has to be satisfied in order to claim depreciation on a particular block, ma. These two conditions you have to check blockwise. Suppose you saw plant and machinery, we have 5 blocks. Blockwise I should check these two conditions. Understood? Blockwise you should check these two conditions. You should not check. See, it is not whether should I calculate depreciation or not. That is not the question. In respect of a block, should I calculate depreciation or not is the question. Yes, two conditions. What is the condition number 1? There must be an asset. There must be an asset in the block. There must be first an asset in the block. Obviously tell me, block should be there, right? If I have to calculate depreciation, block must be there. For example, I am talking about block number 1, plant and machinery, 40% block I am talking about. 31st March came right now. Now I am filing IT return. I am preparing computation. First of all, IT return I will file later. I am preparing income computation. Now I am thinking about depreciation. Should I calculate or not? First, 31st March came. I saw plant and machinery 40% block is there or not. I saw already computer is there already. Fine. Block is there. 2. Block alone is not sufficient. There must be some value for depreciation. There must be value for depreciation. In income tax they call there must be written down value. There must be written down value in the block as on 31st March 26 because we are doing problems for 25-26. There must be written down value on 31st March 2026. If there is a written down value on 31st March 2026 and if the asset is also block is also there, if both the conditions are there, array value is there, asset is there, depreciate. Are you getting the point? Value is there, asset is there. What you should do? Depreciate. That's it. Now look at. What do you mean by WDV? See, yes, block must be there means at least one asset in the block must be there. For example, no, I have some books. I have some computers, computers, laptops and all I have. Then I have some aeroplane, chartered flight is there. Then we have, let us assume, one electric vehicle is there. You know what? All these 3 we sold off during the year. We sold off. 31st March, only one asset is there. My electric car is there. Only one asset is there, electric car. That's it. Block is there. Block is there or not? Here in income tax, we don't look at asset-wise identification. There is no asset-wise identification. Here identification is only based on block. Block-wise identification. Is block there? Yes. In that block, how many assets there? I'm not worried. Income tax section 32 is not worried about how many assets are there in the block. Are you clear? Now, second thing they look into. Okay, block is there. Is there a value? Now, how to derive that value? Look at this. Is there a value? Yes. How do I know whether there is a value or not? First, that block 40% block is there, right? It has a opening balance. It has a opening balance. Let us assume 10 lakh. Opening balance is how much? 10 lakh. Okay. Add. In this year, we purchased some assets which are forming part of this block. 40% plant and machinery category assets, no, we bought some assets. Now look at this, how I will calculate depreciation. You know, opening WDV. How much is the opening WDV? 10 lakh. Add some assets I purchased. Assets addition. Yes or no? Some assets I purchased. By the way, these assets, no. This is plant and machinery 40% block, guys. Which means here additions must also be related to 40%. Can I add in 40% block 15% related assets? No. You should not add it. You should only add which assets? Those assets which will carry 40% depreciation. That assets only you should add. Now, during the year, no, we purchased one laptop number 1. A new laptop we purchased. When we purchased 10th August 2025 we purchased. And in our example, purchase date itself is installation date. Installation date means what? We are using it. On the same day only we are using it. Using means what? Passive usage. Using means passive usage. Passive means what? It's ready for use. It's just switch on and then use. That's it. So if the asset is installed, that's sufficient. If the asset is installed, that is sufficient. You can add in the block. Remember, if the asset is purchased, but not installed, you should record that asset separately in the additions. Look at the format. Assets put to use, assets acquired but not installed. That value in the block you should always write separately. In the question, if at all they give you that, you should write that information, that asset value you should always record separately. Are you clear? Now look at this. So laptop number 1, 10th August I purchased. In the same year, I purchased one more electric vehicle. Okay. Now, by the way, this laptop cost is 2 lakhs. This laptop cost is 2 lakh. I purchased one electric vehicle, 40 lakhs. What is the value of the electric vehicle? 40 lakh. How much, when I purchased, I purchased it on 7th October 25. I purchased it on 7th October 25. Okay. On the same day, it is ready for use also. So I added it. Then I purchased laptop number 2. Okay. I purchased, but guess what? I didn't install it. I didn't even unbox it. I just ordered the laptop and the box was there as it is. I didn't even open the box. Seal also I didn't open. So that laptop cost is how much, 3 lakh. Now tell me, opening value of the block they gave, which is how much? 10 lakh. Now, biggest mistake many students do is here. Sometimes in exam, what they will do, WDV. What they will do is, WDV on 31st March 25 they will give. How much value they give? 10 lakhs. How much value they give? 10 lakhs. And many students, what they do, they will as it is take it as opening balance, which is wrong. WDV on 31st March, if nothing is mentioned, it is before depreciation. WDV means before depreciation. Are you clear? Suppose if they clearly mentioned after depreciation, then you can as it is take it as opening balance. Hello? You can as it is take it as opening balance. Suppose they clearly mentioned before depreciation, then for last year 24-25, you should reduce depreciation first. If nothing is mentioned, depreciation 40% on the block. Correct? Block value 10 lakhs in the last year. Block value, how much is the block value? 10 lakhs in the last year minus 4 lakh. Therefore, closing value how much? 6 lakh. Now that I will take it as 6 lakhs. You able to understand? Everyone in exam, if they clearly mention WDV of the block on 31st March of the last year and they didn't mention before depreciation, after depreciation, they didn't mention, it is to be assumed as before depreciation. Are you clear? You should assume it as before depreciation. If they specifically mention after depreciation, happily you can take that value as it is brought forward into opening value. Are you clear? Hello? Yes. Now look at. So opening I saw. Additions, all that I saw. Now look at what is the gross block value. What is the gross block value? 10 to 12 plus 40, 52 plus 3. How much it is? 55 lakhs. And guess what? This opening is there, right? This includes one of the rare car which I had, which is a heritage. It's a very old car I had. Well, long back I purchased. I'm using it still also. and that has some very powerful engine, V10, V12 engine I had. Okay, now suddenly that engines and all were banned. Market, there is so much demand. Okay, I sold that car in auction. I sold that car in auction. Only in this, no, opening value is there at 10 lakhs. What all assets there, no? In the opening value, what assets are there, no? I have 20 computers in the office. Already employees are using it. 20 computers are there. Books are there. And this one car is there. Vintage car is there, right? One vintage car which I told. That vintage car is also there in that. Remember that though it's a vintage car, I'm using it for my business purpose exclusively. 100% for business purpose I'm using. Now, I sold that vintage car. Guess what? I got 50 lakh money. How much I got money? 50 lakh money. What should I do? This is sale value, nothing but this is amount received on. What is this? Amount received on. Transfer of. By the way, did I transfer entire block or only part of a block? In this example, part of a block I transferred. Yes or no? How much I transferred for? 50. Sir, this asset value how much? In income tax, that doesn't matter. In income tax, block wise, how much you paid, add it. How much you received, reduce it. Simple. In the block, how much you will add? Whatever you paid. How much you will reduce? Whatever you received. That's it. That's why you see in the depreciation, amounts received. Actually, they say word amount payable on sale. Amount payable means for the other party it is amount payable. For me it is amount received. Are you clear? Amount received on transfer. Transfer means what? It can be sale. It can be destruction. It can be destruction. It can be demolition. It can be compulsory acquisition. Whatever happened here, asset is not with you. That's a transfer. Asset is lost. Right now, asset is not with you. Means there is a transfer. Because asset is not with you, did you receive any money? Yes, I received money 50 lakhs. Because asset is not with me right now. I received how much? 50 lakh. Reduce it. Now, what is the WDV of the block? How much is this? 5 lakh. Now I will apply two conditions. Now WDV I calculated. What I calculated? WDV. Now I will check two conditions. Condition number 1, is block existing right now? Yes. So many new assets were there. Old assets are also there. Is there a value in the block? Yes. You can calculate depreciation. You can calculate depreciation in the current year. That's it. Now minus depreciation working note number 1. Minus depreciation working note number 1. Are you all clear? Until now everyone are clear? Now depreciation. How do I calculate? Once I reduce depreciation, no, closing WDV after depreciation figure I will get it. Correct? Huh? Closing WDV after depreciation I will get. Now look at depreciation I should calculate. Now tell me, I should calculate depreciation only on the 5 lakhs value. Because block value right now is how much? 5 lakh. I should calculate depreciation only on 5 lakhs. So what is the value available for depreciation? Value available for depreciation 5 lakh. Now tell me, tell me logically. By the way, here you can see this format. What is the WDV of the block before depreciation right now? How much it is? 5 lakhs. Look at the sentence here. First, that value. First, what you should do? Allocate that value to assets bought but not used. In our example, did we buy any asset but we have not used? Laptop number 2, there is no date of installation, which means this laptop we bought but we didn't use. Are you clear? Look at this entire computation. If you understand depreciation, you are sorted. Understood? So I bought 3 lakhs worth of laptop but I didn't use it. Correct? Huh? So out of this 5 lakhs, how much I allocate here? 3 lakh. Okay. Still, how much value left? 2 more lakh is there. Then second you should allocate for what? Assets. Allocated to assets used for less than 180 days. 180 days. Used for less than 180 days. What is meant by 180 days? Less than 180 days. Very simple. You know, 4th October is the cutoff date. What is the cutoff date? 4th October. 4th October is the cutoff date. If it is a leap year, 5th October is the cutoff date. By the way, 2026 is not a leap year. Because for us the previous year is 25-26. February comes in 2026 only. So 2026 is not a leap year. 28 is a leap year. 32 is a leap year. Very simple. So 4th October, just calculate from 4th October how many days you are getting. Calculate, open calculator. 28 days in October. 28 days in October. Am I right? 4th October onwards 28 days. 31st October. So add 28. November 30. December 31. January 31. February 28. March 31, 179 days. Am I right? If an asset is installed on 4th October or after 4th October, it is used only for 179 days. If the asset is installed on 3rd October, it is used for 180 days. Are you getting the point? Now, sir, what is this 180 days, 179 days? What is this logic? In under section 32, if any asset is purchased in the current year and used for less than 180 days, block rate is there, right? That much rate you can't claim. Half rate only you can claim depreciation. How much you can claim? Half a rate only you can claim depreciation. Do you understand? Every one of you remember this? Now look at 5 lakhs. By the way, this asset is not at all used, so no depreciation. I didn't use at all. Therefore, nil depreciation multiplied by depreciation 0. Depreciation is 0. Array, still I have 2 more lakh is there. I have 2 more lakh depreciation, 2 more lakh worth of asset is there on which I should calculate depreciation. Okay. Second, I will allocate for what asset? Second, I will allocate to the assets used for less than 180. In my business, 2 lakhs is there, right? I need to allocate for these additions. Correct? Huh? Now I have to allocate in between these two, which is used for lower number of days. 40 lakhs EV. When it was installed on 7th October. 7th October installation means it is used for less than 180 days. Oh my God, 40 lakhs worth of asset I used only for less than 180. But look at, I don't have 40 lakhs value in my depreciation purpose. For depreciation purpose, I have only value 2 lakhs. So how much I allocate here? 2 lakhs. Now 3 lakhs allocated here, 2 lakhs allocated here. Balancing figure 0. Are you clear? What is the balancing figure? 0. Now here half rate I will apply. 2 lakhs into 20% because right now our block is 40. Therefore 40,000 is a depreciation 0. Total depreciation how much? 40,000. 20,000. 2 lakhs into 20%. 40,000. 3 lakhs into 0. Therefore total depreciation 40. That's it. Right now the answer is how much? What is the depreciation? 40. Therefore closing block value 4,60,000. That's it. This will become opening value. Do you understand? Until now, do you understand? Right now what we calculated is normal depreciation. Now everyone, do you understand why normal depreciation is calculated like this? Now sir, the question is, sir, why we need to allocate first here, second here, balancing figure here? What is the logic behind it? Very simple logic. Reality ignore. Here we are not looking asset wise. Tell me, we sold assets, right? Which assets generally logically we sell? Latestly bought assets we sell, old assets we sell. After assets are sold, some value left, right? Is it belonging to new assets or old assets? Exactly. Array, you are selling money, you are selling some assets and you sold. What you sell generally, new assets you will sell, old assets you will sell. After selling, still some value is there. This generally belongs to new asset or old assets? New assets. That's the logic. So first I allocate to new assets. New asset means what? The one which I bought but not used. That is most new. Then before that new asset I bought but used it very less than 180. Then any other asset is old asset, which will come under balancing figure. Here balancing figure you apply 40% rate. Are you clear? Then you get depreciation here A, then here half rate depreciation B, total normal depreciation A plus B. That's how you calculate normal depreciation. Are you clear? Everyone. Now let us assume here the SSC is a manufacturer. The same SSC is a manufacturer, and the SSC is a manufacturer, right? This laptop is there, right? Which he bought, these laptops. These two laptops were installed in factory. Where? Factory. Now, since he is a manufacturer, purchased plant and machinery, which is installed in factory, but not in office. It's not in office building. It's not in residential accommodation. If a manufacturer, if the SSC is engaged in manufacturing or production of an article or thing, okay, or if the SSC is engaged in power generation or distribution, yes or no, or if the SSC is engaged in printing and publishing, then the SSC can claim additional depreciation, which is 20% of actual cost. What is the additional depreciation calculation? 20% of actual cost. Now part 2 of the answer. Now depreciation, part 1 understood? This is part 1 of the depreciation. Now part 2 of the depreciation. Part 2 is what? Computation of additional depreciation. Look at this. Part 2, computation of additional depreciation. Did I buy any machine during the year? Yes. Acquired but not installed. How much is that value? 3 lakh. How much is that value, ma? 3 lakh. What is the additional depreciation? 0. Because no, additional depreciation you will get only when you use it. Only when you install it. Then only you can claim additional depreciation, that to 20% of actual cost. Sir, I installed during the year laptop, sir. Which laptop I installed during the year? In our example, laptop number 1. How much is the laptop number 1? 2 lakh. 2 lakhs worth of machinery. Did I install it during the year? Yes. Now look at the second one. Look at machinery D. Some machinery, laptop 1 I purchased. Yes or no? How much is the purchase cost? 2 lakhs. Which is used for number of days is more than or equal to 180. How much is the additional depreciation? Actual cost into 20. 2 lakh into 20. How much is additional depreciation? 40,000. Here additional depreciation 0. Am I right? Next, did I buy any machinery less than 180? Yes. 40 lakh is there. EV I bought. But you know what? It's a vehicle. Electric vehicle. Vehicles are not eligible for additional depreciation. Therefore, no additional depreciation on the vehicle. Are you clear? Let us slightly change the example. Okay, let us slightly change the example. This is not a vehicle, ma. This is a laser cutting machine. This is a laser cutting machine, a special windmill machine. Let us assume special windmill machine, which is also eligible for 40%. Yes or no? Now, since it's a manufacturing related machine, now tell me, is it eligible for additional depreciation? Yes. Now, this machine is used on 7th October onwards, which means it is used for less than 180 days. Am I right? Now, how much is the additional depreciation? 40 lakh into 10%. How much it is? 4 lakh. How much it is? 4 lakh. Yes. Now, you know, last year I bought one machine. Last year I bought one machine, which is added in the last year block. On that block, no, on that machine, no, that was used less than 180 days in that year. 30 lakhs is the cost of that machine. Last year I claimed only 10% additional depreciation. 3 lakhs only I claimed. This year how much I can claim again? 3 lakhs I can claim. Balance additional depreciation to be claimed. How much it is? 3 lakh. Now total additional depreciation 0 plus 40,000 plus 4 lakh plus 3 lakh. 7 lakh. Hello? What is the total additional depreciation? 7 lakh 40. I know the doubt in your mind. Wait, it will come. 7 lakh 40,000. Are you clear? Now, what is normal depreciation right now? We computed. What is the normal depreciation we computed already? 40. Right now, additional depreciation how much? 7 lakh 40. Are you clear? Now, what is the closing block value here? What is the closing block value? It is coming into negative. Remember, block cannot be negative. We will reduce it to 0. Do you understand? Remember, how much depreciation now I can claim? 7 lakh 80 I can claim. Depreciation under section 32, how much I can claim? 7 lakh 80. But how much I will reduce it in the block? 5 lakhs only I will reduce it. How much I will reduce it in the block? 5 lakh. But how much I will claim? 7 lakh 80. Are you clear? Deduction for depreciation is different. Reducing the depreciation from block is different. Hello? Able to understand? Now, sir, for additional depreciation, you have taken all only actual cost. No. Why? The provision is actual cost based. Additional depreciation is always calculated on actual cost. Able to understand? Whether value available for depreciation in our example, value available for depreciation in our example is just 5 lakh. That doesn't matter. Able to understand? Until now, understood or not? Depreciation, many think they know it, that actually this is a provision. Okay, this is how you need to understand depreciation logic. Many students, I'll tell you, they feel like they know very well depreciation calculation, but now I think you got to know. Yes or no? This is how you should calculate depreciation. Additional depreciation is calculated as a percentage of actual cost, whereas normal depreciation is always calculated on WDV value of the block. Be careful. Okay, both are not computed on same values. Understood all of you? Now, so for additional depreciation, block value irrelevant. You will get additional depreciation if you buy the asset during the year and install it during the year. Most important, installation. Most important is what? Installation. Suppose, sir, in the current year I bought the asset, sir, I didn't install it. You add it in the block. You will not claim normal depreciation on that. You will not claim any normal depreciation in the current year. Next year, for example, no, in the next year, look at how additional depreciation comes into picture. Year one, I bought an asset. 5 lakhs worth of asset I bought and I added in the block, but I didn't install it. Zero normal depreciation. Since additional depreciation is also zero because it is not installed. In year 2, this will come into opening part. This will lose identity in the next year. This will lose identity in the next year because this value now will be forming part of opening balance. It does not have any identity. Automatically gets depreciated for normal. Automatically it gets depreciated for normal. What about additional? Sir, in the year 2 also it is not installed, sir. Zero. Sir, in year 3, this mission was installed ultimately in year 3. In year 3, you will claim actual cost into 20%. Additional depreciation you will claim when the asset is actually installed, not in the year of purchase, but in the year of installation. And in that year of installation, if it is used for less than 180, 10% only you will claim additional. Balance 10% you will claim in the next year. Separately you will claim, irrespective of whether block is existing or not. Additional depreciation you will claim whether block is existing or not, doesn't matter. Are you clear? Even if the block is not existing, additional depreciation you can claim. That's an incentive given to manufacturers. That's a separate incentive irrespective of block value. Are you clear? Everyone. Now let's look at one more example. Suppose opening balance 10 lakhs. What is the opening balance? 10 lakhs plus I purchased so many additions. I have purchased so many assets as additions. 20 lakhs worth of assets I purchased. I'm not looking at the breakup. Now my discussion is different topic. What is the gross block value? 30 lakh minus, guess what? Entire block I sold. Entire block I sold because all this block consists of computers and all and some other machineries and all were there. I don't want to use them. I want to replace with all the new. Okay, but first I sold so that I'll get the money. I sold it for 10 lakhs only. Entire block I sold it for 10 lakhs. Now after selling it, what is the value left here? 20. Now 2 conditions have to check. First condition, block should be there. No. Depreciation I can't claim. What I can? A depreciation I cannot claim because block itself is ceases to exist. Block itself is ceases to exist. Now what should I do? Section 50 comes into operation. What section will come into operation? Section 50. Array, 30 lakhs worth of block. You sold it for 10 lakhs. You made 20 lakhs loss, guys. That's a short-term capital loss. What is it? It's a short-term capital loss. Block is not there. Block is not there. Now how to compute short-term capital loss or short-term capital gain when block is not there? Proceeds. Amount received how much? 10 lakh minus gross block value. Gross block value means what? Opening value, additions during the year, reduce it 30 lakh. Therefore, loss is, short-term capital loss is 20. Sir, full block I sold, sir. 100 lakhs I sold. Let us assume. Full block. I sold it for 100. Very good. 30 lakhs worth of block you sold for 100. Therefore, short-term capital gain is 70. Sir, block value is 30, sir. 10 plus 20. Block value is 30, sir. I sold part of a block. But guess what? Super buyer I got. 40 lakhs he paid. Part of a block only he bought. What he bought? Part of a block only he bought. But he paid me how much? 40. Now 31st March I have to check. Block is there? Yes. Value. It is turning negative. Since value is not there, I cannot claim again depreciation. Array, part of a block you sold for 40 lakhs where block itself is 30. You already made a profit of. Short-term capital gain 10 lakhs. Are you getting it? Short-term capital gain 10 lakhs and block will continue with zero value. Block is there with zero value. Again next year you bought an asset, add the value. That time again depreciation will come. Once you add, once you less, depreciation mechanism is as it is. Able to understand? Until now understood or not? Sir, 10 openings, sir, 20 additions, sir, 30 gross block value. Part of a block I sold. But you know what? I sold it for just 20. Still how much value is there? 10. Value is there, block is there. Shut up everything, calculate depreciation. What you need to do? Calculate depreciation. How to? First allocate for less than 180 days, then balancing figure. Less than 180, yes, at this 20 lakhs is less than 180, only 10 only there, yes or no, into 15%, if it is 15% rate, or 40% is 40% rate, into 1 by 2 is equal to 2 lakh, into balancing figure 0, into 40% is equal to 0, normal depreciation 2 lakh. If additional depreciation comes into picture, add additional depreciation and then reduce from the block. Over. Do you understand? Depreciation topic over. Clear all of you? Block of asset wise, section 32, section 50, that operation, did you understand? Everybody? Now then we need to discuss about power sector. Okay, just 5 minutes gap, then we'll continue. Okay, 5 minutes gap, and then immediately I'll continue with power sector depreciation. Once it is over, 35 Zuzubi, 35 you know, scientific research easy, 35 AD dead easy, 36 37 easy, 40 series little bit of the discussion will be there, that is also easy, that's not a big deal at all. Until now clear. 32 depreciation you understood. I discussed in depth normal depreciation, I discussed in depth additional. With this backdrop, with this understanding, open any depreciation problem and see, you will find it easily, you will get the answer. Clear? And we discussed entire depreciation in less than 40 minutes. See, this is what conceptual clarity means. Clear? So on the YouTube, don't forget to like my video. Okay, yeah, just 5 minutes, we'll take a gap and then continue. Now look at, let's continue depreciation topic. Computation of depreciation, additional depreciation, entire mechanism we understood. Now if you observe the depreciation format, what you need to add? Actual cost of assets acquired. What you need to add more? Actual cost of asset acquired. Now what do you mean by actual cost? Very simple. Actual cost means actual cost referred under section 43 subsection 1. What is actual cost? Actual cost referred under section 43 subsection 1. According to it, purchase price. What is according to it? Purchase price plus explanation 8 is there. What is explanation 8? Borrowing cost. What is it? Borrowing cost. What is borrowing cost? Suppose you bought a loan. On that you are paying interest. You are constructing the fixed asset. You are manufacturing the asset. Or you bought the asset, it is in transit and now it will come and install. This entire process takes 3-4 months. But the vendor dispatched the inventory, the vendor dispatched the mission only when you pay the money. For these 3 months, you paid interest, right? Before the asset was put to use, you paid interest, right? That entire interest, as per explanation 8 to 43 subsection 1, you should capitalize it. What you should do? Capitalize it. For example, purchase price is 1 crore. Yes or no? Entire 1 crore I borrowed as a loan. What is the rate of interest? You know, 12% per annum. What is the rate of interest? 12% per annum. Now, the date, from the date of borrowal of loan till the asset was put to use, 3 lakh interest I spent. How much interest I spent? 3 lakh interest I spent. This 3 lakh also I will capitalize. So how much I will capitalize? 1 crore 3 lakh. This is called actual cost. What is actual cost? Purchase price plus borrowing cost. Look at actual cost means what? I gave an hash mark here. Look at means actual cost as per 43(1) and includes borrowing cost as per explanation 8. What do you mean? Why this point is important? Additional depreciation. How much you will add in the block? 1 crore 3 lakhs you should add. Additional depreciation you should claim, right? You should claim on 1 crore 3 lakhs, not on the 1 crore. Be careful. Because additional depreciation you will claim on actual cost. They didn't use the word purchase price. They used the word actual cost. What is actual cost? 43 subsection 1 tell you how to arrive actual cost. Able to understand. In one of the exam, what they mentioned, you know, in one of the exam, the question, I think in one of the MTP or some question, what they mentioned is the SSC purchased a machine, okay, which is 1 crore. Example, dummy numbers I'm telling you. On this mission, SSC paid 12 lakhs interest, which is debited to P&L account, just like a normal expenditure. They claim deduction. Now they capitalized how much in the books of accounts? 1 crore only they 1 crore only they capitalized. But tell me how much you should capitalize. In our example, 1.3 lakh. 1 crore 3 lakh you should capitalize. Yes or no? You must capitalize 1 crore 3 lakh you should capitalize. Understood? or 1.1 crore, 3 lakh you should capitalize. Remaining 9 lakhs you will claim deduction under section 36. This 9 lakh you can claim deduction subject to 43B. This 9 lakh deduction you will claim subject to 43B. What is 43B? This is an interest on loan borrowed from bank. Interest on loan borrowed from bank, you claim deduction on accrual, but it is 43B. You must clear that interest by the time you file IT return. By the time you file IT return, you must have cleared that. You must have paid it. Then only you will get that 9 lakhs reduction. Are you clear? Now what happened, 12 lakhs is the total interest incurred by the SSE, and 0 interest is paid by IT return due date. By the due date for filing IT return, how much is paid? 0. This is what the question is. 1 crore, 3 lakhs you will add 1.03. This is right. Whereas remaining 9 lakhs, you will not give deduction. You will disallow it. This is what the actual provision. Able to understand? Indirectly, you will disallow entire 12 lakhs. Why you will disallow entire 12 lakhs? 9 lakhs you will disallow because you didn't pay. 3 lakh you will disallow because it's a capital expenditure. You will disallow entirely how much? 12 lakh. Because entire 12 lakh is debited to P&L, which is not right. Able to understand? That's the kind of adjustments they will ask if the paper has to be really tough. Clear? Next. And even on the borrowing cost portion, you should claim normal depreciation. On the borrowing cost portion, you should claim additional depreciation as well. Be careful. If at all the SSE has already calculated depreciation on actual cost, purchase price, on the borrowing cost, which is also part of actual cost, you should claim additional depreciation, normal depreciation, if that asset is eligible for additional depreciation. Clear? Now, we all know, if at all any capital expenditure I incur more than 10,000 in cash, bearer check, bearer draft. Am I right? If at all you are incurring any capital expenditure in bearer check, bearer draft, or cash, or even crossed check, this amount of expenditure I will not consider as actual cost. I will not consider it as actual cost. Look at actual cost provisions. Look at what is actual cost. Actual cost refers to actual cost of the asset to the assessee. However, if payment is exceeding 10,000 in a single day, keep it in the bag. Okay. If actual cost in a single day is more than 10,000 other than approved modes, if at all you are paying more than 10,000 by other than approved modes, then actual cost is considered as 0. Approved mode means what? Account to pay check, account to pay draft, electronic payments. Okay. Whether you do by fund transfer, you do by credit card, you do by UPI, approved electronic mode is nothing but. If at all you pay by cash, you pay by bearer check, you pay by bearer draft, you pay by crossed check, that is not approved mode. Since it is not an approved mode, actual cost is to be taken as 0. Suppose I purchased a laptop, I just went to one vendor, I bought the laptop 50,000 rupees. I suddenly had a cash. I have cash. Readily I have cash. I paid that 50,000 rupees cash and bought the laptop. I can't capitalize. Why? Because amount is paid more than 10,000 in a single day in cash for buying the asset. Actual cost is taken as 0. I will add in the block. But at what value? 0. Able to understand? It is added in block, but it is added at 0. Now, explanation 8. What it says: interest on borrowed loan in connection with acquisition of asset. Interest amount up to the date of asset put to use. Amount to be added to block, because that is also treated as part of actual cost. Are you clear? Further, sir, I am converting my inventory into capital asset, sir. I am a furniture vendor. I manufacture furniture and then sell the furniture. This is what I do. Now, even though I am a furniture vendor, I require furniture for my own business, right? Customer came into the furniture shop. I should ask him to sit in my office cabin. Or my furniture, I have 10 showrooms and I have one corporate office. In the corporate office, I need chairs for my business purpose, right? Now tell me, will I go and buy from somebody else's furniture, or will I use my manufactured furniture? Whatever furniture I want, I will manufacture and then bring it to my office. Yes or no? Now, if my inventory is converted into my fixed asset, now it is also to be added in the block. Am I right? Hello? Should it be added in the block or not? Yes, because the moment you are bringing an asset into business use, that will be added to the block. That will also be added to the block. Now, how much value I will add? Market value. What is it? Market value on the date of conversion, not manufacturing cost. Not manufacturing cost. Look at it. I manufactured one sofa. Okay, the sofa manufacturing cost is 1 lakh. That's an expenditure for me. Now, instead of selling this sofa, what I did, I sent it to my corporate office, so that in the corporate office, in the director cabin, it can be used. Now, under section 28 charging section, any inventory, if I convert it into a capital asset, why it is called as capital asset? Depreciable asset is a capital asset. Capital asset means any asset I am using it for my business purpose. That's a capital asset. Yes or no? So under section 28, you know, the sofa general I sell to any other customer at 2 lakhs. This 2 lakh is treated as PGBP income under section 28. So what is my PGBP? Profit from conversion of inventory into capital asset. What is my profit? 1 lakh. In the same year of conversion, it is taxable. Further, this 2 lakhs is recorded as sale as per 28, right? Now this 2 lakhs worth of sofa came into my block, no, furniture block, no. In the furniture block, I will add actual cost of additions added during the year. Explanation 1A, 2 lakhs I will capitalize. How much I will capitalize? 2 lakhs I will capitalize. On that 2 lakh, I will claim normal depreciation. It may be 10% full year rate, or it may be half rate if at all furniture is used for less than 180 days. Now look at this. So explanation 1A. Do you understand this? The same fair market value first will be added to block and open. Look, go back to 28 charging section. You will understand what I told. Charging section. Look at charging section. Conversion of inventory into capital. The fair market value of inventory on the date of its conversion into capital asset is taxable as business income. It's a deemed sale. It's not a sale. It's a deemed sale. Just like in agriculture income we saw. Sugarcane I produced and I use it for my further business process manufacture. Market value of the sugarcane we recorded as sale in agriculture books. Exactly here also. Inventory I manufacture, but I am using it for my own business purpose as a fixed asset. Then I will consider that as a deemed sale. This is also an accounting standard PPE 10 requirement. This is also there in India. This is also there in accounting standard. If for your own production, you are using it as a fixed asset, market value will be recorded as acquisition cost. The same market value will be recorded as revenue from operation. PGBP also the same, in line with that. Able to understand. These two explanations are very important at this moment. There are few more explanations which are also important, but I'll come back to those explanations later. Do you understand what is actual cost? Yes or no? There are remaining few more explanations. For example, explanation 10 is there. Sir, I bought a mission for 1 crore, sir. I bought a mission for 1 crore, but out of it, 50 lakh government only gave me the grant. Now, how much I should capitalize in it? 50 lakh. This is what there in accounting standard 12 also. Exactly. So a portion of cost is met by some other person. If the portion of cost is met by some other, such cost shall be excluded from price. Such cost will be excluded from price. Are you clear? So 1 crore is the price minus cost made by others is equal to balance 50 lakhs only. I will capitalize actual cost. Only on the 50 lakh I will claim additional depreciation. Only on the 50 lakh I will claim normal. By the way, normal depreciation we will not claim an actual cost. Remember, normal depreciation is claimed on block value. Hello? That's it. With this, depreciation is completely discussed in all dimensions we have covered. Able to understand? There are even more little advanced topics were there, but now it is not required. In marathon, we can't discuss all that because it takes lots of time. Next, what about power sector? What about power sector? Power sector has two options. First year in which you are starting this business. First year in which you are starting this business, you are a power sector. Power sector means you are engaged in generation of the power, or you are engaged in generation and distribution. It doesn't matter. You are generating, you are manufacturing power. Yes or no? Now, you have two options. What is two options? In the first year, happily you go with SLM asset wise. Happily you can go SLM asset wise, or you go with WDV block of asset approach. Remember, power sector is eligible for additional depreciation, right? When they are eligible, you know, only when they are following WDV block of asset approach. Only if the power sector is engaged in manufacturing of power and following block of asset approach WDV, then only additional depreciation they can claim. If at all they are choosing SLM method asset wise, they cannot claim additional depreciation. Hello. Now, when it is SLM method, same. If it is more than 180 days, more than or equal to 180 days, full rate you will get. Less than 180 days, half rate you will get. What are the rates of depreciation for power sector? Appendix 1A. There is an appendix called Appendix 1A to the section 32. Understood? See, there are two appendix. Appendix 1, Appendix 1A. This is talks about WDV block rates. This is talks about SLM rates. Able to understand? For example, I bought a mission for my power sector and I have decided in my first year itself SLM basis. You can't change it back later. Forever SLM only you have to follow under income tax law. Suppose you choose the first year WDV method, block of asset method, you can't change it back again in your entire lifetime. You have to go with WDV method itself because you are a power sector. First year only you have that option. Now, suppose I choose an SLM method. Original cost 10 lakhs minus. Let us assume this depreciation rate is how much, 10% for convenience sake. First year, this is mission I bought. Only that mission. Asset wise only I will calculate. In this year, no, I used it for less than 180. Then I will claim depreciation how much? 5%. How much I will claim? 50,000. How much I will claim? 50,000. Therefore, WDV value in the next year is what? Written down value. Array guys, written down value is different. WDV method is different. Written down value means after depreciation, whatever value is there, that is called as what? Written down value means closing value. Are you clear? Next, minus. This is year 1 depreciation. This is year 2. Even if it is power sector, you should claim depreciation on 31st March only. Depreciation under Income Tax Act section 32, you will claim always on 31st March only. 31st March. Yes, it is still there. I will claim depreciation. How much? 10%. 10% of always original cost. Second year depreciation is 1 lakh. Then again, closing value how much 8.5 lakh. Then again, third year, this is 31st March 24, this is 31st March 25, now 31st March 26 came, but guess what? This asset is sold. This asset is now sold. Physically it is not there. Now tell me, if the asset is not there, I cannot calculate depreciation immediately. Now there are some rules. What is the sale price? By the way, what is the opening value? 8.5. This year is the asset is there as on 31st March? No. 31st March only I sold it. Means at the end of the day, it is not there. On the end of 31st March, the asset is not there. I sold. Option 1, you sold for 6.5 lakh. Option 2, you sold it for 9 lakh. Option 3, you sold it for 14 lakh. What is the tax treatment? Sir, 8.5 lakh worth of asset, I sold it for 6.5. Then there is a deficit of 2 lakh. I will call it as terminal depreciation. I will call it as terminal depreciation, and you can claim deduction under 32 for this 2 lakh straight away. Asset is closed. Over. Asset is closed. What is it? 8.5 minus you already received 6.5 lakh and minus 2 lakh terminal depreciation. Therefore, the asset value became nil. Clear? Now, if at all an asset which is on which SLM method of depreciation we are claiming, if it is sold for a price less than its opening value, then the difference is called as straight away terminal depreciation. Are you clear? Sir, second example, I sold it for 9 lakh. 8.5 lakh worth of asset you sold for 9 lakh. 50,000 profit is there. This is called as balancing charge under section 41 subsection 2. This is balancing charge. This amount is treated as deemed profit under PGBP. What is this amount is treated as? Deemed profit under PGBP 41 subsection 2. Because you have a profit. But is this a revenue profit or capital profit? Up to original cost, any profit is there. Up to original cost, any profit is there. Even in your accounting principle, up to original cost, it's a revenue profit. We will credit to P&L account. Am I right? If at all asset is sold for more than original cost, it's a capital profit. We credit to capital reserve. Am I right? In accounting, this is what you do. Yes or no? Exactly here also. Sir, I sold it for 14 lakhs, sir. How much value? 8.5. Oh, 1.5 lakh up to original cost of the profit. Up to original cost of the profit is balancing charge under 41 subsection 2. 4 more lakh profit is there. It's a short-term capital gain under section 50A. It's a short-term capital gain under section 50A. And remember, on depreciable assets, whether it is a block or whether it is an SLM basis, the gain is always short-term. The gain is always short-term. On a block of asset, when you sell full block, there is a possibility of loss, and that loss is always short-term. Are you clear? Because block is always moving asset. So whether the asset is long-term or that discrimination we can't sit and make it. Directly department says it's a short-term capital gain, short-term capital loss. That's it. Do you understand now balancing charge and terminal depreciation for power sector? That's it. Entire depreciation 32, 40 to 43 subsection 1, 50, 50A, 4 sections we covered now. Clear everybody? Now next, just a minute. Now let's continue Next deductions, 35. Expenditure related to scientific research. Now, in PGBP, default tax regime impact, where it is there. 1. Additional depreciation you cannot claim if at all the SSC is choosing for default tax regime. Yes or no? Further, under section 35, scientific research donations. What is it? Donations you can't claim deduction under default tax regime. 35 AD deduction you can't claim under default tax regime. Are you clear? You cannot claim deduction for additional depreciation. Donations that are given under section 35 you can't claim deduction. 35 AD deduction you can't claim. Rest all other deductions you can claim, no problem at all. Default tax regime linked, only these three were there in the PGBP right now. Are you clear? Now next one, 35, section 35. Now what is 35? You are incurring here, this is a deduction towards scientific research purpose. Now what expenditure you will have? Two types of expenses. One, you are directly incurring the expenditure for scientific research, means you are spending it, you are not donating it. You're not donating, you're only spending. Or you can be donating. You might be donating. Donating means what? You're not spending it directly. See, spending directly means what? R&D. Suppose Mahindra is there, they want to launch a new car. They need to first spend on a lot of amount on the R&D. That's nothing but scientific research. That's nothing but what? Expenditure on R&D is nothing but scientific research expenditure. That's what R&D only. This 35 section is nothing but deduction towards R&D. Now, sir, if at all I am spending directly R&D, who can claim deduction? Any SSC can claim. Whether he is an optional tax regime or default tax regime, doesn't matter. If at all you are spending directly, no problem at all. You are donating, for example, you are not spending, or you are spending extra, you are also donating. You are donating to whom? You are donating to some research association for scientific research, or you are donating to Indian company for scientific research, or you are donating to some research association for social research, statistical research, or you are donating to National Laboratory, IIT, all that who are doing approved scientific research program. Are you clear? Simple. You are donating to a research association for scientific research which is approved. You are donating to a research association for social or statistical research which is approved. You are donating to National Laboratory, Indian Institute of Technology, IIT, or any other university approved under that so and so section. Then that is a donation. You are donating to an Indian company. You are donating to an Indian company which is involved in scientific research. Donations. Can you claim deduction under PGBP? Yes, you can claim if it is optional tax regime. If it is default tax regime, no deduction for donations. Are you clear? Suppose I'm spending directly, sir. I'm spending directly on my business. What about this? Whatever you spend, you can claim deduction. We don't make any differentiation whether it is a revenue expenditure, capital expenditure. We don't even ask for it. Whatever you spend, whatever you debited in P&L, fully allowed as deduction, except land. What is it? Except land, because no deduction for cost of land. But if at all you constructed an R&D building cost, construction cost, completely you can claim deduction. And remember, see nothing but under section 35, direct expenditure. I'm talking about what? Direct expenditure. This is how many types? Revenue expenditure, capital expenditure, correct? Revex and capex, shortcut. Okay, revenue expenditure, capital. Revenue 100% deduction, capital 100% deduction, except land. Only land you will not get deduction. Every other expenditure you will get. Now, sir, since it's a capital expenditure, generally whenever business is spending on capital expenditure, what we should do? We should add it to block. Am I right? We should add it to block generally. But if at all you are using it for R&D, if you are using it for scientific research, I will not add into the block. I will directly claim it as deduction. That's why any asset used for scientific research will not form part of the block of asset. It will not form part of the block of asset. I hope you are aware of it. We will not add it. We will not. Suppose I bought a laptop for scientific research. I will claim 100% deduction. I will not add it to plant and machinery 40% block. I will never add it. Are you clear? Now, you will not get deduction for any land. What about revenue expenditure? 100%. Sir, sometimes no, I will incur this R&D expenditure. I will incur this R&D expenditure before I start the business also. Sometimes we incur this before we start business. What about that? Opening, when we are starting the business, no, that day itself so much of R&D expenditure is there. What about that? You can claim deduction whenever you started the business. You first spend it. For example, no, I started research in 22-23, 23-24, 24-25. These 3 years I researched. Complete, a full-fledged research I did. I spent close to 20 crore on research expenditure, but that time I don't have business head of income itself. I'm still in the research stage. I don't have any business, so I didn't claim deduction for that anywhere. Now in 25-26, I started my business. I made super profits in the first year itself. What about this past expenditure on research and development? Can I claim deduction? Absolutely, you can claim deduction in the year in which you commenced the business. Are you clear? Now, in respect of past expenditure, what expenses you can claim deduction? Same, any revenue expenditure, any capital expenditure related to prior to commencement of business. But for revenue, no, only salary and material cost. Only salary and material cost prior to commencement of the business if you incur. Any revenue expenditure prior to commencement of the business if you spend, that too if it is only salary, that too if it is only materials cost, you will get deduction. Any other expenditure, rent, telephone expenses, all these expenses that you spend before you commence the business, no, you will not get deduction even though you spent it for scientific research. Sir, what about after I started business? After I started, I am spending for R&D, telephone expense, car expense, repairs and maintenance. So much I'm spending on R&D division. Every revenue expenditure you can claim. Every capital expenditure you can claim except land. That's it. Are you clear? Now look at. Sir, I bought one mission, sir. In 24-25, I bought one mission for capital expenditure, for scientific research. You claimed under section 35. Full deduction I claimed, sir. Happy. But you know what? Now the mission was used completely, exhausted. Research is also over. Now that mission is useless now. What option you have? Do one thing. Is this mission useful for your own business or profession? In your business, no. In your business, is this mission useful? Array, sir, it is not useful, sir. Then do one thing. Sell it. Sell it. Sir, I sold it. I got 1 lakh rupee money. What is the tax treatment for this? What is the tax treatment for the asset removed? Any proceeds arise on sale of asset. Any proceeds arise on sale of asset. Use it for scientific research. You know, without using it for other purpose. You know what? I didn't use it for any other purpose. Directly from R&D division, I called buyer and he took the asset and then went. Directly from R&D division, I sold it directly. Then how lower of sale proceeds 1 lakh, deduction claimed earlier 10 lakhs, whichever is lower, 1 lakh is taxable. 1 lakh is taxable. Are you getting it? This is straight away taxable as deemed profit under section 41 subsection 3. Are you clear? Until now, are you clear? Suppose no, I felt, sir, I don't have to sell, sir, 1 lakh and all too less. That asset is a very good value. Okay, use it for your business. Can I use it? Absolutely, you can use it. The moment you are bringing that asset into your business, you need to add that into block. The moment you are bringing that asset into your business, you need to add it into block. At what value I will add into the block? Explanation 1 to 43 subsection 1. This says cost of the asset 10 lakh minus deduction claimed how much more? 10 lakhs. So what is the balance value? 0. This value will be added to block. This value will be added to block. Now look at, that is the point which is mentioned here also. You know, if an asset is used for business or profession, after it is seized to be used for scientific, original I use it for scientific research, after it is used there, now I am using it for my normal business or profession, then amount add to the block. How much amount? Actual cost 10 lakhs minus deduction allowed under section 35 10 lakh. Balance value how much I will add? Now how much I will add in the block? 0. Are you clear? And guess what? Now I added in the block, right? After 2 months I felt, array, this asset is not required, unnecessarily I kept in the business. Now I sold it. It is a part of a block sold. What is it to be treated as? Part of a block sold. Means you should reduce it in the block. See, once an asset is added in the block, from that block, if at all tomorrow it is sold, it is a part of a block sold. That's it. So amount received shall be reduced from the block value. Balance value will be there, right? On the depreciation will be claimed. That's why in 41 subsection 3, they mentioned very clearly what they mentioned. If any proceeds arise On sale of asset used for scientific research without using for other purpose. Means you sold directly from R&D activity, then only 41(3) will apply. Sir, I transferred it to normal business, sir. I used it for normal business. Now I sold it. 41(3) will not apply. Because no, once you bring it to the block and then you are selling it from the block, it's a part of a block sale. Section 32, section 50 mechanism will operate. Are you clear? That's it. So if you directly sell, 41 subsection 3. If you bring it to block, 43 subsection 1. Explanation 1 added to block. Clear? Hello? That's it. 35 section is over. Easy? That's it. Just 2 minutes. Let's now look at 35 AD. What is this 35 AD? See, specified business. What is it? Specified business. 14 businesses were there. What businesses? Will come back to it later. One of the businesses 2-star and above category hotel. Nothing but 2-star and above category hotels. 2-star, 3-star, 4-star, 5-star hotels. If at all you are building them and operating them. Okay, then that is one eligible business. You are building and operating a hospital with at least 100 beds. That is another specified business. You are manufacturing fertilizers. That's one specified business. You are producing honey or beeswax. That's one specified business. Business number 1, your cold chain facility. Are you getting it? Setting up and operating cold chain facility. 2, warehousing facility for agriculture produce. 11, warehousing facility for storage of sugar. Getting it? 14, infrastructure facilities. 13, semiconductor technology, semiconductor, all that. Yes or no? So like that we have so many businesses. 14 businesses were specified. Now what exactly the deduction here? It's not deduction under 35 AD for specified business. It's deduction for capital expenditure. What is it? Deduction for capital expenditure. This 35 AD is exclusively for which expenditure? Capital expenditure. Sir, revenue expenditure, I don't need a section. 30 is there, 31 is there, 32 is 32 for capital expenditure. Generally when I incur capital expenditure, what I claim? Depreciation I will claim. Yes or no? And I have 36, 37 revenue expenditure for specified business. No, I will claim deduction under other sections only. I will not claim deduction under 35 AD. Under 35 AD, what I will claim deduction? I will claim deduction under 35 AD for capital expenditure. I will claim deduction under 35 AD for capital expenditure. Look at that's why you see deduction of capital expenditure for specified business. Very simple. I am running a 5-star hotel. I constructed one 5-star hotel. So what are the expenses I'll incur? One, land cost, but no deduction. Land is never deductible under any provisions of income tax law. Building I constructed 10 crore it costed me. Entire 10 crore you can claim deduction. Capital expenditure you can claim entirely. Sir, I bought furniture also inside this building because it's a 5-star hotel. Entire furniture cost you can claim 100% deduction. Sir, I recruited staff, trained them, marketing, advertisement, booking, employee cost, app service cost, app will be there, app service cost, everything you can claim deduction. Are you clear? App development cost for my hotel. No, I developed an app so that customer will book bookings through the app. Even app development cost, everything you can claim 100% deduction. No questions asked. Are you clear? 100% deduction for specified business related capital expenditure. This specified business, no, they have businesses which are of national importance. Either they promote tourism, either they promote health sector, either they promote manufacturing, either they promote agriculture. All core businesses in India. That is what promoted here. So for them, now tell me, if they're incurring capital expenditure, they have 2 options. One, capitalize it happily and then claim depreciation. Second option, 35 AD, claim deduction at a time 100%. When you are claiming 35 AD deduction 100% at a time, will you add that asset in the block? No. And remember, now most important lesson in PGBP, suppose I am an individual and I have 3 businesses. One is restaurant I have. Okay. Another one is a 5-star hotel I have. Another one, I am a trader. I'm a trader in shares and securities. This is a speculation. This is a specified business. This is a non-specified, non-speculation business. Do you agree? I should maintain separate books of accounts for this. I should maintain separate books of accounts for this. Under PGBP, I should also compute separately income for this. I should compute separate income for specified business. I should compute separately the income for speculation business. I should not merge it. Why? Speculation business, if there is a loss, you can carry forward for 4 years. Specified business, if there is a loss, you can carry forward for infinite. If there is a business loss normally, you can carry forward for 8 years. Since the carry forward mechanism is different for these 3 businesses, you have to maintain separate books of accounts. Are you clear? Not only books separately, you should maintain separate IT computation of PGBP income. You can't merge all the 3 and then compute at a time. You have to compute income from non-speculation, non-specified business separately in PGBP. You have to compute specified business income separately. You have to compute speculation income separately. That's why you see in setup and carry forward, there are some problems where they do separate breakup on specified business, non-specified business, speculation business. If they give a problem on these 3, you will find separate breakup. Why? SSC will maintain separate records. SSC will calculate separately for these 3 businesses. Are you clear? Everyone? Now, what you can claim here deduction? 100% of capital expenditure you can claim deduction. Revenue expenditure, no need to tell. Anyhow, it is 100%. Yes or no? There is no need to have a section for revenue expenditure. Okay, you can claim deduction for revenue. And then 30 already says that, 31 says that, 35 says, 36 says that, 37 says that only. This section is specifically meant for capital expenditure deduction, and any asset that you bought for specified business, you can't capitalize. You have to claim 100% deduction at a time. Are you clear? Now, most important condition. Suppose no, I constructed a 5-star hotel for 10 crore. I constructed a 5-star hotel for 10 crore building cost, and I claimed deduction under 35 AD. I claimed deduction under 35 AD. 10 crore I claimed. What is the condition? This building is the right which I claim deduction. That building must be used only for 5-star hotel for a period of 8 years. I must use that building for a minimum period of 8 years. Usage. They're talking about what? Usage. You must use it for 8 years for 5-star hotel only. Sir, what will happen if I do not use for 8 years? Within 8 years, if I use it for something else, what will happen? For example, I started business, 4 years I used it for 5-star hotel, and I'm thinking, my business is not going well, really well. Okay, there are continuously losses every year. I'm unable to bear the loss. What I decided, let me close the hotel business. Let me run as a hostel. Okay, a premium renting. I just started a premium renting for corporates. Okay, now corporates, they can have a tie-up with me. They can hire one room for 2-3 months directly. Their clients and all can stay. Now I effectively stopped hotel business. I am now starting as a PG business. What I did? I started as a PG. Now tell me, my 5-star hotel specified business is now converted. The building is now converted from specified business building to a normal business building, which means within 8 years, you have converted that specified business asset into a non-specified business asset. You are using it for some other purpose, which means you violated 8 years condition. What is the tax treatment that time? There are 2 tax treatments will come. 2 treatments will come. One, since you are converting a specified business asset into a non-specified business asset, you need to first add it to block. You should first add in the block in 5th year. In the 5th year, you should add in the block. Why, sir? Now you are using it into a normal business. No, you are using it as a normal business, which means now it is not a specified business asset. It's a normal business asset. Any depreciable asset used for normal business must be added to block. Logical? Now, second one. So add in the block. How much? 35 AD 7B, that value. How much value? 35 AD 7B value. What is 35 AD 7B value? It is nothing but, since you violated 8 years condition, no? Under 35 AD 7B, some amount is taxable. Under 35 AD 7B, some amount is taxable. Why it is taxable? You told 10 crore reduction you claimed earlier. 4 years back, you claimed 10 crore reduction. What you told me? 8 years I will use it for hotel only. Until 8 years, I will not touch this building. That's what you promised me. But 4th, 5th year, what you did? After 4 years, what you did? You converted. You violated the condition. That earlier given deduction is retaxable. That earlier given deduction is what? Retaxable. Immediately I'll go and argue, sir, what is this, sir? Unfair it is completely. You're taxing me fully 10 crore. If at all, had I been using from the beginning, I would have got at least depreciation, no? I would have at least got Depreciation, no? Okay, do one thing. 10 crore retax it for 4 years. What is it? For 4 years. Reduce notional depreciation. Reduce notional. Actual depreciation is to be calculated on WDV basis. Since calculation and all is a bit complicated, I'm using. Or else let us do one thing. Let us do one thing. Look at it. Very simple calculation. Okay. I bought this machine. Sorry. I constructed this building 25, 26, 24, 25, 23, 24, 22, 23, 21, 22, 2021. Yeah, 21, 22. Okay. In 21, 22, 2nd May 2021, on this date only, this building is completed. On this date only, 10 crore deduction I have claimed. And you know what? 10th August 2025. Okay, sorry. Okay, 10th August 2025, I brought this building. I brought this building into my PG guest house. PG. So I'm running it as a PG now. 5-star hotel is gone. Now it is becoming a premium PG. Getting a luxury PG. Now it converted into PG. Now look at how many 31st Marches were completed. How many 31st March completed after I constructed this? 31st March 22 completed. 31st March 23 completed. 31st March 24 completed. 31st March 25, which means 31st March completed. If you know, now what department is saying, sir, you claimed earlier deduction. Now you are using it by violating the condition. How much is taxable basically? How much is taxable? Entire earlier given deduction is retaxable after reducing depreciation for every 31st March. After reducing depreciation for every 31st March. Okay, suppose no, if this is the only building that is there in the block earlier, how much on 31st March 22, how much depreciation I would have claimed? 1 crore. Then again, opening value will be 9 crore next year. That second year, 31st March 23, how much depreciation? 90 lakh. How much is the depreciation? 90. 31st March 2024, how much depreciation? 81 lakh. 31st March 2025, 72 lakh. I hope you understood this. 90%, 90%, 90%. I hope you understood this. Yes or no? Logic, mathematics. So sorry, arithmetics. So how much is the total depreciation? 1.9 plus 1.6, 3.5, 3.53. Okay, what is the total depreciation? 3.53, 3.43, 3.43. 3.43 crore depreciation I will reduce notionally, because no, if at all you are using this originally from the first day onwards itself for normal PG guest house, you would have claimed this much depreciation. No, that much benefit I should not withdraw. Am I right? Balance amount 6 crore 57 lakh. This is taxable under 35 AD subsection 7B. This much is taxable. How much is taxable? Earlier claimed deduction minus notional depreciation for every 31st March usage of that particular asset for specified business. Okay, whatever the specified business you use it, right? For every 31st March, calculate notional depreciation and then reduce that notional. Balance amount, retax it. Are you clear? Hello everybody, this retaxation is by virtue of 35 AD subsection 7B. Sir, now I retaxed it, fine. But now what that asset is added into my block, no? What should I do now? The same value. What is it? The same value is added in block. The same value is added in block. Where it is set, sir? Proviso. What is it? Proviso 2, explanation 13.2. Section 43 subsection 1, as per this proviso, the 6.57 crore, will be added to the block. And once it is forming part of the block in building, we know already how block of asset logic continues. Everyone understood or not? Everyone understood or not? Look at the block of asset concept once again here. Actual cost. Proviso to 13, where 35 AD 7B is applicable. Where 35 is 7B, where it is treated as income, right? 35 7B is a taxing, income taxation, yes or no? That is before 8 years logic. I write these words because I discuss in the class. Okay, before 8 years logic, how much is added to the block? Actual cost, how much it is? 10 crore minus notional depreciation we computed. Therefore, the value will be, in our example, 6.5 crore. This will be added to the block. The same amount is taxed under 35 AD 7B because you violated 8 years logic. Because you violated 8 years logic. Look at that. Because you violated 8 years logic. You look at As per 35 AD 7B, if the asset is used for purpose other than specified business within 8 years, the deduction previously claimed minus any depreciation that would have been allowed under section 32 will be treated as SSC's business income in the year, and the same value is added to block. How to calculate income? Deduction claimed earlier minus notional depreciation, that is first treated as income. 6.5 crore is treated as PGBP income, 6.5 crore is added to the block, and in the current year you should claim depreciation on the block. Be careful. Are you clear? If at all a paper has to be asked tough, this is how they test adjustments. Now this is when, have you sold the building or have you used it for some other purpose? Use it for some other purpose. That is this. Sir, I sold it. Suppose I sold the building, 5-star hotel building is there, right? I sold it. How much you got on sale? 2 crore. 28 charging section income. That's it. You sold it for 2 crore. Look at the charging section 28. Look at the charging section which is 28. 28 last charging section, clause 7A something. Look at this. Proceeds from capital asset for which expenditure was claimed as deduction under 35 AD. You bought a capital asset, 35 deduction you got. Now you sold that asset, you got proceed. That becomes taxable when the asset is discarded, destroyed, transferred. Whether it is destroyed or discarded or transferred, you got some money. From the asset you got some money. That entire 5-star hotel collapsed. But insurance is there. 2 crore money I received. That's a profit for you. That is treated as a profit. Under charging section 28 it is taxable. Sir, when I sold this, 2 years or 3 years or 8 years or 10 years or 12 years or 15 years, doesn't matter. It doesn't matter. You sold it, taxable. You sold that building, taxable. Why? Earlier when you invested, I gave you deduction. Now you sold it means you returned back. Some expenditure which you spent is returned back to you. Income. That's it. Here 8 years logic is irrelevant, irrespective of 8 years link. 8 years link is only for usage ma. Even if you are using for other purpose, retaxation is there. If you are selling it without any time period, retaxation is there. That is 28. Are you clear? Everyone, suppose one more. Explanation 13 now, not the provision. Provision just now I told. Explanation 13 now. Explanation 13. What is this explanation 13? Okay. Asset used for specified business by the SSC or asset used by previous owner and bought into normal business directly through mode specified under 49. I brought into normal after 8 years. For example, no, 5-star hotel I run for 9-10 years. Over 11th year now I am bringing into my normal business. I should add in the block rate at what price? Actual cost minus deduction, which is usually nil. That's it. Are you clear? Or sir, this asset, no, it is coming into my books of accounts now. Earlier, this 5-star hotel was owned by Taj Group. ITC Group purchased this hotel, sir. Now, they paid 10 crore money and then bought this building, sir. How much they will add in the block? 0. Why? It's an asset acquired from previous owner. It is an asset acquired from previous owner. If at all previous owner claimed a deduction already on that asset, in the current year, you will not add it to any amount. You will not add any amount into the block. So, you will add it at 0. Are you clear? This example right now which I told Taj ITC, roughly I told that is not 100% accurate provision. Just for making you understand this provision I told, that is not 100% accurate. There is a little bit discussion on that. Okay, if you really purchase price will be recorded. Okay, if it is acquisition from previous owner by succession, inheritance, amalgamation, demerger, then only this nil logic is applicable. So that and all again it will be complicated for you, so I am not discussing it. Are you clear? 35 AD is over. Are you clear? What are businesses? It's not a big deal. That business remembering is not a big deal. Yes or no? What are the specified businesses? One, cold chain facility. Yes or no? What is the specified business? One, cold chain facility. Yes or no? Second one, warehouse for agriculture. Third one, only for company assets they will get deduction. Third business and 14th business. Third business and 14th, only company assets will get deduction. Third business, laying and operating across the country, natural gas, crude oil, petroleum pipeline network, including storage facilities, integral part of the network. Yes or no? Four, business number 4, hotels with 2-star and above. 5, 100-beds hospital. 6, slum redevelopment rehabilitation. 7, affordable housing scheme. 8, production of fertilizers. 9, beekeeping, honey, beeswax. 10, ICD CFS, inland container depot and container freight station. 11, sugar warehousing. 12 is what? Pipeline for transportation of iron ore, slurry pipeline network, transportation of iron ore. 13, IC. integrated circuit, semiconductor manufacturing fabrication unit, and 14 infrastructure facility like metro rail, toll, national highway, expressway. All this comes under 14th businesses. Third business and 14th business, which SSEs can claim deduction? Only company SSEs can claim deduction. Entire 35 AD predominant part we covered. Remaining miscellaneous conditions were there. You should maintain separate books of accounts. You should get them audited so that you can claim 35 AD deduction. Are you clear? Then unabsorbed 35 AD deduction, unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on family planning. All that I will discuss in set off and carry forward chapter. Clear? This is 35 AD is over. Complete 35 AD is over. Easy or not? Then coming to VRS 35 DDA. Suppose if the company is paying any expenditure on account of VRS, you can't claim fully at a time. You have to claim in 5 installments. Suppose 25-26, company paid 10 crore under VRS compensation. Yes or no? You can claim deduction for 2 crore. Next year 2 crore. That next year 2 crore. That next year, that next year. Are you clear? Sir, company newly started business, sir. Preliminary expenditure they spend, sir. 10 crore they spend, sir. But cost of project is 20 crore only. Cost of project is 20 crore only. How much preliminary expenditure you spend? 10 crore. I will not give 10 crore deduction. I will restrict the preliminary expenditure to 5% of the cost of the project. I will restrict it to 5% of the cost of the project. Cost of the project is what? 20 crore. 5% means what? 1 crore. Sir, I spent 10 crore. It doesn't matter. 9 crores I will ignore. Sir, what should I do to 9 crore? You debit to P&L. That is your choice. But in PGBP, I will not consider. Are you clear? 1 crore only I will consider. Okay, sir. Can I claim 1 crore? No. 20 lakhs each in 5 years. Are you getting it? 35D. Preliminary expenditure. You can claim deduction in 5 installments. Are you clear? How much preliminary expenditure you can claim? Maximum 5% of the cost of the project for non-corporate SSE. For a corporate SSE, 5% of the cost of the project or 5% of the capital employed, whichever is higher. Are you clear? Now, preliminary expenditure under 35D is not only at the time of incorporation, it can be at the time of expansion also. Preliminary expenditure can be incurred at the time of expansion. That time also the same logic will apply. Expansion project cost how much? For expansion capital employed how much? Whichever is higher into 5%. That is a maximum reduction you can claim. That too, in the year in which expansion commenced, from that year, 5 years you can claim in equal installments. Are you clear? Now, what are all comes under preliminary expenditure? MCQ can come. What MCQ? The following are eligible for amortization. Feasibility project preparation report. Marketing, engineering services, legal charges. For companies, no, MOA, AOA drafting, printing charges, incorporation fee, cost related to issue of shares and debentures, underwriting commission, flotation cost, all that. These all comes under preliminary expenditure under 35. 35D, 35 DDA, both are completed. Now, under section 36, can I? 36, we have some deductions. We have some deductions under 36 and we have some deductions under 37. In 36, sir, I took inventory insurance, sir. Claim it. Accrual basis. Right now, I am discussing entire deductions on accrual. I incur, I'll claim. I'll claim. Sir, a mission I bought, sir. Scientific research. A mission I bought. I didn't pay money yet. It doesn't matter. Accrual, you claim deduction. You claim deduction on accrual basis. 35 AD. I bought a mission, sir. You can claim deduction on accrual basis. You didn't pay. You will pay later. No, it's okay, no problem. You will get all the deductions on accrual basis if the SS is following accrual. 43B when it comes, I'll tell you there. Understood? 43B when it comes, I will discuss there in depth. Next, sir, for my employees, no, employee insurance policy I took for my employees. Whatever insurance premium you paid, you claim deduction, provided you will get deduction only when you pay by other than cash. Then, sir, I paid bonus or commission to my employees, sir, which is not a substitute for dividend. They are your shareholders also. Instead of paying dividend, no, you're paying as a bonus. Then I will not give deduction. You pay bonus commission genuinely, you will get deduction subject to 43B. Bonus or commission is subject to 43B. Are you clear? Sir, I borrowed a business loan. Which loan? Working capital loan, overdraft, cash credit, any other business loan, asset purchase loan, asset related loans. Asset related loans means any amount of interest paid after installation date. Any amount of interest paid after installation date, all that interest you can claim deduction under section 36. Sir, I issued zero coupon bonds. Zero coupon bonds. Zero coupon bond is nothing but your interest. You are paying literally interest. Look at zero coupon bond. How do we calculate interest under zero coupon bond? Look at. For example, no, I issued 10 years bonds. 10 years bonds means how many months? 120 months. 10 years means 10 into 12, 120 months. Zero coupon bond. You know what is the face value of the bond? Let us assume the face value of the bond is 1400. Whereas I issued it for just 200 rupees. I issued it for how much price? 200. This is face value. This is issue price. So what is the discount you gave? 1200. 1200 worth of discount you gave for 120 months, which means per month discount is 10 rupee. Per bond per month is 10 rupee. Are you clear? Sir, when I issued this bond, in the current year only we issued, ma. In the current year only we issued. When is the issue date? You know, 1st October 2025. Oh, 1st October you issued. Then it is valid for 10 years. 30th September 2035. The bond is redeemable on 30th September 2035. It is redeemable. Now, how much I will claim deduction? In this year, 6 months only were there. So, per bond, 10 rupees deduction multiplied by 6 months, 60 rupees. Next year, 120. 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 2035, 2036. In that again, 60. Total if you do, discount will be 1200. Able to understand? Discount on zero coupon bond is claimed as deduction on pro rata basis. What do you mean by pro rata basis? Discount you calculate divided by number of months you calculate. Per month you will get. In this year bond is active for how many months? You see 6 months it is active, then 6 months into discount per month per bond. Over. Next year how many months the bond is active? 12 months it is active, then 12 months into per month per bond discount. That's it. How many bonds issued? Multiply that. That's it. 36 is over. Are you clear? In 36 major portion is over. Okay. Then sir, I'm a company. On my employee name, I am contributing to Provident Fund. I'm contributing to Superannuation Fund. I'm contributing for my employee name. That's an out-of-pocket cost for me. Can I claim deduction? Absolutely. That's an expenditure for you. But subject to 43B. What is 43B? I will discuss there. Are you clear? Then, sir, I am paying for my employee purpose only. In my name of employee, I am paying to National Pension System. I'm saving money in my employee name. How much you paid? You pay whatever you want. But maximum deduction is 14% of salary. What is the maximum deduction? 14% of salary. Salary means what? Basic plus DF for retirement. What is salary? Basic plus DF for retirement. Commission is not there. Intentionally I kept it and then strike it off because commission you should not add it there. Are you clear? Suppose I paid on my employee National Pension Scheme purpose 10 lakhs I paid for one employee. But when I see his basics and commission, no, basic plus DF for retirement, when I see, no, full year is 50 lakh only. Into 14%, 7 lakh only you're getting. So maybe you pay 10 lakhs out of love and affection. Maybe expenditure is 10 lakhs for you, but you get only 7 lakhs deduction. You can't get deduction for actual amount paid. You get deduction maximum 14% of the salary. Are you clear? Then employer contribution to gratuity fund. Whatever amount you contributed, you will get deduction. Then 5A, this point I will discuss when I'm discussing 43B. Are you clear? Then bad debts. How much deduction I will get for bad debt? Whatever amount of bad debt is there in your books, that much you can happily claim. Tell me, bad debt will come when there is a credit sale. When there is a credit sale. But tell me, under income tax, whether you sell on cash or credit, it doesn't matter. Accrual basis, taxable, no. Last year I sold goods on credit for 10 crore. Without even collecting money, I showed income tax, income, profit and then paid tax. Now that fellow is not paying me. And I decided he will not pay me. Something which I never collected. Some 10 crore worth of sale I never collected. I showed as income in the income tax. And I paid tax on that. Now I know I will not collect it. Tell me, did I overpay the tax or not? That 10 crore I will claim deduction now. That 10 crore I will claim deduction now. Now, condition for claiming bad debt. It should have been first considered as income. Then only you can claim deduction. If it is not considered as income, you can't claim deduction. Are you clear? Earlier, if you have considered it as income, then now it is taxable. So now it is allowed as deduction. Earlier, I didn't consider it as income. Now you can't claim deduction. Suppose you sold goods on credit, 10 crore. You didn't recognize in books of accounts that transaction. You didn't even pay tax on that. Now it became bad debt. Since you didn't offer income, you can't claim deduction. You understand the logic behind it? Tell me, in P&L account also, I will write off bad debt only when debtor is created. Yes or no? Debtor account, debtor to sale account. Only then P&L sale is recognized. Later, if the debtor became bad debt, then I will write it off bad debt and then transfer to P&L. Correct? Sir, sale itself is not recognized. Debtor itself is not there. When debtor itself is not there, bad debt comes. How does it come in books of accounts? It will not come. Same logic here also. Are you clear? Suppose I claimed bad debt deduction. 10 crore I claimed. But guess what? I fought with the SSC. After 2 years, I fought with that customer. After 2 years, he paid me 3 crore. He paid me what? 3 crore. Originally, 10 crore I showed as sale, even without collecting. And I paid tax. Later, it was bad debt. 10 crore I claimed as deduction, which means effectively again 0. Now again I am collecting 3 crore. Positive, how much net overall positive? 3. I will show it as income. Bad debts recovered is taxable if earlier allowed as deduction. Bad debts recovered is taxable if earlier allowed as deduction. Are you clear? Earlier it is allowed. For example, look at this example. I gave an example here. Wonderful example. Look at. For example, bad debt written off is how much? 10 lakh. Assessing officer allowed only 5 lakh. Nothing but how much deduction you claimed? 5 lakh. How much deduction you claimed? 5 lakh. Sir, I claimed net deduction. How much deduction I claimed? Net 5 lakh. Now, I claimed deduction, right? Amount recovered minus net deduction is equal to taxable. Amount claimed minus net deduction is equal to taxable amount. Earlier, how much deduction you got? 5. Suppose no, you recovered 5 lakhs. No, you recovered actually. No, here there is a bigger logic. In fact, I mean there is little more logic involved here. Okay. For example, I wrote off 10 lakhs. I wrote off 10 lakhs, which means how much income I showed. How much income I showed. I wrote off 10, but assessing officer offered only 5 lakh bad debt. Nothing but how much bad debt I claimed actually? 5. Okay. Suppose now I recovered 5 lakhs only. Now I recovered 5 lakhs only. I think nothing is taxable. Suppose I recovered 7 lakhs. Then 2 lakhs is taxable. Suppose I recovered 10 lakh. 5 lakh is taxable. The logic is how much recovery is taxable? Amount recovered how much minus earlier how much deduction you claimed. Excess of amount recovered is only taxable. Excess of net deduction is only taxable. Excess of net deduction. But instead of all this, no, you can take one example. You can simply take one example. What you can take, in exam, no, this much complication also will not be there. In exam, no, they'll give you in the P&L credit side, bad debts recovered within bracket earlier allowed as deduction. They said this is taxable. Suppose in the bracket they said earlier not allowed as deduction. Now you recovered amount, right? This is not taxable. Simple. This thumb rule you remember. That entire complication unnecessary, because that will take a lot of time for us to discuss. Unnecessary, because assessing officer involvement, bad debt to different years I need to show, all that picture I need to show. That's irrelevant for now. You take purely from exam point of view. Okay, what you need to take? Simple. Sir, did you claim bad debt earlier? 10 lakhs? Yes. Now you recovered? Yes. 5 lakhs. Earlier it is claimed as deduction? Yes. Now you recovered? Now tax it. Sir, earlier I have a bad debt, sir, but they didn't give me deduction. They didn't give me deduction. Now I recovered, sir. Nothing is taxable. Array, when I have bad debt, you didn't give me. Now when I recover, how can you tax it? Exact logic. Able to understand? This simple logic you remember. In exam also, this is how they will test. Bad debts recovered, they will give you information. And they will also give you earlier not allowed as deduction. Earlier not allowed means what? Entire recovery amount. Since earlier I didn't get deduction, now recovery is also not taxable. Are you clear? Earlier allowed as deduction, they said. Now recovery is also taxable. Are you clear? That's it. So this is regarding bad debts. That's it. Then family planning expenditure. What is it? Family planning expenditure. Okay, 2 minutes. Now, how much you can claim? If it is revenue expenditure, fully you can claim, no problem at all. But suppose if it is family planning capital expenditure, company itself constructed a hospital for family planning for all their employees, example, and they are only paying doctor salaries, missionaries and all they purchased. Payment of doctor salaries, all this and all is revenue expenditure. They can claim fully. Suppose if at all they are buying missionaries, building construction, all that, that's a capital expenditure. That can be claimed as deduction in 5 installments. That can be claimed as deduction in 5 installments. Are you clear? That's it. 5 installments logic comes for capital expenditure on family planning, not entire family planning expenditure. Family planning revenue expenditure 100% reduction. Capital expenditure 5 installments. Next. securities transaction tax paid by a share broker, by a share dealer, yes or no, he can claim deduction. Commodity transaction tax paid by commodity dealer, he can claim deduction. Then 37, you see all deductions when we saw 30 building expense, 31 plant and machinery furniture related expense, 32 depreciation on capital expenditure, 35 scientific research, 35 AD, that's a different business altogether, their related expenditure, 36 stock insurance premium, employee medical insurance, bonus and commission paid to employee, contributions to employee provident fund, bad debts, like that some points only we claim. But in business, I will incur electricity expenditure, I pay salary to my employee, I purchase raw material, that expenditure, I incur telephone expenses, I incur travel expenses for my employees, I incur routine office maintenance. What about them? They are all business only, no? You can claim deduction under section 37. The conditions are here, one amendment is there. Deduction is allowed for any other expenditure not covered under 30 to 36, and the expenditure must be incurred for business purpose, and it is not related to personal or not a capital expenditure. And any expenditure which is offensive in nature, expenditure incurred for offenses and prohibitions under the law, that is disallowed. Bribe you paid, can you claim deduction for bribe? You can't. And no deduction for expenditure incurred to settle proceedings in relation to SEBI contravention, SERA contravention, Depositors Contravention, Competition Act. This is a new amendment. This is a new amendment which is added in Finance Act 2025 through notification. Are you clear? Which is applicable for the first time in May 26, September 26 and Jan 27 examination. Now, what is it? Sir, I incurred some expenditure to settle proceedings. Which proceedings? Some legal proceedings. Where? Under which law? Under SEBI law, under SERA, under depository law, under competition. 4 acts only. Only 4 acts. If at all you are incurring any legal fees and settlement fees under these 4 laws related violation, you can't claim deduction. You cannot claim deduction. Sir, under Companies Act, no, ROC sent me a notice, sir. Now, I did everything right. And I hired a lawyer. And I'm paying 1 crore fee for him from past 1 year. 1 crore fee I paid for proceeding under Companies Act. Can I claim that as a business expenditure? Yes. Which one you can't claim it as a business expenditure? If the amount is paid for settlement proceedings under SEBI law, SERA, Securities Contract Regulation Act, and third one, Depositories Act, fourth one, Competition Act. If at all under these 4 acts, if at all you are incurring for any proceedings related, settlement related expenditure, you cannot claim deduction. Further, CSR expenditure is not allowed as deduction. It's a social responsibility. It is personal in nature. It is not related to a business. CSR expenditure, whatever you are spending, you can't claim deductions. Are you clear? Sir, I'm taking keyman insurance policy. On my directors, I'm taking insurance policy. Yes or no? What about that? Yes, you can claim it as deduction. Sir, a firm is taking keyman insurance policy in the name of the partner. Yes, firm can claim deduction for keyman insurance policy even though it is taken in the name of the partner. Are you clear? 37, main theme is completed. Are you clear? Then we have 40 series. In the next session, we will cover. Okay. Until now, you liked it? You're getting clarity? That's it. That's it. Yeah. So, see, you see me. Morning 8 I started. Correct? Huh? And now it is almost 7 evening. 11 hours. Minus, let us assume 3-4 hours for breaks. 7 and up to 8 hours of attested class. So, some students messages me, sir, how can I study 10-12 hours? I'm taking the class with the same amount of energy. In fact, I'm more active now. It's all your mindset, guys. It's all the mindset. If you are committed here, your body works. That's it. You know how long I'm working like this continuously? From past 3.5 months. Only 7 to 8 days break I took. In the past 3.5-4 months, 7 to 8 days only break I took. And now, in the past 45 days, not even 1 day break I took. Every day I have a class. Till yesterday was final batch, my audit final batch. Again, day after your batch is over, final audit batch the very next day. Again, what about next Sunday? Audit marathon is there, CA Inter Direct Marathon. What about that next Sunday? Final batch have to conclude. What about that next Sunday, March mid? I have CA final audit marathon batch. Till April 1st or 2nd week. No. March mid till March mid or March 20. I have continuous classes. In between 1 day break I am taking. 1 or 2 days break I am taking. That too because of my cousin's one function is there. That's it. Only 2 days I am taking break. Continuous at a stretch I am taking the class without a break. Apart from this, I do Instagram reels. You see, I do social media marketing. I take care of my academy administration. I take care of all other activities and I spend time with my kids. I sleep every day 6 hours only. Like this is how I work for 6 to 7 months in a year. 6 to 7 months in a year I work like this. Another 5 months it's my timelines, in the sense like I work maybe 4 or 5 hours in a day like that. If you are really committed and work, you can change your life like anything. If you want to change your life, you don't have option, you have to work. That's it. Did you see me using my phone? Only during break I touch. Otherwise I don't even touch. I don't care what is happening. That's the dedication. If you have, you can do anything in your life. Getting it? That's it. Okay, wind up. Okay, we'll continue in the next session. Bye bye. Yeah, let's continue the PGBP discussion. We have understood all the deductions, right? Now we need to understand conditions for deductions. If you remember at the introduction of the chapter, I told you how the PGBP structure, how the PGBP mechanism operates. First, what incomes are taxable under PGBP? 28 and 41 charging section. 28 is charging section. 41 is also one of the similar to charging section. Okay. 41 also talks about what incomes are taxable under PGBP. Then we saw what expenses we can claim as deduction. What expenses we can claim? 30 to 37. 30 section to 37. What are all expenses? We discussed all that we can claim deduction, right? Now, in order to claim these deductions, there are some conditions which are commonly covered under 40 series. For example, in 32, if you see 43 actual cost, already we saw one condition there. If at all an asset is purchased by paying more than 10,000 in a day to a single person in cash, more than 10,000, then that asset purchase will not be considered. It will be taken as actual cost 0. Similar point is also there in 35 AD. If at all a specified business purchased any asset for specified business for more than 10,000 by other than approved modes, their deduction they will not get. Now we are going to discuss similar conditions like that for commonly for all expenses. Okay. Now we can call them as condition sections, conditions for deductions, or you can call that as disallowance sections. What is it? Disallowance sections. Yeah. Now what are these sections? You know, these sections I divide them into two categories. I divide these disallowance sections into two categories. One, permanent disallowance. This classification I think you might be seeing for the first time. Permanent disallowance, permanently disallowed, temporarily disallowed. What is it? Temporarily disallowed. One is permanent disallowance, another one temporary disallowance. What are permanent disallowances? 40A entire section is permanent disallowance, and you have 40 subsection B, right? Partnership form. 40 subsection B, partnership form related one. In that also some disallowance is attracted. These two are permanent disallowances. Then 40 subsection A, and inside that clause 1, comma 40 subsection A, clause 1A, comma 43B. These are temporary disallowances. Again here 40A is there, right? Nothing but 40A subsection 2, 40A subsection 3, 40A subsection 3. Read with subsection 3A, comma 40A subsection 7, 40A subsection 9. All these are permanent disallowances. Like once disallowed, that's it. No more discussion later on. Whereas 40 subsection A1 and 1A 43B, initially they are disallowed. Subsequent years, if you really once again comply with those conditions, you can afresh claim and claim them as deduction. You can once again claim them as deduction. That's why I call them as temporary disallowances, whereas this I call them as permanent disallowances. Understood? Now, for example, you know, once I explain all the disallowances, I will do one comprehensive customized problem where you will get all the adjustments, all the sorts of adjustments you will understand. Okay. Now 40A subsection 2, what this section says. Suppose no, you are incurring expenses. Which deduction can be claimed under section 30 to 37? You can claim deduction under section 30 to 37. Okay. If at all this expenditure you paid to related person, more than arm's length price. What is it? More than arm's length price, or you can also call it as more than reasonable price. You can also call it as what? More than reasonable. Then the excess amount paid, whatever excess amount paid, can be disallowed by assessing officer. It can be disallowed by assessing officer. Generally this section is controlled, this section is operated by assessing officer, but still when we are doing problems in the exam, no, whenever we get this entire situation, if at all this situation is tested, we will also disallow. For example, SSE paid salary, okay, he paid salary to his own brother who is working in the assessee organization. I'm a sole proprietor. In my organization, my brother is also working as a sole proprietor. I mean, my brother is working as an employee. Market rate, no, 50,000 per month is what salary they will pay. Yes or no? Since is my brother, I am paying 1,20,000 rupees per month salary. Now, per month, 70,000 rupees extra I am paying. This 70,000 rupees will not be allowed as deduction. See, in my P&L account, I might debit 1.2 lakh in P&L because that's the expenditure I incurred, that's the amount I paid. But under income tax, 1.2 will not be considered. Only how much is considered? 50,000 will consider. That's why, for example, here you see how the section operates. If P&L account 1.2 lakh is debited, net profit is, let us assume 1 lakh. Now tell me, net profit is equal to 1 lakh as per P&L account, right? Now here under this net profit is computed after we reduce 1.2 lakh. Am I right? In the P&L it is debited, means while computing this profit, this amount is reduced or added or reduced already. But tell me, under PGBP, how much I should reduce, technically speaking? 50,000. How much I should not reduce? 70. Already in this 1 lakh computation, how much is reduced? 1,20,000 they reduced. 70,000 they should not reduce, right? What should I do? Add back. Exactly. So 40A subsection 2, add back. How much it is? 70. 1.7 lakh. Are you clear? Sometimes in exam, how they can ask, you know, they will not give this information. P&L account they'll give you with 1 lakh profit. Additional information. What is it? Additional information. Suppose salary paid to brother. Salary paid to brother 1.2 lakh. Out of that, 70,000 is unreasonable. Full stop. This entire transaction is not recorded in the books of accounts. This entire transaction is not recorded in the books of accounts. Now tell me, what is net profit as per P&L account? 1 lakh. Now, amount paid to my brother, salary, this is not recorded in the books of accounts. Now I will compute it. Now I will claim it as deduction. Am I right? Now I will claim it as deduction. Now tell me, 1.2 lakh I paid. How much is allowed? 50,000 is only allowed. 70,000 is not allowed. Now 50,000 I should claim deduction, right? Tell me, is that 50,000 rupees computed, considered in this 1 lakh computation? No. Therefore, I will now freshly give deduction of 50,000. Therefore, my PGBP income will be 50,000. Do you understand now why I reduced you? In the above, why added it? Disallowance word will be added to add back only. Here, disallowance word is not considered. Understand the meaning of disallowance. Disallowance means what? Here, in the previous example, it is already reduced. You already allowed. 1.2 lakh you already allowed in P&L account while charging expenditure to P&L. You should not allow that much. 70,000 disallow. Disallow means add back. Whereas here, the transaction itself is not recorded. So disallowance word cannot be used. Able to understand? Here what we can use instead of that 50,000 rupees worth of salary we paid, which is reasonable portion, we can claim it as deduction under section 37. Subject to 48, only reasonable amount is considered. I will claim it as a deduction because it is not recorded. Able to understand? That's it. 48 is over. Clear? Now, who are related persons in 48? Just a brief list of who are all related persons. I'll just give you a brief list of related person. For individual, suppose you are a sole proprietor. For you, who are related person? 5 fingers. Okay, 5 finger logic. You know, parents, siblings, spouse, siblings. Look at this. In our life, who will come first? Parents, then siblings, then spouse, then children. That's it. Yes or no? Here, instead of using the word parent and children, they used the word lineal ascendant and lineal descendant. Lineal ascendant and descendant includes 3 generations generally. Okay, parents, grandparents, great grandparents, children, grandchildren, great grandchildren. So for an individual, related persons means spouse, brother, sister, lineal ascendants or lineal descendants. Are you clear? Next, same way, related person for an individual is any other enterprise. For suppose I have a partnership firm. In that, no, me or my relative has substantial interest. So that is also related person to me. Generally for us, individual taxation is only important. So individual only I'm focusing on. That's it. 40A2 is completed. Are you clear? Easy or not? That's it. Now, next, 40A3. I'm discussing all permanent disallowances. Okay, permanent disallowance means what? Once here, no, right now, 70,000 we won't allow. That's it. Do we consider about that fact once again in the next year or that next year? Ignore, over. That is one time adjustment. Then 40A subsection 3. What is 40A subsection 3? Again, if at all you are claiming any deduction, for any expenditure, it could be any expenditure, you are claiming deduction under section 30 to 37. You are claiming deduction under section 30 to 37. If at all you are claiming deduction under 30 to 37 for any expenditure, if that expenditure is paid more than 10,000 rupees in other than approved modes, if at all you are paying more than 10,000 rupees in a day, what is it? In a day to a single person. In a day to a single person. Okay, more than 10,000 rupees you are paying in a day to a single person in respect of an expenditure. That entire expenditure is disallowed. What is disallowed? Entire such expenditure is disallowed. Any expenditure for which you are claiming deduction under 30 to 37. Same example I'll carry. 1.2 lakh. What is it? 1.2 lakh monthly salary, 1 month salary I paid to my brother in cash. I paid to my brother in cash. Complete 1.2 lakh I paid in cash on a single day. Okay. Salary expenditure is deductible under section 37. Salary expenditure is deductible under section 37. I paid it in cash more than 10,000 in a day to my brother in cash completely. Straight away, not allowed as deduction. Now tell me, suppose in exam they'll tell you like this, 1.2 lakh salary paid in cash to brother, within bracket 70,000 is unreasonable. This is how the adjustment give. Now 40A2, 40A3 link together. Now this is what adjustment they give. Now tell me, how much deduction you can claim? 0. Exactly. As per 40A subsection 2, 50,000 only you can claim. But 40A3 says, array, entire more than 10,000 you paid in cash, entire amount is disallowed. Now when two sections of disallowances attract, higher disallowance section will apply. Able to understand? Lower. Suppose in the right now, as per 40A2, 70,000 is not allowed. Whereas as per 40A3, entire 1,20,000 is not allowed. Am I right or not? Therefore, which one I should apply? 40A3 I will apply. Are you clear? Therefore, entire 1.2 lakh I will not claim deduction. So if at all this 1.2 lakh is already debited to P&L and 1 lakh is the profit after debiting that, I will add back. Suppose if that 1.2 lakh is given as an additional information not recorded in books of accounts, I will ignore it because here 1.2 lakh no deduction at all. Are you clear? Do you understand 40A2? Sorry, 40A subsection 3. Are you clear? By the way, suppose in the previous year 25-26, okay, I recorded expenditure in my books of accounts. I incurred. What is it? I incurred the expenditure on accrual. By the way, tell me, in PGBP, all the deductions, I will claim on what basis? Accrual. I assume that my books of account system, my accounting system is accrual. So I will claim deduction on what basis? Accrual basis I will claim deduction. Therefore, in 25-26, one expenditure I incurred. Salary expenditure, same salary expenditure. 1.2 lakh I debited to P&L as on March 31st. As on March 31st, I debited salary payable, outstanding salary, I debited to my P&L. Can I claim deduction for this or not on accrual basis? Absolutely. Absolutely. Let us assume in this case, there is no related brother, all that, leave it. 1.2 lakh salary I have to pay to an employee. I debited in the P&L account 1.2 lakh on accrual basis I claimed. I claimed deduction. No, because my company position is bit tight, okay, so I have not paid the salary even for next 3-4 months also. Department is not bothered unless unless the other person waived it. For example, that's okay. 41 subsection 1, that will discuss later. Waiver of liability will discuss later. Fine. Let us focus only on this. 1.2 lakh I debited. I have not yet paid. Now tell me, first of all, ignore 48.3, ignore all the sections. Since I debited 1.2 lakh in P&L, my expenditure, can I claim this expenditure in PGBP on accrual basis or not? Under section 37, can I claim it or not? Absolutely yes. Absolutely yes. Yes or no? Now what happened, in 26-27 year, in the next previous year, in the next financial year, nothing but in 28th February 2027, this 1.2 lakh I paid in cash. This 1.2 lakh is paid in cash. Now what is the consequence? See, during the year, in the current year, relevant year, suppose any expenditure, 1.2 lakh expenditure, by the way, this expenditure belongs to which year? 25-26. In this year itself, if you pay that in cash more than 10,000, that year you will not get deduction. But I already claimed deduction. While filing IT return for 25-26, no, in July 2026, I filed IT return also. I happily claimed it. I claimed deduction, paid lesser tax also. But guess what? In 26-27 year, I paid it in cash. In 26-27 year, I paid it in cash. Now tell me what is the consequence? Disallowed, I already claimed. What is the consequence? Subsection 3A. 40A, subsection 3A. It says it is deemed to be income. It is deemed to be income. If the assessee has claimed any expenditure as deduction on accrual basis in the relevant previous year IT return computation, however, the same expenditure is paid in the subsequent previous year. The same expenditure is paid in subsequent previous year. Then in the year in which it is actually paid in cash, in that year, it is deemed to be profit. It is deemed to be income. Are you clear? Profit or income. Do you understand? So look at, for example, as on 31st March 2026, this is relevant to previous year. This is the year for which expenditure is actually incurred. Now, how much I debited in books of accounts? 1.2 lakh. And guess what? 5th April I pay salary to everybody. Let us assume on 5th April itself, what I did, entire 1.2 lakh I paid in cash. I paid in cash. Now, what is the tax treatment, Now, by the way, this 31st March return, I will file by 31st July 2026. As on 31st July 2026, due date for filing IT return, I will file the return. But by the time I'm filing IT return, I got to know this 1.2 lakh is already paid in cash. What is the tax treatment for the previous year 25-26? What is the tax treatment? No adjustment. What is it? No adjustment, because it is paid in the next year. It is paid in the cash in next year. For 25-26, I can claim deduction on accrual basis, no problem at all. Sir, within the due date for filing IT return, we got to know, right, it is paid in cash. It doesn't matter. Section what it says. In the relevant year, if you pay more than 10,000, then disallowed. Here it is not paid in relevant year. Therefore, I can claim deduction. Now, what 40A 3A says what? If in the next year, yes or no, in the upcoming year, in the later year, if you pay that amount by cash, then in that later year computation, no, that is treated as income. So here 1.2 lakh, no, April 2026 means which year it will come under? Previous year 26-27 it will come. For this year, I will treat it as income. For this year, I will file IT return in 27-28 assessment year. Nothing but I will file IT return on 31st July 2027. I will file IT return. That time I will add this as income. For the relevant year, I will not touch. Able to understand. This is 40A3, 40A3A. That's it. 2 permanent disallowances, main sections we completed. Then apart from that, we have one more permanent disallowance, 40A7. What is 40A7? Provision for gratuity. What is it? Provision for gratuity is disallowed. You create provision every year for gratuity purpose as per accounting standard requirement. Okay? And you are debiting it to P&L. And while computing net profit as per P&L account, it got already reduced. Now, what is the treatment for this provision? Disallow. However, disallowance will not attract in 2 circumstances. Disallowance will not attract in 2 circumstances. If that gratuity is payable during the year. If that gratuity is payable during the year. In that year itself, you are paying the gratuity. For that reason, you debited a provision, you paid also in the same financial year. No disallowance. that provision you can claim. Suppose if at all you debited provision, and what are you doing? Every time whenever you are creating provision for gratuity, equal amount you are contributing to gratuity fund. You are contributing to gratuity fund. Or if that amount is contributed to gratuity fund, then disallowance is subject to 43B. Then disallowance is subject to 43B. If an SSC make a provision for gratuity in the books of accounts, then the disallowance is subject to 43B. Are you clear? Able to understand? Remember thumb rule. Under income tax law, you will not get deductions for provisions. You will only get deductions for actual expenditure. What do you mean by an actual expenditure? The actual expenditure means it should have been paid during the year, or it should have been paid in the reasonable period of time. It should be a real expenditure, not a provision. Gratuity provision is not a real expenditure. Suppose if it is becoming payable, then it's a real expenditure. Or you are contributing to some fund, gratuity fund, you are making a contribution, then again there is an outflow. Therefore I will consider that as a real expenditure. Now gratuity fund contribution is linked with the 43B. Are you clear? If you observe, until now we have seen 43B word at various places. Under section 30, municipal taxes, yes or no, municipal taxes, there we saw 43B point. Then under section 36 we saw bonus or commission point. Interest on loan, interest on borrowed loan. And right now 40A7 gratuity fund, there also 43B point is there. And even under section 36 RPF contribution, superannuation fund contribution, 43B is there. At so many places we saw 43B. What is 43B? I will tell you. I will discuss when I am discussing temporary disallowance sections. Do you understand until now? Yes or no? 40A7, do you understand? That's it. That's about 40A7. Then we have one more section, 40A subsection 9. 40A subsection 9. In our book, everything is clearly given. Look at 40A7. Any provision for gratuity is disallowed. Contributions, however, for the following, disallowance will not apply. What disallowance? Contribution to gratuity fund subject to 43B. Or provision for gratuity where you are payable during the year. Example, the gratuity is due to an employee on death, retirement or termination. He has to leave now. He is leaving now. I have to pay him. For that reason, I debited a provision in the books of accounts. I can claim it as deduction. Are you clear? Next, no double deduction. Obviously, once you claim on accrual basis, will you claim once again on payment basis? No. That's it. That's it. Next, 40A9. What is this 40A9? Suppose, company, Provident fund I need to save, right? What is provident fund? That's nothing but savings in the name of the employee. Savings. Money is saved in the name of the employee. Employer will pay out of his pocket some amount. Employee will pay out of his pocket some amount. That money we should save it in a separate trust. So that tomorrow when employee is retiring, we can give him a bulk amount so that he can survive later on. Yes or no? That is the reason why provident fund and all is created. Superannuation fund, provident fund, gratuity fund. All this intention is that only. Am I right? Now look at, I created one dummy bank account. A bank account I created. No registration, nothing. Every year, employee, I'm collecting money. I'm also paying the money to the bank account. But that bank account is not recognized by Provident Fund authorities. That bank account is not recognized by Provident Fund authorities. I kept the money separately. I contributed. But since that account is not recognized by Provident Fund, that is called as unrecognized Provident Fund. What is it called as? Unrecognized. If at all, me as an employer contributing any amount to unrecognized funds, that is not treated as expenditure by the department. That is not treated as expenditure by the department. Contributions to unrecognized welfare funds, contribution to unrecognized welfare funds is not allowed as deductions. These are the funds where no real benefit will actually flow to the employee tomorrow. So they will not consider. Now you're paying every month to bank account, right? Employee money also you're paying to a particular bank account, right? You want to claim deduction for this? Do one thing. Get that bank account recognized by Commissioner of Income Tax. Get that bank account recognized by Provident Fund authorities. Then it becomes recognized Provident Fund. Then you can claim deduction for contributions made. Are you clear? That's 48.9. Permanent disallowances mostly completed. Only one permanent disallowance is there. 40 subsection B. Firms related taxation, which I will discuss separately. 40 subsection B, firms related taxation, I will discuss separately. Do you understand 40A2, 40A3, 40A5, 40A7, 40A7, 40A9? Easy. That's it. Just a minute. Yeah. Next one. I discussed right now permanent disallowances, yes or no? Now I will discuss about temporary disallowances. In that, first disallowance I want to talk about is 43B. What is it? 43B. There are so many places where we saw 43B provision, yes or no? Now even a corresponding provision is there in our book also very clearly. 43B ma, just after 41 it will be there. Yeah, 43B. Look at the heading which we have used in the book. Specific deductions, nothing but some specific expenses. You can claim deduction only on payment basis. Only if you pay, you will get deduction. Tell me, this section is applicable to which SSCs? SSC following accrual basis, SSC following cash basis. Accrual, very good, very good. See, if the SSC is following cash basis of accounting, he can claim deduction for every expenditure on payment basis only, not about some specific items. If an SSC is following cash method of accounting, cash basis of recognizing PGBP income, calculating PGBP income, forget about specific items here. Every expenditure he will claim only on cash basis. Yes or no? What is cash basis? By 31st March you pay the money, claim deduction. By 31st March you didn't pay the money, don't claim deduction. Simple. 25-26 previous year, you're computing income. Expenditure incurred, no deduction. Expenditure paid, deduction. By what date it should have been paid? By 31st March, if you pay only, you will get deduction. Cash basis means 31st March only, cut off. Are you clear? What about accrual? You incur. When are you going to pay? I will not look at. Because you will definitely pay. Either next year or that next year or that next year. One day you will definitely pay. I know that. But you incur the expenditure, you claim deduction on accrual basis. This is what accrual method of accounting. Am I right or not? Now, if an SSC is following accrual, there are certain expenses which will be given as deduction. Which will be given as deduction only if the SSC actually pay them. Only if the SSC actually pay them. Not necessarily by 31st March. There is a due date concept which is linked. Okay, there. Now, 43B identified. 43B identified 7 types of payments. 43B identified 7 types of payments. Okay, actually, if you see the alphabet, clause H, A to H means 8 payments will be there. But 2 or 3 clauses are dealing with interest point only. Able to understand? So, now types of payment are only 7. Types of payments are only 7. 43B identified 7 types of payment, 6 plus 1. 43B identified 7 types of payments, that is 6 plus 1. What is this? This one is regarding MSME liabilities. What is it? MSME liabilities. Whereas this 6, if you observe, 1, contribution, you can see here, why to write and waste time, okay? 1, taxes, cess, duty, interest on taxes, all that. Now, second one, employer contribution to welfare fund. You may call gratuity fund, provident fund, superannuation fund, ESI, employee state insurance fund, whatever it is. Company's contribution. Third one, payment of bonus or commission. Fourth one, interest on loans and borrowings. Interest on loans, interest on borrowings. That too. Which loan and borrowing? Loans and borrowings from banks, from NBFCs, from public financial institutions, state financial corporation, state industrial investment corporation. Only from them if you borrow, to them if you have to pay interest, then only 43B mechanism will apply. Sir, I borrowed a loan from my holding company. I borrowed a loan from my relative. And I incur expenditure. I have not yet paid interest. I incurred it. 43B will not apply. You can claim deduction on interest incurred basis. You accrued the interest right, you incurred the expenditure right, you can absolutely claim. Here, interest on loan, which loan? Only recognized sector. If at all you are borrowing loan from a formal sector, financing sector, and to them if at all you are paying interest amount, yes or no, to them you are incurring interest, 43B section will apply. Understood? Next, payments made by employer as leave encashment. Remember, regarding employee benefits, you see, this is employee benefit, this is related to employee benefit, this is related to employee benefits. Out of 7, 3 were dealing with employee benefits only. 3 were dealing with employee benefits only, predominantly. 1, to the employer paying leave encashment, to the employer paying bonus or commission, to the employee on behalf of employee. For the employee benefit, you are paying provident fund, gratuity fund, contributions. Are you clear? You see, salary to employee is not covered. Allowances to employee not covered. Able to understand? What is covered is only bonus, commission, leave encashment. Only 3 types of payments given to the employee were covered, and welfare fund contributions are alone covered. Remaining payments made to the employee are not covered. Be clear. Able to understand? Next, payment to Indian Railways for use of railway assets. Generally, most of the companies take railway services, Indian railway services, where there will be a huge delays from them to pay to the railways. Okay, that expenditure. Railway services means goods carriage, goods railways, yes or no, goods rail. They'll be using for transportation of goods. They'll be storing railway houses. No, railway warehouses will be there. There will be storing railway inland container depots, all that will be there. Container stations will be there. There our companies will store inventory, all that, lots of inventory, especially coal mines and all. Coal mines, iron mines, all this. No, railway services are prominent there. Able to understand that one? So these 6 payments, what exactly they are saying? You suppose, no, all the 6 payments, just now I told you, what are the 6 payments? One is taxes. 2, taxes means municipal taxes, property taxes, even GST, all that. Remember, GST basically is not an expenditure. GST is basically not an expenditure. And when I'm selling the goods and collecting GST, that's not income also. When I'm paying, when I'm purchasing and on that input tax I pay, that's not expenditure also. But under income tax law, what you have to do for GST, you know, whenever you're collecting GST, add it to the PGBP income. You, whenever purchases input tax you paid, no, that you reduce it. Balance amount of tax is there, right? You paid, claim deduction. Able to understand? For example, no, I sold goods for 1 crore, ma. I sold goods for 1 crore. Okay, look at this, how in the accounting this taxes point will come. For example, this is balance sheet, this is P&L. Suppose I sold goods for 2 crore, 10% rate of GST. So, but in P&L I will show how much? 2 crore only. But whatever amount I collected from customers a liability for me, I will show in balance sheet as 20 lakhs output tax liability. Am I right? Hello? Next, suppose I purchased goods for 1 crore. Yes, on that 1 crore, I paid GST of 10 lakhs, which is a current asset for me. Input tax credit. Now, generally what I do, these 2 I will set off, 10 lakhs, balance GST I will pay to the department. Am I right or not? This is how in income tax, this is how your books of accounts looks like. But now what is your profit here? 1 crore. What is your profit here? 1 crore. Now, department says, hurry, your net profit is 1 crore, no? First add output tax, 20 lakh, minus add input tax, 10 lakh. Okay, your profit is 1.1 crore. Sir, how come, sir? This 10 lakhs I have to pay to department. Pay it and then claim deduction. Your profit is again as per P&L. Are you getting it? You pay this 10 lakhs. By when I should pay, sir? By due date under section 139 subsection 1. This is a 43B item. Under income tax, sales and purchases has to be accounted on inclusive basis, not exclusive method. Are you clear? It is accounted on inclusive, not exclusive. Under accounting, you account it on exclusive, not inclusive. But under income tax, tax collected by you, add it to income. Taxes paid by you, show expenditure. Balance tax, you show expenditure subject to 43B. Over. Able to understand? That's why the taxes point came there. Because taxes is not expenditure basically for me, because I collect and then pay. That's it. But why 43B is treating regarding that? Because of this reason. Are you clear? So accordingly, in reality, what we do, you know, 1 crore is a profit as per P&L, no? We will just see. Output tax collected 20, input tax is 10, balance tax 10. When they paid, I will see. If at all they pay as per 43B. If at all they pay as per 43B. Since it is paid as per 43B, no adjustment is required. Suppose if they didn't pay. Suppose if they didn't pay. This 10 lakh rupee, they didn't pay. They collected but not paid. As per 43B timeline, they didn't pay. I will treat it as income. I will treat it as income. Disallowed like that. Able to understand? This is first point. Next. Now, so 6 payments. What are the 6 payments here? Taxes, contribution to welfare funds, payment of bonus, leave encashment and interest on loans and borrowings, leave encashment, payment to railways, right? What is the point? What is the 6 points? Suppose, no, you are incurring expenditure in 25-26. You spent them in 25-26. How much you spent? 6 items put together, how much you spent is 1 crore. You spent 1 crore. Technically, that's an expenditure on accrual basis you can claim. Yes or no? As on 31st March, no, in P&L account also you debited this 1 crore. No problem. We don't have any objection. Only one request. You are filing IT return under section 139 subsection 1, right? Due date is there, right? What is the due date? Audit cases 31st October. Non-audit cases 31st July. Yes or no? Due date is there, right? Whatever due date for you, it is applicable. Suppose you are audit liable, then 31st October. You are not liable for audit, then 31st July. Able to understand? You're liable for due date, right? Within this date, you clear this liability. You clear this liability. Sir, I debited to P&L, sir. As you said, within 31st July, I paid it off also. What should I do now? No adjustment. As it is, you can go. Are you clear? Suppose out of this, 20 lakh is not cleared. What is it? 20 lakh is not cleared. Look at the P&L account here. Look at the P&L account here. Already the SSA had a profit of 5 crore. Okay, net profit is 5 crore. Now in that, expenses which are subject to 43B were debited is 1 crore. Which means while computing this 5 crore, this 1 crore is already reduced. Yes or no? Now out of this 1 crore, no, by due date, 30 lakhs is not paid. By due date, 30 lakhs is not paid. Array, you incurred 1 crore expenditure. I told you, you have to pay by due date. You paid only 70 lakh. Only 70 lakh I will give a deduction. 30 lakh you didn't pay. So what is the consequence? 30 lakh you will not get deduction. But you already reduced it now while computing this 5 crore. What should I do? The 30 lakhs? Add back. That's it. Are you clear? Easy or not? However, sir, okay sir, you disallowed me this 30 lakhs because I didn't pay. Tell me sir, I paid next year. Okay, I paid next year. That is on 10th. My due date is 31st July 2026. Within this due date, 30 lakhs I didn't pay. You punished me. For 25-26 while filing IT return, 30 lakhs you treated as income, which is not my income actually, it's expenditure. You didn't give me deduction for expenditure. On 30 lakh into 30%, 9 lakh plus surcharge, I paid so much tax. Now, on 10th August itself, 2026, after filing IT return, I realized my mistake. My auditor disallowed me. On 10th, I went and paid back this 30 lakh rupee also to the customer. Now, what is it? What will you do? You punished me when I didn't pay. Now I paid it. What will you do? Okay. 26-27 previous year you compute PGBP income rates freshly separately. That time you claim this deduction separately. Sir, this is not this year expenditure. No, it is not relevant. Last year we disallowed. No, for that reason we are now allowing you. We are compensating our mistake. Are you clear? So 43B, though it is disallowed, subsequently again when you are paying it, it is again allowed. That's why it's called temporary disallowance. Are you getting it? Whereas 40A subsection 3, 40A subsection 2, they were not temporary disallowances. Do you understand the difference between those disallowances? Clear everybody? For 6 items, this is the concept. For 6 expenses, due date, for 6 expenses, the expenditure you must pay by due date for filing IT return. You didn't pay by due date, for the relevant year, disallow. Later you paid. When you paid, look at the date when it is paid. Payment date comes under which year? Look at that year you can claim a fresh deduction. Are you clear? Suppose here, within this due date, the expenditure is incurred by 31st March 2026. Am I right? Expenditure is incurred by 31st March 2026. Whereas due date is 31st July 2026. Within this, somewhere in May, that entire 1 crore is paid by me. No need to do anything. You incurred 1 crore expenditure. In P&L you already debited. While computing this 5 crore, that 1 crore already reduced. And as per income tax also, no disallowance attracted. No need to do anything. No treatment for that. Are you clear? Yes or no? That's it. This is 43B 6 items. Now, let me focus on 43B clause H. 43B clause H. See, definitely every company, they purchase so many goods, so many services from so many vendors. Am I right? And some of these vendors, see, I'm an SSC, I'm a sole proprietor. I purchase raw materials, I purchase so many other goods and all. I purchase certain services like repairs and maintenance contracts, something from various vendors I'm purchasing. Able to understand? Now, one of the vendor is an MSME. One of the vendor is an MSME, not even MSME. Only one of the vendor is micro and small enterprise, not medium. Medium enterprise is not covered. Only micro, small enterprises were covered here. Under MSMED Act. MSMED Act is applicable for medium enterprises also. But, okay, micro and small only covered. If I am purchasing, for example, no, I purchase raw material. What is it? I purchase a raw material for 10 lakh rupee. From a micro supplier or a small supplier, I purchased it from him. It's on credit only. I purchased on credit only. But tell me, technically, I can claim deduction on accrual basis. Am I right? I can claim deduction on accrual basis. Am I right? So I generally claim on accrual. But 43B subsection H, what it says, clause H, what it says, it says pay within Pay within, not due date for IT return. Not due date for IT return. Pay within appointed day. What it says? Pay within appointed day, so that you can claim deduction for the relevant year. So that you can get deduction for relevant year. What is appointed day? 15 days credit period, nothing but. What is it? 15 days credit period if there is no written agreement. Suppose if there is a written agreement, maximum credit period as per MSMED law is 45 days. Maximum credit period. See, the supplier, because of his situation, he might have given you 90 days credit period. It doesn't matter. Law says 45 days maximum credit period. What is the maximum credit period allowed? 45 days. If at all the supplier says 30 days only, then 30 days. If at all supplier says more than 45, then 45. Sir, there is no written contract itself, then only 15. Then only 15. What is this credit period? Simple. From the date you purchase the raw material, within 15 days have to settle the liability. From the date of purchasing the raw material, nothing but from the date of incurring the expenditure with an MSME, I should settle the liability within 15 days. I should settle the liability within 45 days. Are you clear? Yes or no? Now, what will happen? What will happen if I do not settle the liability within 45 days, within 15 days? What will happen? Simple. You don't get deduction for that expenditure. Over. You will not get deduction for that expenditure. Okay. After 45 days, if I pay, can I once again claim the deduction? Absolutely. You can absolutely claim. This is for protection of MSMEs. This is for protection of MSMEs. That's why in Schedule 3, balance sheet, trade payable, MSME separate disclosure is there. For trade payables, if you see Schedule 3 trade payable disclosure, MSME disclosure will be there. Are you clear? Now, look at the example. Suppose I am talking about previous year 25-26. Okay? In this year, on 1st October 2025, during the year, I purchased goods from one raw material vendor. Okay, 1 crore worth of goods I purchased from him. How much worth of goods I purchased from him? 1 crore. Now we have a written agreement. Written agreement says 70 days credit period. But 70 days and all not allowed. As per MSME, how many days allowed? 45. Transaction date is on 1st October. So 45 days will be on 14th November 2025. Transaction date is, due date is what? 14th November. Within this 14th November, if I pay this 1 crore, no treatment, no problem. You already claimed deduction on accrual basis. As it is, we will allow. I will not touch it. Suppose within 14th November 2025, if at all you didn't pay, then this 1 crore will be disallowed. Am I right? Am I right or not? Suppose no, as on 14th November, it is disallowed, right? But SSC actually cleared that liability in February 2026 itself. 10th February 2026 itself, this entire 1 crore liability is paid. If you see, since it is not paid within 45 days, I will disallow. Again, subsequently it is paid in February month, so I will allow. But all these dates, if you observe, they came in the same financial year. All these dates comes in the same financial year. Therefore, no treatment for that year. Am I right? No treatment for that year. Do you understand until now? Why? Sir, 43B has attracted. Yes, for November month I will disallow. If at all I am computing November month PGBP income, I will disallow for November month. And while I am computing PGBP income for February month, I will once again allow. Simple logic. But in reality, do we compute PGBP income month wise? We compute once year gets over. Now as a whole, in 1 month you have to disallow, in another month you have to allow, means no treatment. Yes or no? That's the logic. Are you clear until now? Now, next example. I purchased goods on 28th March. Remember, this is transaction date. 2026 I purchased. By the way, when I purchased the goods, 25-26, I received delivery also. So 25-26, 28th March 2026, I purchased the goods. And I have 45 days time. Let us assume 45 days time is 10th May 2026 is the time. 10th May 2026 is the time. Okay. Now, how much is the goods I purchased? Let us assume it is only 10 lakh. Let us assume it is 10 lakh. Now, this 10 lakhs worth of goods purchased by me on 28th March, for which the due date is 10th May. Suppose I paid this entire liability on 5th May fully. 5th May I paid full entire liability. Now, tell me, what is the treatment? Allowed. Because amount is paid within 45 days, therefore allowed. No problem at all. Am I right? Hello everyone. So it is allowed as deduction. Suppose I paid it on 15th May. Case number 1, case number 2. Case number 2, I paid it on 15th May. Now what is it? Remember, I paid it on 15th May, but before due date for filing IT return under section 139. Before payment, before filing IT return under 139, I paid it. But after 45 days under MSME law. For MSME, due date under 139 is irrelevant, guys. Out of 7 payments, for MSME is only 45 days, 15 days logic only relevant. Due date for filing is not relevant. Now look at, when did you incur? 25, 26. Did you pay within 45 days? No. Did you pay after 45 days? Yes. Now, for this year, I will disallow. For 25, 26 income computation, this 10 lakhs will be disallowed. Again, you paid on which date, ma? 15th May, which is 45 days later. Therefore, disallowance is correct earlier. Now, for 26, 27 financial year, you will next year file IT return once again. You claim that 10 lakhs. Are you clear? Next, case number 3. Case number 3. Same, 28th March 2026. Transaction date. This is very crisp. This is very different. You have to be very smart in answering this. Okay. 28th March 2026. I incurred the expenditure, purchase of raw material. What is the amount? 10 lakh. Then 45 days time is there. 10th May 2026 is the 45th day. Let us assume 10th May 2026 is the 45th day. But guess what? Within this only SSC cleared the entire amount. Within this time only SSC cleared the entire amount. How, on 5th May 2026, he cleared entire amount by cash. He cleared the entire amount by cash. Now tell me what you need to do. For 25, 26 year, what you should do? Add back a less, simple. For 25, 26, what is the treatment? Add back a no treatment for 25, 26. No treatment for 25, 26. Previous year 25, 26, no treatment. You can happily claim this deduction on accrual basis. You can happily claim. Sir, why, sir? 48.3. 48.3, where it is attracted? It is not paid in that year, no. This 10 lakhs is paid in cash in next year, guys. It is not paid in the same previous year. 48.3 attracts when in the same year that expenditure paid in more than 10,000 in cash, in that year it is allowed. Yes, sir, in that year that section will attracts. Here amount is incurred in 1 year, but amount is paid in cash in next year, which means subsection 3 will not attract. Sir, what about 43BH? What about 43B clause number H? What is the consequence of 43B clause number H? Just a minute. Fine, look at. So, no treatment. Do you understand that 25, 26 years, we incurred the expenditure. We incurred the expenditure and we can claim deduction on accrual basis for the same year, even though it is paid in cash in the next year. 48.3 will not be attracted. Am I right or not? Now look at. What about 43B subsection H consequence? What is H application? H application is very simple. It is paid within 45 days. How H will attract? Subclause H. Clause number H. Why it will be attracted? Clause H, why it will be attracted? It will not be attracted. Correct? Why clause number H will not be attracted? Sir, liability is incurred and it is cleared within 45 days. Since it is cleared in 45 days, 43B clause number H will not be attracted. Are you clear? Clause number H will not be attracted. Do you understand that logic? Why H is not attracted? Since it is cleared within 45 days. Sir, how I cleared? Cash? No. Did 43B clauses talks about cash payment? So, 48.3 will not apply. 43B H also will not apply. Hello? Do you agree with me? Therefore, for the 25-26 year, for the 25-26 years, no disallowance. But in 26-27 year, there is one more section that got attracted. Exactly, 40A subsection 3A get attracted. As per 3A, in 26-27 year, I will treat 10 lakhs as income. I will treat 10 lakh as income. Are you clear? That's it, no? September 24 attempt question this is. PGBP total income problem in September 24. Able to understand? In that attempt, this question was tested. This is how complex. Simple. I told every time. First apply that section, not attracted. Apply next section, not attracted. Apply next section, attracted. Accordingly, you give the treatment over. Why you need to break your head? Easy or not? That's it. So this with this 43B clause H, 48.3, 48.3A, that link, entire link connection I told, you know, in the book also I clearly mentioned 43B clause H, 48.3, that is discussed in the class or marathon, that link. Now, what exactly happened in Finance Act 2025? In the same way, in the same MSME, micro enterprise, small enterprise definitions has been changed. Micro and small definition has been changed. What is it? Micro, investment in plant and machinery 2.5 crore, whereas turnover 10 crore. Whereas small, now investment is 25 crore, turnover is also 100 crore. See, to comply with MSME amendment, even under Companies Act, small company definition got amended. Okay, but that small company definition got amended with effect from 1st December 2025, which is not applicable for May 26 exams. Able to understand? Not applicable for May 26. For September 26 exam, small company definition in Companies Act is applicable. By the way, understand, small company is different, small enterprise is different. I'm talking about small enterprise. Small enterprise can be a company, an individual, a partnership firm, HUF, AOP, BOI, anybody, because MSME covers everybody. Everyone. So, what is a small company? 25 crore investment, 100 crore turnover. What is micro? 2.5 crore investment, 10 crore turnover. What is the old limit, ma? This is 1, na? Investment in plant and machinery 1 crore old limit. Turnover? No, micro, I am asking. 5 crore. Whereas small investment 10 crore, 2.5 times it is increased actually. This one 50 crore. That's it. These are old limits. Old limits are relevant. Right now, a small enterprise means investment 25 crore, turnover 100 crore. Micro, investment 2.5 crore and turnover 10. Simple. Small enterprise is 10x of micro. Small enterprise is 10x of micro. Medium enterprise is there. That is 5 times of small. But remember, under 43B clause H, if I buy raw material from a medium enterprise, this section will not attract. This section gets attracted only when you are buying goods from micro and small. Medium is not there. That's the reason I specifically mentioned and then striked off. Because when you say MSME Act, Micro, Small, Medium Enterprises Development Act, right? So medium is not there. Able to understand. That's it. So next up. So that's it. Clear all of you? 43B is also completed. Now we are left with one more section, 40 subsection A, clause 1, clause 1A. Clear? Yeah. Now look at 43B, a small clarification. Remember, in 36 one point I kept pending in disallowances. 36 subsection 1 clause 5. 36 subsection 1 clause 5. One point I kept pending. Okay, what is that? What is that exactly? Remember, contribution to welfare fund. There are two contributions. One is employer contribution. There is one more contribution called employee. Employee contribution, no. Under 36, they say you can get deduction. Under 36, you can get deduction for employee contribution. Employee contribution means what? I collect from him and pay. And I can claim deduction for the same under section 36, provided it is paid within the due date under respective law dealing with the welfare fund. Provided it is paid within the respective due date. First of all, this amount, employee contribution, is not paid out of my pocket. I am collecting from him and paying to the department. Why the hell I get deduction under 36? First of all, why 36 talks about employee contribution? First of all, it's not my expenditure, no. Because there is a section called 2 subsection 24, income definition. What that section says, when you collect any amount from employee, first add it as income. First add it as income. You pay to the respective authority within the due date, then claim deduction under 36. So employee contribution, in exam, no, you will not add it as income and then claim deduction. What you will do, rather, I will see employee contribution. A company collected 10 crore. Out of the 10 crore, 9 crore is paid within the due date for the respective law. Then 1 crore is not paid within the due date. That 1 crore I will treat as income. That 1 crore I will treat it as income in net effect. This is the treatment for whose contribution, ma? Employee contribution. Now, what about employer contribution? That is paid out of my pocket. As a businessman, I'm paying out of my pocket for his welfare. For me, it's an expenditure. 36 subsection 1 talks about it, which is reasonable, logical. But I just allocated fund, but I didn't pay it. I will not get deduction. Only if I pay employer contribution to the respective authorities within due date for filing IT return. What is it? Due date for filing IT return, then only I'll get deduction. Look at. So disallowed if not paid within 139(1) due date. Yes or no? Subsequent previous year I paid, it will be allowed as deduction. But remember, employee contribution, it's a permanent disallowance. Employee contribution is a permanent disallowance. It is not a temporary disallowance. Once it is treated as income, sir, subsequently I rectified, paid interest, paid penalty, everything. It doesn't matter. Once treated as income, done, over. Employee contribution is a kind of permanent disallowance. It's not disallowance actually. You treat it as income. You treat it as income. Treated as income under 224 if not paid within the due date under respective law. 43B does not apply for employee contribution. Only 43B is applicable for employer contribution only. Are you clear? The same logic, EBF, ESI, gratuity fund, for anything the same logic can be applied. That's it. This is one more clarification which you have to know. Easy or not? That's it. Yeah, next one. Next disallowance. I presented 40 subsection A clause 1 clause 1A in a wonderful way, just in one page. Entire that section operation is coming in one page. Look at the heading. Disallowance due to non-compliance. Subsequently allowed in the year of compliance. Assumed compliance. There are three different sections. There are three different concepts which 40 subsection A is actually talking about. One, first you get a disallowance when there is a non-compliance. Two, you will again get deduction if you comply with it. Assumed compliance means what? Tell me. Assumed compliance means what? Is there a non-compliance or compliance? Assumed compliance means compliance or non-compliance? Compliance. We assume that it is compliance. When I assume it is compliance, will disallowance attract? Will disallowance attract if I comply with law? Exactly. In case of assumed compliance, disallowance will not attract. Now, what is compliance, non-compliance, assumed compliance, all that? Very simple. What is 40A1? What is section 40? Inside that subsection A, clause 1 or clause 1A. Disallowance on account of non-compliance with the TDS provisions. Disallowance on account of non-compliance with TDS provisions. Now, what is it? What is it exactly? You know, in order to attract 40 subsection A, either clause 1 or 40 subsection A, either clause 1 or clause 1A. One is dealing with payments to non-residents, ma. 1A is dealing with payments to residents, ma. If at all the liability is to a non-resident, 40A1 attracts. Liability is to a resident, 40A1A is attracted. One is for non-resident, 1A is for resident. If at all you are paying to non-resident, and if the section is attracted, if the section is attracted on an expenditure paid to a non-resident, 100% of the expenditure, no deduction. What is the consequence? 100% of the deduction, 100% of such expenditure, no deduction. Sir, I paid the same money but to a resident, sir. Then 30% is no, 30% of the expenditure is not allowed as deduction. 30% is disallowed. Whereas here 100% is disallowed. Whereas here 30% is disallowed. Are you clear? Now, when this section gets attracted, this is the question. When this section gets attracted, it's not, many students think they understand this section, but actually not. You see this, you will understand. This section gets attracted only when you fail to comply with chapter 17B provisions. Nothing but only when you fail to comply with TDS provisions. Only when you fail to comply with TDS. This section gets attracted only when you fail to comply with the TDS provision. Able to understand? Which means, in order to attract this section 40A, if at all that section has to be attracted, 40 subsection A, 30%, 100%, if the disallowance first has to attract me, first TDS provision should be applicable to me. First, what is it? TDS provision should be applicable to me, and I failed with it. TDS provision should be applicable and I failed with it. Then only 40 section will attract. Suppose TDS provision is not applicable to me. TDS provision itself is not applicable. I paid money to somebody. I didn't deduct TDS. I hope every one of you know the TDS concept, how TDS mechanism works. Okay. I paid money to one of the person. For example, to my auditor. I'm an individual, sole proprietor. I paid my auditor 5 lakh fee. You remember, right? 194J section. If at all you are paying more than 50,000 rupees now. Now 194J limit is 50, not 30. Now right now latest amendment is what? 50,000. Yes or no? 5 types of payments are covered under 194J. Professional fee, technical fee, royalty, non-compete fee, direct remuneration. 5 payments are covered under 194J. Yes or no? Except for direct remuneration, remaining 4 payments for separately 50,000 threshold limit is there. Right now it is 50,000 threshold limit applicable for May 26 exams. It's not 30,000. 30,000 is previous attempt. Able to understand? Now 50,000. I paid my auditor 5 lakh. As per 194J, 10% TDS I should cut. Yes or no? I should only pay him how much? 4.5 lakh only I should transfer. 50,000 rupees I have to pay to the department in his name. Am I right? Because that 50,000 also not mine. His money only. But his tax portion, that is, I will pay to department in his name. He will get credit for that. Just like how you get input tax credit in electronic credit ledger in your GST, he will also have a Form 26AS. That is nothing but income tax credit ledger. That is nothing but what? Income tax credit ledger. So whatever I paid, in his credit ledger it will be debited. Tomorrow when he is filing IT return, tax he will compute, from that he will set up this and then pay the balance tax. So literally there is no loss for him. Are you clear? This is what TDS mechanism actually. Correct? 194J. Do you understand? But for me, 194J do not apply. I am a payer. I am a sole proprietor. My auditor provided me audit service. I am paying him 5 lakhs. When I opened and saw 194J, first point, exception, I am not covered. I am not liable for 194J. Accordingly, I paid full 5 lakhs to him. I did not deduct the TDS. Now tell me, is 40 subsection A clause 1A will be attracted? 30% disallowance will be attracted? No. Sir, why, sir? Why 194J is not applicable? 5 lakhs he paid, 10% TDS, all that is rule is there, no? I remember somewhere I studied, it is there, no? How can you say? No, look at 194A, 194C, 194H, 194I, 194J, 194R, 6 section combination. Remember this. These sections do not apply to an individual or HUF. If their last year business turnover is less than or equal to 1 crore. Right now, I paid in 25-26 5 lakhs audit fee. Right now, I paid 5 lakhs expenditure. This is related to which year? 25-26. In 24-25, my turnover is just 90 lakhs. In 24-25, my total turnover is just 90 lakhs. This year 25-26 I have 5 crore turnover. That's leave it. That's unnecessary for you. Last year my turnover was just 90 lakhs. Since last year my turnover does not exceed 1 crore, these 6 sections do not apply to me. Accordingly, this year 5 lakh rupee audit fee I have to pay. 5 lakh rupee audit fee I paid without deducting the TDS because the section is not applicable to me. Therefore, if section is not applicable and I didn't comply with it, is this a non-compliance? Is this a violation? No, section is not applicable to me. Where is the question of violation? So I did not, there is no non-compliance. Do you agree? When there is no non-compliance, why 40 subsection A 1A will attract? Able to understand. So in exam, they will not tell you TDS is not applicable, all that. They will tell you past year turnover. They will give you current year you paid fees, this much. They will not tell you whether TDS section applicable or not. You have to figure out whether TDS section is applicable or not. And okay, TDS section is not applicable and 40A 1A is also not applicable on that payment. Hello? What if TDS section is applicable? What if TDS section is applicable? Then will 40A 1A attracted? Yes, if you do not comply with the TDS sections. If the TDS section is applicable and you did not comply. What do you mean by non-compliance now? What do you mean by non-compliance now? 1. By the way, what is the expenditure I incurred? 5 lakh. How much is the TDS that is attracted? 50,000. This amount, by the way, this expenditure belonging to which year? Relevant previous year is 25-26. Now, what do you mean by compliance? 2 conditions are there to call it as compliance. You should deduct first. You should deduct TDS. In which year? In the same relevant previous year. In the same relevant previous year, you should deduct. First, you should deduct. Still, compliance is not over. Compliance is not over. Deducted. What about you deducted and kept in your pocket? What? You should pay to department, no? Remittance. What is it? Remitted such TDS by due date under section 139 subsection 1. If you deducted, remember deduction should be there, and the deduction should be in the same relevant year. Same means what? In the same 25-26 deduction should happen. And remittance can be by due date. For example, for this, the due date applicable is 31st October 26 BSU. Okay, I paid auditor 5 lakhs remuneration ma. 50,000 is the TDS ma. In 25-26 itself I deducted. In 25-26 itself I deducted. And I remitted by 31st October that 50,000 rupees also. I remitted. Sir, remaining 4.5 lakh is there, na? That 4.5 lakh, whether you pay to the auditor or not, nobody will ask. Because that's not a 43B item. That's not a 43B item. Nobody will ask you. Because it's an audit fee. Audit fee is not covered under 43B. Are you clear? Again, if you pay it in cash, that's a different story altogether. If you pay fully that 4.5 lakh in cash, entire 5 lakh is disallowed. Because 48.3 get attracted. If you pay that fully in cash in the next year, again sections one after one you should apply and then see which one is applicable. Are you clear? Okay, now I deducted as per TDS provision and I remitted within the due date for filing IT return. Now it is a compliance. It is a compliance, and since you complied with the law, since you complied with the TDS provision, this 5 lakhs 40 subsection A will not attract. 40 subsection A will not attract means what? 100% disallowance, 30% disallowance. Will that be attracted? No. That's it. Easy or not? Suppose, what do you mean by non-compliance? Here, condition 1, condition 2. 2 conditions, right? Both the conditions should be satisfied, then only it is compliance. Any one condition failed or both the conditions failed, both are treated as non-compliance. Now, for example, condition 1 failed. What do you mean by condition 1 failed? You didn't deduct. You didn't deduct at all. Condition failed. Or you did not deduct. You did not deduct in relevant previous year. You didn't deduct. You did not deduct in relevant year. 31st March you didn't deduct. You deducted later. Still in the relevant year you didn't deduct. Since in the relevant year you did not deduct, straight away, if at all that expenditure is paid to a non-resident, 100% is disallowed. If at all the expenditure is paid to resident, 30% is disallowed. Why are we disallowing here? You didn't deduct at all. Or you did not deduct in the relevant year. You deducted later. When you deducted, probably you deducted on 10th April 26. Deduction date on 10th April 26 means you deducted TDS for that expenditure in 26-27 year, not in 25-26 year. Therefore, you failed to comply with the section. You failed to comply with the section. Accordingly, 100% or 30% disallowance gets attracted under 40 subsection A, 1A, 100%, sorry, 40 subsection A, 1, 100%, 1A, 30%. Clear? What do you mean by one more non-compliance? Suppose, just a minute. Suppose, remittance. See, if you deduct in the same year and remitted within the respective due date, then only compliance. Suppose you deducted. Condition when you complied. But guess what? You didn't remit by 31st October 2026. That amount is still with you only. You didn't remit to the department. 1st November came. 1st November 2026 came. Still you did not remit. Which means non-compliance is there because of late remittance. Non-compliance is there because of late remittance. Remember, here remittance is not linked with the TDS remittance date. Here remittance is linked with IT return filing due date. Because TDS remittance due date is current month TDS, next month 7 date. That due date concept is not relevant in PGBP. In PGBP, due date means there is only one due date. 139 subsection 1 due date. Are you clear? Now, one example. Okay. 31st March 2026, 5 lakh rupee audit fee I recognized in books of accounts. Okay. How much is the TDS? 50,000. Same. TDS is 50,000. Deduction that is 31st March 2026 only. Now tell me, this amount no, case number 1. I paid on 5th August 2026. By the way, due date is 31st August 26. Okay. Sorry. 31st October. 31st October is the due date. Are you clear? Now tell me, I deducted on same year and I remitted within the due date. Now this entire 5 lakhs is fully allowed. Are you clear? Next, case number 2. Sir, I paid it on 10th November 2026. I paid. Which one ma? 50,000 rupees TDS I paid to department on 10th November. Since you did not pay within the due date, on this 5 lakhs, it may be 100% or it may be 30% depending upon the resident or non-resident. Accordingly, you will apply. Non-resident 100%, resident 30%. This much you will disallow because the remittance is after due date. Now, since you disallowed, disallowances for which year? For which year IT return computation? 25-26 year PGBP income you will compute, right? For that year I will disallow. But remember, ultimately he paid on 10th November, right? 10th November he complied, right? 10th November comes in which previous year? 26-27. Actual remittance is 26-27, right now? Yes or no? For this year, that 100%, that 30% which you disallowed for last year income, no? Now you can claim it afresh. Are you clear? That's why it is again a temporary disallowance. Able to understand. Next, do you understand until now? Next, suppose no 5 lakhs remuneration, 50,000 TDS. You know what? I deducted on 1st April 2026. But actually it is belonging to 25-26. Did I deduct in the 25-26? No, I deducted in 26-27. But guess what? I paid it in 10th August 2026. Remember, for this due date applicable is 31st October 26. For this due date is applicable is 31st October 26. But you see, within this due date, I remitted also. Remittance condition alone is not there. You have deduction condition also. First condition is what? Deduction must be in the same year. But here deduction is in later year. Therefore, 100% or 30% is disallowed for the previous year. 25-26 it is disallowed. You might say, sir, it is deducted and remitted ultimately within the due date. It is deducted, guys, but it is deducted in the next financial year. There, now, sir, ultimately it is remitted, no? Now what about the remittance? In the 26-27, it is ultimately remitted, right? Yes or no? It is ultimately remitted. Therefore, in the year of remittance, you will actually get the deduction. Here, why we disallowed it? Not because of remittance issue, but because of deduction issue we disallowed. Which means 40A 1A will not attract if two conditions are satisfied. Deduction should be in the same year, remittance should be within the due date under section 139 subsection 1. Are you clear? That's it. So with this 40A 1A main section is completed. Now here assumed compliance is there. This is linked with TDS, SSC in default, 2011, all that link and all is there. Bit complicated one. Not that, till now it is never tested also in exam, okay? But if at all it got tested, it's a different level. So marathon, I cannot cover that because that's a very complicated one. Because I need to first explain SSC in default provision, assumed compliance provision under TDS, because it's a link to proviso to 40 subsection A clause 1A. Read with proviso to 201 subsection 1. That's the two provisos we need to read and then understand that, and then we need to look at here. Okay, that's it. So main section we completed. 40A 1A. Understood everyone? That's it. Disallowances, all the sections are completed. There is no other disallowance section. You see, hardly 45 minutes we took to revise all the disallowances with utmost clarity. Clear or not, everyone? Now, one small problem we will solve. Okay, right now we'll solve and then take a break. Okay, one custom illustration I will create right now. Okay, fatafat will solve all the adjustments. This is the P&L account. This is a P&L account. Okay, sales 1 crore, interest income 20 lakh, dividend income 10 lakh. Okay, now purchase of raw material 20 lakh, auditors remuneration 5 lakh, legal fees 2 lakh, some random number I'm getting, I'm putting it. Okay, conditions will put below. Next, then printing and stationery 50,000, printing and stationery 15,000, and scientific research related donation 1 lakh, scientific research related donation 1 lakh. Then we have just a minute. Yeah, that's it. By the way, remember this is 25-26 P&L account. 25-26 P&L account. That's it. Yeah, I think we can conclude this. And miscellaneous expenses, what is it? Miscellaneous expenses 20 lakh. Various expenses are there, all are related to business only. Okay. One more example also, one more also I'll add. Interest on housing loan. What is it? Interest on housing loan, which is also some 10 lakhs. Interest on housing loan. And rent from house property, which is 5 lakhs. That's it. This is the information. Now tell me, what is the total of the assets, ma? 1.35. Yes or no? 1.35. 1 crore 35 lakh. Am I right? So here also 1 crore 35 lakh. What is the profit? 25, 27, 28 plus 30. 38.5. 38.5 if I remove. Net profit is how much? 90 approximate. How much, ma? Look at it. 20 lakhs, 5 lakhs, 2 lakhs, plus 50,000, plus 1 lakh, plus 20 lakhs, plus 10 lakhs. Oh, 57 lakhs is the total expenditure. How much, ma? 76 lakh 50,000. Huh? Okay, 76 lakh 50,000 is the profit. Now what are the conditions? Look at the conditions. Okay, 1, 2, 3, 4, 5 and 6 and then 7. Okay, now these are the points, right, related to this first one. Okay, raw material. 1 lakh is purchased from MSME. 1 lakh is purchased from MSME, and which is purchased on 20th March 2026. Which is purchased on 20th March 2026. The amount is paid on 10th April 2026. Written agreement exists. Okay, written agreement exists. Then related to second payment, auditor's remuneration. Okay, TDS not remitted. What is it? TDS is not remitted within 31st July 2026 due date. TDS is not remitted, and here last year turnover is 50 lakh rupees only. Last year turnover is how much? 50 lakh rupees only. Then fourth point related, entire printing and stationery is paid in cash. Entire printing and stationery is paid in cash on 5th April 2026. That's it. These are the adjustments. Calculate income under the head PGBP. Do you understand? Fine. First, can I compute? Now tell me my first question. Can I say directly to the department, sir, 76.5 lakh is my PGBP income, sir. My P&L account profit itself is PGBP income. Can I say this? Array, no. In this 76 and of no, you added interest income, dividend income, rent also in this. In this you added all this also, which are not PGBP incomes. So technically you should reduce that and then say what is this amount. Correct? Huh? Everyone? Now first look at net profit. Net profit as per PGBP 76 lakh 50. Sorry, as per P&L 76 lakh 50. First I will reduce items credited to P&L. Correct? Huh? Items credited to P&L, but not taxable under PGBP. This is the heading I will put. Items credited to P&L but not taxable under PGBP. All these three, can I total it and then reduce it? 35 lakh. Correct? Entire 35 lakh. Hello? 35 lakh I reduce. Sorry. How much is that? 35 lakhs only. Okay, fine. 35 lakh I will reduce it. Do you agree? Now by the way, tell me, sometimes sometimes in exam here they will give you 4.5 lakh. Within bracket net amount, net of TDS. Net of TDS will reduce. 50,000 TDS is there. Now tell me, here how much will you reduce? 5 lakhs will you reduce up? 4.5 lakh will you reduce up? How much? How much ever credited, that only you should reduce. 5 or 4 or no discussion. Why are we reducing here? Because it is credited here. That's why we are reducing. Not because it is TDS or non-TDS or gross or net. That's why irrelevant for me. Now whatever is credited, 4.5 credited, so 4.5 I'll reduce. If 5 lakhs is credited in P&L, 5 lakhs I'll reduce. Because no, here this amount impacted this. That's why I'm reducing that. Logic is clear, no? Now, so here I will tell you 5 lakhs. In our example right now is what, ma? 5 lakhs. Suppose no 4.5 is there, then 4.5 only I'll reduce. But when I'm taxing it under other head, how much I should tax? Gross amount I should tax. Because under other head, how much you receive is not taxable. Income is taxable. Yes or no? Other sources, interest, dividend and all, net of TDS adjustment means this is how you should do. While reducing in the PGBP, amount actual credited, reduce it. Clear? That's it. Now next, add items debited to P&L but not considered. What is it? Not considered under PGBP. This is just like a bank reconciliation statement. No, nothing magic here. Now first one, item purchases 20 lakh debited, ma. Is it considered in PGBP? Obviously we can consider, but one adjustment is there. 1 lakh, no. In the 20 lakh, no. 1 lakh rupees purchased from MSME on 20th March, but it is paid on 10th April with written agreement is there. And here mode of payment they didn't tell. I assume that it is in approved mode. So since it is paid in approved mode, within 45 days it is paid. No 43BH will attract. 43BH will not attract. Therefore, entire 20 lakhs I can consider in PGBP. Am I right or not? Next, auditor remuneration. 5 lakhs is debited here. Yeah, it's a PGBP expenditure. But my question is, should I consider this or not is the question. For that, TDS is not remitted by 31st July. Last year turnover 50 lakh. Oh, last year my turnover was 50 lakh, ma, not the current year. 194J is not attracted. When 194J is not attracted, 194 TDS provision itself is not attracted. 40A1A will not attract. 40A1A will not attract means that entire expenditure I can as it is consider. Hello? Yes. Therefore, no treatment. I will consider that. Am I right or not? I will consider that. Legal fee. No adjustment is given. I assume this is a legal fee paid for regular business purpose only. Therefore, it's a PGBP income. Next, what is this? Printing and stationery. 50,000. Okay, some expense. Printing and stationery paid in cash. When? 5th April 2026. 5th April 2026 I paid in cash. In the current year, I debited already the P&L account and accrual basis is what SSC is following. I can claim deduction comfortably. Yes or no? But in the next year it is paid in cash. But in the current year, subsection 3 will not attract. In the next year, subsection 3A will attract. For the 25-26 PGBP income computation, no treatment. Are you clear? But in the note point, you should clearly write. In the next year, 26-27 income computation under 40A3A, that 50,000 is to be treated as income. Are you clear? Am I right? For 25-26, is there any adjustment? No. Therefore, for 25-26, can I consider this on accrual basis? Happily, yes. Are you clear? Next up, scientific research donation. The SS is following optional tax regime here. Optional tax regime only is following. Therefore, no problem. Suppose if it is default tax regime, this 1 lakh should not be considered. 1 lakh should not be considered. Array it is debited to P&L but not to be considered. So add back. When if it is a default tax regime. Suppose since in the given case, let us assume that SSC is optional tax regime. Therefore, I can consider. Next, miscellaneous expenses. Various business expenses, telephone, travel, salary, miscellaneous, so many. And no adjustment, nothing is given. I assume that it is complied. Next, interest on housing loan related to this house property. Array, this entire 10 lakh rupee, no. They have given one adjustment in the PGBP. What house property was used 50% for business. House property is used 50% for the business. Now, interest on loan, 50% business expenditure, right? Am I right or not? Which means out of 10 lakhs, how much I should consider for PGBP? 50%. How much? 5 lakh. Means remaining 5 lakhs I should not consider, right? I will add back. Okay. Now I will add back. You see, so many points were there, but none of the disallowance attracted. Able to understand? And now I'm adding back 5 lakhs only for one reason. It is debited to P&L but not considered under PGB. Not considered means what? Either it is not related to this head of income or it is not related to, either it is disallowed. Any reason. For that reason, we don't consider that expenditure. 5 lakhs I will add back. Is there any other adjustment? That's it. 5 lakhs I added back. Now, what is my PGBP income? 76.5 plus 5 minus 35. How much is the PGBP income? How much is it? How much it is? 46 lakh? 50,000. Now, the question is total income computation. Okay, let's extend. Now look at now income from house property. PGBP head of income is over. Now house property income, head of income. Gross annual value is equal to rent received. Suppose no, they have not given any information. Since they have not given information about, you know, expected rent, fair rent, similar property rent, actual rent, all that they didn't give, rent received itself is gross annual value. In the absence of other information, rent received itself, we will take it as gross annual value minus municipal taxes paid. By the way, did they give any municipal taxes paid? Oh, in this, no, let us assume municipal taxes paid is added here. Okay, let us ignore that. But I'll tell you theoretically. Suppose in this miscellaneous expenditure, 1 lakh rupee municipal taxes is paid. That is also considered here. Out of that 1 lakh, 50,000 is related to business. 50,000 is related to house property. At that time, what will happen? Here, one more 50,000 I will add back. And automatically here the answer will be 47 lakh. Do you understand that? Now, anyhow, let us assume in this problem there is no municipal taxes adjustment. Okay, therefore net annual value is 5 lakh minus first deduction 30%, which is 1,50,000 minus interest is there, guys. How much is the interest? 1 lakh. Arey sir, interest amount 2 lakhs limit, 30,000 limit, I should check, no? Hello? Arey, this is let out property, guys. Yes or no? NAV is not 0. NAV is not 0. Only when you take NAV is equal to 0, interest limit, all that will come into picture. Default tax regime, optional tax regime, all that will come into picture only when NAV is equal to 0. For let out property, there is no link with the regime. Yes or no? Therefore, my house property income is 2,50,000. Do you understand? Everyone, now income from other sources. Interest income. What is interest income? What is interest income? 20 lakh and dividend income is 10 lakh. But guess what? These are net amounts. Gross amount is 22 lakh. Here gross amount is 11 lakh actually, but these are net amounts. In P&L amount, in PGBP, we reduced. What amount we should reduce? Net or gross? That is not the question. What is credited to P&L, that you reduce. While reducing in the PGBP income calculation, how much we should reduce? Net or gross? It's not the question of net or gross. How much credited to P&L, that you should reduce. Whereas when you are taxing in other sources, how much is taxable? Gross income is taxable. 33 lakh is taxable. 22 interest income, dividend including TDS, it is 11 lakh. Total how much is taxable? 33 lakh, because income is 33 lakh. TDS is my obligation. He cut my TDS and paid. I received only 20 lakh, but still my income is 22 lakh interest income. My dividend income is 11 lakhs. Do you understand? Everybody, that's it. Therefore, my total income 46, gross total income 46 and off 47 plus 2, 49 lakh. What is it? 49 lakh 33,000. Since the total income is gross total income, there are no chapter 6 reductions. Let us assume total income. Since total income is less than 50 lakh, surcharge will not apply. And SSC, look at the age of the SSC. Yes or no? Regime, look at regime. If you are looking at DTR, then no need to link, no link with age. If the SSC age is normal citizen, optional tax regime, compute tax on this, basic tax first, then add surcharge 0, then subtotal minus rebate 0, then subtotal add 4%, says answer is over. Able to understand? This is how you should solve total income problem. Clear, all of you? That's it. So total income solving approach also briefly I spoke, where PGBP problem also I solved. I bet you solve 100 PGBP problems or total income 100 problems, the adjustments which I told in this marathon will not be there. Literally whatever adjustments I told were all basic adjustments I told, complicated adjustment I told. At every provision I explained adjustments. Yes or no? Beyond that you will not find a new adjustment at all. First of all, new is not there because I told all the extreme consequences. Able to understand? I covered a basic adjustment, how a basic question can be asked. I also covered an extreme question, how they can ask. I linked 48 to 48.3, 48.3a. I linked 48 to 48.3, 43b. Linking disallowances also I asked. I tested you. I explained you. Clear? That's it. With this, disallowances are over. We'll take a break and get back, and then we'll just quickly finish 44AD, 44ADA, 44AE, 44AB, 44AA. 5 more sections were there. We'll quickly finish that. One more section is there. 41 subsection 1, deemed profit section. Subsection 2 over. Subsection 3 over. Subsection 4A is also over. Recovery of bad debt. Okay, now only subsection 1, 41 subsection 1 alone is pending. That once we finish, I think it will be another 15-20 minutes. PGBP will be over. Now tell me, is PGBP really tough? It's no. Yes means he thought of easy. Yeah. So now tell me, is PGBP really tough, honestly? It's understanding which is important. Okay, if you really don't understand, it obviously feels tough. Any chapter feels tough only if you don't understand. So understanding with crystal clear clarity, that is most important. Okay, that's it. We'll come back and discuss presumptive taxation and 44 AA and AB. So with that you will understand. You understood how powerful this book is? Everything was given very clearly. You will not have even 1% confusion also. For example, you see this one, disallowance. Look at how the wordings were also. This every word drafted by me. Okay. If TDS is deductible but not deducted. You see the word deductible means liable for deduction and not deducted in the relevant year. Or deducted but not remitted within the due date under 139(1). Then the following payments are not allowed as deduction. Are you clear? What is it? Non-residents under 40A1, 100% of the payment is disallowed. Resident payee, 30% of the payment is disallowed. Payment can be anything here. TDS is attracted. That is what important. Here payment is in the nature of interest, royalty, any other sum. Literally everyone, every sum. Next. Relevant previous year means, what is RPY means? It's a previous year in which the expenditure is actually incurred. Now, subsequently allowed, what is it? Suppose no, TDS is deducted in relevant year, but not remitted within the due date. Then disallowed for the relevant year, am I right? However, ultimately allowed as expenditure in actual year of remittance. When you are actually remitting subsequently and then claiming deduction, no, their due date concept is irrelevant. Next, TDS not at all deducted, guys. Then disallowed in relevant year. Subsequently allowed as deduction in the year in which ultimately you deducted and remitted ultimately. Next, assumed compliance provision. Entire in just one page. Entire the complicated section we summarized. Entire, you see, entire PGBP is just 20-30 pages. Where every point, you will not even find exam adjustments, case studies, everything we covered in this book. Understood? So you can read it and understand. Just read the word, literally interpret the word and understand. Understood? Fine. We'll take a break and get back, and then we'll continue with the administrative provisions. Yes. Let's discuss income related one of the section which we kept pending. If you remember 41, that is also income section, right? In that 41 subsection to balancing checks, we already covered there. Yes or no? Then sale of assets which is used for scientific research, we already covered under 35. Recovery of bad debts, I already told when I'm discussing 36. Then 45 subsection 5, this I will discuss in set of a carry forward chapter. Now 41 subsection 1. Remember, in PGBP, if at all I'm following accrual basis, I can claim deduction for expenses on accrual basis. What if I purchase goods from one raw material vendor? I claim a deduction, but he supplied me defective raw material. I was fighting with him from few days. Finally, he waived me. So, okay, Harsha, don't pay me the amount. It's okay, fine. Defective raw material at the end of the day, gone is gone. But you know what? I claim a deduction on accrual basis for that expenditure. Now, I don't have a liability for that. It's a remission of liability. What is it actually called as? Remission of liability or waiver of liability or cessation of liability. Cessation of liability. Getting it? Now, the raw material vendor has waived me. Tell me, literally, I didn't incur any expenditure. Am I right? Literally, I didn't incur any expenditure, but I claim a deduction for which I didn't spend a single rupee. Now, in the year in which it is remitted, in the year in which it is waived, in the year in which it is cessated, in that year, it is treated as profit. It is treated as profit. Simple. 25-26, I purchased raw material on credit basis and I claim a deduction. 28-29, the liability was waived. In 28-29, whatever I claim a deduction earlier, right, it is now treated as income. The same treatment is applicable for creditors return back. You know, right? Creditors write back. For debtors, write off we call. For creditors, we call write back. For write back creditors, for all that, this section will only be applicable. Are you clear? That's it. So that is what this section is predominantly talking about. Easy. That's it. 1 minute. Now, let's begin administrative provisions. 44AA, 44AB. Books of accounts and tax audit. Once this is over, presumptive taxation will cover. Okay. Now, who should maintain books of accounts? This is one section, honestly, many students again have lot of confusion. Especially one new point you will learn here. Pakka, I'm telling you. One new point you'll learn here. Now, you see, entire this 44AA again is presented in just one page. Okay. Now, who should maintain books of accounts? First of all, why the hell Income Tax Act has to talk about books of accounts? It's an Income Tax Act, right? Why they should talk about books of accounts? Simple logic. Sole proprietors. Which governing law is there? Partnership form, Partnership Act is there, but books of accounts concept is silent in that. AOP, BOI, there is no governing law. Now these people can simply escape without maintaining books of accounts. They can simply escape when the assessing officer comes. If at all they are not paying tax, show me your books of accounts. I didn't maintain. Show me which law I have to maintain. They'll say no. First thing they'll question, they defend themselves is under which law I should maintain. You're asking me question. That's why income tax took initiative and brought 44AA. Simple logic. Otherwise, why revenue law has to talk about books of accounts? Why GST law has to talk about books of accounts? Because there are many SSEs who do business without any registration. They will have just PAN number, they'll have just GST number. They'll not have any legal registration. Suppose company, I don't have to tell, Companies Act is telling. LLP, I don't have to tell because LLP Act is telling. Societies Act, the Act itself is telling books of accounts has to be maintained. So there, if they don't maintain, I will complain to MCA. I will complain to them and they will take an action on the SSE. But what about sole proprietor? What about partnership form, AOP, BOI? For them, the governing law is not there. And even some governing laws are there, but they are silent about books of accounts. So income tax department took the initiative and listed a section. These SSEs compulsorily has to maintain books of accounts. Are you clear? So who are all have to maintain books of accounts? 4 categories of SSEs. Under income tax law, 4 categories of SSEs must and should maintain books of accounts. 1. Persons carrying on notified professions. Persons carrying on notified professions. What is it? Persons carrying on notified professions. Now, every time they should maintain books of accounts. There is no exemption from them at all. But which books of accounts have to be maintained? For that, there is a classification. For example, if the gross receipts, a person carrying on notified profession, gross receipts exceeding 1,50,000 in all the 3 years. Gross receipts means nothing but turnover. Last 3 years, 25, 26 years, should I maintain or not? I got a question. 24, 25, 23, 24, 22, 23. In the 3 years, every year, the turnover is crossing 1,50,000 in all the 3 years. Then I should maintain books of accounts as per rule number 6F. Then I should maintain books of accounts as per rule number 6F. Suppose in the last 3 years, 1 year or all the 3 years I failed to comply with this, then you should maintain at least reasonable records so that assessing officer can compute income. What many students thinks, in the last 3 years, if at all less than 1,50,000 is their gross receipt, then they are not liable to maintain books of accounts. They think that's wrong. That's wrong. If in the last 3 years, if the turnover is more than 1,50,000 in all the 3 years, rule 6 of books they need to maintain. If this point is not satisfied, then they should maintain at least reasonable records, which means persons who are falling under notified profession were never exempted from books of accounts. They don't have exemption at all from books of accounts. Why? Because if they satisfy 1,50,000 criteria, 6 of books they need to maintain. If they do not satisfy that criteria, other cases, they need to maintain reasonable records at least so that assessing officer can compute, which means are notified professionals exempted from books of accounts if they satisfy any condition? No exemption at all. This is the point you need to understand. Are you clear? MCQ can come. So last 1,50,000, last 3 years, 1,50,000 criteria not satisfied. Option number A, they have to maintain as per books of accounts. Option number B, they are exempted from maintenance books of accounts. Option number C, they need to maintain reasonable records so that assessing officer can so and so like that. Answer is option number C. That's how MCQ can come. Able to understand? Next. Then, sir, SSE is not a notified professional, sir. He is not a notified professional. By the way, who are notified professionals? Here I have given you, see, star mark, legal, medical, engineer, architecture, accountancy, technical, interior, or any other notified professions. Accordingly, department notified, authorized representative, film artist. Film artist means only these people are covered, yes or no? And professional company secretary, information technology professional. Not that depth is required there. Okay, fine. Next, sir. I am not a notified profession. I am a normal SSE. I am involved in profession of teaching, which is not a notified profession. Or I am a businessman, which is not a notified profession. What about me? You are liable to maintain books of accounts based on type of the SSE. Then here I will look at, are you individual or HUF? Are you other? If at all you are an individual or HUF, income from PGBP, income, if your income is total income actually, total income is more than 2,50,000. Or turnover is more than 25 lakh. When? Any 1 year in the last 3 years. Any 1 year in the last 3 years. Then you should maintain books of accounts. Sir, I am not an individual in HUF, sir. What about you? You have to be monitored more carefully. So lower limit. Total income just 1,20,000, turnover just 10 lakhs. Are you clear? So if income is more than 1,20,000 and turnover is more than 10 lakhs in any of the previous 3 years, any 1 year, books of accounts are compulsory. Sir, I newly started the business now. What about then? Then it is likely to exceed that number. In this year, if it is likely to exceed that number, maintain books of accounts. Are you clear? Now, honestly, these are very lower limits, guys. The very less. 1,50,000 per annum. Per month, 12,000 receipt. Which is not a big deal technically. Yes or no? That's it. Entire 44 AA is completed. Main theme is completed. Do you understand? So, notified professions we understood. Non-notified professions also we understood when they should maintain books of accounts. Apart from that, there are 2 more categories of SSCs who should also maintain books of accounts. What are those 2 categories? I will discuss them in the presumptive taxation. Easy or not? Yes or no? Because these 2 clauses are as a result of presumptive taxation. That's it. Once we discuss that, you will understand this. Clear? Then coming to, suppose, where is the place of maintenance? Principal place. Or if there are, if at all you are having multiple places, then it's at respective place you can maintain, no problem at all. And how long you should retain the books of accounts? 6 years. How long you should retain? 6 years from the end of the relevant assessment year. What will happen if I don't maintain books of accounts? 25,000 rupees penalty. What will happen if I don't maintain books of accounts? 25,000 rupees penalty. That's it. 44 AA is completed. Easy or not? Yes or no? Next, 44 AB. 44 AB is talking about audit. Now, SSCs, there are some SSCs, 5 categories. You see, following 5 persons, they are liable for audit. Following 5 persons are liable for audit. Who are they? A and B main. Okay. C, D, E are as a result of presumptive taxation. C, D, E, they are all result of a presumptive taxation. Okay. A and B first I will discuss. Now, sir, I am carrying on business, sir. Then, if the turnover is exceeding 1 crore, they should maintain books of accounts. Sir, I am carrying on profession. Then, gross receipts exceeding 50 lakh. For professionals, notified or non-notified, there is no difference. You are just profession. You are carrying on something which will come under profession. That's it. If you are professional, then I will look at 50 lakhs. If you are a businessman, I'll look at 1 crore. For business people, one relaxation is given. For business people, one relaxation is given. Suppose 95% of your transactions. Transactions means what? Maybe receipts, maybe payments. Anything it can be. 95% of your receipts, 95% of your payments, if they are not in cash, if they are not in crossed check, bearer check, cash, nothing but if they are in approved modes. If they are in approved modes, then 1 crore is not the limit, 10 crore I will keep. Then what is the limit? 10 crore I will keep. Able to understand? So, that time 10 crore limit will apply. Able to understand? See, by 2030 or by 2035, this 10 crore limit they will revise to 50 pakka. This 10 crore limit will be revised to 50. Able to understand? You will not have see, the main reason CS, the reason why you joined in CS is you can sign and then earn money. Those days were gone. Long back were gone. Now by 2030 or 2032, probably maximum by 2030 only. I'm predicting maximum by 2030. You will not have stat audits. You will not have tax audits. Tax audits will not be there. Stat audit means company audits. Private companies, stat audit will be removed. Pakka it will be removed. Recently also proposal came, but again they went back again. The ministry took back the proposal. It will be not there. But don't worry. Opportunities will unfold in different dimensions. Yes or no? You can provide consultancy services a lot. Consultancy will be there. On that, I already gave some guidance on my YouTube. So those of you who didn't subscribe first. Okay, fine. Next. Fine. You'll get a lot of guidance from my channel. You get from holistic guidance. Okay. Yeah. Fine. Next. So 2 classifications you understood. So first one, business assesses 1 crore. 10 crore when it's applicable. 95% of the payments, 95% of the receipts are in approved modes. Then only they indirectly say cash payments and payments by other than approved mode, receipts in other than approved mode should not exceed 5%. They say indirectly minimum 95% should be like this. Are you clear? Now tax audit is applicable only when the turnover cross 1 crore in the current year, not last year. That's the respective year. This 1 crore, 10 crore limit for which year you will check? For the respective year only you will check. Are you clear? That's it. Now tell me, Okay, tax audit is applicable. What is the due date? What is the consequence? Simple. You have to get audit report by what date? 1 month before the due date. 1 month before the due date for filing IT return. 1 month before due date for filing IT return. We already saw in the previous discussion also. If the SS is liable for audit, 31st October due date. If the SS is not liable for audit, 31st July. Suppose SS is liable for audit, it may be income tax auditor, it may be company auditor, it may be society auditor, LLP auditor, doesn't matter. You have audit responsibility. If you are having audit responsibility, the due date for filing IT return is 31st October. Now, tax audit report has to be given 1 month prior to that. Tax audit report has to be given 1 month prior to that. That is 30th September. What is it? 30th September. Because this 30th September is nothing but 1 month before the due date for filing IT return under 139(1). What is the due date for filing IT return under 139 subsection 1 for audit cases? 31st October. 1 month prior means 30th September. Are you clear? Sir, what if I don't comply with the tax audit, sir? What if I didn't file audit report on time? What is the consequence? Department can levy a penalty minimum of lower of 0.5% of turnover or 1,50,000, which means maximum penalty is 1.5 lakh. You know, in the new upcoming income tax law is there, right? They are collecting here. No, this penalty is levied. The assessing officer can excuse this penalty if there is a reasonable ground is there. He can waive the penalty. But in the new income tax law, before you file IT return, pay the penalty and then file it. They have turned it is actually a penalty section, right? In the new income tax law, upcoming income tax law, they converted this into a late filing fee. They converted into as a fee. Fee means something that you have to pay before you file the report, before you file the IT return. So they converted. Means right now it is going to be mandatory in the future. Able to understand? By the way, May 26 not applicable, September 26 not applicable, Jan 27 not applicable. Are you clear? The same penalty provision is applicable. Are you clear? Further, tax audit provisions will not apply if at all you are declaring income under presumptive taxation. If you are declaring income under presumptive taxation, tax audit will not apply. That itself is given as a clarification in the Finance Act 2024 itself. Earlier, it was an implied assumption. Now, explicitly they mentioned. So, literally, it's not a big amendment at all. Clear? Books of accounts provision over, audit provision over. Now, we are left with what? Presumptive taxation. Are you clear? Confident? Yeah. So, you can observe everywhere. Aggregate cash receipts, 5%, every point. You will find more points than ICA book, but in the shortest way, without compromising legal terminology. Understood? Every word, even the way it was presented, you will understand. You see, this kind of points, 4 categories of persons has to maintain books of accounts. This clarity will not have. Many students will not have this clarity because that's how you should study. When you read anything, you have to summarize like that. You should have a summary. This book itself is started like summary. You will find, in fact, this book usefulness in deductions and TDS chapter even more impactful. Of course, everywhere you can see capital gains, go to capital gains, you see. The way we drafted is very different because you should present in exam also in this way. Easily you can understand. In ICA book and all, you see, this 44A alone is in 4 pages. 4 or 5 pages it is there. And you read, you will not understand. Because there is no simplification, right? There is no summarization, right? So we read that entirely and then summarized each and every point without missing. Now, what is rule number 6 of books? That also we mentioned here. What do you mean by rule number 6 of book? Original bill, how much value you should maintain? Duplicate bill, how much value you should maintain? Doctor, what they should maintain? Everything is included. Understood? Next. Now, presumptive taxation. Let's begin presumptive taxation. Okay. Now, first question, tell me. Is presumptive taxation optional or compulsory? That's why you're wrong. Compulsory. Yes. 44AD, 44AD, 44ADA, 44AE, starting line of the section, notwithstanding anything contained under section 30 to 43B. I'll show you. This is where the learning is wrong. I'll show you that. I hope you know, right? Non-obstante clause. Have you heard of non-obstante clause? 44AD, non-obstante or non-obstante clause. Okay. Look at this. 44AD, I'm opening, ma. What the section says. notwithstanding anything to the contrary contained in 28 to 43C. Whatever 28 to 43C, throw off. Yes or no? If the SSE, I'm discussing, okay? I'm discussing first 44 AD. If the SSE has a business, if the SSE is involved in a business and having a turnover not exceeding 2 crore, which year? Relevant year only, it's not preceding year, 2 crore, then he must minimum declare a minimum income of how much? 8% of turnover for other than approved mode receipts. What is it? Other than approved mode receipts. In further 6% of turnover for approved mode receipts. Am I right with this? If at all you are collecting, if at all the sale turnover is in cash, bearer check, bearer draft, then that turnover you should declare how much income? 8%. What is this 8%, 6%? Guys, by the way, this is deemed to be your PGBP income. It is deemed to be your PGBP income. It is deemed income. Minimum you should declare how much? 8% of the turnover for cash receipts, 6% of the turnover for check, account pay check, account pay draft or bank receipts. Yes or no? This much is the minimum. For example, I am an SSE where, let us assume there is an SSE, exactly turnover is 2 crore. In this, 20 lakh is in cash mode, 1.8 crore in non-cash mode. Means approved modes. Now, how much is PGBP income? 6%. How much more? 1.8 into 6%. Here it is 8%. 1.6 lakh. Here it is 1.8 crore into 6%. How much? 1.8 crore into 6%. 10 lakh. 10 lakh 80. 10 lakh 80,000. Now, what is the total income? 12 lakh 40. Am I right? Yes or no? What is PGBP income? 12 lakh 40. If the SSE has a turnover of 2 crore, you must minimum declare how much PGBP income? 12 lakh 40. This is the rule. Sir, actually I did business actually. And my real income, I know very well it is just 4 lakhs. My income is what, 4 lakhs. But 44 AD, it has a non-obstante clause and it is saying very clearly that withstanding whatever is there in 28 to 43C, this is how I computed as per 28 to 43C. My PGBP income as per all the provisions of PGBP, disallowances, everything I consider, it's just 4 lakhs. But 44 AD presumptive taxation section says minimum I should declare what? 12 lakh 40,000. Which one I should follow? 44 AD you must follow. Suppose you want to say your income is this much only, genuinely, get an audit report. What is it? Get audit report. If you want to say that your income is only 4 lakhs but not 1 lakh 40, which is what presumptive taxation says. Presumptive taxation, the taxation provisions which presume your income is this much. They presume like that. I will not ask how much expenditure you incur. I will not ask how did you pay in cash payment you paid, TDS deducted, TDS disallowed, related party how much, 40A2, 40A3, 40A3A, 43B, 40A1, 40A1A. I will not even question about anything. 30, 31, 32, depreciation, additional. I will not bother about anything. Turnover, percentage, this is your PGBP income. If you want to say your income is lesser than that, you want to show and you want to prove that income is lesser than that, then prove me. How can you prove it? With an audit report. With an audit report. This is the main provision. This is the main provision. Are you clear? Now, if I want to declare income less than presumptive basis, I have to compulsorily go for audit report, right? Right now, this point, the section is silent on it. Earlier 44 AD, up to 2017 44 AD, this point they clearly mentioned. This point they clearly mentioned up to 2017. Later, no, when they are doing 44 AD amendment, when they're doing 44 AD amendment in 44 AD, by mistake, instead of amending it properly, they wrongly amended it. That was a mistake in law. Okay, this was accidentally missed. This point was missed. But still, intention of the law, everybody knows. All the practicing CS knows intention of the law. So, whenever they are declaring income of an SSE less than presumptive basis, whenever they are declaring income less than presumptive basis. They are going for audit report. All the auditors are still practicing in the old provision as per that old provision requirement. Are you clear? Now tell me. So presumptive taxation optional or compulsory? Technically compulsory. If you want to prove that your income is less than that, then it is, you have to get audit report. So that's why I say section is compulsory. It's not an optional section. It's not that I will open 4480. If not, I will close 4480. No. Now 4480 subsection 4. Now 4480 subsection 4. This was a subsection which was added in 2017 year. What is this section says? For example, 25-26 previous year, nothing but what assessment year? 26-27. What this section says, in this year, if at all I am happily declaring as per 4480, if I am declaring as per 4480, 6% of the turnover, 8% of the turnover, I am declaring as per 4480. The best advantage in 4480, presumptive taxation, best advantage, you don't have to maintain books of accounts. Compliance cost is books. SSA has to maintain books, means it's a big headache. Books of accounts you don't have to maintain. If at all you are declaring income as per 4480, 44AU, 4480A, happy. You don't have to maintain books. No audit, no questions asked. How much real expenditure you incur, and whether you paid in cash, related party how much, depreciation how much, additional depreciation, no questions asked. Directly you declare that income. But here one condition is there. I'm giving that much flexibility, right? Once you declare for 1 year, next 5 years also, what is it? Next 5 years also, you should declare as per 4480 only. You should declare as per 4480 only. This means this is year 1. Means year 2 to year number 6. You should declare 4480 indirectly. 4480 if you choose for 1 assessment year, for the next 5 assessment years also you should choose 4480. Are you clear? Which means if you are applying 4480, 6 assessment years at a stage you should apply 4480. Okay, what if I don't apply? Year 1 I chose. Year 2 it was beneficial to me, I chose. Year 3 it was beneficial to me, I chose. Year 4 it was not beneficial to me. I went with audit route. I will not go with 4480. I will go with audit route I went. Or I just maintain books of accounts, I just stop declaring as per 4480. What is the consequence? 4480 subsection 4 attracts. What it says? In the year in which you broke. Because 6 years chain. 6 years I will protect you from audit. 6 years I will protect you from accounts. But you break the chain right now. Since you broke the chain, that year, if your income is more than basic exemption limit, that year, if your income is more than basic exemption limit, because you are breaking 4480 rule, that year, maintain books, get an audit report. That year, maintain books, get an audit report. Plus, next 5 years, you don't have 4480 option. What is it? Next 5 years from the breaking year. That year, anyhow, you are not choosing. Another 5 years, you can't come back and choose 4480 even if it is beneficial to you. Are you clear? This is the amendment which they brought in 2017, which is now also valid. Clear, everybody? Now, when you declare as per 4480, what advantage I have? Your deductions under 30 to 37, your deductions were there, right? I will not question. I assume that they are all deemed to be allowed. I assume that they are all deemed to be allowed. Directly 6% of turnover, 8% of turnover. Right now we computed 12,40,000. That itself is your PGBP income. That's it. No more questions asked. 12,50,000. Open ITR. Put 12,50,000, 12,40,000. Pay tax on that. File the IT return. Over. Understood? But for that 6 years you should be ready to declare as per 4480. And if you break 6 years, you have to break it. In the sense 6 years you can't enter into 4480. And if at all you are choosing 4480, you can pay advance tax only 1 installment directly in the March month. Okay, you don't have to pay 4 installments of advance tax. Clear? That's 4480. Next, further most important condition I missed to tell. 4480, one more condition is there. What is the 4480 turnover limit, ma? Which SSC is 4480 is applicable? SSC must be in business and the turnover should not exceed 2 crore. But here in 4480, one more relaxation is brought. Suppose no, if 95% of receipts, what is it? 95% of receipts in approved mode. If at all you are having out of total receipts, 95% in approved mode, then the turnover limit is increased to 3 crore. Here, payments link is not there. You see, tax audit, 10 crore limit when it is applicable, receipts must be 95%, payments must also be 95%. Yes or no? Should be in approved mode. Yes or no? Whereas here, receipts only they focus. Payments irrelevant. Because in presumptive taxation, your payments are irrelevant. You will be taxed based on receipts. Hello? You are taxed based on receipt. Therefore, your payments become irrelevant. Therefore, if 95% of the receipts are in approved mode, then the turnover limit for tax audit, the turnover limit for 44 AD is 3 crore automatically. That's it. This is 44 AD. Easy or not? Then I will show you one big mistake later. Okay. Then 44 ADA. 44 ADA. By the way, 44 AD is applicable for all businesses, right? All businesses, right? But 44 AD is not applicable for the following businesses. Suppose SSE covered, SSE is earning commission and brokerage income. He can't choose 44 AD. SSE carrying on agency business. He cannot choose 44 AD. SSE claiming 10 AA benefit or chapter 6A heading C benefit. What is heading C benefit? You know, in our syllabus we have these three sections: 80 QQB, 80 RRB, 80 JJAA. If an SSE is choosing these three sections, heading C, chapter 6A deductions, if at all he is choosing heading C only, remaining chapter 6A no problem. Heading C. In our syllabus in CA Inter, CMA Inter, what we have? 80 QQB, RRB, JJAA. If the SSE is choosing 80 QQB, RRB, JJAA deduction, if at all he is claiming those deductions, he cannot go for 44 AD. Are you clear? Or SSE is going for 10 AA, he cannot go for 44 AD. Are you clear? Next, entire 44 AD is over. Even that 5 years illustration also example I gave here. Okay, entire that 5 year example also I gave. Suppose, what about next presumptive taxation? Sir, business assess is good. What about professionals? If at all you are a notified professional, if you are a notified professional, if your gross receipts are not exceeding 50 lakh, if your gross receipts are not exceeding 50 lakh, then flat 50%. What is it? Flat 50% is deemed to be your PGBP income, your profession or business or profession income. Your directly, how much income is deemed to be your PGBP income? 50%. Sir, I am a newly qualified CA. I started my practice, sir, in this financial year, in this 25-26 year, 40 lakhs is my total fees collected from the client. Now tell me, how much I should declare under presumptive taxation? Flat 50%. Which means how much I should declare? 20 lakh. That's it. Here there is no such cash mode, non-cash mode. Bifurcation is not there. Further, now SSEs who are doing more of banking transaction, department want to promote, same like 2 to 3 crore limit enhancement is there, right? Here also they have enhanced the limit to by 50%. They made it to 75 lakh. When 75 lakh limit is applicable for ADA SSEs, if at all you are a notified professional, 95% of the collections are in approved modes, then 75 lakhs limit is applicable instead of 50 lakh. That's the only difference. Now, what are the benefits because of ADA? The benefits are same. You have to pay only one installment of advance tax. You just have to pay one installment of advance tax. You don't have to maintain books of accounts. You don't get them audited. All the deductions under 30 to 38, we assume that you have claimed 40 disallowances, 43 disallowances. Nothing will be applicable. Directly, I will ask you, how much is your turnover? Tell me, multiply 50%. That's your income. 44 ADA, how much is your turnover? Multiplied by 6%, that's your income. Over. Whether you paid in cash, non-cash, TDS, all that formalities I will not ask. This is a benefit. Now, in 44 AD, 6 years logic is there, right? 6 years logic breaking, and again 5 years you are disqualified like that. That logic is there, right? In ADA, that logic is not there. In ADA, that condition is not there. Which means in ADA, every year, I should declare minimum 50% income. If at all, if I want to say my income is less than this, if I have to say, if I say, for example, during this year, first year, my turnover is 40 lakhs. And to presumptive taxation, if I apply 20 lakhs, I am getting answer. But my real profit is 10 lakhs only. I want to file IT return and show 10 lakhs as income and pay tax on it 1,12,500. This is what I decided. If I have to do this, look at 44 AA. Look at 44 AA, third category, fourth category. Third also you can apply. Persons declaring income lower than presumptive income, 44 AE, BBBBB. Here 44 ADA is also covered, but that was missing in the letter of the law because they didn't amend it correctly. Are you clear? They didn't amend it correctly. Whereas AB, they amended it. Persons declaring income lower than presumptive income. Clause number D. What is it? Clause number D of 44AB tax audit. As per clause number D, if a person is declaring income less than presumptive basis, if you are declaring, what is the rule? Audit is mandatory. Tell me, if audit is mandatory, books of accounts are also mandatory. But in the books of accounts, that update is not made. That was a mistake in the law. That was purely a mistake in the law. Are you clear? There are so many mistakes like that you will find in income tax law, guys. Even in the upcoming act also, the same mistakes carry forwarded. Understood? They didn't rectify those mistakes also in the upcoming law. Same mistakes carry forwarded. Now one after one they are discovering again, they are amending it. The very reason why they brought a new law is in the old law there are so many mistakes. Again, new sections, so many sections. The same mistakes they carry forwarded as it is. No changes at all. Fine. Some mistakes now recently they rectify. Still there are so many other mistakes which they will rectify very soon, probably. Yeah. Clear until now? So this logic is same for 44AD also. But that section was silent on that. Because while amending 44AD, while amending 44AD related one in 44AB, they made a mistake. Similar, look at, similar thing is there for AD, AE also, but they missed it. Understood? So tell me, presumptive taxation, now tell me, is it compulsory or not? Yes, it is compulsory. Minimum that much I should declare. If I am covered under that section, minimum I should declare that. When I will cover under that section, business SSE, turnover not exceeding 2 crore, you are covered there. Professionals, turnover not exceeding 50 lakh, you are covered there. And you should declare minimum 6% or 50% as the case may be. If you fail to declare, you want to show lesser income, get the books of accounts audited. Maintain the books of accounts, get them audited and prove the department you are having really lower income. Then I will agree. Understood? Next, 44AE. What is it? 44AE. This section is applicable for an SSE who is carrying on business of plying, hiring, leasing of goods carriage vehicles. If an SSE is doing the business of, if the SSE is carrying the business of plying, hiring, leasing of goods carriage, very simple. You are running goods carriage vehicle business. Either you only ply the goods on your own, or you hire the vehicle, or you lease the vehicle. Anything you do. Yes or no? For you, presumptive taxation is what? Here, there is no turnover limit. There is no turnover limit. Further, 44AD is applicable only for individual and HUF or even a partnership firm, but not LLP. LLP is not applicable. That too, they are all must be residents. 44AD is applicable only for residents, ma. Only resident SSE, either individual HUF or firm. Whereas ADA, notified professionals, it is applicable only for individuals and partnership. HUF is not there because HUF cannot carry on notified profession. HUF cannot carry on notified profession. Able to understand? So only individual can carry, who is a doctor or chartered accountant can carry, or a firm of doctors and firm of chartered accountants can do. That's why HUF cannot do the profession of chartered accountancy. Simple logic. Okay. So only individual and partnership. So 44AD, they are applicable only for residents. AE is applicable for non-residents also. AE is applicable even for non-residents also. Now, any SSE, here, AE can be used by companies also, LLPs also, AOPs and BOI also, no problem at all. Understood? Now, what as per AE? Now, what is this? Here, SSE is having, SSE is hiring, SSE is plying, SSE is leasing goods carriage vehicles, right? Now, let us classify these goods carriage vehicles into two types. Heavy good vehicle, other than heavy good vehicle, I will call it as light good vehicle. Okay, light good vehicle. What is a heavy good vehicle? Heavy good vehicle is a vehicle where gross carrying weight is more than 12 tons. Gross carrying vehicle. Either gross carrying weight or unladen weight. Any of these weight can be used. Okay. Generally, you will be given gross carrying weight on the RC card. You have a two-wheeler. You see on the two-wheeler you have an RC, right? Open the RC and then see later. Not now. Okay, later you see. Gross carrying weight will be there. GCW. Then there is another weight called curb weight. Curb weight means unladen weight. Curb weight versus gross weight means what? For example, you take, everyone knows this car, right? Maruti Alto. Yes or no? One of the beautiful car. So Maruti Alto is there. 750 kgs is the curb weight of the car. What is the weight of the car? 750 kgs. Gross weight is 1250. What is the difference? You can load in the car 500 kgs. The car can carry up to 500 kgs worth of passengers. That's the meaning. Gross vehicle means gross vehicle. Now for goods carriage vehicle, curb weight or unladen weight means what? Without any load. With load, the vehicle capacity, if the vehicle capacity is measured, then that vehicle capacity is called as gross vehicle weight or gross carrying weight. Are you clear? And if any of this, they can give you an exam. Any of this they can give you, both are valid. If unladen weight itself is more than 12 ton or gross carrying vehicle weight is more than 12 ton, then that is classified as heavy good vehicle. Then that is classified as what? Heavy good vehicle. Now other goods remaining are called as light good vehicle. Okay, what is it? What is the presumptive income here? For light good vehicles, how many months you are owner? Here month means calendar month. Here month refers to calendar month. It's not, for example, no, I bought on 10th April one vehicle I bought. 2nd May 2025 I sold the vehicle. You are deemed to be owner for 2 months. You are deemed to be the owner for 2 months because you are having ownership of that vehicle in 2 calendar months. Since 2 calendar months you are owner, for 2 months you are liable for tax. Able to understand? Now for light good vehicle, what is the presumptive income? 7,500 per month per vehicle. Per month includes part of a month also. Even if you are owner for part of a month, that is sufficient. Month means calendar month. Are you clear? Next, heavy good vehicle, 1,000 rupees per month per vehicle per ton. What is heavy good vehicle? Per month per ton per vehicle, how much it is? 1,000 rupees. This is presumptive income. We assume this is your income. Sir, how much you are paying to driver? How much is depreciation? How much fuel you are incurring? How much repairs you are incurring? I'm not bothered about all that. How many vehicles you own? Multiplied by 1,000 or 75 as the case may be, multiplied by number of months you are owner for that vehicle is equal to presumptive income. One condition is there. In order to attract this section, one condition is there. What is that condition? What is that condition? The condition is number of vehicles. What is it? Number of vehicles should not exceed 10 at any time during the year. At any time during the year. The number of vehicles for which you are acting as an owner. You are acting as a owner. It should not exceed 10. Sir, I took some vehicles on lease. I am leasing it. 44A does not apply on that. 44A does not apply on subleasing. 44A applicable only on my own goods vehicles. Are you clear? I may have leased lorries 100. It doesn't matter. Own lorries, how many you have? 10 or less than 10 at any point of time during the year. That is only counted. Able to understand. Okay. So number of vehicles should not exceed 10. That is the most important condition. Okay. Now, by the way, there is one problem in our book. Okay. We will solve that problem where you will understand it very clear. Yes. There is a problem in our book. Okay. Not this. This is easy only. Yes. There is in ICA book itself, there is a TYK question. Okay. Question number 8 in the ICA book. Can I solve it? Easy question. 44AE question. Sukhvinder is engaged in business of plying goods carriages. On 1st April 2025, he owns 10 trucks. By the way, one point I missed to tell in 40A3. 40A3 disallowance, no, any expenditure you paid more than 10,000 in cash in a day to a single person is disallowed, right? There 35,000 limit is the limit in case if at all you are paying to a transporter. If at all the amount of expenditure is paid to a transporter, the limit is subject to 35,000, not 10,000. That just point you remember. Okay. Next, fine. Look at this. So Sukhvinder on 1st April, no, he is owning how many trucks, ma? 10. Out of which 6 are heavy goods vehicle and the gross vehicle weight is 15 tons each vehicle. 6 vehicles are heavy good, which is remaining four are light goods. Okay. On 2nd May, he sold one of the heavy good vehicle and purchased a light good vehicle on 6th May. Okay, the new vehicle is put to use only on 15th June. When you are using doesn't matter in 44AE. How many months you are owner, that is only matters. Are you using it or not? Doesn't matter. Presumptive taxation is based on ownership but not based on usage. Now look at. Now look at April month. I'm looking at April. Okay. How many vehicles is having? 6 heavy goods vehicle, 4 light good vehicle. May month how many? 5. May month how many? He sold 1 heavy good vehicle and he purchased 1 more light good vehicle. So which means in May month, total have how many heavy good vehicles? 5. And light good vehicles how many? 5. And remember, 1 heavy good vehicle we sold it, right? That we are owning it for 2 days. No, that one also you should consider. For May month, heavy good vehicle is sold on 2nd May. First and second date you are owner for that 1 vehicle also. No, even for part of a month you are holding, you should consider all the 6 vehicles. Yes or no? Hello? Is this what calendar month meaning? Now June month, it is 5, it is 5. July 5, 5, 5, 5 like that. Yes or no? So which means June month to March month, 5 heavy goods vehicles were there, 5 light good vehicles were there. Heavy good vehicle 1000 rupees per ton, 15. Am I right? Multiplied by June to March, how many months? 10 months. Hello, am I right? Next, 5 into 7500 per month for 10 months. What is the June to March month related income? What is the June to March month related heavy good vehicle? 5 vehicles into 1000 per month. 5000 into 15. 75,000 into 10. 7,50,000. Am I right? Yes. So here 10 into 5 into 7, 5. 5 sevens are 35. How much it is? 3,75,000. Correct? 3,75,000. This is for June to March. Am I right? Now I should compute for this. Here 6 vehicles are there, but only for May month I am computing 1 month. 6 vehicles are there. 1000 rupees per month. Yes or no? Multiplied by 15 tons. Multiplied by just 1 month. How much it is? 90,000. Hello everyone. Then 5 vehicles were there. Because 4 vehicles were there. 6th March, 6th May 1 more vehicle purchased, which means totally 6 vehicles were there in that, 4 vehicles were there, 1 vehicle we purchased, totally 5 vehicles were there. 5 into 7,500, how much ma? Into 1 month, 37,500. Now April month, 6 into 1000 into 15 tons into just 1 month. Am I right? 15 6 are 90, again 90,000. Am I right? Again here 7,500 into 1 month, 30,000. Hello everyone. Yes or no? Now I am going to round off. Just add this 90, 30, 90, 37,500, 7,50,000, 3,75,000. Add it. 90 plus 30, 120, 210. No, you do it. How much it is? 13 lakh. 13,72,500. Correct? Now let's look at the question. Continuation. Compute the total income of Sukhvinder, taking note of the following. He actual collected freight is how much? 12,70,000. Operating expenses, depreciation, that too as per 32 only. Other expenses, the total expense is this much. Therefore, the net income is 4,45,000. Array, his actual income is 4,45,000. But presumptive income is how much? 13,72,000. If at all he want to declare as per normal income, he has to maintain books of accounts and get them audited. Now look at the answer. What is the answer? 13,72,500. Easy. 44 AE is over. Are you able to understand? Now here one important observation in 44 AE. If the SSE is going for presumptive taxation as per 44 AE, 4 installments of advance tax is applicable. Only for ADSSE, ADISSE, 1 installment of advance tax option is given. Whereas AESSEs, 4 installments of advance tax is as usual applicable. Nothing, but there is no relaxation from advance tax provision for 44 AESSEs. Do you understand? Further, suppose firm is eligible for all 44 ADAE, ADIAE, a partnership firm, not LLP. A partnership firm is eligible, resident partnership firm for all the 3. 44 AD, yes, a firm is eligible. 44 AD, a firm is eligible. 44 AE, a firm is eligible. Correct? Now remember, this firm will pay interest and remuneration to partners. Am I right? Hello? Interest and remuneration to partners, right? As per 40 subsection B, some limits were given. You cannot pay beyond this interest. You cannot claim more than this much remuneration. Like that, some limits were there. Now that is nothing but interest and remuneration. They are expenditure for firm. Am I right or not? You can claim under presumptive income 44A. You calculate income here, right? From that, interest and remuneration paid to partners by partnership firm you can claim, and final income is PGBP income. Are you clear? Hello, everybody. For example, right now in your example, 13.7 lakh we computed, right? From 13.7 lakh, freshly you can claim interest paid to partner, remuneration paid to working partner, and then net income from PGBP you can arrive. Are you clear? Now, for example, it is 44 AD ADA. 44 AD, 6% of turnover, 12 lakh we got in our example. And 44 AD, 20 lakh profit we got as per firm, for the firm. Now here, can I claim partnership firm remuneration paid as a deduction? No. No, not permitted. Able to understand? Why? Tell me logic. What's the logic? Think and tell me. In all the three cases, presumptive taxation only. Why these two cases, firm remuneration is not allowed? Why here it is allowed? Sorry? Everywhere the same answer. Everybody same only. Everywhere it is taxable. It was a mistake in law. You want me to prove? I'll prove it. (44 AE). Okay, I'll open and see. See, this is one exercise which is a very good learning for you, a great learning for you. 44 AE. Open it. Subsection 3. 44 AE, subsection 3. Any deduction under 30 to 38 is deemed to have been allowed, provided, proviso, where the assessee is a firm. The salary and interest paid to its partner shall be deducted from the income computed under 44 AE subsection 1. From the presumptive income, if a firm is paying interest and remuneration to partner, you can claim deduction. Understood? 44 AE specifically talks about deduction. Correct? Now look at. Yeah. I'll show you 44 AD. In 44 AD, what is the subsection 2? Here subsection 2 talks about that presumption. Okay, all deductions allowable under 30 to 38 shall be deemed to have been allowed. But below, is there a provision? Is there a provision here? Whereas you see, same section, same sentence as it is copy pasted, in, here 44 AE. it is, same provision, any deduction allowed as it is here, but provision is also there here. Am I right? Hello, you're able to understand? Yes. Now, in ADA, provision is not there again. Now I will show you 44 AD of Finance Act 2015. Okay, look at. This is 2025 Finance Act. I'm just selecting right away Finance Act 2015. Old 44 AD provision I'm looking at. One minute. Yeah, 44 Finance Act 2015 got selected. Now 44 AD. Search. Array. Yeah, got it. 44 AD. Now subsection 2 has a provision. You understood? Subsection 2 has a provision. Means old 44 AD allows deduction. If the firm pay interest and remuneration to partner, it is allowed as deduction. Yes or no? New 44 AD, that provision was removed. But why they didn't remove in 44 AE? First of all, you are saying all deductions under, by the way, tell me, interest and remuneration paid to partners by partnership firm is allowed as deduction under which section? 40 subsection? That's a limit condition section. That's not a deduction section. Interest paid by partnership firm to partner, interest on borrowed capital, borrowed loan, 36. That's a section 36 deduction for the firm. Remuneration paid to partner is a section 37 deduction. That's actually a 37 deduction. Able to understand? We have not yet covered 40B. I think that 40B also I'll cover right away. Okay, that's a 37 deduction. You are saying 30 to 38, all the exemptions, all the deductions are deemed to have been allowed, right? Then why with the provision you're allowing again? Income tax department identified this mistake in 2016-17. Then they removed in 44 AD. Then they removed in 44 AD. That time only 44 AD is newly drafted. They didn't make that mistake. But 44 AE is there, na? 44 AE. In that this mistake is that they didn't look at that. The mistake as it is continued now. Able to understand? Now I will show you. Look at the 44A is there, right? View corresponding section in the new income tax law. In the new law, again this is rectified. In the new law, it is rectified. Now in the new law, if a firm is paying remuneration and interest to partners, no, whether it is a plying, hiring, leasing, whether it is normal 8%, 6% logic, 50% logic, doesn't matter. Everywhere it is not allowed. Now they made it uniform. Do you understand the law? So don't think everywhere intention will be there. If you are thinking that some intention will be there, we are the fools. There's no intention. Like this, I will show 10 to 15 mistakes in CA Inter tax syllabus itself. 10 to 15 mistakes I will show you. Able to understand now? That's a mistake in law. Don't try to put a logic for the thing. Something would have been there. Lawmaker and all will do mistakes only. Don't think they'll have a logics and all. They don't think they'll have brain. Okay. In the sense, while drafting, only see why this inconsistency. Because income tax provision is drafted by different people at different points of time. Why relative definition is different at different places? Simple. That definition was not given by one person. If I make you stand up and ask, who is relative according to you, you'll give 10 relations. You'll give 15. You'll give 20. You'll give 5. Simple. Who is a relative? Companies Act has a different meaning. Income tax has a different meaning. GST has a different meaning. Within income tax, different meanings. Why? Because these definitions were drafted by different people at different points of time, and according to their circumstance, they define it. Clear? That's inconsistency in the law making process. That's it. Fine. Anyhow. Okay. Now here you see, this is the new income tax. No, presumptive taxation is 58. Only single section. Entire presumptive taxation in the new income tax law is just a single section. In this single section, they didn't make that mistake. You see, 7,500, 1,000 rupees, everything as usual. They retained it. 50% of gross is everything, they retained it. And you see here, all the deductions. Wait a minute. Yeah. Here, all the deductions, any loss, allowance or deduction allowable under provisions of this act shall not be allowed against. Okay, again they said. And now here, for the provisions where the SS is a firm, the salary and interest paid to partner shall be deducted from income computed. Okay, they are allowing it. In the new law, again, all the sections are allowing it. Technically, it is not allowed. Maybe in the new law, 30 to 37 point, they would have specifically amended. A corresponding section would have been specifically amended. Now in the new law, all the 3 sections presumptive taxation they are allowing. But anyhow, let's not discuss about the new law because we don't know the deduction sections composition in the new law. In the current income tax law, interest paid to partner is deductible under 36. Remuneration paid to partner is deductible under 37. How much you can claim deduction? 40B will talk about how much you can claim. 40B is a limiting section. That's not a deduction section. That is the reason I told at the beginning. 40 series are conditions sections. They are not deduction sections. Deduction sections are 30 to 37 only. Understood or not? So, can a firm claim deduction for interest paid to partner? Generally, yes, under 36. Can a firm claim remuneration paid to partner under, under PGBP? Yes, under section 37. How much they can claim? Interest, maximum 12%. Where the maximum limit is set? 40B. Remuneration, maximum limit to so and so. Where it is set? 40B. That's it. Clear? Entire PGBP is over except 40B section. 40B right now I will discuss immediately, just 10 minutes. With this PGBP we will wind up. Clear until now PGBP? Yeah. In income tax, no, like new law has been drafted, right? New law has been drafted, right? For the new law, they gave a responsibility to group of people. Group of people is called as a committee. So they gave a responsibility to one committee. Now they selected them, right? They need to name as what? New Direct Tax Code Committee. Some name you can give. Income Tax Advisory Committee. Some name you can give. Maybe probably our finance minister don't have time. She's having lunch probably. Madam, what some committee we formed, madam? What committee? What name we should put? You selected. Okay, fine. Put select committee. That's a select committee. You know, I'll show you. What is the select committee role in the new Income Tax Act? Yeah. In income tax law, bill only it is mentioned, ma. In bill only, it is not there in the act. See, select committee is there only to formulate the act. So look at it. It refers to the income tax bill which was examined and shaped before the law. When the income tax bill was introduced in parliament, it was referred to select committee of Lok Sabha. Okay, that's it. Fine, anyhow, it's okay, leave it. So clear everybody? We have in CA final audit. Okay, we discuss about how parliamentary committees function. We have a syllabus, we have a chapter called PSU audit. In that PSU audit, we have a discussion about how parliamentary committees and all, finance committee, estimates committee, committee on public undertakings, public accounts committee, like that so many committees will be there, which is not relevant for us basically. But it's there in the syllabus, what to do. We have to discuss that. In CA final audit, we have that. So there I will tell you how parliamentary committees work, all that. Okay, that's it. Yeah, now one section in PGBP that is pending is 40B. 40B is also a disallowance section that is applicable for firms. Okay, now remember how to compute income of the firm. Same, just like any other SSC. Okay, you take net profit as per P&L account, add items debited to P&L but not considered under PGBP, add back. Same, reduce items credited to P&L not considered under PGBP. You compute as it is. Same as it is. 40A3, 43B, 40A1, 40A1A, 40A2, 40A7, 40A9, as it is you do. But and in this amount that you computed, no, you ensure that interest paid to partner, remuneration paid to partner is not deducted. Is not deducted. For example, interest paid to partner, remuneration paid to partner is debited in P&L. Is debited in P&L, add back. First disallow. First disallow, entire expenditure paid, entire amount of interest on capital, interest on loan borrowed from partner, add back. Remuneration paid to partner, add back. When I will add back, only if it is debited to P&L. If it is not debited to P&L, happy, no need to worry about it. Are you clear? So first compute income of the firm like that. First compute income of the firm. Income of the firm like that. Are you clear? From this, first deduction you should give. First deduction. See here, all depreciation brought forward, unabsorbed depreciation. Remember, in this computation, no, unabsorbed depreciation also should have been reduced. By the way, remember this. In this computation, unabsorbed depreciation also should have been reduced. Right now, what format I'm going to teach you is book profit computation format. Right now, I'm going to teach you what format? Book profit computation format. First income of the firm you compute after reducing all deductions from 30 to 37, including unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on family planning. Reduce all that. Reduce all that and compute the income of the firm. From that income, interest to partners. What is it? Interest to partners. It may be on capital given by them or it may be on loan given by them. Partner might given as a capital to the firm or as a loan to the firm. But who gave it? Partner gave it. Then only it is relevant. Able to understand? Partner gave it. Now on capital and loan, interest amount that you are paying, right? Deduct it. How much you should deduct? Maximum deduction is 12% of capital or loan. Maximum how much you will deduct? 12%. That too it is per annum. 12% per annum of the capital, 12% per annum of the loan. That amount you should deduct. Suppose if the partnership deed says only 8%, then 8%. If partnership deed says 18%, then 18%. Suppose if partnership deed is silent, 0. In order to claim deduction, deed must contain. In order to claim deduction, partnership deed should contain these conditions. 184 section of the income tax law. This condition is given under 184. Able to understand? Yeah, 184 or 174. One section is 184 only. Able to understand? So only if the partnership deed contains interest clause, then only you can claim deduction. Are you clear? Suppose no, deed is silent. Now they brought a new deed with retrospective effect. Still, you won't get deduction. Deed should be prospective. Interest amount paid to partner, you will get deduction only prospectively. You cannot get deduction for retrospectively. Able to understand? That's it. Now, sir, for example, no, the total capital of all the partners is 30 lakh. Total capital of all the partners. By the way, this amount also I'll measure it, ma. The total income of the firm is 50 lakhs, sir. What is the amount, ma? 50 lakh. How did the 50 lakhs is calculated? Our net profit in P&L is 74 lakhs. We added back some disallowances. We reduced depreciation, additional depreciation, brought forward depreciation, brought forward capital expenditure on scientific research, everything we reduced it. Then we found out one profit. So that is the income of the firm. This is nothing but income calculated under PGBP. This is income calculated under PGBP before reducing interest paid to partner, before reducing remuneration paid to any partner, doesn't matter. Okay, before payments to partner, this is the income of the firm as per PGBP. Understood? Now 30 lakhs is the capital ma. As per the deed, no, 15% rate of interest is there, but we will consider how much? 12%. So now reduce it. How much it is? 3,60,000. Hello everyone. Let us assume the firm has 3 partners, A, B, C. Each of them have given 10 lakhs capital, 10 lakhs capital, 10 lakhs capital. Do you understand? I'm solving entire sum itself with this example. Okay. Now after you reduce it, then what you get is called as book profit. What you derive is called as what? Book profit. 50 lakh minus 3, 46 lakh 40,000. This is book profit. Do you understand now how to compute book profit? Many will not understand in 40B book profit computation only. Everybody do mistake in book profit computation only. How to compute book profit? First calculate, take net profit as per P&L, add back disallowances, reduce all the deductions, depreciation, additional depreciation, everything, capital expenditure on scientific, everything. Brought forward depreciation also you reduce it. Remember, right now what I am computing is book profit. Why I am computing book profit? To calculate eligible remuneration amount. To calculate eligible remuneration amount only I am computing this book profit. Able to understand? Now book profit is computed. So in order to get the book profit, first what you should do? First compute income of the firm as per PGBP provisions, then reduce interest on capital, interest on loan paid to partners. Reduce that maximum 12%. Then if you still have a profit, that is called book profit. Are you clear? Okay. Now just for the sake of convenience, a smaller number I will take. 20 lakh. Let us assume the main profit is 20. Book profit is automatically 16 lakh 40,000. Hello everyone. Now look at the question once again. They said A is a working partner, B is a working partner, C is non-working partner. Now for working partners, no, they are getting yearly salary of 12 lakhs. They are getting yearly salary of how much? 12 lakhs. Non-working partner is crying for that. So they are also paying 2 lakhs for non-working partner. Totally how much more? 26 lakhs remuneration they paid to all the partners put together. Now remuneration paid by the firm to partner is an expenditure for the firm, right? Yes or no? How much they can claim here? They want to claim 26, but 40B limit once again interferes. Here they interfered. 40B section interfered and said, hey, 12% only maximum. Now again here 40B will interfere. What it will say? Your book profit is 16 lakh 40, right? Okay. First 6 lakhs of the book profit, balancing figure 10 lakh 40. Are you clear? I will divide your book profit like this. First 6 lakhs into 90% is equal to 5 lakh 40,000 or 3 lakhs, whichever is higher. Remember, first 6 lakhs of book profit, 3 lakh or 90% of the profit, whichever is higher. Understood? Suppose no, if the firm itself is having 4 lakhs, then here 4 lakhs only will come. If the firm has firm has book profit just 3 lakhs only, then 3 lakh into 90%, how much it is? 2.7 lakh or 3 lakh, whichever is higher, 3 lakh. Which means if a book profit is negative, the firm can easily pay 3 lakhs remuneration, no problem. If the book profit is negative, suppose book profit is negative, first 6 lakhs, array 0. 0 into 90%, 0 or 3 lakhs, whichever is higher, 3 lakh. Which means if the firm is having no book profit also, eligible remuneration will be minimum 3 lakhs. Further, balance book profit in our example 10 lakh 40. On this 60%, how much it is? 6 lakhs 24,000. Am I right? 6 lakh 24. Now total eligible remuneration 5 plus 6, 11 lakh 64,000. Am I right? 11 lakh 64,000. This is the total eligible remuneration as per section 40B a firm that can pay. But the firm paid 12, 2. That too, how much they paid? 26 they paid. I will not give deduction. That too, one more point. This 11 lakh 64,000 also you will get deduction only when you are paying it to working partner. Otherwise you will not get deduction. If at all you are paying to non-working partner, you will not get deduction. Oh, fine. In the given case, Mr. A is working partner, we paid 12 lakhs. Mr. B is also working partner, we paid 12 lakh. But remember, both of them put together As per 40 subsection B, 90%, 60% we calculated and computed. How much they can pay? 11,64,000 only they can pay for both of them put together. Am I right or not? Which means each of them, how much they can pay? Each of them, same proportion, equal. How much they can pay? 5,82,000. Am I right? 5,82,000. Only this much is allowed for you to pay. But you paid extra. That is your choice. But I will give deduction only this much. I will give deduction only for this much. Sir, what about, see, 2 lakhs is paid. No, hurry, he is a non-working partner, guys. He is not eligible for deduction. Therefore, how much deduction firm will get? 11 lakh. 72, sorry, 11 lakh. 64,000 the firm will get deduction. That's it. This is the answer. How much eligible remuneration? 11 lakh 64,000. Remember, this entirely you have to do it in working note. This entirely you have to do it in working note. How much eligible? 11 lakh 64. Therefore, balance income of the firm, how much? Balance income of the firm, how much here? 16 lakh 40 minus 11 lakh 64. How much is the balance income? 4 lakh 70. This is balance income of the firm. Are you clear? Hello everyone. Now look at. Firm has paid 12,2, but they don't get deduction for as it is what they pay. They get deduction as per 40B. Maximum deduction 11 lakh 64. Am I right? Firm paid 30 lakh into 20% rate of interest they paid. Let us assume 6 lakh they paid. No, how much you paid doesn't matter. You pay whatever you want. That is your partner, your internal affair. But in income tax, I will give deduction only for 3 lakh 60. Are you clear? Now, how much is taxable in the hands of the partner? This is the question. Firm paid, they got deduction. Now, for whom they paid? To the partner. Now, Mr. A, Mr. B, Mr. C. Each of them given 10 lakh, 10 lakh, 10 lakh capital. Correct? Mr. A got interest of 2 lakh, 2 lakh, 2 lakh. He received ma. Whereas the firm got deduction only 1.2 lakh, 1.2 lakh, 1.2 lakh. Am I right? Hello? Am I right? Again, remuneration. This is one. This is remuneration. Remuneration given 12 lakh, 12 lakh, 2 lakh. But firm got deduction. Firm got deduction how much, ma'am? 5.82, 5.820. This is the information right now. Yes or no? This is what we computed. Now tell me, how much is taxable for Mr. A? How much is taxable for Mr. B? How much is taxable for Mr. C for interest? Remuneration, how much is taxable? Tell me. Difference between this, correct? Wrong. That's wrong. What is taxable is this much is taxable. This is only taxable in the hands of the partner. Tell me, firm claim deduction how much? For remuneration to A, 5.82. For me, if the expenditure is 5.82, for you income should be exactly. Am I right? The logic is same. Under income tax law, how much you paid, leave it here. Array, what you paid, they ignored here. Then why you should consider what you paid? What they deducted, that you consider. They claim deduction 5.82. Firm claim deduction towards Mr. A 5.82. In the hands of Mr. A, 5.82 remuneration only taxable. Firm paid 2 lakhs interest to A, but they claim deduction how much? 1.2. In the hands of Mr. A, only 1.2 is taxable. So for Mr. A, 1.2 plus 5.82, 7,02,000 approximately taxable. Mr. B, 7,02,000 approximately taxable. For C, only 1.2 lakh is taxable. Remuneration, he received what he received doesn't matter. Firm did not claim deduction. No. The firm did not claim deduction for remuneration paid to C. They did not get any deduction. How can I tax you? Double taxation, no? Hello? Yes or no? That's it. Able to understand. 28 subsection 5 charging section. This is what the point is it. Okay. Open the charging section and see. Open the charging section and see. If you have the book. Look at this. Look at this. Fifth one. Here in our book 6th point, but actually it is 28 subsection 5, clause 5. Look at this. Interest, salary, bonus, commission, by whatever the name you call, received by a partner from firm. How much is taxable? 28 charging section says it's an income. To what extent it is income? To the extent deduction allowed to the firm. Array, how much deduction firm got? That much only my income. Able to understand? That's what the charging section says. So, okay, sir. Sir, they got interest, they got remuneration. Profit also they distributed. No, that is exempt from tax. Profit distributed by the partners from partnership firm is exempt from tax, because that profit already firm paid tax at 30%, and then only finally they distributed. Once again, you can't tax it. Whereas remuneration interest we are taxing because firm got deduction, so we are taxing it here. Clear? That's it. So with this, 40B is also completed, 28 is also completed. Clear? Easy or not? Now there is a new TDS section on partnership firm payments to partners, 194T. There is a new TDS section. 10% is the rate of TDS. If at all the firm is paying more than 10,000, more than 20,000. Okay, we'll discuss that in TDS provisions. Okay, that's it. Able to understand? Over. PGBP chapter is over. Pakka everybody? Yeah. All of you, please like and comment. Yes. We'll begin capital gains head of income. Remember, the first point I want to tell is in capital gains head of income, full-fledged my regular chapter, full chapter of my regular, approximately 12 hours, is already there on the YouTube, where I discussed in depth with problems, everything. Clear? And those who watch that chapter can skip this particular part of this. Okay, in this marathon, this part you can skip. But in this particular part, capital gains, I'm not discussing the full chapter revision. I'm only discussing immovable property taxation, 112A asset taxation, and of course, when I discuss 112A, automatically it's a discussion of 111A as well. And let me list out what exactly I'm going to cover in the capital gains chapter. Capital gains chapter, what I'm going to cover: 1, immovable property taxation. And if you observe, depreciable assets capital gains taxation we already finished when we are discussing PGBP. 32, depreciation topic. Depreciable assets, how to compute capital gain under section 50, 50A, both I have covered. Yes or no? Immovable property taxation, what are all covered under immovable property taxation? 48, 49. Relevant provisions only. Within those sections only, relevant provisions dealing with immovable property only I am going to cover. Okay? 55. Then we have 2 subsection 14 capital asset definition. Okay, then we have holding period concept, 2 subsection 42A holding period concept. Okay, then apart from that, we are also going to discuss about 54, 54 EC, 54F preferably. That's it. This we are going to discuss. Then apart from this, we are also going to discuss about, in the capital gains, I'm only going to discuss this 112A and 111A taxation. 112A and 111A taxation. Then I think first let me cover these two. Okay, so immovable property taxation and 112A, 111A. Tell me first of all, in capital gains we have totally 3 computation formats. One 48. One computation format of capital gains is 48. Another computation format is 50 and 50A. Another computation format is, guess, 50B, slump sale. What is it? Slump sale. Okay. Now, by the way, when I'm discussing immovable property, obviously I'll be covering 50C also. There are 3 formats of capital gain computation. Okay. One is slump sale, which is having a separate format of its own. Then we have 50 and 50A, a separate format of computation of capital gains for depreciable assets. Then 48, separate computation format for computation of capital gains for non-depreciable assets. What is it? Non-depreciable assets. When I say depreciable, means they are business block of assets. When I say depreciable, they are business assets, that too which are forming part of block, or maybe assets which are used by power sector. Depreciable assets means those which are used for business, which are eligible for depreciation. Are you clear? I have a residential house. No doubt house is a depreciable asset. Am I right? That is not covered under 50/50A. Tell me, on my residential house, can I add it in the block of asset? My residential house, can I add it in the block of asset? No, because that's not used for my business purpose. Only if an asset which is used for business purpose or profession purpose and that is eligible for depreciation, then only that asset comes under 50 or 50A purview. Hello, able to understand? Then 48, non-depreciable assets, capital gains computation for non-depreciable assets. What are all non-depreciable assets? Residential immovable property, land, shares and securities. These are all non-depreciable. Goodwill, intangibles, all these assets comes under jewelry. Yes or no? Archaeological collections, paintings, all these capital assets, they come under 48 format. Now, what is 50 format? How to compute 50? We know. Section 32, as on 31st March, for a particular block, we apply two conditions. What two conditions we apply for a particular as on 31st March? One, is the block existing? Is there a value for depreciation? Nothing but is there a WDV value? Hello, everyone? If both the conditions are there, 50 will not attract. Automatically compute with depreciation. Suppose if 50 gets attracted, generally depreciation format means what? Opening additions minus sale value. Am I right? But if at all, this is when this format I will follow when if depreciation is applicable. Suppose if capital gain is applicable, I'll reverse it. First sale value I'll put, then opening value minus additions. Then what I will get is capital gain or loss. Section 50 format. What is section 50 format? You know, amount received on part of a block or full block transfer. Amount received on part of a block where the amount is more than the block value. Am I right? Or full block transferred, whatever amount, whatever. Okay, put it. Minus opening WDV of the block minus additions during that block. You reduce it, then what you get is either short-term capital gain or short-term capital loss. This we already know it. Able to understand. But remember, if at all you are transferring part of a block and the amount received is less than this. Remember I told you, part of a block, no capital loss question arises. Part of a block you transfer, value is still there, depreciation will come. But if part of a block you transferred at higher value than this, then short-term capital gain will come. If full block is transferred higher or lower, it doesn't matter. Short-term capital gain, short-term capital loss will arise. Yes or no? Then there is another computation format which is slump sale. Okay, slump sale. You can revise my just 50B slump sale and all is covered in my full chapter. Please cover there. Okay, full chapter I have given in the marathon, right? That you cover. Now I will discuss 48 format now. Able to understand everyone? Now 48, how to compute capital gains. Just like any other head of income, revenue minus expense is equal to profit. Capital gain means what? Nothing but profit. What is the difference between profit and gain? What's the difference between profit and gain? Both are same. Don't try to differentiate. Both are same. No difference. Depending on the context we use it. Understood? So you may call it as profit, you may call it as gain. At the end of the day, it is sale minus purchase is equal to something. That's it, right? Sale minus purchase is equal to something. Is equal to, you may call it as profit, you may call it as gain. Tell me, am I wrong if I use them interchangeably? No, nothing wrong. Able to understand. Then the why law is using, I told different people at different points of time use different words. That's it. So don't try to interpret. Both are same. Sale minus expense is equal to profit. Now in 48, instead of calling it as revenue, we call it as full value of consideration. What do we call it as? Full value of. Don't write in exam sale consideration. Don't write in exam sale consideration. I am telling you right now which format of capital gain computation? 48 format of capital gain computation, where this format is used. If at all you are selling any capital asset, not a block of asset, that's it, this format is applicable. Any capital asset you sell, shares, bonus shares, right shares, debentures, gold, jewelry, sovereign gold bond, electronic gold receipt, jewelry, archaeological collection, painting, drawing, sculpture, land and building, only land, any capital asset you sell, doesn't matter. Full value of consideration. We call it as what? Full value of consideration. Sale consideration is not the right word. What is the right word? Full value of consideration. Identify that. Minus transfer expenses, reduce it. That's nothing but we call it as selling expenses. Nothing but we call it as selling expenses. Then what do you get is called as net consideration. Minus, tell me, I could able to sell this asset because earlier I bought the asset. Because earlier I bought the asset. Cost of acquisition, reduce it. Then sometimes no, I will buy the asset and I might add some additions to it. I might do an improvisation to it. Am I right? Cost of improvement. What is it called as? Cost of improvement. Okay, that's actually called as what? Cost of improvement. Then what you get is either long-term capital gain or short-term capital gain, gross. That is actually called as gross long-term capital gain or short-term capital gain. If it is negative, it's a loss. If it is negative, it's a loss. Minus 54 EC, 54F. I'm only talking about immovable properties and shares and securities maximum. Okay, I'm not talking about anything else. That's the reason. 54B, 54D. There are two more sections which are there. In our syllabus, 54 series, totally 5 sections we have. 54, 54B, 54D, 54 EC and 54F. We have 5 sections in our syllabus. Okay, fine. So you reduce that exemption. Then still if some amount is there, that is taxable long-term capital gain, short-term capital gain on this. Able to understand? On this, the tax rate will apply. What is the tax rate? Suppose if it is a long-term capital gain, 12.5% tax rate. Suppose if it is a short-term capital gain, then I should look at. Is it a 1 year short-term capital gain? 1 year short-term capital gain, 20%. If it is other short-term capital gain, normal rates. Am I right? What is normal rates? If it is a partnership firm, flat 30%. If it is a company, flat 30%. If it is a foreign company, flat 40%. If the individual, slab rates. Default tax regime, slab rates. Easy. This is how you should compute capital gains. Now, what do you mean by full value of consideration? What do you mean by transfer expense? What do you mean by cost of acquisition? What do you mean by cost of improvement? What are 54 series? What is a long term? What is a short term? If at all we answer these questions, topic is over. Am I right or not? Yes or no? Now, see how beautifully we discuss capital gains. Understand? It's never mugging up that there's no, look at how I'm approaching it. Okay? Now, tell me, when do I say it's a long-term capital gain or short-term capital gain? We know that capital gains are two types. One is long-term, another one is short-term. Why I need to divide like this? Because tax rates are different. Simple reason. The tax rates are different. Long-term gain, I don't want to collect more tax on them. They're long-term people. I don't want to punish them. Those who gain in short term, I want to punish them more. I want to tax them more. Are you getting it? Patience has to be rewarded. Long term means patience. Simple logic. So the government has a very clear-cut logic of long-term capital gains has to be tax rate, lower rate, short-term rate, higher rate. Since the tax rates are different, the gains are different, long-term, short-term. Now, when you get a long-term, when you get a short-term, simple. Underlying asset, what are you selling? What are you selling? If at all you are selling, sorry, I will not use the word sale. Here onwards, I will use the word transfer. I will use the word transfer. If you are transferring long-term capital asset, then the gain is a long-term capital gain. If you transfer a short-term capital asset, then the gain is a short-term capital asset. Easy. How do I know whether an asset, is a long-term capital asset or short-term capital asset? How do I know that? It depends on period of holding. It depends on period of holding. What do you mean by period of holding? Date on which asset entered my hand till the date when I transfer. Simple. That's called acquisition date till transfer date. So what is period of holding? Date of acquisition to date of transfer. If this is the period, this is the period I should look at to determine whether an asset is a long term or short term. Fine, I agree. So whether the asset is a long term asset or short term asset, period of holding is what criteria? How much period? What is it? How much period? Very simple. The period is, look at this. The period is for listed securities. What is it? Listed securities. Units of equity oriented fund. They removed the word mutual here. Remember, equity oriented fund. It can be a mutual fund. It can be a ULIP. It can be a mutual fund or it can be a ULIP, insurance company related fund. Both are considered. Unit Trust of India, zero coupon bonds, 4 assets. Okay. 1. listed security. Remember listed security, remember within bracket other than units is there. By the way, some hard copies, no, the strike is missing, please strike it. In the hard copy, if at all strike is missing, please use the strike. Please strike it. In the hard copy, if at all you are using my book, other than units word is there, please strike it. Strike it. There is a meaning why I striked it. I kept and striked it. I think while we are ordering, no, it was missed. The strike was missing. Okay. So hard copy is strike is missing. Please put the strike. Now, other than units, listed security. Security means what? It can be share, it can be bond, it can be debenture, it can be unit, it can be derivative. It can be derivative. Now, units, debentures, bonds, shares, securities, derivatives, getting it, all of them, if at all they are listed, then that comes under listed security. Example, units of a mutual fund. SIP, you might have heard in the market, no, SIPs, listed SIPs, ETFs, gold ETFs, silver ETF, yes or no, all these ETFs, all that ETFs, mutual funds, everything comes under listed security point. Are you clear? And then units of equity oriented fund. Equity oriented fund, listed or unlisted, it doesn't matter. If it's equity oriented fund, that's enough. Even unlisted equity oriented fund will come under 12 months criteria. Then units of UTA, zero coupon bonds. For all these four assets, if the period of holding, if the period of holding is up to 12 months, if the period of holding is up to 12 months, then it's a short term capital asset. Suppose I'm holding it for more than 12 months. Suppose I'm holding it for more than 12 months. Then it's a long term capital asset. When you are counting the holding period, acquisition date is there, right? Count it. Transfer date is there, right? Don't count it. Simple. Able to understand? Preceding the date of transfer, up to that date. For example, today I am selling the capital asset. For example, today let us assume the date is 10th May 2026. Let us assume 10th May 2026. 10th May you are selling, right? Selling date don't count. Up to 9th May only you should check. Up to 9th May, if it is exactly 12 months, short term capital asset. If 9th May is 12th month crossed, then that's a long term capital asset. By the way, 12 months criteria is applicable only for 4 assets. Guys, look at all of them are shares and securities. Listed security, equity oriented fund, unit trust of India units, zero coupon bonds. Only 4, 12 months. Sir, I'm having some other assets, sir. I'm having a physical jewelry. My wife is having jewelry. You know, I have a house. Then what about that? 24 months. What is the holding period? 24 months. This holding period will decide whether the asset is a long term or short term. Are you clear? Now, sometimes what happens is my father purchased the asset. Capital asset is purchased by whom? My father. Or probably my grandfather would have purchased it. Later, I was inherited that asset. Later, I would have inherited that asset. Then holding period. For example, my father purchased it in 2001, 2002. I inherited that. Let us assume I'm talking about house property. I'm talking about house property. I inherited that in 2025, 2026. Exactly on 10th August 2025, I inherited. I inherited when? 10th August 2025, I inherited. Okay. Now, immediately after inheritance, I sold that house 31st December 2025. Immediately on 31st December 2025, I sold that house. Now tell me, period of holding generally means what? Tell me, when the son acquired the property, 10th August. When the son sold the property, December. The gap is less than or equal to 24 months. Technically speaking, what is it? Short-term capital asset. Am I right? But there is a section called 49 subsection 1. There is a section called 49, leave it, that's a cost section. There is a section called 2 subsection 42A. It has a proviso. What that section says, you know, what that proviso says, you know, if the SSE acquire the capital asset, if the SSE acquire the capital asset by inheritance, succession will, are you getting it? Gift, What is that another item? Gift. Then previous owner holding period should also be included. What is it they are saying? Previous owner holding period also should be included for determining whether the asset is a long term or short term. This is what 2 subsection 42A talks about. By the way, 242A, what it talks about? What is a short term capital asset? Right now I told you 4 assets 12 months, 1 asset 24, remaining assets 24. By the way, tell me, remaining assets means what? Remaining assets, other assets means what all comes? Immovable property, yes or no? Immovable property, unlisted shares and securities, am I right? Unlisted shares, unlisted debentures, unlisted bonds, all this comes under. Jewelry, archaeological collection, sovereign gold bond, electronic gold receipt, yes or no? Then all this all come under what category? 24 months category. Only remaining will come under 12. What is this 24-12 holding period? Generally holding period means what? From the acquisition date till the transfer date. Am I right? From acquisition date to transfer date. But if at all you are getting this asset, how did you acquire the asset? No, you acquired the asset through inheritance will succession. If you inherit the asset through these 3 modes, okay, then previous owner holding period will also be considered. Now tell me, my father or grandfather would have purchased. Who is previous owner? By the way, who is previous owner? Suppose I inherited from my father, then father. My father also inherited from his grandfather, then grandfather. If my grandfather also inherited from great grandfather, then great grandfather. Now from my point of view, who is previous owner? You know, my all ancestors, the last ancestor who originally bought this. Who originally bought but not inherited. Who originally bought. He is previous owner for me. Not my father alone. Able to understand? Not my father alone. For example, my father inherited in 24-25. I inherited it from 25-26. But my grandfather purchased it in 2002-3. Previous owner for me is the grandfather who originally purchased it. Who does not acquire the asset by the mode which I acquire. Are you getting it? Previous owner means that. Not previous owner immediately who is the previous owner, not that. Previous owner means the one who originally purchased the asset previously, where he inherited, then I inherited. Okay, we are all not owners actually, we are all inherited. The one who originally purchased the asset is called as previous owner. Are you clear? Now suppose now I inherited, getting it? Now 2001-2 onwards, if at all previous owner inheritance is there from original acquisition by previous owner till the date I sell it, this period is more than 24 months. Therefore it's a long-term capital asset, and automatically it's a long-term capital asset. Automatically the gain or loss that you get is long-term capital gain. Understood? Now previous owner point is applicable for amalgamated companies. Previous owner point is applicable for resulting companies. Previous owner point is applicable for various other cases also. For example, originally I purchased preference shares, later converted into equity shares. Okay, previous asset preference share holding period will be considered for equity share holding period. Originally I purchased debentures, later converted into shares, debenture holding period will be considered for equity share holding period. Like that some circumstances were there that you can read on your own. Right now I am predominantly focusing on immovable property taxation. Are you clear? Next, now I hope you understood how to decide whether an asset is a long term or short term. Okay, be it immovable property, be it jewelry, be it anything, you bought the asset from the date of purchase. Previous owner bought the asset from previous owner purchase date to your date. Able to understand? Suppose no, I bought a land from my friend 2005-6. Example, the same transaction 10th August no, I bought a land from my friend, my brother. I paid him money and I bought it. Does previous owner concept apply? No. Previous owner concept is applicable when he gifted me. Applicable. I inherited. Applicable. Through will I got. Applicable. Through succession or partition of HUF I got. Previous owner concept is applicable. Sir, I paid money and then got this, sir. Not applicable. Able to understand? If you have inherited, then only this concept is applicable. Clear everybody? Yes. So which means we know now what is a long-term capital asset, what is a short-term capital asset. This previous owner topic once again at some other place also I will discuss. Clear? Now we understood what is a long-term, short-term. Now let's understand what is full value of consideration. What is full value of consideration? Just 1 minute. The energy consumption in marathon, no, it's equal to 5x of your energy. If you're sitting for 7 hours, how much energy you consume? I consume 5 times more energy in a marathon. It's 1:5. If at all I'm taking 7-hour session in a day, it's equal to 35 hours of non-stop work. A desk job is there, right? Teaching is really tough. It's not that easy. Teaching is extreme hard work. A normal session is 2 hours. 2 to 3 hours of a normal desk job. But a marathon, you see the intensity. I have to cover entirely within the shortest time, and also make sure you understand that. It's 4 to 5x of the energy which I consume. So if you feel tired for 8 hours, imagine me working 40 hours. You just sit in my position and think. You just try explaining your friend one topic. You'll understand. Just sincerely put an effort and try to explain him. You will take 1 hour rest after that. Okay, so this is not that easy. Yes, let's continue the discussion. How to compute capital gains? I already told. There is a format. First, we have to compute full value of consideration. I'm discussing only for immovable property. Then you should reduce transfer expense. Then you get net consideration, cost of acquisition, cost of improvement, then all this. Am I right? Now look at full value of consideration. What is the full value? Sir, I am selling an immovable property, sir. I'm selling an immovable property. I sold it for 1 crore. Sale value is how much? 1 crore. But whenever you are selling or transferring immovable property, there is one more section says 50C. There is one more section called 50C. What that section says, you know? Stamp duty value, please compare. Your sale value, please compare with stamp duty value. Now, for example, if stamp duty value is more than 110% of actual consideration, if stamp duty value is more than 110% of actual, then full value of consideration is equal to stamp duty value. Otherwise, full value of consideration is equal to actual consideration. Very simple. Actual consideration 1 crore. I saw stamp duty value. It was 1.3 crore. Stamp duty value is more than 110%. Therefore, full value of consideration is equal to 1.3 crore. Do you agree? Suppose no, stamp duty value is just 1.05 crore. 1 crore 5 lakhs only. Is it more than 110%? No. 110% of actual means into 110% means how much? 1.1 crore. This is not exceeding that. Therefore, full value of consideration is equal to stamp duty value provision will not apply. Am I right? So how much is the consideration? 1 crore only actual consideration, because stamp duty value is not more than 110%. Are you clear? Everybody. Now, stamp duty value means what? Stamp duty value generally means what? Stamp duty value generally means date of registration, nothing but date of transfer value. Generally, on which date value you should take stamp duty? Date of transfer stamp duty value you have to take. But sometimes in exam, they will give you stamp duty value on date of agreement. What is it? Date of agreement. And also they'll give you stamp duty value on date of transfer. Both they will give you. For example, actual consideration is 1 crore. Stamp duty value on date of agreement is 1.05 crore. Whereas stamp duty value on the date of transfer is 1.3. Transfer means registration date. Agreement means general immovable properties. No, it's not like I will go, I see the land, I'll call the owner, hey, I'll pay money, right? No, go register. No, it's not. 3 months, 4 months gap will be there. From the date you enter into agreement to buy, to sell, till the date of transfer, there will be some 3-4 months gap, and within that time stamp duty values might get revised. Are you getting it? Now here in exam they gave you 2 stamp duty values. Now which one I should take? Look at agreement value is given, registration value is given. You have to take agreement value if the following conditions are satisfied. What are they? If the following conditions are satisfied. Only one condition. You must receive consideration either full or part. You must receive consideration full or part. You can also call it as advance. If at all consideration is received either in full or in part, that is advance. Are you clear? On or before agreement date. Remember, on or before agreement date. How did you receive the consideration, ma? By approved modes. By approved modes. Approved modes means what? Account pay check, account pay draft, and prescribed electronic modes. If you receive the consideration, one, you must receive advance. 2, when you should receive, condition number 2, on or before agreement date. 3, how you should receive? Other than cash, other than bearer check, other than bearer draft, nothing but you should receive in prescribed modes. 1, advance must be there. 2, on or before agreement it must have been received. That too, it must be received in approved mode. Proof should be there. Cash, how can you prove? How can you prove cash advance? You can't prove it. How can you prove? If you receive it through bank, you can prove it. If it is received through account pay check, account pay draft, or electronic fund transfer, you can prove it. Am I right or not? How much advance? 1 rupee also fine, 10 rupees also fine, 1 lakh is also fine, doesn't matter. If these 3 conditions are satisfied, then stamp duty value on agreement date will apply. Stamp duty value on agreement date will apply. Any one condition failed, you didn't receive advance, or you received advance not on agreement date but later, or you received advance in cash. Example, condition failed, then by default stamp duty value means what? Transfer date stamp duty value. Are you clear? Now look at in this question. For example, in this question all the 3 conditions satisfied, so automatically stamp duty value means what? 1 crore 0.5, which is it more than 110% of actual consideration 1 crore? No. Therefore full value of consideration is 1 crore. What if any one condition failed? Automatically stamp duty value will be 1.3, which is more than 110%. Therefore full value of consideration will be 1.3 crore. See how that advance plays an important role. That's it. Full value of consideration is over. Do you understand? 50C, I'm talking only about immovable property. Immovable property related provision is over. Now next, in this example I'm continuing, the same example I'm continuing. Let us assume registration date value is applicable. Here no, assessee has not received any advance. Okay, he has not received advance, or received but in cash he received. Therefore stamp duty value on registration date is applicable. Accordingly full value of consideration is 1.3 crore. Are you clear? Minus transfer expenses. I'm selling a land actually, or building I'm actually, or residential house I'm selling actually what? Residential house property I'm selling. Buyer I found, no, he was found through a broker. The broker is asking 1% consideration. The broker is asking 1% commission. This commission is calculated on stamp duty value consideration. Commission and all brokerage is calculated on actual. Broker and all doesn't know what is SDV. He will take it on generally on consideration. 1 crore into 1%, 0.01. Am I right? 1 lakh. So let me put full values. Okay. Okay. Now 1 crore 30 lakh. Hello everyone. Then 1 lakh. Then what you get is 1 crore 29 lakh. This is net consideration minus cost of acquisition minus cost of improvement. Now cost of acquisition, I didn't acquire it. My father, no, my grandfather acquired in 2001-2 year. He acquired it in 2001-2 year he acquired. At what price he acquired? He acquired, my grandfather acquired, let us assume my grandfather acquired in 2001-2. Okay, here itself I'll put, my grandfather acquired in 2001-2002 year. Okay, he acquired this house at just 1 lakh rupee. At what price he acquired? 1 lakh. I didn't buy it, but my grandfather bought. Now what is the cost of acquisition? Exactly 1 lakh. Exactly how much? 1 lakh. Now the first benefit of doubt, sir, first of all, is this a long-term asset or short-term asset? Long-term capital asset, because no, 2001-2 when my grandfather purchased it till 25-26, the gap is more than 24 months. Therefore it's a long-term capital asset. Since my grandfather acquired it, yes or no? Long-term. Now sir, immediately you might get a doubt, sir, long-term is eligible for indexation. No indexation at all. Immediate second out. Sir, but if the property was acquired before 23rd July 2024, if the property was acquired before 23rd July 2024, indexation is there? No. No. In the computation of capital gains, indexation point will not come. Before 23rd July 2024, if at all you acquire a capital asset, indexation facility option is there, right? That should be done in tax computation time. That should be done in tax computation time. Recent Jan exam or before September attempt, MCQs were asked, 3 MCQs were asked on this. Able to understand? Only a tax computation time, 23rd July logic I will see, otherwise I will not see. Income computation, remember, both are different. Capital gain computation is different, capital gain tax computation is different. Hello, I hope you know it. Tax computation means liability computation. That time the procedure is different. Gain computation, no indexation at all, because you are selling it now in 25-26 year. Yes or no? No indexation. Any long-term capital asset, you doesn't matter. No indexation at all. Remember this only. I will tell you where indexation comes. Okay. Now, so my previous owner purchased at 1 lakh. Cost of acquisition is cost to previous owner. Guess what? My grandfather, no, he has improved the property. When he purchased, no, it was just a ground floor and then land. Later he constructed 1 floor in 2003-2004. He constructed 1 floor in 2003-2004. So he constructed 1 floor 2004. The construction cost is 4 lakh. That's it. Claim it. Later my father inherited, no. In 2011-2012, after my father inherited, no, he constructed for 10 lakhs 1 more floor. He constructed for 10 lakhs 1 more floor. Finally it came to me and I sold it. New generation. Yes or no? So this guy sold it on 31st December for New Year party. All their ancestors' effort of patience, everything is gone in one night. Next. Send 1 crore 29. Yes or no? Now you look at cost of acquisition, cost of improvement, cost of improvement. This guy doesn't make any improvement. Okay. Now directly he sold it. Suppose if the current owner also made improvement, reduce that also. Previous owner made improvement, reduce that also. Until now clear? Now tell me, what is the long-term capital gain? 1 crore 29. How much more? 1 crore 14 lakh. Are you clear? Do you understand until now? Now one more concept I'll bring. Until now clear everybody? Suppose no. By the way, tell me, if myself purchased in 2001-2 and myself sold in 2025-26, the answer will be same. I purchased at 1 lakh. Acquisition cost same. I improvised at 2 lakhs, 4 lakhs like that. Same, yes or no? Whether my previous owner acquired it or I acquired it, cost of acquisition remains same. Whether my previous owner spent improvement or I spent on improvement, improvement cost is same. Do you all agree with this? Yes or no? Now, suppose either the SSE or the previous owner, any of them, whether you acquired it or previous owner acquired it, cost of acquisition means acquisition cost, actual cost. Cost of improvement means actual cost of improvement. Yes or no? Suppose if the property, suppose if the SSE or previous owner acquired the property before 1st April 2001. What is it? Before 1st April 2001. Oh, if it is before 1st April 2001, you or your previous owner acquired, then cost of acquisition means what? Basically actual cost. Basically what is cost of acquisition? Actual cost. Or fair market value on 1st April 2001, whichever is higher. This provision is mentioned under 49. No, 55. What is this provision is mentioned under? What is cost of acquisition? 55 talks about. 55 section is explaining about what is cost of acquisition. Where to find this cost? 49 tells you. If at all you are getting it from previous owner, 49 says cost of acquisition will be cost to previous owner. What is cost of acquisition? 55. 55 talks about meaning of cost of acquisition. 49 talks about source of cost of acquisition. Hello? Able to understand? Both are cost of acquisition sections, so no. What is the difference? 55 explains what is cost of acquisition. 49 says source. Okay, 55 is the section which says cost of acquisition means actual cost. If the SSE acquired the asset before 1st April 2001, if the previous owner acquired the asset before 1st April 2001, then the cost of acquisition will be market value on 1st April 2001 or actual cost, whichever is higher, provided in case of immovable property, this value whichever is higher, 1 lakh is the actual cost ma, fair market value is 5 lakh ma. On 1st April 2001, fair market value 5, whichever is higher means what? 5. But guess what? Stamp duty value on 1st April 2001 is just 3 lakh. Stamp duty value on 1st April 2001 is how much? Just 3 lakh. Then restrict to 3 lakhs. Restrict that to what? 3 lakh. Now look at this information. If at all in exam they give you actual cost. By the way, this market value on 1/4/2001 and all, when I will see? When the asset was acquired by me or my previous owner before 2001. 1985, 1990, 1995 they acquired it. That time only I will apply this provision. Otherwise I will not apply this provision. If the asset is acquired on or after 1st April 2001, if the acquisition date, I will not apply this provision. Cost means actual cost, that's it. But if it is acquired before 1/4/2001, then cost means actual or market value, whichever is higher. But remember, it should not exceed stamp duty value on 1/4/2001. It should not exceed. Suppose fair market value 2 lakhs only, but stamp duty value 3 lakhs. Whichever is higher means 2 lakhs. That's it. Stamp duty value I will ignore because it's already higher. Suppose if market value is more than stamp duty value, then stamp duty value. Clear? That's it. Now, accordingly, suppose this information we will substitute. Then automatically my answer will change. Yes or no? Here, how much I'll put? 3 lakhs I will put here. If at all that information is given in the question, I will put what? 3 lakhs. That's it. Immovable property taxation, long-term capital gain computation is almost over. Are you clear? Further, when previous owner acquired the property before 1st April 2001, and any improvement information is given in the question before 2001, ignore. Cost of improvement before 1st April 2001, don't consider, because you are considering market value on 1st April 2001 already. Yes or no? So the provision says improvement before 1st April 2001 to be ignored. Any improvement expenditure on or after 2001, consider. Whether you spend, consider. Your previous owner spend, consider. No problem at all. Understood? Now you understand how to compute cost of acquisition, cost of improvement, capital gains, all that. Very easy. Yes or no? I will come to tax computation later. I'm not explaining tax computation part. Gain computation, you understood? Yes. Finally, I got a capital gain. How much gain I got? Let us assume 3 lakhs point ma. Let us assume 3 lakhs logic ma. So 1 second I will rewrite it. Okay. 1 second I'll rewrite it. How much is this? 1 crore? 1 crore 30 lakh. Hello, am I right? Minus 1 lakh. Net, transfer. So net consideration 1 crore 29 lakh minus cost of acquisition 3 lakh. Yes or no? Cost of improvement. How much is the cost of improvement? 4 plus 10. 14 lakhs. Am I right? Minus cost of improvement 14 lakh. Hello everyone. What is the long-term capital gain? 1 crore 12 lakhs summa. That's it. Now I got 1 crore 12 lakhs long-term capital gain. Now I got to know that on this I have to pay 12.5% tax. On this I got to know that I have to pay 12.5% tax, and I was disappointed completely. 1 crore 12 lakhs multiplied by 12.5%, almost 14 lakh, 13 lakh rupees approximately I'm getting. 14 lakhs approximately I'm getting. That too they are saying more than 1 crore surcharge 10% they are adding, 15% they are adding. That too they are saying 4% cess. Array, by the time I'm feeling happy that I made a profit, you are making me sad with the tax amount. Yes or no? Now department, I contacted one CA. He told me an idea. Sir, why did you sell the house, sir? Are you going to sell a rented house? Hello, mister. I want to buy one more house. Array, sir, you're doing blissful thing. You buy one more house. You don't have to pay tax on this. Now, okay, sir, tell me what should I do? Do one thing, sir. Very simple. You sold a house, right? You sold a house, right? Yeah. How much amount you got? Gain, how much you got? 1 crore 12 lakhs gain I got. Do one thing, sir. Invest equal amount. Invest equal amount. Go immediately buy one more flat and come back. SSE went, found immediately one nice flat. He invested 1.5 crore and then bought the flat. This entire capital gain is exempted. Therefore, balance gain is 0. Are you clear? Now the tax is 0. By the way, he bought another house, right? He bought another house. 1.5 crore he bought. No, but exemption cannot be more than your income, right? Exemption cannot be more than your income. Suppose no, he bought 70 lakhs house only. He bought 70 lakhs house. Then I will give exemption how much? 70 lakh. Now, where is this exemption, sir? This exemption is under section 54. This exemption is under section 54. What section 54 says? What section 54 says? Suppose if the SSE has a long-term capital gain more than 2 crore. SSE has a long-term capital gain less than or equal to 2 crore. The section divides how much gain you got into two parts. How much gain you got into two parts. Did you got gain more than 2 crore? Then this part is applicable. Did you got gain more than less than or equal to 2 crore? Then second part is applicable. Okay, sir. What is this? If at all you have a gain, of more than 2 crore, no? Okay, no problem. I'll give exemption. I'm not denying it. I'll give exemption. But remember, you can buy only one more house. You can buy only one house, that too in India, where you have to buy one house. For example, no, the capital gain is 3 crore ma. Now, how much exemption he can claim? If at all he is buying one house only. Sir, I invested, 3 crore is a capital gain. I bought one house, 2 crore, another house, 1 crore. 2 houses I bought. No, mister, any one house only I'll give exemption. You buy one house worth of 3 crore, I'll give 3 crore exemption. I don't have a problem. Because your gain is more than 2 crore, big gain. I will give you exemption only for one house property purchased in India. You sold house, you buy the house. That's what 54 condition says. Suppose no, you have a capital gain less than or equal to 2 crore. Then I'll do one thing. You can happily buy 2 houses. You can happily buy only 2. You can happily buy 2 houses. Now, suppose no, you got a gain of 1.5 crore. You sold this house and want to give to your 2 sons 2 houses. Okay, they are a very small SSE. You want to give to your 2 sons a gift. For that reason, you bought 2 houses. Each one is 75 lakh. But you can still claim for both the houses exemption. And guess what? You can sell one house, made a capital gain less than 2 crore, and you're investing in 2 houses, right? And both the houses are eligible, right? Provided original gain should not exceed 2 crore. Now you're eligible to invest in 2 houses, right? 2 houses option is there only one time in the lifetime of the SSE. 2 houses option will be there only one time. Sir, I have one house in 2001-2. That I sold it now. I got a gain of 1.5 crore. Now I invested in 2 houses. Happily I'll claim exemption. Next year, I have one more house which I bought in 2001-2. That house also I am selling it. Next year also I want to invest in 2 houses. Can I do so? No. But can I invest in one house and claim exemption? Yes. Every time you want to, you sell one house and invest in one house. You want to claim exemption every time. Happily you can do lifetime. Are you clear? Further. Maximum exemption under 54 cannot exceed 10 crore. Maximum exemption under 54 cannot exceed 10 crore. That's it. Now, accordingly, in this case, he got a capital gain less than 2 crore ma. He also invested only in one house value 1.5 crore. But still, you get exemption. Therefore, balance tax is 0. Until now, clear. Suppose SSE, he don't want to invest. SSE, let us assume the same long-term capital gain. I'll go to the next page. Suppose SSE has a long-term capital gain of 1 crore 12 lakhs ma. Okay, he don't want to invest. He wanted to invest it in gold because gold is giving more returns. So he want to invest this in gold and then make more profit out of the gold in long run. This is what SSE perception, which means he don't want to invest in another house. If at all he don't invest in another house, will he get the exemption? He can't. Now he has to pay tax rate. Now we are computing tax on this now. Okay, look at the tax. What is the section? Section 112. What is the section applicable? 112. Okay, how much is the tax? 12.5%. Yes or no? 12.5. How much is the tax? Tell me. Basic tax only you tell me. Basic tax alone you tell me. How much? 14 lakhs exactly. Oh, nice. How much is the tax? 14 lakh. Only basic tax is 14 lakh. Long-term capital gain tax is 14. But here no. SSE got to know one provision is existing in the olden days. What provision SSE got to know, right? At the time of paying tax, are 14 lakhs. My friend also recently sold, he didn't pay this much tax. And moreover, he told me indexation, something like that, he told me. Okay, what is this? There is one provision. Okay, there is one provision. What that provision says, 55 section only. This entire discussion is in 55 section only. What that provision says, if at all you acquire the property, if at all you acquire the property before, if at all you acquire the property before 23rd July 2024, if you acquire the property before 23rd July 2024, this date is important for you to remember, but you are selling it, acquisition date is before 25, whereas subsequently you are selling it on or after 23rd July 2024, then you have an option to pay tax. Then you have an option to pay tax on the capital gain computed with indexed cost of acquisition, with indexed cost of improvement. This point I will only check when I am doing tax computation working note. I will not apply this in the main solving problem. In exam, no, they'll give you all this. They'll give you this information only. MCQ 1, what is long-term capital gain? Long-term capital gain is 112 only. Long-term capital gain is 112 only. Why? While computing the gain, indexation concept you should not consider. When you should consider indexation concept? When you are computing the tax liability. Only at a tax liability computation step this point and all comes into picture. So they'll give you one case study. First MCQ, tell me long-term capital gain accessible to tax. Without indexation you should do. 23rd July concept is irrelevant. Tax amount how much? Beneficial to the SSE. Which is beneficial. One option is what? You pay 14 lakhs. That is one option. Another option is what? This one. What is another option? Fine. I will try here. I will try. What is the net consideration ma? 129 lakh. Correct? Minus what is the cost of acquisition ma? Now I will take indexed cost. Because no, this asset was sold. This asset was held by me before. This asset was acquired by me or my previous owner before 23rd July. Therefore, I am eligible for indexation. Cost of acquisition is 3 lakh. Hello? Cost of acquisition is 3 lakhs. Indexation, numerator, transfer year, denominator, acquisition year. Here, property was acquired in 0102 year. Hello? And transfer is in 2526. 2526 number is what? Here it will be there, you see. 363, huh? What is 2526 number? 376, sorry. 363 last year number. 2526. See, for you, index number changes now. In exam, they'll give you, don't worry. In exam, transfer year, 376. Numerator is what? 376. Tell me the value. 3 lakh into 376 by 100. Just write 3. 3 multiplied by 376 by 100. 11 lakh. Okay, 11.3 I'll round off. Okay, can I? 11 lakh 30,000 I'll round off. 11 lakh 30,000. Okay, minus indexed cost of improvement. In our example, total improvement is 14 lakhs. Let us assume for convenience sake, it is only incurred in 1 year. Let us assume it is incurred in 5-6 year. Let us assume improvement is incurred in which year? 5-6 year it is incurred. Now tell me, divided by 5-6 number. 5-6 number is what? 117. Yes or no? 5-6 number is 117. Whereas here, numerator 376. How much? How much? How much? 14 into 376 by 117. 40. 45 round off. I'll round up to 45. Now, what is the long-term capital gain? Now tell me. 72 lakh 70,000. Are you clear? What is the long-term capital gain? 72 lakh 70,000 into, you know what? Old capital gain tax rate is how much? 20%. What is the old capital gain tax rate? 20. I'll apply 20%. What is the basic tax? What is the basic tax? 14 lakh? 14.5. Whereas if I go with the latest option, 14 lakhs my tax. If I go with the old option, I'm getting more tax. I will go in this case at the option 1. Suppose if at all the capital gain is lesser with indexation, and if this tax amount is, let us assume 8 lakhs only I'm getting, if at all basic tax I'm getting is 8 lakhs, then I will go with option number 2. Tell me, option number 2 comes into picture when that's an immovable property, land or building or both. It should be either land or building or both. First condition. Second, the transfer is by individual or HUF. The transfer is by individual or HUF. Condition number 3, they acquired that immovable property before 23rd July and they sold it after 23rd July, and it should be a long term. Then only indexation concept and all will check. We will only check indexation for computing capital gains tax, and on that gain 20% tax rate will apply, which is our old tax rate on long-term capital gain. Our old tax rate on long-term capital gain is how much? 20. Now, if at all, even though the tax rate is high, indexation facility is there, so gain will be very, very low, and apply higher tax rate 20 and see the final tax amount. If this tax amount is lower than our latest, I will go with the option number 2 tax. Now this option number 1, option number 2, indexation, everything comes into picture at which level? Tax computation level only. If at all they are asking what is the capital gain, you should only put without indexation. Capital gain computation is without indexation. Tax computation only we will check with indexation. Checking only, that is. If that is beneficial, we choose that. If it is not beneficial, we choose this only. Even if you choose indexation which is beneficial, it is only at tax computation level. You will not modify the main problem. Main problem is always same without indexation. Only in tax computation time only we check entire this. That's it. Immovable property transaction is over. Immovable property taxation is over. Easy or not? I told period of holding concept. I told long-term capital asset definition. I told previous owner concept. I told cost of acquisition. I told full value of consideration. I told 50C. I told 54 exemption. What else is required? I have one more example. Right now in our example, what we sold is immovable property. What we sold is immovable. If it is a residential house, 54 applicable. If it is just an immovable property, land alone you are selling, 54 does not apply. Rather, 54 EC will apply. What is applicable? 54 EC is applicable. Now in 54 EC, there is a latest amendment. Okay, nothing. 2 more bonds were notified. Okay, now what is 54 EC? Sir, in our example, I got a capital gain of how much? 1 crore 12 lakh. By the way, in our example, what I sold is house property. For example, no, I have an idea. Sir, I don't want to invest entirely in the house, sir. I want to invest only 50 lakhs in the house property. Okay, claim 54 under section 54, invest it, no problem. I also want to invest in 54 EC bonds. I also want to invest in 54 EC bonds. I want to invest. Can I invest? Yes. Within how much time? 6 months from transfer date. What is it? 6 months from transfer date only you can invest. You should not invest otherwise. 6 months from transfer date. Sir, I invested within 6 months from transfer date. 70 lakh I invested. Still under 54 EC, maximum investment in bonds permitted is 50 lakh. You can't claim exemption for more than 50 lakh. You invested 70, but you can claim only exemption of 50. Balance 12 lakhs is taxable. Able to understand? Sir, now here I bought the house, right? Here I bought the house, right? At what price I bought the house? At what price I bought the house? 50 lakh you bought the house. Sir, at the price of 50 lakh you bought the house, right? Within what time? Now tell me. Sir, I sold a house property, sir. I also want to invest in house property. I also want to invest in house property. Within what time I can invest? Do one thing. You can buy this or you can construct this. Anything you can do. You can buy. You can buy in advance and keep. You are selling your existing house, right? Before selling existing house, buy the new house and keep with you in advance. Sell it and then move here. Yes or no? 1 year before you can buy in advance. Maximum 1 year prior to the date of transfer. So buy 1 year in advance you can buy, or 2 years post transfer date. Within 2 years you can buy. Construct within 3 years after transfer you can. Are you clear? So I can happily buy. Now look at, I got a long-term capital gain, 1 crore 12 lakhs I have 1 crore 12 lakhs. Now I showed to the department, sir, I have 1 crore 12 lakhs capital gain, sir, but I'm not paying any tax, sir. I told department I'm not paying any tax. Why, mister? Sir, I'm going to buy my house, another house I'm going to buy. Sorry, sir, I'm going to construct a house in next 3 years, sir, so I'm not going to pay tax. Hello, mister. What is the proof that you will construct? What is the proof that you will construct? Already due date for filing IT return came. Sir, you gave section, have 3 years time, go and check. Within 3 years I'll construct and give you the proof. No, I will not allow that. I want to prove that you will construct for sure. Again, after 3 years you will come back and say you didn't construct all that. Appa, I can't. Okay, so what you have to do? Capital gain account scheme. What is it? Capital gain account scheme. You want to pay, you want to claim 1 crore 12 lakhs exemption, huh? Yes, sir. How you want to claim exemption? I will invest entire 1.12 in new house, sir. Do one thing, that 1.12 transfer to a special bank account. Transfer to a bank account. In your bank account only. You go to State Bank of India. Tell them, sir, I want a bank account on a capital gain account scheme. They will tell you how to open it. Open that bank. 1 crore 12 lakhs transfer to that bank. 1 crore 12 lakh transfer to that bank. Yes, I transferred, sir. By what time you should transfer? Before filing IT return. Before due date for filing IT return, you should transfer. You transferred it, then you claim exemption and then you pay zero tax. Sir, what if I didn't transfer to capital gain account scheme within due date for filing IT return? No exemption. Sir, later on I bought really the house. I will not consider. By due date you couldn't prove me. By due date you couldn't prove me. Once 54 is denied, once you denied, it's denied permanently. Later on you really constructed house, you really bought the house, useless. So section says 2 years, 3 years time limit. But do one thing, buy the house right now. Before filing IT return, buy the house. I'll give you exemption. Construct, I'll give you exemption. Or put money in CGS before due date, then I'll give you exemption. You didn't do all these three, gone. You don't get exemption at all. Later on, if you really construct and then show me the proof, I will not take it. That's capital gain account same concept. Everybody understood or not? Which means from long-term capital gain, if I have to claim exemption under 54, either I should buy the house within the due date for filing IT return, I should construct the house before filing the due date, before the due date for filing IT return, or I must deposit the money before the due date for filing IT return. Whatever amount I invested or deposited before the due date for filing IT return, I will claim deduction. Suppose I deposited 1 crore 12 lakhs and I claimed exemption. 3 years over. 1 crore I withdrawn. 12 lakhs is pending in the scheme. That 12 lakhs is unutilized money in the scheme. On the 12 lakh also I claimed exemption here. On the 12 lakh also I claimed exemption. Exempted amount is unutilized. Retaxable as income in that year. It is retaxable as income in that year. Further, new house I bought, right? 3 years lock-in period is there. What will happen if you sell the house within 3 years lock-in period? All that retaxation provisions, in-depth discussion is there. You watch my full chapter. You want to know all that? Watch my full chapter or watch my previous marathon. Are you clear? Watch my previous marathon. Now, finally, I'm concluding this topic. Immovable property itself I discussed in this itself is enough. You want to learn about 1128 111A also, I request you to go with my previous marathon at least, or at least go with my full chapter revision. Better I will conclude the chapter capital gains. Now in capital gains there were 2 amendments happen. 1, 2 subsection 14 capital asset, a minor amendment, not important for you but it's an amendment. And in 54 EC bonds have been added. 2 amendments were added in the capital gains. Just a minute, I'll stop the video and this alone I'll record separately. Okay. Look at. There are 2 amendments in capital gains. One is 2 subsection 14, nothing but 2 clause 14 capital asset definition, and then 54 EC. What is amended in 2 clause 14? Okay, first I will do 54 EC amendment. Very simple, nothing, not a big deal. It's a small amendment only. 54 EC ma, you can see how beautifully I showed everything. If the lock-in period of new asset, if it is sold, how to compute also format I kept. So that how to do retaxation format in exam, how to present, everything is presented drafted like that. So you don't have to worry about how to present also. Next, with examples also I gave. Then 54 EC ma. What is 54 EC? By the way, for 54 EC capital gain account scheme concept do not apply. Remember that, because 6 months only time limit is, you have to invest it. There is no concept of account scheme. Now, 2 bonds were issued, 5-year bonds of HUDCO, 5-year bonds of IREDA. Earlier, you can invest in NHI, RECL, You can invest in Power Financial Corporation, Indian Railway Financial Corporation bonds. They were available in the old list. Even for Jan item, those two are applicable. Later, they have added these two also. Even for Jan item, these two are applicable. But now in the ICA book, they have added within the section itself. Okay. Now, HUDCO bonds, IREDA bonds, both are applicable. IREDA bonds as well as HUDCO, both are new bonds which are added. In any of these bonds, you can invest, but maximum how much you can get exemption? 50 lakh. I bought 20 lakh, 20 lakh, 20 lakh, 20 lakh, 20 lakh. Total 1 crore worth of bonds I bought. Still, I will get exemption 50 lakh. That's it. Now for the bonds, 54 EC, lock-in period is 5 years. You should not even put them for loan for 5 years. You should not even sell them for 5 years. That's it. Okay. Retaxation for 54 EC is different from retaxation under 54. Then there is again forfeiture of advance point is there. Able to understand? There is a forfeiture of advance point. All that is there. That's it. Just a minute. Yeah. One more amendment in capital gain. 54 EC amendment I told. Now one more amendment is, you remember capital gains. Capital asset means what? Property of any kind, movable, immovable, tangible, intangible, business related, non-business related, anything. Bottle is a capital asset. Are you clear? Phone is a capital asset. Calculator is a capital asset. Pen is a capital asset. Everything is a capital asset. But exclusions you see. Personal effect is not a capital asset. What is it? Personal effect is not a capital asset. Like it is movable plus used for personal. Array phone, movable, personal purpose, not a capital asset. Car, movable, personal purpose, not a capital asset. TV, movable, personal purpose, not a capital asset. Suppose if the same phone and same car and same TV forming part of block of asset is a capital asset. Do you understand that? That's it. Now next, we know stock in trade is not a capital asset. Correct? Stock in trade is not a capital asset. However, if a foreign institutional investor, or amendment, investment fund under section 115 UB, this was added in Finance Act 2025. Nothing but securities held by FII, foreign institutional investors, securities held by investment fund, securities held by FII, securities held by investment fund. Okay, they are holding it for trading only, but we still treat it as capital asset. Securities held by FII, securities held by investment fund, they were always capital asset, even though for them it's a business income, even though for them it's a business activity. Investment fund is newly added. Investment fund taxation is there in CA final, not at CA Inter. This is one amendment. That's it. That's it. This is the second amendment. I just briefly told capital asset also definition. Clear, everyone? Now that's it. So we understood immovable property taxation, we understood amendments in capital gains, and now we completed main theme of capital gains chapter. But apart from this, what else is there in capital gains? You have 46 liquidation, you have 46A buyback related point I will cover in other sources, so you will indirectly be covered here. You will have a taxation on 47. What are the cases where capital gains are exempted? 48, just now I covered. Computation format of capital gains. 49, circumstances of how to identify cost of acquisition, in different circumstances, that is 49. 50, depreciable assets computation of capital gains using block of asset. 50A, depreciable assets capital gains for power sector. 51, it is removed, that section was removed. Forfeiture of advance before 1st April 2014. Okay, then 52, we don't have, 52 was removed, 53 was removed. 54, house property, original asset sold and buy house property. 54B, original asset, urban agricultural land, new asset, agricultural land. 54D, original asset, industrial land and building, buy industrial land and building. 54EC, 54F, 54H, extension of time limit. 55A, reference to valuation officer. Apart from that, within 45, we have multiple subsections. Charging section is 45 subsection 1, main charging section. Apart from that, if capital gains arise, generally capital gains is taxable in the year of transfer. But there are some cases where capital gains is not taxable in the year of transfer, but in the year in which consideration is realized. Conversion of capital asset into stock in trade, destruction or demolition of capital asset 45 1A, conversion of capital asset into stock in trade 45 2, compulsory acquisition of capital asset 45 subsection 5. In all these cases, capital gains are computed in the year in which compensation is realized, and time limit for investment in new asset will be counted from the date of realizing the consideration, not from the date of transfer. There is so much discussion like this is there. You can refer that full chapter. 112A, 111A, listed 112A, 111A, common assets, listed equity shares, equity oriented mutual funds, business trust related units. Only these three assets were covered under 1121111A. If you are transferring these assets, yes or no, capital gains is taxable at 12.5% here. There, short term it is 20%. Able to understand? Like that, so much of discussion is there like this. If you want to know all this, refer my full chapter. Full is posted there. But mainly from exam point of view at CA Inter level, this is sufficient. But remember, having said this, 112811A are also important. If you want to understand 112811A, 49, 55, modes of acquisition, cost of acquisition, so much. There is one more date called 31st January 2018, 1st February 2018, like that. In capital gains, these are the dates which are relevant. 1, 1st April 2001. 2, 1st April 2014. 3, 31st January 2018. 4, 23rd July 2024. 4 dates are important. These 4 dates. Apart from that, yes, one more date is important. 1st October 2024, buyback. What is one more date which is important? 1st October 2024, buyback. That's it. Actually, one more date is there. 6 dates are important totally. I have even made a video on 6 dates. You can just watch that video. 6 dates and 6 rates in capital gains. No, don't watch that. That was applicable only up to January. For May, I will post a different video on that. Clear? So, capital gains, main theme of immovable property taxation are completed, and you also have full chapter on capital gains. Clear, everybody? Hello? That's it. Further, one more clarification I want to give. What is the weightage of TDS? 6 marks. The weightage is how many? 6 marks. TDS advanced tax put together 6 marks. But unfortunate thing is, many students spend lot of time on TDS, TCS advanced tax, and they go and do the mistakes in exam. TDS, TCS advanced tax, how much time this takes for reading and retaining and understanding thoroughly? That much time is what taken by PGBP also. Okay? Only if you are perfect 100% in PGBP and other heads of income, come and touch this chapter. One important disclaimer. So if at all you didn't understand that and then only focus on this, integrated questions you can't answer. Integrated questions you can't answer. Even in PGBP, when I'm discussing section 40, subsection A, 1 clause 1A disallowance, I told you how TDS provision is linked there. Yes or no? So, if at all you're directly coming into TDS chapter and then watching, you're doing a big mistake. Because in TDS, the success rate is very low. Even though you remember the section, all that, in exam, it should strike rightly, that section. You know how there's so many sections: 192, 192A, 193, 194, 194A, 194B, 194BA, 194BB, 195, 194C, 194CDEF, 194D, 194DA, 194EFG, 194G, 194H, 194I, 194IA, 194IB, 194IJKL, yeah, 194J, 194K, 194LA, 194M, 194N, MNOP, 194P, 194Q, PQ, 194R is there. I'm telling you, R is there. R, yes, not there. T, 194T, partnership firms is there. 194U, V, W, X, Y, Z, not there. That's it. So these many sections were there only on 192, 194. Apart from this, you have 201. Okay, 201 subsection 1, yes or no? 1C, you have provisions of TCS. 206, yes or no? 201 only. I mean 206 only. 206C, yes. 206C. Subsection 1, 1C, 1F, 1G, like that were there. TCS provisions. So many were there. So many amounts. So many percentages were there. So first I'm giving a disclaimer to you before you continue watching this. Okay, so risk is very high to produce an accurate answer. So that's why don't blindly run behind the TDS chapter. In 3/4 strategy, I keep it under 1/4. But let me be clear. You revise it thrice, 3 times this TDS provision. Listen to this marathon at least 3 times the TDS topic. I bet you will get full out of full. Clear? That's it. Yeah. Let's begin TDS, TCS, and then advanced tax. We'll continue the discussion. You know, in the very first chapter, we would have understood that income is earned in the previous year and tax is always paid in the assessment year, right? Income is earned in the previous year, and on that you have to pay the tax and file IT return in the assessment year. In fact, assessment year means what? The year in which your income is assessed. Your income is assessed in which year? Assessment year. So your income is assessed in 26-27 income, 26-27, right? Your income is assessed. Which year income is assessed? Previous year income is assessed. That's why previous year word. So from assessment year context only the previous year word is derived. So in this year, we assess your income for IT return and tax payment purpose belonging to your previous year. So this is what generally you would have understood. Yes or no? Previous year we earn income, but in assessment year you pay the tax and you file the return. But department don't want to wait up to assessment year. What if you became insolvent? Yes or no? What if you became insolvent? So the department want to collect tax from the SSC on his incomes within the previous year itself without even waiting for assessment year. The department wanted to collect tax within the previous year itself. Accordingly, TDS, TCS, advance tax provisions were released. These provisions ensure the tax is collected from the SSC in advance before assessment year begins. These provisions will ensure the tax belonging to the SSC will be collected either in the form of TDS, TCS or in the form of advance tax before the assessment year begins. Are you clear? Now, for example, I am an auditor. A company paid me audit fee. I have only one client. Let us assume I have only one client. I am getting from the company total fees of 30 lakhs I am getting. Only one client I have, 30 lakhs fee I am getting. And that company, 3 lakhs they deducted from me already. When I asked them, they paid me only 27 lakh my fee. I asked them, why are you deducting 3 lakhs, sir? I am not taking that money. In your name only I am paying challan to department. In your name only, that 3 lakh rupee I am depositing with the department. That your own money. Why are you depositing that? That's a tax liability. Why are you depositing? Why are you deducting that? It's a TDS provision. Fine. Okay, I agree. So the company paid on my name only 3 lakhs deposit there. I don't have any other money and finally I received only 27 lakh in my hands. Now, when you see, let us assume, okay, fine. This is what the transaction actually. I don't have any other income. Now tell me what is my income by the way? 30 lakh. Maybe I received 27 only in my bank account, but my income is what? 30. And let us assume I'm liable to pay tax at 30%. I'm liable to pay tax at 30%. How much is the tax liability for me? 9 lakh. Let us assume the 9 lakhs is without cess everything. I'm not adding all that. Okay. Actually, you should add cess all that. Let's not add it for the sake of convenience. 9 lakhs is my tax. Now, assessment year came. Department is asking me, pay me 9 lakhs. How much you will pay? Sir, already 3 lakhs paid by me. Already 3 lakhs paid by me. How did you pay? I didn't pay. The person who paid me, he cut my tax already. And he paid in my name to you. Check it. Go and check the account. Okay, department agree. Yes, sir, yes, sir. We received, sir. From so-and-so company, on your name, they deposited at so-and-so month. They deposited. So 3 lakhs of your tax liability is already paid. Balance, you have 6 lakh liability. Balance, you have 6 lakhs liability. Even this amount you have to pay in the previous year itself. This amount also you have to pay in the previous year itself. How you have to pay? You have to pay in the form of advance tax. You have to pay in the form of advance tax. What will happen if I don't pay this? Interest is levied. If at all I don't pay, interest. Oh, advance tax means I thought optional. You are asking me to pay tax in advance. That's what I thought. Now, if I don't pay advance tax, what will happen? I will collect interest from you for late payment of advance tax. I will collect interest from you for late payment of advance tax. Able to understand? Now, this is how advance tax and TDS link. Are you getting it? Now, what do you mean by TDS? What do you mean by advance tax? This is what we are going to understand in this chapter. Clear? Now look at. See, TDS provisions are basically applicable for pay year. Who are they? Pay year. Okay, TDS provision is applicable for the person who is paying the money. For the person who is paying the money means for him, what is this money? What is this payment? Expenditure. What is this for him? Expenditure. It's nothing but for the payment, payer. Whereas to whom we are paying, we call him as payee. Are you clear? Now, TDS provisions are basically applicable to payer. They are not applicable for payee. However, we have another provision called TCS. TCS provision is applicable for payee. TCS provisions are applicable for payee. Yes or no? Whereas payer has to pay the tax to payee. Nothing but payee will collect. Yes or no? Whenever I say payee, payee, in Tamil word payee means devil, no? Yes or no? Yeah. So, then payee, Tamil, correct, no? Yeah. Payee has to collect. So, payee has to collect TCS, tax from payer. Okay, they have to collect tax from payer. Correct? Payee means recipient. Fine. Collector. Nothing but the person who is collecting the money. Who will collect the money in a transaction? Service provider, seller. Who will collect? Seller. General, who will collect money? Seller. From the buyer. So seller will collect TCS from the buyer in addition to the sale consideration. That's TCS mechanism. Whereas TDS mechanism, buyer, while paying the money to the seller, will cut some amount of tax and then pay the balance amount. Just like that, right now I showed one example, auditor. There, auditor is the seller who is selling services. Yes or no? Client is the buyer who is buying the auditor services. Okay, TDS is applicable for the TDS provisions are applicable for the buyer. Nothing but whoever is incurring expenditure. TCS provisions are applicable for seller. That's it. Whereas in TCS, no, they are predominantly dealing with goods. They're predominantly dealing with goods. TDS services are predominantly dealing with services. They're dealing with services. Clear until now? Next. You know, let us discuss one by one section how TDS mechanism operates, because in TDS, you know, the one of the important topic is administrative mechanism of TDS, which many students ignore. So that mechanism briefly I'll tell you. You know, there is a company called Tata Consultancy Services. No, let's not take TCS. Again, you will confuse that TCS with this TCS. Okay. Reliance Industries Limited. Let's take the example of Reliance Industries Limited. You know, Reliance Industries has 5 lakh employees. Now tell me, for the department, now all these employees are getting salary from Reliance. Is it better for the department to collect and monitor 5 lakh employees so that whether these 5 lakh employees are paying tax liability correctly or not? Is it better, or directly I will tell the company that responsibility? I will tell the company that responsibility. Hey, you are having 5 lakh employees. I don't know what you will do. All these 5 lakh employees tax liability I should get. Whether you deduct and get me or you will make sure they will pay, that is your choice. No. 192. It is your responsibility. What is it? It is your responsibility. You are paying salary to your 5 lakh employees, no? You know how much you will pay every year, right? Every year you pay how much? For example, no, I am one of the employee. Reliance Industries is employer. Employee 1, E1 is one of the employee. He is getting 12 lakhs. 12 lakhs is a taxable income for him. Okay, let us assume 12 lakhs is taxable. On this, 1.2 lakh is the tax liability for him. What is the tax liability? 1.2 lakh. I will tell the Reliance company, that employee, one employee is there, right, with you. He is having 1.2 lakh yearly tax liability. From him, every month collect 10,000 rupees. From him, every month you deduct 10,000 rupees. It's like his salary is what? 12 lakh, right? So company is paying every month 1 lakh per month salary to bank account of employee 1. Bank account of employee 1, the company is paying, right? Out of this 1 lakh, the company will collect 10,000, will deduct 10,000, only balance 90,000 will be paid to the employee. This 10,000, like this 10,000 from one employee, from 5 lakh employees we are collecting tax. From 5 lakh employees, while paying amount, no, while paying salary to them, no, every month, I will not pay full salary. I will deduct some tax. Okay, 10,000 tax I will deduct. Every employee depends. Some employees monthly 1 lakh, some employees only 5,000, some employees it can be 8,000. Like that, from 5 lakh employees, I deduct every month. TDS from each employee, and then, you know, lump sum. Only April month, only April 25 month. How much TDS is collected? You know, 2,000 crore TDS collected. How much is collected? 2,000 crore TDS is collected. This entire 2,000 crore rupees is the TDS deducted by me from the salaries paid to employees. Correct? This 2,000 crore. But this 2,000 crore belong to how many employees? 5 lakh employees. But I will pay to the department. There is a section called 192. I will put 192 section number on a challan. and I will add this 2000 crore. I will transfer money to the department 2000 crore because it's not my money. I just deducted and then pay to the department. Over. April month over. Again May, same 2000 crore. June, like that same 2000 crore. You know, every month I will pay 2000 crore to the department. Now department is getting from Reliance company, every month we are getting 2000 crore TDS towards salaries, TDS towards their employees. How many employees? 5 lakh. Department don't have that data. This 2000 crore they need to distribute, no? They need to allocate to each employee input ledger, income tax input ledger. Because like, otherwise what will happen tomorrow when the employee filing IT return, no, his income is 12 lakhs only. He will pay, sir, my tax is 1.2. Sir, already my boss paid, no. Department, how the department will get the data? I have to file quarterly statement. What I have to file? Quarterly. First of all, every month I am deducting TDS, right, from employee. Every month I am deducting TDS from employee, right? 2000 crore. By when I should pay this TDS? By next month, 7th. April month, I will pay to the department TDS money. Whatever TDS I deducted, I will pay to the department by 7th of next month. May, 7th of June, June related TDS, 7th of July, like that. Every month the TDS amount is deposited by me by next month 7th date. So any month, any other month on or before 7 days from the end of the month of deduction. Suppose if it is March month TDS, by what date you should pay? 30th April. March month TDS alone, you have an option to pay by 30th April of the next year. But rest all other months, you have to pay by next month 7th. Are you clear? Now remember, only paying it will not sufficient. You should tell department 2000 crores is belonging to whom. You should tell the department. You need to give a statement of deductee details. Am I right? You should give the department, see, I am the deductor. How much I deducted every month? 2000 crore, 2000 crore, 2000 crore I deducted. This 2000 crore, totally in a year, 24,000 crore. In a quarter, 6,000 crore. In a month, 2000 crore. Belongs to whom? 5 lakh deductees. It belongs to whom? 5 lakh deductees. Department, you should give this information, right? How do you give that information? By furnishing statement of TDS. How do you give that information? By furnishing statement of TDS. Like, look at statement of TDS you have to furnish to the department. If you understand this mechanism, remaining provisions, nothing. This mechanism is what most important. So if you furnish statement of TDS, that's enough. What statement of TDS will looks like, you know? Part 1, part 2, part 3. Statement of TDS will have 3 parts. Part 1, company information will be there. Who am I? Reliance, deductor, I am the deductor, all that. Part 2, challan number 1, 2000 crore I paid. Challan number 2, 2000 crore I paid. Challan number 3, 2000 crore I paid. This is April month, this is May month, this is June month. Now, this challan number 1 belongs to how many employees? 5 lakh. 1, 2, 3, 4, like that 5 lakh. Challan number 2 also belongs to 5 lakh. Okay, 1, 2, 3, 4, like that 5 lakh. Then again, challan number 3 belongs to how many? 1, 2, 3, 4, 5 lakh. So this 2000 crore, I will split to each and every employee. 10,000, 10,000, 10,000, 10,000. Total it 2000 crore. Challan number 1 breakup, 5 lakh employees. Tax amount I will fill there. If I total, that total will match with challan total. Do you understand? Like that, quarterly I should file a return. Like that, what I should do? Quarterly I should file. Only after I file this statement, department can allocate my 2000 crore which I paid to each and every employee correctly. So that tomorrow when they file IT return, this amount which I deducted, no, 10,000 each from them, it will be reflected for them and they will pay only balance tax if at all pending. Are you clear? Now here, deductor, he has 2 responsibilities. 1, while paying the amount, I should check whether I have TDS provision applicable or not. If I have a TDS provision applicable, I should deduct the TDS and then pay balance amount. Once I deduct the TDS, I have 2 responsibilities. 1, remit. Remit to the department by next month, 7th. For March month, next month, 30. Not only remitting, quarterly, I should file statement of TDS. I should file statement of TDS. TDS written, we call it as ETDS written, we call it as. You know what? Quarterly you should file, right? What is the due date? What is the due date quarterly? Suppose TDS amount deducted, TDS amount you have to pay by next month 7th. That we understood. TDS return due date is what? You have to file quarterly, right? Yes or no? Am I right? Quarter 1, 2, 3, 4. Yes or no? Quarter 1 means what? April to June, 30th September, 31st December, 31st March. First quarter, 1 month time exactly. Once the quarter is over, 1 month time. First quarter, June 30. 1 month means 31st July. Second quarter, 31st October. Third quarter, 31st January. Fourth quarter, 2 months time you have. Fourth quarter you have 2 months time. Because no, March month challan you see, challan time only 1 month is there. Return filing should be extra time, no? That's it. Able to understand? So 31st May he has to file the TDS return. Until now clear. If you do not file on time, what will happen? If you do not file on time the ETDS return, here you make a note, 234E, late filing fee will apply. What is applicable? 234E, late filing fee will be applicable. How much? 200 rupees per day. How much is applicable? 200 rupees per day. And you know what is the maximum fee? Number of days. For example, 100 days you delayed. 100 days you delayed. 100 into 200, 20,000 rupees. But suppose TDS return I am filing, no. In that my TDS amount is 10,000 only, total TDS. 3-4 deduct is only were there. Total TDS per entire quarter put together itself is just 10,000 rupees. TDS, I deducted TDS, not Reliance, not a big company like Reliance. I'm a very small seller. Okay, for me, the total TDS for 3 quarters put together is just 10,000. But I filed belatedly the return. 100 days I filed late. 20,000 penalty they are asking fee. Are sir, my tax itself is 10,000 sir, but you are asking me 20,000 fine. Then late filing fee is restricted to maximum tax amount. Are you clear? Fine. This is for what? When you are filing the return belatedly. Am I right? What if you are paying the tax late? You are deducting the tax late or you are remitting the tax late. Interest is applicable. Interest is applicable for late deduction 1%. Interest is applicable for late remittance 1.5%. Interest is applicable at 1% for late deduction, and for remittance, late remittance, interest is applicable at 1.5%. Now I will finish that point also. Then administrative mechanism will be over, administrative provisions will be over. Then we need to start actual TDS sections one after one. Are you clear? Until now you understood basically. Now look at 2011 late deduction. Just a minute. Deductible. Just a minute. I'm just opening that. Yeah. Yeah, here it is there. Look at interest for late deduction ma. I'm first talking about what? Interest for late deduction. How much interest ma you fail to deduct? See, you have a time to deduct. You will have a time limit for deducting also. Means by when you fine, look at. See, generally when you are paying any amount, no. TDS is to be deducted by whom? Payer. Correct? Payer has to deduct the TDS. While paying the amount, from the amount paid, TDS has to be deducted. When he should deduct? Generally at the time of payment. Generally. I'll tell you, there is one more concept is there. At the time of payment. Suppose I'm paying TDS on 30th April. Sorry, I'm paying amount to the buyer. I'm paying amount to the service provider. Okay, on 30th April. 30th April I should deduct the TDS. When I should deduct the TDS? 30th April. That is the date on which you have to deduct. Suppose I didn't deduct. I deducted TDS on 5th May. I deducted TDS on 5th May. You know what? TDS deposit 7th of next month is the rate. If you deduct in current month, you have to pay by next month 7th date. If you deduct on 30th April, you should pay by 7th May. You deducted itself on 5th May, you should pay by 7th June. Are you getting it? Now, when do I say late remittance? Sir, I deducted in May month, sir. 7th June if I pay on time remittance. Do you agree? If I pay after 7th June, that's late remittance. Correct? For late remittance TDS, interest is applicable. For late deduction also TDS interest is applicable. Suppose I paid money to the service provider. Service provider is I paid money at when 30th April I paid money. I forgot to deduct TDS. Immediately on 5th May I called him, sir, I forgot to deduct, sir. Please send me 10,000 back. He sent me 10,000 back. Now I deducted on 5th May. Still, that's a late deduction. How many months late deduction? 2 months. Month means part of a month is also considered. 30th April you should deduct. You didn't deduct. April month delay, late. May 5th you deducted. Again, that's a late. 2 months is involved here. Able to understand? For 2 months, 1% per month or part of a month is interest is applicable. From which date to which date? From the date on which TDS is deductible. In our example, 30th April is deductible till the date of deduction, 5th May. Now, here how many months are involved? 2 months are involved. Therefore, for 2 months interest is applicable. Are you clear? Suppose TDS amount is just 10,000 rupees. Just TDS amount is what? 10,000 rupees. Okay? Date of deductible is 30th April ma. Date of deduction is 5th May ma. And you know what? Remittance is when remittance is when remittance is on. Now actually 5th May they deducted, no. Technically they should remit by 7th June, but they remitted on 10th June. They remitted on 10th June, yes or no? Now, for late deduction, 1% per month. For late remittance, 1.5%. TDS amount is, let us assume, 10,000 rupees only. Now, how the interest is calculated? Late deduction. Here, 2 months are involved. Therefore, 10,000 multiplied by 1% multiplied by 2 by 12. Am I right? No. Because here 1% is per month only. No need to put by 12 again. How many months delay? 2 months. So, how much it is? 200 rupees. Am I right? Are you clear? Now tell me, here how many months late remittance is there? How many months late remittance is there? By the way, tell me, date of deduction, actual date of deduction 5th May. Due date is what? 7th June 25. If at all you pay by this date, there is no late remittance. But SSC got missed. Again, he paid on 10th June. Now tell me, how many months delay is there? Technically speaking, 1 month delay. But late remittance means what? Here, look at this. From the date on which TDS is, here you see. From the date of deduction. From date what you should, generally when we remit late, due date onwards we calculate. After due date only delay started, right? From due date onwards we have to calculate interest. Am I right? But here we calculate from deduction date itself. Tell me, in this case, deduction date is what? 5th May. Remittance date is what? 10th June. How many months involved? 2 months. Yes or no? Multiplied by 1.5% multiplied by 10,000 is equal to 300 rupees. Total interest. This section is 201 1A. This is what the section 201 1A is. Total interest is 500. But if you observe technically, 30th April only you paid. 10th June you 10th June, 30th April you are supposed to deduct. 10th June if you remit also, overall period involved is 2 months only. But department will not consider like that. This is how they consider. Do you understand? So when you are remitting late, first point you should remember, TDS will not be computed. Interest will not be computed from due date of remittance. Interest will be computed from date of actual deduction onwards. TDS late remittance, interest is calculated from actual deduction date onwards. So for late deduction you are having interest, late remittance also you are having interest. For late remittance, how many months involved? Check it out. 2 months involved. Then for 2 months you have 2. Number of months involved. That's it. Are you clear? So this knowledge is enough regarding administrative mechanism. Okay, 201 1A I covered, due dates for TDS return I covered, TDS statements I covered, quarterly return window file, and late filing fee point also I covered, interest on late payment of TDS, late deduction of TDS I covered. This is entire administrative mechanism, main provisions. Clear? That's it. So this is TDS mechanism. How it works, you understand? Now I told no, every month for employees 2,000 crore I'm collecting. No, not only employees. As a Reliance company, every month I'll be paying to so many other people. Legal fees I'll be paying, professional fee I'm paying, contractors I'll be paying so many, I'll be paying interest on loans to so many people, I'll be paying so many expenses. For all types of expenses, mostly TDS provisions are attracted. You open Reliance company P&L account, you open debit side of the P&L account, almost every payment TDS section is there. For example, first debit side of the P&L account, what will be there? Purchases 194Q. For purchases, what is there? Purchase of goods 194Q. Then 2, direct remuneration 194J. Then printing and stationery 194C. Then you see salaries, employee benefit 192. Legal and professional fee 194J. You pay repairs and maintenance 194C. Anything you take in the debit side of the P&L, there is a TDS section applicable on that. Means if a company, for a business people, there are so many TDS provisions that are there for every type of payment I am making. Suppose for this building I am paying rent 194I. Understood? So everything I am paying for example, air conditioners contract is there. I am paying 194C is applicable. For every type of payment, I am paying salary to my staff, 192 is applicable. I'm paying fees to my auditor, 194J is applicable. I'm paying interest on borrowed loan to my friends, 194A is applicable. Every type of payment I pay, almost TDS gets attracted. Able to understand? So which means every month a company has to deduct TDS for various payments under various sections. But when you're paying challan, no, you should pay section wise challan. You should pay challan to government section wise. Now that many challans if at all there, each challan wise breakup of deductees you should show. TDS return, that's how you have to file. Again, here if you see TDS return, here if you see the TDS return, just a minute. If you see here TDS statement, oh yo, so many forms were there, 24Q, 27Q, 26Q, what are they? 27Q, 24Q is the form applicable for employees. If I am collecting TDS from employees and then paying to department, I have to file a quarterly statement, no? 24Q form is applicable. If at all it is not employee, 27Q is applicable. Are you clear? Then 26 not that important. So now to the employees, no. To the employees I am paying, no, TDS. Quarterly I am filing, no. And I should come back and tell him, no, last 3 months TDS I paid to the department. You know, this is the proof. I need to give them the proof that I deposited also, because that's my responsibility. I will give them form 16. What I will give them? Form 16 I will give them. Are you clear? Form 16 will be given on a yearly basis. Employees we will give form 16 on a yearly basis. Now remaining payers, remaining payments will be there, other than salary. There I will give them form 16A. Deductions under 192, 194P. Both are salary head of income related one. For the recipient, no, the incomes which I am deducting, no, the income which I am paying, no, to the recipient 192, 194P means they are taxable for salaries. If at all I am deducting TDS under other sections, then form 16A is applicable. That's it. This is how TDS mechanism operates. Are you clear? Everyone? Just a minute. Then immediately now we'll start the sections. Now let's begin the first TDS section, that is 192. Okay, I'm now going to discuss 3 TDS sections here, guys. 192, 192A, 194P. 192, 192A, 194P. The reason why I'm discussing is, in all these 3 sections, they are related to the amount you pay, right, to the other person is employee. Here the employer, there the employee. For the recipient, the amount paid is taxable under salary side of income. And here TDS is to be deducted at the time of payment. There are some sections where TDS has to be deducted at the time of credit or at the time of payment, whichever is earlier. Credit means what, you know? In my books of accounts, if I recognize the expenditure, that's enough. That's called time of credit. And time of payment means actually on which date I am paying him. For example, no, on 31st March, in my books of accounts, TDS salary, I recognized outstanding expenditure. It's a credit. TDS will not be deductible on that date. When you are paying the salary, sir, I pay salary on 5th of next month, sir. That time you should deduct the TDS. If that day you didn't deduct, then that's a late deduction. Able to understand? Suppose you are liable to deduct TDS on credit time, and credit time you didn't deduct the TDS, then that's a late deduction. Are you clear? Now 192. What is this 192? Who is applicable? Employer. From the payment made to employee. Clear? Now remember 192, 192A, 194P, I mean 194P, no, let me not take it. 194BB, 194BA. Okay? So these sections, no, 194B, 194B, 194BB, 194BA. In all these 5 sections, recipient can be non-resident. Recipient can be non-resident. I will tell you certain section combinations throughout this chapter. Okay, in these cases recipient can be non-resident. Now how TDS under 192 will work? Very simple. You know, you very simple. You know, you are an employer, right? You are other person is employee, right? annual, how much is income from salary, you can easily identify, correct? As an employer, I can very much easily guess how much income my employee is earning in a year. Income from salary, I will predict. And let us assume 1,20,000 rupees is the tax amount employee has to bear totally. And I will divide it with 12 months. Every month 10,000 I will collect. This concept is called as averaging or average rate. We also call it as what? Average rate we can call. In 192, the TDS is deducted at what rate? The TDS is deducted at what rate? Average rate of tax, they will say. What is the rate? Average rate. What is the rate? Average rate. There is no specific number. How do I get the average rate? Very simple. Average rate. For example, my employee tax amount is 1.2 lakh. His total income in the year is 10 lakh. Average rate is 12%. Another employee, his income is 60,000. I mean, his tax is 60,000. His income is 8 lakhs. Some percentage I will get. That's the average rate. So for each employee, average rate will vary. Instead of that, the best way to calculate TDS is what? Estimate is total income. Estimate is tax liability by 12. Every month that much you should deduct. That's it. Able to understand? Now further, when you're deducting TDS on employee, ask him whether he has any other income or not. Ask him. If at all he says, sir, I have a house property loss, sir, I have a self-occupied property, house property loss. Ask him which regime. If at all he didn't tell about regime, no, I assume it's a default tax regime. If at all he tells about regime, I will consider that regime. Are you clear? If at all he didn't mention about his regime, I assume by default what regime? Default tax regime. That's why it's called default. The tax regime which is applicable by default. Are you clear? So now employee, he will say, sir, you are paying me salary 12 lakhs. But remember, wait, I have tuition fee for my son. I'm paying tuition fee. I'm paying LIC premium. I'm paying medical premium for my family. I'm paying so many other deductions. Oh, you have deductions, huh? Give me the proof. What proofs a company has to collect? For HRA. Suppose company is paying HRA to him and he want to claim HRA exemption. Exemption he can claim only when he pay rent. If at all he is not paying rent, he can't claim exemption. Details of owner I want. Name, address, PAN number of the landlord. If rent paid is more than 1 lakh per annum. Then suppose you are having LTC. You want to claim LTC benefit because I gave you LTC. You want to claim benefit. Give me evidence of travel expenditure. You want to claim interest on house property loan deduction. Give me the banker, lender details I want. If you want to claim chapter 6A, I want investment proofs. Employee must submit evidence for claims and deductions. Only when he submit evidence for claims and deductions, I will consider and I will compute his estimated total income accordingly, and I will compute tax liability and deduct it equal in the 12 months period. Are you clear? This is 192. Till date 192 was never tested because it's impractical to test also. Are you clear? 192A, next important section. 192A. Remember, in salary side of income, I told you RPF withdrawal. Sir, I'm an employee. I'm withdrawing from RPF. After 5 years, if I withdraw, fully exempt. If it is exempted, TDS question will not arise. Suppose I'm withdrawing within 5 years. Suppose I'm withdrawing within 5 years. For me, it is taxable, right? Now TDS mechanism will apply. Employer is now paying me TDS amount withdrawn by me, which is taxable. Since it's a taxable withdrawal, company has to deduct TDS at what rate? 10% on the taxable portion of the premature withdrawal. Taxable portion means what? Employer contribution, interest on employer contribution, interest on employee contribution. You withdraw the amount, 4 amounts will be there. Employer contribution, interest on that, interest on this. 4 amounts will be there. Employee contribution is not income. I paid, I am getting it back. That's not income. Remaining 3 amounts, TDS will be deducted at 10%. That too, when the TDS will be deducted. TDS will be deducted if the aggregate payment is 50,000 rupees or more in a financial year. In a financial year, if the amount withdrawn from RPF, is 50,000 or more, TDS will be deducted. Now, when it should be deducted? At the time of payment. Are you clear? 192A is over. By the way, no TDS if the withdrawal is basically exempted. If at all withdrawal is exempted, no, TDS mechanism will not apply at all. Clear? Hello? Then 194P. Then we have 194P, which is also a TD pension related one. MNOP. Yeah, here it is there. 194P. You can come to page number 178 in our book. Okay? 194P. What is this? TDS on pension. TDS on pension for, I told you in the very beginning chapter. Specified senior citizen. Specified senior citizen means what? His age is 75 years or more and must also be resident individual. Now what is the scenario here? Simple. I'm a specified senior 75 years and above guy, and I have one bank account with State Bank of India. Earlier I worked with one company and then retired. That company is paying me pension every month. That pension I get in that bank account, State Bank of India. And from that State Bank also I'm having some interest on fixed deposit. Do I have any other income? No other income I have. Yes or no? If I don't have any other income, and if I'm getting pension, and if I'm also getting interest amount from that bank, whether I get that or not, leave it. Interest I'm getting or not from that, I should not have income from any other bank. And if I give a declaration in writing to the State Bank of India, dear State Bank of India, with you I have a bank account, right? In that I'm getting pension, right? From you I'm getting some savings interest, FD interest, right? Except that I don't have any other income. If I give a declaration to State Bank of India, what State Bank of India will do, you know, they know how much amount I'm getting. Pension I'm getting monthly 50,000, 6 lakhs per annum minus standard deduction 75,000. If I intimate default tax regime, standard deduction 75,000 they will reduce, and balance it is 5,25,000 taxable plus interest income 1,75,000. Total 7 lakhs is my tax. So 7 lakhs is my income. Into they will apply slab limits, all that as per the regime, and then compute the tax. That tax they will deduct from my income and then they will pay to the department fully. Full tax they will pay to the department. And guess what? What is the benefit I have here? I don't have to file IT return. The benefit I have is I don't have to file IT return. This is to help old age people who are receiving pension, who are receiving interest in only one bank account. They don't have any other income. So for them, this 194P mechanism is applicable. Are you clear? Banks have to educate old age people, and then they have to say that, sir, we will take care of your return filing, everything, sir. You just have to tell whether do you have any other income. So the banker, the person, senior citizen, no, he must give a declaration that they are not earning any other income except pension, except interest credited with the specified bank. What is a specified bank? It's a bank where my pension is getting credited, and it is a bank where in the same bank I'm having interest amount also. I don't have any other interest, any other income. Then only this is called as a specified bank. So the bank where my pension is coming and crediting. If it is State Bank of India, State Bank. If it is ICICI Bank, ICICI Bank. Able to understand? That's 194P. Easy or not? Now what is the rate of TDS? Array, here rate is not there. I have to compute total tax liability for you. I told you, right? Just like how slab rates and all we compute total tax. That's why applicable rate plus cess depending upon the tax regime. Now by the way, this 194P does not apply if at all your taxable income is not exceeding basic exemption limit. That's it. Obviously, if there is no, if your income is less than basic exemption, there is no TDS at all. There is no tax at all. So automatically 194P will not attract. That's it. 194P is over. 2A, P, 3 sections over. Easy or not? That's it. Yes, guys. Let's continue. Next section, combination. Just now we completed one combination, 192, 192A, 194P, where for the recipients the amount paid is taxable under salary side of income. Am I right? Now we are going to discuss about one more section, combination. 193, 194A, 194, 194K. These two, they were dividends. These two related to interest. By the way, at the end of the day, payer is a company. Let us assume generally payer is a company or some other individual who is paying interest on borrowed loan, or who is paying dividend on amount invested. That's it. 193, interest on securities. What is it? Interest on securities. You know, right? Companies will issue bonds, companies will issue securities, debentures, all that, right? Now on those debentures, on those bonds, company will pay periodically interest, no? On that interest, the company has to deduct TDS under 193. Second one, 194A. 194A is what? A company borrowed public deposit. Yes or no? On that the company is paying interest. 194A is applicable. Or a bank is there. You have a FD with the bank. 194A is applicable. I borrowed a loan from my friend. I'm paying interest to him. 194A is applicable. Able to understand? Interest on borrowed loan. The loan can be in the form of public deposit. The loan can be in the form of a loan from a bank or FI. The loan can be in the form of a deposit from a customer. Anything it can be. Then 194, TDS on dividends, including deemed dividend. 194K, TDS on dividend paid to unit holders. TDS on dividend paid to unit holders. That's it. Now, first I will focus on 193. It's very simple, guys. 193. Yeah, look at 193. What is 193? It's an interest on securities. Who issue the securities? Government, non-government, company, whoever it is. Partnership firm, they won't issue securities. Individual won't issue securities, obviously. Yes or no? Then who is payer? Every person paying interest on securities. Who is paying? Resident. Remember, we have TDS sections only if they are resident. If at all recipient is a non-resident, TDS provisions we don't have, except salaries, winnings. Except salary winnings provision, recipient, if it is a non-resident, we don't have a TDS mechanism itself. Okay, in our syllabus. In CA final, we have non-resident international taxation. There we will have the discussion. Clear? Now, payee. Who is the payee? Any resident. How much TDS? 10%. When? Amendment. Finance Act 2025 amendment. Okay. If aggregate amount is exceeding 10,000 during the previous year. If the aggregate amount is exceeding 10,000 during the previous year. Simple. I'm paying interest on debentures to my debenture holder. How much you're paying? 15,000 I'm paying per annum. That's it. 10%, 1,500 deduct. When you should deduct? Earlier of time of credit or time of payment. Remember, in all these 4 sections, the answer is time of credit or time of payment. What is the time of payment? Whichever is earlier. Whereas 192, 192A, 194P, only time of payment. Now look at. So credit. Understood? However, even though you are paying interest on securities, there are some circumstances where you don't have to deduct TDS. Okay, what are the circumstances where you don't have to deduct the TDS? You know, interest payable on securities owned by LIC, GIC and their subsidiaries or insurance companies. Simple. If at all I'm paying interest on security to insurance company, like in my company, insurance company bought debentures, to them I'm paying interest. No need to deduct TDS. LIC, GIC and their subsidiaries and any other insurance company, private insurers. If at all I'm paying interest on securities to insurance companies, I don't have to deduct TDS. Are you clear? Next, if at all government is paying interest on securities, central government, state government is paying interest on securities. Alright, it's a government security. Then government is paying interest to you on securities. No need to deduct TDS. However, for 3 types of government securities, TDS still gets attracted if per annum payment is more than 10,000. Now look at 8% taxable bonds, 7.7% taxable bonds, floating rate bonds. Here name itself says taxable, so don't need to worry. If at all government is paying interest on taxable bonds, yes or no, they have to deduct TDS. Apart from taxable, floating rate savings bonds were there. If government is paying interest on floating rate savings bonds, on that if at all the annual interest, per annum interest is exceeding 10,000 rupees, TDS will attract. Are you clear? Now tell me, when I say 10,000 crossing, even here also 192A, 50,000 or more, right? You will deduct TDS on the extra amount or you will deduct TDS on the entire amount? On the entire amount. TDS limits are threshold limits. TDS limits are threshold limits, except 2 sections. 194Q, 194N. Cash withdrawals, 194Q for purchase of goods. In these 2 cases, it is slab limit. Rest all other TDS sections, it's a threshold limit. Threshold means what? If that amount crossed, no, on entire amount TDS rate will be applied. Able to understand? And TDS rate, no, we will always apply. The amounts were there, right? They're always per annum. These amounts are always to be counted per annum, not per incident, not per payment. Per annum we should consider. Understood everyone? Next, look at. Next, further, if at all interest is paid on national development bonds, no TDS. Interest is paid on national savings certificates, no TDS. Debentures issued by any authority or public sector company or corporate society. If a public sector company is paying interest on debentures, no TDS at all. Further, if debentures are paid, if at all interest is paid on notified bonds. What are notified bonds? PFC, Power Finance Corporation bonds, IRFC, Indian Railway Financial Corporation bonds, which are also listed under 54 EC. On that, if at all government is paying or any authority is paying or a public sector company is paying interest, then that is not liable for TDS. Debentures issued by any institution, authority, public sector company or corporate society as notified. Only these 2 were notified. If a public sector company is issuing debentures, these 2 bonds or debentures are issuing like these 2 schemes, then no TDS on that. Easy or not? So 193, simple. I'm paying interest on securities more than 10,000 a year. That's it. TDS will be applicable. Recipient, individual, company, pharma, yeah, doesn't matter. Government securities, no need to deduct TDS. Yes or no? Except taxable bonds, floating rate bonds. National development bonds, no TDS. NSE bonds, no TDS. IRFC bonds, no TDS. Power Financial Corporation bonds, no TDS. That's it. 193 over. Easy or not? Hello? Next, 194. 194A ma. Next one is 194. Again, biggest amendment. 194A, biggest amendment. Just a minute. So, 194A. As per 194A, here you are paying interest on. Here also you are paying interest. But it is not interest on security ma. Then which means what interest? It may be interest on deposits accepted by me. It may be interest on deposits, public deposits accepted by a company. It may be interest on deposits accepted by a bank, or it may be interest on loan taken by me. Simple. All interest expenditure other than interest on securities is coming under 194A. What is the threshold limit under 194A? By the way, what is the TDS rate? 10%. What is the TDS rate? 10%. Now, what is the threshold limit? Generally, the threshold limit is how much more? 10,000. If at all I'm paying any interest, no, per annum 10,000 crossed. That's it. I have to deduct TDS. Able to understand? I have to deduct TDS. Remember one point. All the TDS provisions are applicable only when the SSE is a businessman. Yes or no? Tell me, who will pay salary to whom? Business people only will pay salary. Any person, business people only will pay salary. Others, they will not pay salary, right? Generally, TDS provisions will not attract for personal expenses. Except one section, 194M, one section is there. Only their personal expenditure is also covered for TDS. If at all amount is paid for personal purposes, generally TDS mechanism will not apply. Remember that point. So TDS mechanism is applicable only for which SSEs? Business SSEs. Now here, before I discuss this, there is one section combination I want to discuss, which I already discussed at 40 subsection A 1A. 194A, 194C, 194H, I, J, R. In these five sections, this is interest other than interest on securities. C, contractors. H, commissioner brokerage. I, rent. J, professional fee, non-compete fee, technical fee, royalty, direct remuneration. R, perquisite. Perquisite in business ma. It's not salaried perquisite. It's a perquisite in PGBP ma. Okay, I'll discuss that. In these six sections, these six sections apply to every person other than individual and HUF. Other than individual and HUF. Only if the payer is anybody other than individual, other than HUF, then only these six sections are applicable. However, individual and HUF also, these sections are attracted if turnover in preceding financial year is more than 1 crore. If it is business, if it is profession, turnover not, gross receipts in preceding financial year is 50 lakh, then such a business individual, such a business HUF, they are also liable for these six sections. Otherwise, they are not liable for these six sections. Are you clear? Hello? Yes or no? So that's the limit. That's the limit. So if turnover in the preceding year is exceeding 1 crore, only then these six sections get attracted. If at all turnover in the last year is less than 1 crore for me, this year I have turnover 10, 20, 30 crore. Doesn't matter. Able to understand? These six sections will not apply to me, which means I don't have to worry about TDS on interest. I don't have to worry about TDS on interest. Now look at. So who is the payer? Who is the payer? Any person other than individual and HUF. Second, it may be individual and HUF where turnover is exceeding 1 crore in the preceding financial year, or gross receipts from profession is exceeding 50 lakh in the preceding financial year. To whom you are paying? Obviously resident. Obviously resident. We have only resident deductees. How much is the TDS? 10%. What is the rate of TDS? 10%. Until now, no change. Now look at the amendments. Any other payment you are paying, 10,000. This is also no amendment. Any interest you are paying per annum, 10,000 crossed, TDS 10% will attract. However, if the payer, look at, if the payer interest is paid by bank and cooperative bank, if at all interest is paid by banks, cooperative banks, nothing but banks, then per annum interest amount is 50. Earlier in your previous attempt, no, Jan attempt until Jan 26 attempt, no, it was 40,000. It was 40. Now increase it to 50. Are you clear? Suppose no, I'm paying an interest. I'm a bank. I'm paying an interest to the SSE, to the recipient, to the depositor. If the depositor is a senior citizen, not a specified senior citizen, guys, be careful. Senior citizen, 60 years or more, resident below. If the recipient is a resident and 60 years and above, 1 lakh. Earlier, no, this limit is 40k. This limit is 50k. Now the limit has been increased to 50k, 1 lakh. So do not even try to remember old limits. Are you clear? You will confuse. Simple. I'm paying interest to a depositor who is the normal citizen. If at all yearly interest crosses 40,000, simple, I paid 45,000, 4,500 TDS. Sir, I'm paying interest to a senior citizen. 1 lakh is a threshold limit. Per annum, if it is 1 lakh crossed, then TDS on the entire interest of 10% will be applicable. Are you clear? Same is the logic. If at all a post office is paying interest. If a post office is paying interest, simple. 50,000 threshold limit. Senior citizen, 1 lakh threshold limit. Earlier also for post office 40-50 limit is there, but now it is increased to 50 and then 1 lakh. Everyone? Yes or no? That's it. Now remember, there is no TDS. There is no TDS on interest on savings deposit with a banking company. When you are paying to banks, no. Sorry. If at all a deposit holder has a savings deposit with my bank and I'm paying interest on savings deposit, that amount is 50,000. No TDS. Savings interest is not liable for TDS, which means these amounts are only for which interest, ma? Time deposit. Time deposit means what? Interest on fixed deposit, interest on recurring deposit, RD. Both will constitute and both are liable for TDS. Further, no TDS on interest paid or credited by a firm to partners. Arey sir, you said TDS is applicable for firm to partners. A separate section is there for that. If a partnership firm is paying interest to partner, is TDS attracted? Yes, 194T is attracted. Are you clear? Further, this is the one point I bet many will not have clarity on this. Okay, I made this very simple and clear. Sir, TDS is not applicable on interest paid by cooperative societies. TDS is not applicable on interest paid by cooperative societies subject to some conditions. Very simple. Now, by the way, tell me, suppose I'm a cooperative society and I don't have a turnover. I don't have a turnover exceeding 50 crore. I don't have a turnover exceeding 50, means I'm a small cooperative society. I'm paying interest to member, no TDS. I'm paying interest to another society, no TDS. Interest paid by primary agriculture credit society, primary credit society, cooperative land mortgage bank, cooperative land development bank, no TDS. Interest paid by, savings interest paid by cooperative bank, no TDS. Do you understand? Sir, I am a cooperative society where turnover is exceeding 50 crore. Where turnover is exceeding 50 crore, you have to deduct TDS. If interest is exceeding 50,000 rupees per annum, and if at all you are paying it to somebody who is a senior citizen, 1 lakh if at all it is exceeding, you should deduct TDS. At what rate? 10%. Is cooperative society liable for TDS? Simple. Look at the turnover in the last year. More than 50 crore? That's it. 50,000, 1 lakh threshold limit. Is it less than 50 crore? Not exceeding 50 crore? No need to deduct TDS on interest paid to members, interest paid to society, interest paid by agriculture society, land development bank, land mortgage bank, interest paid on savings. No need to pay TDS. Are you clear? This is the point where many will have a confusion. Clear? Next. No TDS on interest paid by central government under this act. For example, you filed IT return, you have a refund. Department is paying you interest on IT refund. Interest on IT refund is taxable under income from other sources. No TDS at all. Clear? Next. No TDS on interest on zero coupon bonds. Why? We don't pay interest at all. Issue price 200 rupees. Maturity value 1200 rupees. After 10 years. Yes or no? So issue 200 rupees I got. I'm not paying interest first of all. Again at the time of maturity, I'm paying 1200 to him. For him capital gains attracted. Yes or no? So this is not treated as interest. Therefore no TDS on interest on zero coupon bonds. That's it. So take away summary point. TDS at 10% apply even if interest is creditor or paid more than 10,000 by others. If at all interest is paid by banking companies, then 50,000 threshold. If the recipient is senior citizen, 1 lakh is the threshold. Correct? For individuals and HUFs, no, TDS will be attracted only if the turnover is exceeding in the previous year 1 crore. Business profession associates 50 lakh. Next, Now again, there is one more point regarding core banking solution point. What is a core banking solution? Now, you know, I have a time deposit with a bank. I have a time deposit with a bank. Now, branch wise, do you count this 50,000 1 lakh kilometer? Bank wise will you count up? Suppose, no, I am a bank. I have 10,000 branches across India. State Bank of India has 23,000 branches across India. Okay. Now, in Chennai itself, State Bank of India has 100 branches. Now, I cleverly what I did, you know, I have 1 crore money. If I keep 1 crore with one bank, you know, per annum interest is 7 lakhs they're paying me. 10% TDS 70,000 will attract to me. What I decided, you know, with every bank 2 lakhs I will deposit. State Bank of India, I went to 50 branches, 2 lakh I deposited. Now each branch is paying me 14,000 interest only per annum. Very cleverly I thought of escaping, but you know, State Bank of India has a core banking solution. Total bank put together, they paid me 7 lakhs. They got the data. They deduct TDS on me. That's it. So a bank, if core banking solution is there, aggregate amount of interest paid by them will be looked into. If at all there is no core banking solution, branch wise we will look into. That's it. 194A is completed. Easy or not? Major 193, 194A is only time taking. 194 TDS on dividends. 194K TDS on income from units. Both are dead easy. Look at 194. 194 now. 194. What is this section? TDS on dividends. TDS on dividends. Who has dividend will be paid by whom? Companies. So obviously who should deduct a TDS on dividend? You know, nature of payment. What is 194? Nature of payment is dividend, including preference dividend, including deemed dividend, including interim dividend, whatever name you call dividend. That's it. What is it? Dividend. That's it. Now, to whom you are paying? Resident shareholder. How much TDS? 10%. What is the rate? When TDS has to be deducted? Sir, if the shareholder is an individual, then 10,000 per financial year is the limit. This is a new limit which is inserted. Which is a new limit which is inserted. Yes or no? That too, the amount must be paid by other than cash. If a company paying dividend to individual SSE by any mode other than cash exceeding 10,000 in a year, then on the entire amount 10% TDS will attract. This is a new amendment, 10,000. Sir, I'm paying to somebody else, sir, not individual. A firm is a shareholder, LLP is a shareholder, company is a shareholder, sir. No threshold. Even if you are paying 1,000 rupees to them, TDS at 10% will be attracted. Are you clear? Hello? Further, no TDS on dividends paid to. No TDS on dividends paid to shareholders who is holding nothing but who is having shareholders. Nothing but who are these shareholders? Basically, LIC is the shareholder, GIC is the shareholder, subsidiaries of GIC or any other insurer is the shareholder. You know, LIC is the biggest investor. LIC brand value 2 crores. LIC brand value 2 crores. Biggest investor in all the stock market, big companies, LIC will invest. LIC has investment in TCS, 20,000 crore worth of investment. In Reliance, some 40,000 crore worth of investment. You take any blue chip company, name it, LIC will have a share in that. 5% shareholding, 10% shareholding, LIC will have. So that's the level at which LIC controls in India. If LIC is entering into any company, means that company share price will go up. That's how it will be. Fine. So if at all dividend is paid to LIC, dividend is paid to GIC, dividend is paid to subsidiaries of LIC, GIC, no TDS will attract. Are you clear? That is 194. Then we have 194K. You know, I'll derive some common conclusions later. Okay. 194K. First we'll discuss all the 4 sections. K. What is this? Income in respect of mutual fund. Okay. Of course, other than capital gains. Capital gains is not considered. It's only dividend in nature. Now I have SIP. You know, you might have heard of SIPs. Yes or no? I have purchased mutual fund units. Now they're paying me dividend every year. On that dividend, TDS will attract it again 10%. What is the threshold limit? Again 10,000 in a financial year, which is also Finance Act 2025 amendment. Earlier this limit used to be 5,000, but now they made it 10,000. Are you clear? Earlier of time of credit or time of payment. If you observe, the common point in these 4 sections is rate of TDS is 10%. The common point in these 4 sections is 190, 193, 194, 194A, 194K. In all these sections, rate of TDS is 10%. For this, threshold limit is what? 10,000. For this, 194, threshold limit is what? 10,000 for individual, 0 for others. And 194A, threshold is 10,000. If it is payer is any other person. Payer is a banking company, 50,000. 1 lakh if the payer is a banking company and recipient is a senior citizen. 194K, 10%, 10,000 only threshold. Everywhere common is 10,000. Rate of TDS is also common. Are you clear? Just observe that. Understood. In all these sections, one more common element is there. TDS to be deducted on date of credit, date of payment, whichever is earlier. That's it. 4 sections, 3 sections, 7 sections over. Understood? That's it. 2 minutes. We'll immediately go for next combination. Understood until now? Yes. Yes. Continue. Next section combination. Guys, next section combinations. Commission combination. Okay. What are the commission sections? 194D, 194G, 194H. 3 commission sections. 1. 194D. Insurance agent commission. 194G. Lottery agent commission. Any other commission or brokerage. Able to understand? In all these sections, the TDS rate right now is just 2%. This is the biggest amendment. The TDS rate is what? Just 2%. Okay. Now look at 194D, guys. 194D. What is 194D? Any person responsible for paying insurance commission. This person is paying commission on insurance business. Who is receiving the insurance commission? Agent. Agent could be a bank. Agent could be, a mutual fund company. Agent could be a normal insurance agent, individual, anybody. Payer is who is paying the commission? Insurance company is generally paying the commission, or another agent is paying the commission. Insurance company, they'll have an agent and sub-agents. Okay. Insurance company will pay commission to main agent. Again, main agent will pay commission to sub-agent. Insurance company, Tata AIG. Agent, Axis Bank. Sub-agent, employee, one of the employee will be there probably. So through sub-agent, then customer, end customer. Or insurance, Axis Bank agent, and then end customer directly. Anyway, now if at all commission is paid by one person on insurance business to another person, 194D gets attracted. What is the threshold limit? Aggregate amount if at all exceeding 20,000. In all these 3 sections, 20,000 is the threshold limit common. In all these 3 sections, what is the threshold limit common? 20. Old limit was 15,000. Old limits was 15,000. Now they made it 20,000. Suppose if the insurance commission paid per annum exceeding 20 on the entire amount, 2% TDS will apply. 2% TDS will apply if the recipient, whoever is receiving, if at all is a resident non-corporate, nothing but an individual, HUF, partnership firm, all that. Suppose if the recipient is, if the payee is a domestic company, rate of TDS is 10%. Only in 194D, company 10% logic is there. 194G, it is not there. 194H, it is not there. Able to understand? Now look at. What is the rate of TDS? 2% if the SSC, if the recipient to whom I am paying commission is a non-corporate and resident person. If the person whom I am paying is a domestic company, 10%. Threshold limit 20,000. Next, 194G. 194G. Here who is paying? It's amount paid commission, remuneration on sale of lottery tickets. So the person is selling lottery tickets on my behalf and I am paying him remuneration for that. I am paying commission on that. Whether you call commission, whether you call remuneration, whether you call profit share, doesn't matter. Getting it? You are paying amount to a lottery agent who is distributing your lottery tickets. Now, what is the threshold limit in a year? 20,000. And what is the rate of TDS? 2%. That's it. Over. In all these 3 sections, TDS will be deducted at the time of credit, at the time of payment, whichever is earlier. Next, 194H, any other commission or brokerage. But remember, the moment when you see 194H, 6 sections combination, they are applicable for every person other than individual and HUF. Suppose if the payer is an individual or HUF, 194H attracts only if the business turnover in the last year exceeding 1 crore. In case of professional gross receipts exceeding 50 lakh. Look at what is the rate of TDS? 2%. Again, threshold limit is 20,000 or more. Are you clear? Easy. That's it. Yes or no? That's it. Then 194H does not include professional services. 194H does not apply on advertising payments. 194H does not apply for BSNL, MSNL when they are paying to public telephone booths. That and all outdated now, not required. Main provision 2%, threshold limit 20,000. Lottery 2%, threshold limit 20,000. Even on insurance commission 2%, threshold limit 20,000. But if the recipient insurance commission agent is a company, domestic company, 10% TDS. But threshold limit is common, 10,000 in a year. Easy or not? One more section combination is over. Right now we completed 10 TDS sections. 192, 192A, 194P, 193, 194, 194A, 194K. Yes or no? Then 194D, G, H. 10 sections we completed. Easy. Until now understood? Yes guys. Next section combination. 194B, 194BB, 194BA. Okay. Next section combination is 194B, 194BB, 194BA. Okay. 194B. I think it's horse races or lottery. Winnings. That's what. Winnings from lottery. Alla correct? Lottery. Whereas this is horse races or any other race. 194BA. Online games. Correct? In all these three sections, common rate of TDS 30%. Common rate of TDS is 30%. 194B, 194BB. The common threshold limit is 10,000 rupees. Am I right? Look at the new book. So 194B. 1 minute. Yeah, that's it. Now, in this, the biggest amendment is what you know? Earlier, 10,000 used to be per annum. But now 10,000 used to be now per transaction. This is the biggest amendment in these two sections. This is per transaction. Best example, I went to casino in Goa. Okay, I played one casino game. 20,000 lost. Leave it. Second game I played. 20,000 I won. On that 20,000 I won. 10,000 per transaction. More than that I won. 6,000 TDS they'll collect. Sir, wait, 20,000. Last 20,000 both set off. No, not permitted. Transaction wise, you won, pay TDS. You lost, you go and beg. Yes or no? The government is not bothered. Per transaction, if at all more than 10,000 per transaction, more than 10,000 you won, straight away 30% TDS has to be deducted. Yes or no? Now in 194B, 194BB per transaction, in a single transaction 10,000. What is the rate of TDS? 30%. Simple. Am I right? Now, sir, online games. What is the rate of TDS? 30% only. But what is the threshold limit? No threshold limit is given. Here in online game, if at all you are paying any money on net winning, what is it? Net winning, or more, I think actually it called as net withdrawal. What is it also called as? Withdrawal amount. On the withdrawal amount, 30% TDS will apply. Sir, how do I calculate? For example, no, I have an account with Rummy, online Rummy platform. For example, I'm not encouraging in any way that one, and don't even do that. You do CA, you can earn better money. Yes or no? So look at online Rummy. First, no, I first paid 5,000 rupees to start games, to play games. I lost 1,000 rupees. Amount is debited. Second game I played, 4,000 credited. I won. Again, third game, 7,000 I lost. Okay. Now again, the fund balance is what? Net is 2,000 right now. Again, third game I played 5,000, and now I realized, oh no, let me not play, let me withdraw the money. Now, if you want to set, if you see the ledger, 9 plus 14, 14 minus 8, 6,000 rupees is the balance available, and now I withdraw on the 6,000. Into 30% will be debited. Are you clear? You can't withdraw entire 6,000, only 30%. Sorry. I'm sorry. 5,000 is not the winning. That is opening balance which I added. 9,000 is the winning. 8,000 is the loss. Total net winning is on 1,000 rupees only 30% TDS will be applied. Are you clear? Only suppose no, if at all I didn't withdraw, then as on 31st March they will say net winning how much. Net winning as on 31st March they will say, and 30% they will deduct. Suppose I'm withdrawing. When you're withdrawing, no, is there any winning portion they will see? If winning portion is there, then they will again cut the TDS. Able to understand. That's it. So that's how this section operates. For example, no, in all these three sections, one common point is there. In one of the MCQ in September 25 attempt or May 25 attempt, this MCQ was tested. For example, winning is in kind. Winning is non-monetary. Suppose you won a car. Okay, one bumper offer is there. You won a car. You bought a TV at some Vijay sales, for example. You bought a TV. Lucky dip was there. And luckily your name was selected, and you were getting one Maruti Baleno car, for example. Let's assume the car price is 10 lakh. How will you collect TDS? Sir, take tires and give me the car. No, right? So how will you collect? How will they collect TDS? If the entire winning is in kind, TDS have to pay. 10 lakhs is the value of the car. How much TDS have to pay? I should pay 3 lakhs directly to the department by challan. and that challan I should go and give it to the, the person who is announced the winning to me, yes or no, the shopkeeper. Then once the proof of challan payment is received by him, then he will let the car used by me, then only he will release the winning. Are you clear? Now that's what even here also it is given. You see here, if cash portion is insufficient to cover TDS, or cash is not at all there in the TDS, only kind, the payer must ensure tax is paid before release of winnings through challan. Are you clear? That's it. So this is what entire 194B, 194BB, 194BA mechanism, how it operates. Rate of TDS 30,000. 194B, 194BB, except online games, per transaction 10,000. If it crossed entire amount, 30% TDS. Online games, net winning 30%. If at all you are not withdrawing at the time of 31st March, 30% on the net winning portion. Are you clear? Even the net winning is only taxable under income from other sources. In case of online games, net winning is only taxable under income from other sources. Easy or not? Yes or no? Further, one important point. Sorry, one more important point. It's actually TDS on online games, right? Okay. Yeah, correct only. It's only net winnings, ma. It's only net winnings, correct only. Remaining, no, if at all, casino I'm playing, they're maintaining one ledger. For example, for casino, winnings they are crediting, losses they are debiting. Debit you ignore. On the winnings, only winnings amount into 30%. Are you clear? Simple, ma. Now it is per transaction 10,000 crossed. Whereas online winning, there is no per transaction limit. Total net winning in the year only they will be considered, which is something better, relief. Clear? Maybe government is encouraging online games to discourage cash. Fine. So this is 194B series. Are you clear? Another 3 more sections we completed till now. 13 sections we completed in TDS. Are you clear? Now next we'll discuss 194I series, IA, IB, okay, and LA. 4 sections. That 4 if at all we complete, 17 sections will be over. Next one, next combination, guys. Next section combinations. Biggest amendment again here. 194I, biggest amendment. 194IA, 194IB. No, let me rewrite the order. 194 IB, these two are rent related sections. 194 IA, this is immovable property transaction. This is 194 LA, this is also immovable property transaction. In this amendment is there, in this amendment is there, in this amendment is there. By the way, 194 IB no amendment, ma. 194 I amendment is there, 194 LA amendment is there. What is this section? 194 LA. In all these sections, okay, commonly the TDS is at the time of credit, at the time of payment, whichever is earlier. But LA alone is there, right? It is generally at the time of payment. Fine. Anyhow, so time of credit, time of payment, that is not that important also in exam. That they will not test generally. Look at the remain. This is what? TDS on rent. This is also TDS on rent. This is TDS on purchase of immovable property. This is TDS on compulsory acquisition of immovable property. Now what is the rate of TDS? Now look at, so first I will cover IA and LA. Okay, first I will cover IA and LA. Look at 194 IA. Sir, I am purchasing immovable property. Okay, you are purchasing immovable property, you are a buyer. Oh, seller is, you are paying money to the seller, right? Yes, I am paying money to the seller. Now, other than agricultural land, which agricultural land again? Rural land. Suppose I am purchasing immovable property and does not include rural agricultural land, okay? Urban land you are purchasing or house property you are purchasing, anything that you are purchasing, which is a capital asset immovable property. And if at all the consideration is less than 50 lakh, no TDS. Or if stamp duty value is less than 50 lakhs, then also no TDS. Suppose either consideration or stamp duty value, any one is exceeding 50 lakh, automatically TDS at what rate is applicable? 1%. Now the first point, sir, SDV is there, right? What is the SDV? Which date I should take? Transfer date you should take, registration date you should take here. There is no such concept called agreement to all that. Which rate you should take? Transfer rate you should take. Straight away you should take transfer date SDV. That much they will not test also, don't worry. Now, what is the rate of TDS? 1%. 1% of the consideration or estimate, whichever is higher. For example, no. For example, actual consideration is 49 lakh. Stamp duty value is 51 lakh. 51 lakh. So automatically TDS is attracted because stamp duty value is more than 50. Now, whichever is higher means 51. So 51 lakh into 1% is equal to how much, ma'am? 51,000 TDS will be attracted. Now, when the TDS has to be at the time of credit or at the time of payment, in my books when I show outstanding transaction or at the time when I'm actually paying, whichever is earlier. Hello, able to understand? Now, for example, no, there are multiple sellers, there are multiple buyers, but it's only one land. Still, land value only we should see. It's not seller point of view, it's not buyer point of view. It's a transaction value which is seen. Are you clear? So that's 194 IA. By the way, here you are paying amount for purchase of immovable property. Suppose if government is purchasing immovable property under compulsory acquisition, then this section IA will not attract. Which section is applicable? LA will attract. Which section is applicable? LA will attract. As per LA. As per LA. Earlier, no, threshold limit is what? 2.5 lakh. But now the threshold limit is 5 lakh. Amendment again. Threshold limit right now is what, ma? 5 lakh. Finance Act 2025 amendment. What is the rate of TDS? 10%. So any person, generally government undertaking, if at all they are buying immovable property, how are they buying? By coercion. That's what compulsory acquisition. Yes or no? They are buying under compulsory acquisition a house property, land, immovable. That's it. Anything, whatever it is. Yes or no? Except urban agricultural land here. Urban agricultural land, rural agricultural land, both are not covered. Why? Compulsory acquisition of urban agricultural land is exempt under 10 clause 37. Compulsory acquisition of urban agricultural land is exempt under 10 clause 37. Capital gains exemptions, you will see that. 10 clause 37, 54B 10 clause 37. Last 2 years, SSE must use the land for agricultural purpose, either SSE or their parents. That point you would have seen, no? Exactly. No TDS on compensation paid for acquisition of agricultural land in India, whether it is rural or urban, doesn't matter. But remember, if I am buying urban agricultural land, normally I am buying 194 IA gets attracted. If government is compulsorily acquiring agricultural land, no TDS at all. Any other property they are acquiring on compulsory acquisition, yes, TDS gets attracted. At what rate? 10% is the rate of TDS, which is unfair completely. That too, if the amount is exceeding 5 lakh rupee, if the amount is exceeding 5 lakh rupee, on the entire amount TDS gets attracted. Are you clear? Whereas IA, 50 lakh limit is there. Once 50 lakh is crossed, on the entire amount, 1% TDS will be attracted. Are you clear? Yes or no? 10% is very huge amount, guys. So IA, LA, both are over. Clear? Now, IA, IB, sorry, 194I, 194IB. Okay? Now, 194I. Who is 194I? A payer, ma. Same. Just like we have seen in 194A, we have seen in 194H. Same. Any person other than individual and HUF. Suppose if it is individual or HUF, business SSE, turnover exceeding 1 crore. Professional exercise, turnover exceeding 50 lakh in last year. Then only 194I will be attracted. Further, 194I, you are paying rent. What you are paying? Rent. Rent on what? You are paying rent on immovable property, or you are paying rent on machinery, or you are paying rent on furniture. You are paying rent on either immovable property or machinery or furniture. Suppose I am a mining company. I am hiring JCB machines, cranes, procliners. I am hiring that. I have to pay a TDS on that. All these are machineries. So I have to pay rent on that. So if at all I am paying rent on immovable property, rent on plant and machinery, rent on furniture, 194I gets attracted. Now, what is the rate of TDS? Rate of TDS 2% in case if the renting is related to plant and machinery, and 10% TDS if at all furniture and immovable property were there. If at all furniture and immovable property you are renting, then 10% is the rate of TDS. Many students will wrongly calculate 2% for furniture also. No, furniture and immovable property 10% rate of TDS, whereas plant and machinery 2%. Further, remember threshold limit. What is the last year provision? 240 per annum. In the recent JAN exam that is tested in MCQ. Sorry, descriptive paper only. MCQ it got tested. MCQ it got tested. Parking lot rent. In the recent JAN exam, 2,40,000 per annum is the threshold limit. But now per month threshold limit 50,000. If at all per month rent is, per month or part of a month rent, in a month you are paying more than 50,000 rent, that's it. On the entire amount, 10% TDS is applicable if it is an immovable property or furniture. On the entire amount, 2% TDS is applicable if it is a plant and machinery. Sir, I'm taking from one company, plant and machinery. I'm also taking one house on rent from them, sir. 50-50 separately should be seen. No, combine and then see. Are you clear? If both put together 50,000 crossed, suppose no, I'm paying 50,000 for plant and machinery, I'm paying 50,000 for furniture, I'm paying on rent. I'm paying rent on furniture 50. Both put together 1 lakh, section attracted. Now, how much TDS? On plant and machinery, 2%. On furniture, 10% I will apply the rate of TDS. Are you clear? Yes or no? Next, 194 IB. You know what? 194 IB is the section which is applicable for individuals and HUFs who are not covered above. Individual and HUF who is not covered. Which individuals are not covered in 194I? An individual whose business turnover is less than 1 crore in the last year. An individual or HUF whose professional reserves are less than 50 lakh in last year. 194I will not attract for you. But IA is applicable. IB is applicable as per this. Again, threshold limit is what? Per month rent exceeding 50,000. Per month rent is exceeding 50,000. You should deduct directly 2% TDS. Directly you should deduct 2%. And remember, in 194 IB, only immovable property is covered. Furniture renting is not covered. Machinery renting is not covered. Only immovable property renting is covered. Hello. Until now, what is the rate of TDS under IB? 2%. When you should deduct the TDS? When the monthly rent is exceeding 50,000. You know, that is the threshold limit. When you will deduct, you know, not every month. You will deduct one time at the end of the year. You will deduct when, ma? At the end of the year. Last month of tenancy, look at the time of deduction. You know, earlier of creditor payment, time of credit or time of payment of rent for last month of the financial year. March month rent you are paying, no? That time you will deduct. Or suppose, no, December month itself you are vacating. Then last month of tenancy, December month you should deduct the TDS. For example, look at, you know, there is a company, I am paying rent monthly, how much, ma? 1 lakh rupee with a landlord. I took a rent for my house property only. Residential purpose only I took it on rent. 1 lakh I'm paying. 194 IB is applicable. And you know what? I'm a salaried employee. I'm not having a business at all. I'm just a salaried employee where I don't have business. Still 194 IB gets attracted. Now 1 lakh I'm paying, no, for 12 months. March month. Total how much I'm paying? 12 lakh. Into what is the rate of TDS? 2%, where the amount of TDS will be 24. March month 1 lakh I will pay, right? From that 24K I will reduce and balance amount I will pay to owner. This 24K I will remit to the department through one challan directly. Okay. Here no, I don't have to file TDS return. I don't have to pay challan separately and then file a return separately. You know, there are 3 sections. 194 IB, 194 IA and 194 M. In these 3 sections, no, TAN number is not required. There is one more concept I'm telling you guys, 203A, TAN number. Generally, whenever you are deducting TDS or whenever you are collecting TCS, you should have a TAN number. Tax Deduction Collection Account Number. Okay? Tax Deduction and Collection Account Number. TAN number is mandatory. If at all you have to deduct TDS, if at all you have to collect TCS. Now, if at all I am deducting TDS under these 3 sections, TAN number is not required. You know, these are rare, very rare I will do it. Understood? So for that reason, TAN number is not required. And remember, these 3 sections are applicable whether you are a business SSC or non-business SSC, doesn't matter. Even you are a salaried employee, you are a senior citizen, you are whoever it is you might be. These 3 sections get attracted if those section conditions are attracted. Are you clear? TAN number is not required. That's it. Up to that alone is sufficient. Understood? Now look at. So do you understand this point? All of you? Further, you remember we have a section called 206AA, higher rate of TDS. What is it? Higher rate of TDS. 2 times the rate. 2 times the rate given in the section. Sorry. TDS rate given in the section or 20%, whichever is higher. Okay. 2%, I mean, whatever the rate, TDS section rate or 20%, whichever is higher. Yes or no? So what is this? When this is applicable? If the recipient, I'm paying money, no? I'm asking him PAN number, sir. I have to deduct TDS and pay, sir. Please give me PAN number. He's saying, no, I don't want TDS. I will not give PAN number. Do whatever you want. Okay, I'll do one thing. I will deduct extra. I will deduct extra. How much I will deduct? 20%. Suppose no, I'm a salaried employee paying rent. How much rent I'm paying, ma? 12 lakh I am paying. Understood? And I asked the owner, give me the PAN number. He's not giving me. Instead of 2%, I will deduct 20%. How much it will be? 2.4 lakh. Sir, March month rent I'm paying 1 lakh, sir. Now TDS 2.4. How should I? If at all you have to deduct at 20% rate and March month rent is not sufficient, then deduct only 1 lakh. Are you clear? That is what 194 IB talks about. Go and check IB. TDS will be deducted during the last month of tenancy. If at all landlord does not furnish, if at all the lessor does not give you PAN number, then deduct TDS at 20%. However, the TDS amount shall not exceed rent amount of the March month or rent amount of the last month of tenancy, as the case may be. That's it. 194 IB is also completed. Understood or not? Yes or no? Everywhere crystal clear, I'm telling you. If at all any of you are feeling little fast, please rewind it. Please revise it. You will understand. Whatever I told, just observe, then observe the book. You will get crystal clear clarity. Every dot I'm closing almost. Okay. But see, again, I can't discuss the section in depth. Already itself more than 1 hour it crossed. More than 1.5 hours it crossed almost. TDS section discussion itself. Until now understood? Yes or no? That's it. Now we completed 4 more sections right now. 4 more combinations, which means 21 sections we completed almost. This one also put together 17, huh? Already 17 before only it came. No. This one is put together 17 sections. 17 sections we completed almost. Clear? That's it. Yes, let's continue the remaining sections. We completed almost 17 sections. Okay. Now we'll continue the remaining sections of the TDS. Now, if you observe, like just a minute. Yeah, clear? Yeah. We have in our entire classes, if you see, even our classes also, we have the shortest duration. In all the course CA Inter entire both put together is 700 hours. Each group is 350 hours only. 3-4 charge if you apply 590 hours only, both the groups put together. We could achieve that only because we literally do not discuss anything in the class. Right now you saw the marathon. I hardly speak general stuff. That kind of productivity we maintain. And all our team, me or my other team members are also same level of expertise on the subject. You see me like PGBP, 3.5 hours I spent. See the kind of clarity we are able to give within the 3.5 hours. Every topic, every point we told almost. That is happening only because of the background work that we do. When doing material, you could see the material. You could understand that. Every subject, this is how we did. Where we decided, today we know very well in online, students cannot focus on so many hours. We have to bring the coaching hours to less duration. For that, what we need to do? We need to work a lot in the background. Let's work. Let's make wonderful materials. Let's make wonderful question banks and let us reduce coaching duration. Our coaching duration is 60% of market duration. If market average you take, if they spend 200 hours on subject, we take 120 hours only that subject. Yet, I bet we give more content than what they give. We give more content than what they give. Because you take any class anywhere, you will find a lot of time wastage in the class. Lots of other stuff, discussion, all that. See, that's inevitable. We have a strict policy. We always have, whenever we have our team discussion, we all uniformly agree one point. Let's not waste student time in the class. You want to motivate student, you want to tell about your life story, YouTube is there, you tell there. I also do the same. YouTube is there, I will tell whatever I want to speak, I'll speak there. Let me not discuss all my knowledge in the class. I'll talk on the YouTube. Subject, wonderfully you deliver. We give 100% concept, we give TYK, we give illustrations, we give MRP, MTP questions, RTP questions, past exam questions, MCQs. That much we discuss in this hours, shortest duration. It's only because we mentally fixed student has to experience the best in the shortest time possible. That's it. And that's why that ground level we have a lot of goodwill. Because what we tell, we deliver. You know what, even for May exams, any other academy you see, they are starting the classes or they are in between the classes, we delivered already. May 26 classes we already delivered. Maybe in FM and audit, no, some 3 chapters were pending. That also is over almost. Understood? Everybody else, by the time when they start work, we deliver it. So that's a kind of discipline that we maintain in our academy, in terms of class, in terms of material, in terms of everything. Only one vision. In the entire South India, last year we had total 17,000 students enrolled. Be it a book buyer, be it a course buyer, 17,000 students. But I want in 2026, 25,000 to 30,000 students should be using Shrestha resources directly after enrolling. It may be a book. Passively, indirectly, almost I can say 30-40,000 students will be using our resources. Indirectly, marathon, all that, if I count 80,000, 90,000 students will come easily. If at all I count marathon resources, all that. But I only count those who buy the book or those who buy the class. Any of it. So this students is approximately 17,000 students we have. Now we want to make an impact of 25 to 30,000 students we should have. And for that, we should give the best class, best books, or whatever resources, best guidance. At the end, they should pass. Ultimately, whenever we are discussing any topic, you can see this in my marathon itself. You can understand that. When I discuss anything, okay, students came, marathon I have to cover, I'll leave it. No, that's not my attitude. They should understand. When they go and look at the question paper, they should always remember me. That's how I think of. Very simple. I want to make an impact. If I do not think like this, I will also take casually. You can say full day I'm able to take, right? That's only because of the motivation which I have, the vision which I have. Because everybody, when they're writing exam, when they after listen to my marathon, when they're writing in the exam, no, they should thank me. They should feel, thank God I trusted the right person. If that feeling is there in the student at the end of the exam, after completing the exam, that's what a blessing for us. Obviously, our money will grow, our business will grow, our credibility will grow. All that, of course, they motivate us. But that alone cannot motivate us. What else motivates us? Beyond all this, that non-monetary satisfaction is there, right? Where the student, when they think of us, they'll have a respect towards us. That is what drives us the most. Of course, only respect will not be sufficient. Money is also required. Yes or no? So both. The objective is both. I'm openly agreeing. Any business people, objective is both. But only one if you expect, you can't survive in the business. Any one only if you focus on, you can't survive in the business. You have to focus on both. Give the best product, charge the best. No problem. That's it. We are able to give at that price all this quality contents with the free PDF, all that, because of the economies of scale. Because of the scale at which we do the business. So that's the reason we are able to provide at that price. Honestly, I tell you, because I know entire how market, everybody, how everywhere it works. You get the content top notch at Shrestha. The content, the book, everything you get top notch at Shrestha. On a scale of 10, if at all you rate us 9 or 9 or 10, if at all, definitely you go and try experience at other classes. You will definitely rate them 5 or 6 only if you compare with us. That's a benchmark which we created. And everywhere, that you see, we don't have any marketing team. We have only 5 employees. Non-teaching is only 5 employees, 6 employees, everything with packing division, everything put together. Then teaching team, we have a team of 10 to 11 we have. That's it. We don't have any other. With this limited team, without marketing, we are able to do at this scale only because of one thing. This kind of ethics that we follow. You know what? I won't hire students. You'll never see me posting hiring students required. Never. I can easily pay 20,000 to each student because I'm already paying more than 35-40,000 to our staff. Minimum for anybody, minimum 35-40. There are some who are where I pay 60-70,000 also. Students I can get at 20K. But what happens if I hire student? Their life gets spoiled. When they see at an early age 20,000 per month, they stop focusing on their studies. And after 2-3 years working with me, where it's an academic work here, it's not an articles work. It's not a TDS, TCS, a GST, all that. For example, one student is saying all TDS related provisions, all that. That learning you get only in audit form. So if at all I hire a student who, there are thousands of students who ask me, sir, I want to work in your academy, material work you give me, just to pay me 10,000. No, that's my policy. Because you may work right now. I'm paying you better money than anybody else in the market. You will love it. You will say that I'm very good. But after 5 years, when you go for interview, or when you want to clear CA and want to go for interview, you will think of unnecessarily I worked there. You may not even curse me, because it's your decision. You may not curse me, but your inability will be proven after 3-4 years. Don't get tempted for all these jobs. Your aim is to become a CA. Your aim is to become CMA. Become that first. You can get 70,000-80,000 easily there. And once you enter into corporate, once you prove your skills, down the line 10 years down the line, vision 1.5-2 crore you will earn. Down the line 10 years, that's the scale you can grow. My friend is there 9th year or 10th year after he qualified. He's getting somewhere around 1.5 crore. In one company, he works below CFO. Later, he'll go to a CFO level. Maybe after 2-3 years, his package will be 3 crore. There are many of my friends who are also there, where they are earning only 50-60 lakhs. Opportunities are there for everybody equally. It's how you work. So if you want to scale up at that level, you want to get an exposure at that level, you should only work in that dimension. You should not think about working here, working there, unless your family position is really not supportive. Okay, so as a policy, what we have is, I will not hire students at all. You will not see me any CA student working with Resta, because if at all is a student, I'll not take it. That's my rule, because he's asking 15,000 only, but still that's not my policy to take. This is the ethics which I follow. The reason, you have to live a wonderful life later, because if you work here, no academic works and all, you will not have a growth here. You will not have a growth. Yes or no? People will give growth only to who bring business. You want to become a teacher here, there again I have a different terms there. So different terms, I'll definitely, all wonderful growth you'll get, but that I will not tell you that easily. It's not that easy. You see me, right? That much hard work you have to do. So hard it is. Okay, you want to be number one in the industry, you have to work extreme hard. You want to be number one here, you have to work harder than everybody else. Simple logic. So the ladder is decided by how much amount of work you do. That's it. So don't get tempted for 10,000, 20,000 salaries if you really does not need it. If at all at your home they are saying you, no, our financial position is not supporting, you have to work. Try to convince your parents, Appa, you take a loan, some amount, somebody you take loan. Once I clear CA, 2 months salary I can repay the loan. That's how you have to think. You should never work for 10-15,000, because you're all doing CA course, you're all doing CMA course. Your earning capacity is more than 60-70,000 per month. The faster you finish, the faster your family responsibilities you can take up. You can clear all your debts at your home. Okay, that's it. This mantra you remember. Next. Which sections, ma? 17 sections are over, right? Now let's go back. 192 over, 192A over, 193 over, 194, 194A over, B, BB, BA over, 194C is there. I will keep it pending. 194C I'll come back at last, because that section I generally discuss at last. D over, DA over, no, 194 DA not over. Now let's discuss 194 DA. What is this 194 DA? I have an insurance policy with an insurance company. They are releasing money to me. Maybe maturity amount, or maybe in between surrender value. Anything it could be. A policy holder getting amount from insurance company on a release. They're releasing the money to me. And if that amount is more than 1 lakh, what is the threshold limit? 1 lakh, correct? Am I right? Yeah, if it is 1 lakh, 2% is the rate of TDS. What is the rate of TDS, ma? 2%. The moment it crosses 1 lakh, what is the rate of TDS? 2%. Straight away 2%. However, if the amount withdrawn from the insurance company, is exempt under 10 clause 10D, if the amount withdrawn is exempt under 10 clause 10D, then that amount is no TDS. If the exempted amount is being received, no TDS. Hello, everyone. Further, what is the rate of TDS? 2% on which amount? Not the amount withdrawn, on the taxable portion of withdrawal amount. What is it? Taxable portion. See, threshold limit 1 lakh we should check for withdrawal amount. You withdraw more than 1 lakh, amount released is more than 1 lakh, section attracts. How much TDS? 2%. On what? Taxable portion. On what, ma? Taxable portion. TDS itself will not apply if at all the amount released on insurance policy is exempt under 1010D. What are exempted policies? Under other sources, insurance taxation is there. Insurance policy, withdrawal, maturity amount, insurance maturity amount taxation is there. There it is covered already. Able to understand? It is already covered under other sources. 1010D. Very simple. Every year I am paying premium not exceeding 10%. Now maturity amount I received fully exempt. Every year I am paying premium for a policy which is taken by me before 1st April 2012, before 20%. I have taken a policy before 1st April 2003, no percentage. If the policy is taken on or after 1st April 2003 and per annum premium is not exceeding 20%, then that's an exempted insurance policy. Whatever maturity amount I'm receiving is fully exempt. If I'm taking policy on or after 1st April 2012, 10% of sum assured is the annual premium that you have to pay. If annual premium is not exceeding 10% and maturity amount whatever you are receiving is fully exempt. So if at all insurance maturity amount is exempt under 1010D, 194DA will not apply. If the maturity amount is 1010D exemption does not apply, then TDS section will attract. That too, TDS when you should deduct only when the amount of withdrawal amount released is exceeding 1 lakh. That too, TDS is deducted on what amount? Taxable portion. What is the TDS is deducted on? Taxable portion. Sir, how much is taxable portion? Under other sources it is covered. Able to understand? That's 194DA. Clear? Next. So 194DA over. 194E not there. 194F, G completed, H completed, I completed. 194J is pending. Okay. 194C, 194J generally I discuss at last. 194C, 194J I will discuss at last. K is over, LA is over, M. Okay, no problem. M also we can cover, not an issue. Okay. No. M also let me not cover because M also 194C, J, M. That's a combination actually. Okay. M, 194N I will cover now. Okay. N and Q I will cover now. N, Q, R, T. 4 more sections I will cover right now. What are the sections? 194N, 194Q, 194R, 194T. What is the link between these sections? No link at all. All this in all the previous, everywhere I discussed the combos. This also one combo where there is no link with any section for this combo. Understood? Remaining all other sections have a link with each other. A similarity is there. But here in these 4 sections, no similarity at all. For example, this is a TDS on cash withdrawal. This is a TDS on purchase of goods. This is a TDS on perquisite provided by in the course of business. This is a TDS on interest paid to partners. See, no link at all. Yes or no? What is the rate of TDS? 194N. Rate of TDS is 2%. What is it? 2% or 5% depends on the case. 194Q 0.1%. 194R 10%. 194T 10%. Okay, fine. Maybe in these 2 sections rate alone common. Clear? That's it. Now look at 194N. Can I go with it? So by the way, 194DM, just once I'll summarize. Taxable amount received under insurance policy. Which insurance policy? Life insurance. See, you don't get amount received. You don't get amount in medical policy. You don't get amount in accident insurance policy. You get amount in only in life insurance policy. And what is the rate of TDS? 2%. When this section gets attracted, if the taxable amount withdrawn is exceeding 1 lakh or more, yes or no? That too, 2% on the income portion only it will be computed. Only on income portion TDS will be computed. What is income portion? Under 56. We have in other sources 56 subsection 2 clause 13 I guess. Yeah, clause 13. Under that particular clause it is there. In other sources it will be covered. There you can see that. Next. No TDS if the amount received is exempt under 1010D. If it is an exempted insurance policy where the maturity amount is exempted, no TDS at all. Next. Now, what is the section that I thought? 194N. Correct? N. Look at 194N. What is this 194N? TDS on cash withdrawal. You can withdraw cash only with a bank or a post office. The bank can be a normal bank or a cooperative bank. Yes or no? When you should withdraw? Very simple. If at all I am withdrawing above 1 crore, up to 1 crore if you withdraw with a bank, up to 1 crore if you withdraw with a bank, no TDS at all. Above 1 crore, only above 1 crore if you are withdrawing, no 2%. That's a threshold limit. Sorry, that's a slab limit. I told you 194M, 194N, 194Q. No, 194N, 194Q. These 2 sections, the TDS mechanism operates like a slab limit. Are you clear? Sir, I am withdrawing cash, sir. I am withdrawing cash. I comes under others. Yeah, who is withdrawing cash? either a society is withdrawing cash or others. Suppose I'm an individual, I come under other category. So if I withdraw cash up to 1 crore, no TDS. Above 1 crore, extra amount, 2% TDS is there. Above 1 crore, the TDS is how much, ma? 2%. That too when you are filing ITRs in the last 3 years. Any 1 year at least you file ITR, no problem. Happy if you are proving. Suppose no, all the 3 years last ITRs, no, you didn't file. You are not a filer. You are not an IT return filer. When you are withdrawing cash, no, banker will ask you. You go and try, they'll ask you, sir, have you filed ITR in the last 3 years? Sir, all the 3 years I didn't file, sir. At least 1 year you filed, sir. No, sir, all the 3 years I didn't file. Then up to 20 lakhs, no TDS, sir. But the moment if the withdrawal is crossing 20 lakh, up to 1 crore, it is 2%. And if you are withdrawing in that case above 1 crore, then it is 5%. Are you clear? Many a times this provision is tested in CA final itself. In Inter also it will be tested frequently. Clear? That's it. Look at once again. General threshold limit is what? 1 crore. If at all you are a regular filer of income tax return. Only above 1 crore if at all amount you are withdrawing, on the extra amount only 2% TDS will apply. Correct? For example, I am withdrawing 1.5 crore. Only 50 lakhs multiplied by 2%. How much is the TDS, ma? 1 lakh. Suppose I am not a regular filer, means last 3 years no return filed. Now this 1.5 crore will be split into 3 parts. 20 lakh, 80 lakh, 50 lakh. Why 20, 80, 50? First 20 lakh, 0. Next 80 lakh, 2%. Next above 1 crore, above 1 crore. See, this is up to 20. This is 20 lakh to 1 crore. This is more than 1 crore. This 1.5 crore I will split. This I will deduct TDS at 2%. 0, 1.6 lakh, 2.5 lakh. Total TDS how much, ma? 4.1 lakh. Easy or not? Suppose if the person withdrawing is a cooperative society. This is when if the person withdrawing is a company, individual, partnership firm, LLP, AOP, BOI. If the SSC who is withdrawing the money is a cooperative society, wherever 1 crore word is there, put 3 crore over. Wherever 1 crore word is there, put 3 crore. Look at this. If it is a cooperative society, 1, I will put 3. Here 20 lakh to 3 crore, above 3 crore, percentages everything is exactly same. So look at for normal SSCs, if the withdrawal person is a society, wherever 1 is there, put 3. 0 to 1, normally 0 to 1, regular filer 0 to 1, no TDS. Above 1, 2 crore. If it is a society, 0 to 3 crore, no TDS. Above 3 crore, TDS. Sir, society did not file IT return in the last 3 years at all, sir. Then up to 20, 0. 20 lakh to 3 crore, 2%. Above 3 crore, 5%. Same logic. Able to understand? Easy or not? Now again, last 3 years, no, any 1 year you file IT return within due date, that's enough. All the 3 years you didn't file IT return at all, or you didn't file within due date in the all the last 3 years, automatically 194N gets attracted. Able to understand? Higher rate of TDS gets attracted. However, by the way, amount of withdrawal only at the time of payment. Only at the time of withdrawal only TDS will be deducted by the bank. Yes or no? Now, if at all the person withdrawing is a government, the person withdrawing is a bank, the person withdrawing is a correspondent, bank correspondence, if the person withdrawing is a ATM operator, if the person withdrawing is any other person notified by the government, no TDS under 194N. Easy. Yes or no? Next. So now one section 194N is completed. Easy or not? Then 194Q, one of the biggest amendment happened here. Actually in this section it was not amended. There is a section called 206C subsection 1H. There is a section called 206C 1H. This is a TCS section on sale of goods more than 50 lakh per annum. This section got removed now. This section got removed now. Okay, for May exams it is not there. Fine. What is this 194Q is all about? So MNOPQ, yeah, look at. What is this section? What are you paying under this section? You are paying for purchase of goods. How much you are paying per annum? Exceeding 50 lakhs in a year. Remember, this section also operates with a slab limit. This section also operates with a slab limit. Up to 50 lakh, no TDS. Beyond 50 lakh, extra amount is there, right? 0.1% of the sum paid. How much TDS you will deduct? 0.1% of the extra amount. Sir, I am purchasing from one vendor. I am purchasing from one vendor 1 crore, sir. only on 50 lakh, 0.1% is equal to 5,000 rupees. I will deduct TDS. How much TDS I will deduct? Very nominal, 0.1. Suppose the seller from whom I am purchasing the goods, he is not giving me PAN number. Then higher rate of TDS, which is 5% will apply, not 20%. Generally, if the other person do not furnish PAN number, 206A says 20% rate of TDS, higher rate of TDS. But here alone it is 5. Are you clear? Now look at next. Now, who is the person who is deducting TDS here? Buyer. Who is deducting here, ma? Buyer. Whose turnover? Now tell me, look at here. Here, deductor must be the person in the last financial year, his turnover should be exceeding 10 crore. Then only 194Q gets attracted. 194Q is attracted only if my last year turnover is exceeding 10 crore. Otherwise, this section is not attracted. Able to understand. Further, most important condition. Sir, I am purchasing goods. I am purchasing for more than 50 lakh. And I ask TDS from the seller. Instead of that, seller, he didn't allow me first TDS and he is asking me TCS. And he is saying, hello mister, forget about TDS. For me TCS applicable. I should collect TCS from you. I am selling goods, no? TCS section is saying me to collect TCS from you. You are saying TDS again. What is this? Seller is coming and arguing. Same transaction, TDS 194Q is applicable. 206G is applicable. Some TCS provision is applicable. If TCS provisions are attracted on the same transaction, TCS will apply. Which section will apply? TCS will apply. This section is not applicable if TCS under 206C is applicable. 206C. In this 206C, 1 subsection 1, 1F, 1C, 1G is there. Now 1F is or 1H is also there, but that 1H is removed. That's what you see. 206C 1H is removed. Are you clear? 206C 1H, subsection 1H is removed. Earlier, there used to be one complication here. Now happily removed. No need to worry. Simple. Sir, I am purchasing goods more than 50 lakh. Extra amount 0.1% you deduct. Suppose he says TCS is applicable on the transaction, then you withdraw. He will deduct TDS. Happy. Suppose for him TCS is not applicable on that. You are purchasing for more than 50 lakh. Extra amount whatever is there on the goods purchase, you must deduct TDS. By the way, 194Q is attracted for you only. Last year turnover is more than 10 crore. That's it. With this 194Q is also completed. Understood or not? Next section 194R. Am I right? 194R. So what is 194R? For example, I'm having a distributorship. I'm a distributor. I'm a sole proprietor and acting as a distributor for Hindustan Unilever, one cosmetic. Okay, shampoo bottles. One shampoo which they manufacture, I'm a distributor. This year, I sold 5 crore worth of shampoos. Hindustan Unilever recognized my effort. They gave me 10 lakhs worth of car as a gift. Tell me, what is this here? It's a perquisite in my business. Under charging section 28 of PGBP, perquisite received by me during the course of business or profession is fully taxable under PGBP. Are you clear? Suppose I'm a doctor, a patient came, yes or no? For example, like we operated, the surgery was successful. Now the patient rewarded me 10 lakhs gift. That's a perquisite which I'm getting out of my profession. If at all I'm getting any gift or perquisite out of my business or profession, then the other person who is paying me this should deduct TDS. What rate he should deduct TDS? 10% of the aggregate value of perquisite. That too, if the perquisite value exceeds 20,000 in a financial year. If the perquisite given by me, Hindustan Unilever, I'm giving 10 lakhs worth of car, right? I should deduct TDS at 20% from the amount of perquisite that I am giving. If the perquisite is in kind, if at all the benefit is given in kind, I need to ensure that the recipient of the benefit should pay the tax by challan. Show me the challan as a proof. Then I will release the benefit if it is kind benefit. Are you clear? Yes or no? By the way, 194R is applicable under 6 section combination will come. 194R is applicable for which SSE? Any SSE other than individual and HUF. Suppose if you are an individual and HUF, you are giving perquisite, you are giving a benefit. If your last year turnover is more than 1 crore, this section is applicable. Our gross receipts in the last year profession is exceeding 50 lakh, then only this section is applicable. Like this, totally 6 sections have this kind of condition. ACHIJR. ACHIJR. Are you clear? That's it. Put in ChatGPT, it will give you some code. Okay, easy way to remember. That's it. So when you should deduct the TDS? Before we give the benefit. Simple. At the time of credit, nothing but. Clear? This is 194R. Then we have one more section. Okay, 194T. What is 194T? Sorry, I told interest to partner. I'm sorry. Any amount paid by partnership firm to partner. What is this? Any amount paid by partnership firm to partner. 194T is applicable on TDS on remuneration to partner. Though in the heading I said remuneration, you see the actual salary, remuneration, commission, bonus, interest paid by firm to partner. Because he is a partner, he is getting this. If he is not a partner, he won't get this. Simple logic. That kind of payment. Because he is a partner, he'll get some money, right? What is that money? Remuneration, interest. If at all a firm is paying any remuneration or interest, very complication is there here, I will tell you. Interest. Aggregate amount paid is more than 20,000. Straight away, 10% TDS will apply. Whether the partner is a resident or non-resident. The firm can be a partnership firm or LLP. Biggest twist, you know. Suppose if a firm is paying remuneration to non-working partner. Firm is paying remuneration to non-working partner. PGBP we saw. Will the firm get deduction? No. Is the taxable for partner? But the section is silent on this. Even if you are paying remuneration to non-working partner, you should deduct TDS. Sir, I am paying interest to partner at 20% per annum, sir. 5 lakhs interest I am paying, which is 20% per annum interest on capital. You know, the capital is 25 lakhs, sir. One partner gave a capital 25 lakh. I am paying 20%, 5 lakhs interest per annum. On entire 5 lakhs, you should deduct TDS. On entire 5 lakhs, you should deduct. But actually, firm will get deduction only 12%. For partner also, how much is taxable in his hands? 12%. 3 lakhs only taxable for him. For me also 3 lakhs only deduction I will get. Still it doesn't matter. TDS is deducted on payment made. That is what this section actually. On this, the CBDT has to give a notification basically. Okay. If they do not give notification, the section is very vague. This was a newly introduced section. CBDT has to give a notification, but now they won't give also. Why? New act came. No. In the new act corresponding section, what they mentioned, we need to see. Able to understand? That's it. This is one more mistake which they made. Now here you see, I mentioned that point clearly. In ICA book, nowhere you will find all this. 40B disallowances are irrelevant. Here, the amount paid is the criteria. That's it. 4 sections combination is completed. We are now still left with 3 more sections. That's it. What are the 3 more sections we are left with? C, J, M. That's it. Once these 3 completed, TDS is over. Then immediately TCS. Then advanced tax. That's it. Last 3 more sections that are left in TDS. Last 3 more sections that are left in TDS. Till now, how many sections we completed? 21. Now 3 more sections we have in the TDS. With me, which means total TDS sections we have in syllabus is 24. Apart from the TCS, we have 4 or 5 sections we have TCS. So where it will be 29. Apart from that, administrative sections will be some 3 or 4 minimum will be there. Actually, it's 10 were there, but not required 3 or 4. Which means 32, 33. Apart from that, advanced tax sections will be there, which will be some 7 or 8. Only one chapter, TDS, TCS, advanced tax put together, close to 40 sections. See the complexity. The weightage is 6 to 8 marks. The weightage is 6 to 8 marks. That's the reason I kept this under 1/4 category. Understood? When I'm making 3/4 and 1/4 analysis, I look at the complexity of the chapter. And accordingly, I kept it under 1/4. If this time, if you want to master on TDS, TCS, advanced tax, you have to spend at least 10 to 15 hours after the class. 10 to 15 hours after the class, you should spend the time. That 10 to 15 hours is enough to revise PGBP, which is a 15 marks compulsory question. So that's how I calculate weightage. Clear? But MCQs can come. For that reason, at least watch this marathon thrice and 4 times and then go back and then practice that. At least MCQs you can solve. Okay? Next. Look at last 3 sections, 194C, 194J, 194M. First I will cover 194J. 194J, again biggest amendment. What amendment? By the way, in 194J, what is the rate of TDS, 2% one scenario, 10% another scenario. Okay, what is the rate of TDS? By the way, under 194J, what are the payments covered? You know, in 194J, biggest twist is what, you know? 194J is applicable for whom again? It is applicable for any person other than individual and HUF. First point, correct? Now individual and HUF, it is applicable only if business turnover is more than 1 crore, profession receipts are more than 50 lakh. And what are the payments covered under 194J? 5 types of payments are covered. What are they? Fees for professional service, fees for technical service, royalty, non-compete fee, director remuneration. Further, if at all the payer is a individual and HUF, if the payer is individual and HUF, turnover more than 1 crore, receipts more than 50 lakhs, then 2 payments only applicable for them. Fees for professional service, fees for technical service. Sir, individual is paying royalty, sir. Individual is paying non-compete fee, sir. Individual paying direct remuneration concept will not apply. Yes or no? Sir, I am an individual, sir. I am paying royalty. I am an individual, sir. I am paying non-compete fee. Will 194J attracts? No. No, straight away no. Because no, that's a loophole in the section. In Jan 25 attempt, they have asked this question. In MCQ or theory question, they have asked this question. Okay. Suppose an individual paying royalty. They give the data. Individual paid royalty. Last year turnover more than 1 crore. Many students will straight away apply 194J. Wrong. Because in 194J, if the payer is individual or HUF, only 2 payments were covered for them. Fees for professional service, fees for technical service. Sir, the payer is anybody else. Then 5 payments are covered. What is the threshold limit? The threshold limit is 50K, 50K, 50,000, 50,000, 0. Earlier the threshold limit is 30,000 per annum. Right now the threshold limit is 50,000 per annum. Even, sir, what about individual HUF? For them also the same, 50K, 50K threshold limit. Are you clear? Sir, I am a company. I hired one CA. To him I am paying 50,000 professional service. To him I am paying royalty also 50,000. Both put together 1 lakh I am paying. Should I deduct TDS? No. No. Because fees for professional service separate 50,000 is there. Fees for royalty separate 50,000 is there. So these are the limits which we need to apply separately. You should not combine the limit and then see for a particular person. For each payee, for each recipient, you should apply this limit separately. Are you clear? Director remuneration. I am paying to director 20,000 only, sir. Should I deduct TDS? Yes. How much TDS you should deduct? Now look at TDS you deduct. Professional service 10% TDS. Technical service 2% TDS. Royalty 10%. Non-compete fee 10%. Director remuneration 10%. This is the TDS. However, if at all the royalty is paid for, if the royalty is paid for cinemas, if at all royalty is paid by an exhibitor to producer, exhibitor to distributor for exhibition of cinematographic films, 2% TDS. Royalty on cinemas, related royalty. Royalty who will pay to whom? Movie theater owner will pay to distributor, or movie theater owner will pay to producer, or distributor will pay to producer. Royalty on cinematographic film, that is called share. Some share of the ticket no will go to the producer. Yes or no? That's it. So that's royalty. On that royalty, what is it? What is the TDS? 2%. Further, I'm paying some technical service or professional service or something. Okay, I'm paying that fees. But recipient is who? You know, a person engaged in business of call center. If the recipient is engaged in the business of call center, then again TDS is 2%. Then again the TDS is 2%. Are you clear? That call center point is not that important. Leave it. This point you understood, everybody. This point you understood, everybody. Further, 194J will not attract. 194J will not attract on personal expenditure. It is not applicable on personal expenditure. For example, sir, what do you mean by professional service, sir? Professional service. Professions means what? Notified professions. Legal, medical, accountancy. Yes or no? Company secretary, information technology, interior designer, film artist, sports persons. All that were covered. Sports persons are also covered under 194J. So if at all you are paying any fees to them, professional fee, 194J gets attracted. Suppose, I paid, for example, I underwent a surgery with a doctor. Medical, no. I paid 5 lakhs bypass surgery. Let us assume. Yes or no? One SSC paid 5 lakh rupee to the doctor for bypass surgery. Payment 5 lakh, more than 50. 194J gets attracted. No, it's a personal expenditure. It doesn't matter. Personal expenditure, TDS provision under 194J will not attract. Everyone understood or not? Now, in that section, you will have definitions for 194. What is professional service? What is technical service? All that definitions and meanings were there, ma. Look at that. In the book, we have crystal clearly given. Any person, all 5 types of payment. FTBS, FTS, NCF, royalty, DR. Individual synergy of only 2 types of payments. Fees for professional, fees for technical. Remember this, okay? Look at who is the payer, individual. Look at what is the payment they made. Look at what is the section. Apply the combination carefully. Now, what is the threshold limit? All types of payments, 50,000, 50,000, 50,000, 50,000 separately. However, for direct remuneration, no threshold. What is the rate of TDS? 10. But for technical services and cinematography claim, 2%. Further, if the pay means the person whom we are paying, no royalty we are paying him, technical service we are paying him, non-compete we are paying him. If at all they are engaged in business of call center, don't direct TDS at 10%, direct only at 2%. That's it. Personal expenses, TDS, if at all any payment made exclusively for personal purpose, no TDS at all. For example, in the Jan 25 or some exam, no, they asked this question. No, a CA is making payment to one CA who is teaching his son classes. Okay. Now, TDS applicable. He is also chartered accountant. He is teaching for his son. Okay. Now, he paid 1 lakh rupee. Now, payment of coaching fee for my son is a personal expenditure, not a business expenditure. Therefore, no TDS. That's it. That's how level the questions can be asked for. 194J over. Easy or not? Hello? Then now, 194C. Then now, 194C. 194C. What is this section? 194C. TDS on contracts. Yeah, 194C. TDS on payment to contractors or subcontractors. You know what? This section I call it as a residuary section. Basically, we can call this section as a residuary section. Sir, I made one payment. There is no other section that is applicable to me. You have to be very careful. Is 194C attracted? Check it carefully. I'm making payment for repairs and maintenance. It's called work. I'm making payment for AC maintenance. It's called work. I'm making payment for, some service, job work service, where I supply the material. He has to just do painting and then send me back. Work. It will come under work. Here, TDS is applicable on service, contract of work. Here, TDS is applicable on contract of work. Don't say works contract. Works contract is different. Contract of work is different. Contract for work. Works contract means GST law you have. That's a different. Works contract is covered here. Technically speaking, that is also covered here. Construction contract also covered here. TDS for carrying out a work. Understood? For example, I want to construct a building. I buy all the materials, cement, bricks, everything I'll buy. All plastering, everything, ceiling, everything I'll buy. I hired one construction builder and I told him, please construct me the building and give me. For that, he's charging a fees for constructing the building. I have to pay whatever amount I'm paying, 194C gets attracted. I hired one, I had a contract with one transporter where I told him early morning you have to pick up all my employees and then drop at my office at the company IT park. So I had a contract with some 5 big bus operators. Every operator will supply 10 buses to me, 50 buses. What is the duty? I will give address of each and every employee. So in that route, bus has to come. So 50 buses I'm running. Let us assume one supplier is there. Transportation of passengers. Okay. I am paying bulk amount for transportation of passengers. Or I'm paying freight charges to one transporter for carriage of goods. Look at the works contract definition. What are all covered here? Carriage of goods or passenger. Catering. Manufacturing or supplying a product. You're manufacturing or supplying a product based on customer specification using the material supplied by the customer. For example, you see goat notes you are using, right? Entire PDF I will send to the vendor. Okay? Vendor only will buy the paper. He will only buy the cover page. He will only print. He will only bind it. He will only pack it and then send me. Here, did I supply any material? Zero. I didn't supply any material. I supplied PDF. That's a different thing. Material means raw material. Sir, material you only supplied. No, material means what? Raw material. Did I supply any raw material here? No. 194C will not apply. Suppose I supplied paper. I supplied entire binding material, everything. Yes or no? Material entire I supplied. But I don't have printer. printing alone, you do it and then send me. Now for that printing he is charging me. Able to understand? For the printing he is charging me. That's a work. That is liable for TDS. Suppose you go to a tailor. He only bought the cloth. For example, you go to some showroom. They only buy the cloth. They take measurements from you. They stitch it and then give it to you. It's a sale of product. It's not a work. You give the cloth. You tell the measurements. You tell the specifications, everything. And then they just stitch it and then give it to you. Work. 194C is applicable on what? Work. If they're carrying out any work only, it does not involve sale of product, then only 194C applies. If at all it is a sale of product, 194C will not attract. 194Q will attract, or TCS provisions will attract. Understood? That's it. Or if at all you are doing broadcasting or telecasting, including production of program. For example, I want to run an ad in the TV. For that, I contacted one ad agency. I told them, sir, I want an ad. Okay, first you should design the ad. I will tell what specifications I want in the ad. They need to design the ad. They should contact with the television operator, broadcast, radio operators, all that. And after they design the ad, they need to telecast also. Here, they are not just telecasting or broadcasting. They are designing the ad and then telecasting and broadcasting. Work is involved here. TDS under 194C attracts. Simple. If I am just giving you one duty, in that some work you need to carry out and then do it, then that's the work. If there is no work involved, I will design the ad. I will design I will design the ad. I will produce the ad. I will actors, everything I will hire. And I finally made the ad. I went and gave the CD or pen drive to the TV operator. Sir, just pump, at so and so time slot, you play this in the advertisement. Here there is no work carried out by the TV operator. This does not involve any work. Therefore, no TDS under 194C. Are you clear? So 194C, do you understand? So for example, you are manufacturing. Suppose you are manufacturing and supplying a product based on customer specification using materials purchased from others. Customer did not supply any material. He just ordered me books. Shrestha books he ordered me to print. I buy raw material everywhere else. I just take his PDF and then print it. That's a sale of goods. 194Q will apply. So when I am paying for books payment for them, 194Q I should check. Able to understand. 194Q gets attracted only when my last year turnover is more than 10 crore. That's it. Clear everybody? Next. Then if at all you are making payment for professional services also, 194C will not attract. Now 194C, when it will attract, we understood. What nature of payment covered, we understood. What are all covered? Advertising is covered. Supply of labor for carrying out work. You're just supplying manpower. You're supplying labor for carrying out. You see ATM guards, all of them will wear some common uniform, blue color. Now that ATM guards, who supplied them? One vendor will be there, who will hire maids, all that. And whichever company, you see shopping mall, everybody wear uniforms. They are not employed by shopping mall directly. They were employed by contractor. Able to understand? Shopping mall will pay monthly some amount to the contractor for supply of manpower. So that is liable for 194C. Now it's a meaning of work. 194C. The amount is for work. Carrying out work by the contractor or subcontractor. Now when TDS gets attracted, simple, TDS gets attracted if single payment exceeds 30. Suppose single payment is 20,000 only, but in the full year I paid multiple times where aggregate payment is exceeding 1 lakh. If aggregate payment is exceeding 1 lakh, then on the entire amount you should deduct TDS. What rate? 1% TDS if the contractor is individual or HUF. If the contractor is a firm, company, AOP, BOI, the rate of TDS is 2%. 1% if the contractor is individual or HUF. 2% if the contractor is anybody else. Tell me, when we should deduct the TDS? Single payment is exceeding 30,000 for carrying out work. Or multiple payments you made in the year, all put together 1 lakh cross. Then also this section is applicable. That time what you will do, for example, 20K I paid first month, second month 20K, third month 20K, fourth month 20K, fifth month 20K, all put together 1 lakh only. Each payment is not exceeding 30, no TDS. All put together only just 1 lakh, no TDS. Next time I am paying one more 20 in the 6th month. 6th month I am paying maintenance charge of another 20. 194C gets attracted. Till now how much you paid, 1.2 lakh. into what is the rate of TDS? 1%, 1200 if the contractor is individual, 2% if the contractor is not individual and HF 2400. From this amount you deduct the 1200, from this amount you will deduct the 2400 and pay the balance amount. That's it. 194C over. Do you understand? Now the last section, 194M. The last section is what? 194M. Here what are you making payment? You know, you are paying for work only, or you are paying for professional fee or technical fee, or you are paying, or you may be paying for royalty, you may be paying for non-compete fee. Mainly here it is what is covered is professional fee only covered. Mainly here what is covered, ma? Professional fee is only covered. 194M. Third one, you are paying commission or brokerage. Sir, for works contract 94C is there, for P 194C, for professional fee 194J is there, for commission or brokerage 194H is there. Then why 194M is talking about these three amounts again? Because 194C, 194J, 194H are not applicable to individual and HUF whose turnover is less than or equal to 1 crore, whose gross receipts are less than or equal to 50 lakh. For them it is not applicable. That too, these sections do not apply for personal expenses. 194C is not applicable for personal expense. 194J is not applicable for personal expense. 194H is also not applicable for personal related commission. A marriage broker fixed a marriage, and this guy is getting a dowry of 2 crore. That marriage broker condition 1% of the dowry commission. That's how it looks. That's how they operate. That's how they operate. Now tell me, here it's a marriage related work. TDS section will not apply under 194C. Are you getting it? Sorry, 194H will not attract there, commission and brokerage. Understood? So personal expenses 194C, JH will not attract. Sorry sir, it's a business expenditure only, but my turnover last year is less than 1 crore. Last year my professional receipts are less than 50 lakh. Automatically these three sections again was not attracted. But I am paying work amount, you know, professional fee or commission or brokerage. Huge amount I am paying. How much, you know? More than 50 lakh. How much I'm paying? More than 50 lakh I'm paying. Very huge amount, or a high value transaction, guys. So department found, no, there must be TDS mechanism there also. So they brought 194M. Accordingly, as per 194M, what is the rate of TDS? Just 2%. What is it? 2% you should deduct. When? If the aggregate payment in a year to an individual, to a person, if the recipient can be anybody, total payment made in that year is exceeding 50 lakh. Sir, to the same person I'm paying work money, sir, I'm paying professional fee, sir, same person I'm paying commission, sir. All the three put together you should see 50 lakh limit. It's not contract fee 50 lakh, it's not professional fee 50 lakh separate, it's not commissioner brokerage 50 lakh separate. All the three put together to a single person you are paying. All the three put together more than 50 lakh you are paying. TDS at 2% you have to deduct. On which amount? Is it slab limit or threshold limit? Threshold. Threshold means entire amount you have to deduct TDS. On the entire amount you have to deduct. Remember, there are only two sections where slab operation will be there. 194N cash withdrawal, 194Q purchase of goods. Only these two sections slab mechanism works. Rest all other TDS mechanism, TDS sections, 24 TDS sections were there. Except these two, remaining 22 TDS sections that are there in our CA Inter syllabus. Threshold limit. Threshold means what? In the section 1 amount they will tell. If the amount crossed, on the entire amount it is. Threshold. Threshold we call it as. Threshold means what? That is the level up to which I will not apply the law. Once it crosses, I will apply the law fully. That's called threshold limit. Are you clear? That's it. So this is 194M. Look at 194M. So if you are paying, suppose no, I'm paying to doctor a surgery related fee, where surgery cost, hospital bill entirely 70 lakhs it came. I should deduct TDS under 194M. Sir, it's a personal expenditure. No, you will not have a TAN number, TDS written, all that. Not required. For IA, IP, M, for these three sections, TAN number is not required. For these three sections, no, TAN number is not required. Now look at 194M. Payment for works contract, payment of professional fee, payment of commission or brokerage. So now you are paying all these three, but you are not covered under CHJ, or you are making payment for personal purpose, and the amount exceeding is 50 lakh in a year. Therefore, the TDS is what rate? 2%. Yes or no? Suppose no, if at all already CHJ is applicable on that payment, then this section will not apply. This section will apply for which payment? Those payments which are covered under CHJ, but CHJ section will not apply there. That time M possibility is there, and TAN number provisions do not apply here. You don't have to have a TAN number. Remember, any section under TDS chapter, TCS chapter, if you have to liable for TDS and TCS, you must have a TAN number. Without TAN number, you should not deduct. That's the most important, because using TAN number only you file TDS statement. Using TAN number only you will pay TDS challans, all that. But that TAN number requirement do not apply for 194M, 194IA, 194IB sections. You see the combinations, how many combinations we have? Able to understand? That's it. 194M is also over. With this, TDS sections are over. Clear? Let's begin TCS ma. Let's begin TCS provisions. Major amendments were there again in TCS. Main amendments were there again. Under this rate of TCS, timber related rate of TCS has been changed. Okay. Then TCS under 206C1F, sale of motor vehicle and notified goods were there, right? Notified goods, now they notified. Then 1G, LRS overseas tour package, that was again changed. And the same thing is copied in the new Income Tax Act, and that was again changed. And you know what? 206C1G, overseas tour package and liberalized remittances scheme. This was amended in 23 first. It was amended in 2024 Finance Act number 1. It was amended in 2024 Finance Act number 2. It was amended in 2025 Finance Act. Now in Finance Act 2026 also it was amended. This is the only section I saw past 3 years regularly they are amending it. They themselves does not have clarity on this. So they are amending every time. Now look at simple sections ma, not a big deal. Now first 206C1 subsection 1. What is this? Suppose I'm a seller. TCS provisions are applicable for sellers ma. TDS provisions are applicable for buyers and service receivers. TCS provisions are applicable for service providers and sellers. Nothing but sellers. Sir, I am selling the following goods. Specified goods I am selling. What are the goods I am selling? Liquor, tendu leaves, timber, any other forest to produce. Timber or any forest to produce. Okay. And so here, other than tendu leaves ma. If it is 10 leaves, this rate is applicable. Understand that. Okay. Then scrap. Then minerals. If at all I am selling these products. Minerals means which minerals again? Coal, lignite, iron ore. Only these 3 minerals if at all I am selling. Or if I am selling scrap, timber, 10 leaves and alcoholic liquor. Or if I am selling any forest to produce. What is forest to produce? You can refer I say study material for meaning. Not required, leave it. You don't have to worry. What is the rate of TCS? Liquor 1%, scrap minerals 1%, timber 2%, whereas 10 leaves 5%. I have never seen all this in my life. Okay, fine. Anyhow, liquor is there, right? Don't think that when you go and buy in the liquor shop they will collect TCS. Not that one. Look at who is the seller. Seller should be who? Who is the seller? Same. We have seen 6 sections. TCS sections under 206C1 and 1F. Seller means the following person, any person other than individual. In case of individual and HUF, turnover exceeding 1 crore, gross is exceeding 50 lakhs. Then only TCS section under 1F will apply. What is 1F we have not yet seen? 1F we have not yet seen. Yes or no? Who is a buyer? Buyer is a person. If at all you are buying for personal consumption. Able to understand? If you are buying for personal consumption, suppose so many people who buy alcohol, personal consumption, TCS will not attract. Clear? Then, if the buyer is a public sector company, buyer is a government or high commission or embassy or consulate, if they are buying timber, 10 leaves, all that forest produce, TCS will not apply. Clear? Hello? Next, look at 206C1C. 206C1C. In the recent exam, this was tested as a 2 marks MCQ. In the recent Jan exam, it was tested. Now, what is this? You are paying, you are a seller. You are allotting a parking lot. You are allotting a parking lot or a toll plaza or a mine or quarry. You are allotting mine. See, mineral is different, mine is different. So, I am a seller. I'm a government where I'm allotting parking lot to somebody, or I'm allotting toll plaza to somebody, I'm allotting a mine or quarry to somebody. What is the rate of TDS? Sorry, what is the rate of TCS? 2%. However, if the person who is auctioning toll plaza, no, if at all he is a public sector undertaking, if the customer is PSU, no TCS. If the customer is PSU, no TCS. Yes or no? Now look at here, at the time of receipt, is there, right? At the time of receipt or at the time of debit, whichever is earlier. Debit is also there here. Just add that word. At the time of receiving the money or at the time of debit in my books. See, TDS, no, payment and credit. TDS, buyer will pay, right? For buyer it's an expenditure, right? For the buyer, he will credit the liability, no? So date of credit, date of payment. Whereas for seller, he has to receive it, no? Debit or receipt, whichever is earlier. Understood or not? Now look at next, third one. 1F. What is this 1F is about? You are selling motor vehicle or you are selling notified goods. You are selling motor vehicles, ma. Sale of motor vehicles for consideration exceeding 10 lakh. Consideration exceeding 10 lakh. What is 10 lakh? X showroom price, ma. What is that? X showroom price. On road price is different. X showroom price is different. X showroom price is the price which is inclusive of GST. And one important point I'll tell you. TCS provisions, you consider on the sale value, right? Sale value means excluding GST or including GST? Including GST. TDS, excluding GST. When you're paying rent, GST is there in that. GST you keep aside. On the rent amount only TDS has to be applied. If at all you are paying any amount on which TDS provisions attract, excluding GST you should deduct. Whereas TCS, invoice value, TCS will be counted. TCS is counted on the invoice value, inclusive of GST. Hello, everyone? Yes. Now, sir, I'm selling motor vehicle or I'm selling notified goods, sir. If at all the sale value, invoice value is exceeding 10 lakh rupee, invoice value is exceeding 10 lakh rupee, 1% TCS I have to collect. How much I have to collect? 1%. Now, notified goods, they notified, ma. Now they notified. What are the goods notified? Watch. There are many brands, Rolex, all that brands, Patek Philippe. There are so many international brand watches where the watch cost is 10 crore, 20 crore like that. TCS is applicable. Art pieces, boats, helicopter, sunglasses, bags, handbags, Dio, Louis Vuitton, all this were there, na? Shoes, sportswear, equipment, home theater system, horse for horse racing in a racing club or horse for polo. Whatever it is, you are selling horses, you are selling all this, you are selling collectibles like coins, handbags, all this. If at all per article, it is counted per article exceeding 10 lakh, TCS at 1% will apply. What is the TCS? 1% will apply at TCS, because these are all coming under luxury goods. These are all luxury goods. And car also, if the ex-showroom price is more than 10 lakh, two-wheeler or four-wheeler, doesn't matter. TCS at what rate applicable? 1%. Understood, everybody? Hello, everyone? The next 206C1G. This is one section where every student again confuses. Now look at this section. 206C1G. Hello, everyone? Are you clear? 206C1G. What is this 206C1G is about? This section talks about two types of sales. This section is talking about two types of sales. One, sale of OTP, overseas tour package. You are selling overseas tour package, or you are a authorized dealer. You are a authorized dealer selling foreign currency under liberalized remittance scheme. You are selling what, Arma? What you are selling actually there? Foreign currency under LRS, liberalized remittance scheme you are selling. One fellow is selling overseas tour package, another one is selling LRS, or it's maybe single person overseas tour package or LRS. Single. But OTP, separate limits applicable. LRS, separate limits are applicable. Are you clear? Now, sir, I'm a seller of overseas tour package. Biggest amendment here. Earlier it is up to 7 lakhs, all that is there. Now, sir, I'm selling overseas tour package, sir, up to 10 lakhs. The package cost up to 10 lakhs. Earlier it was 7 lakhs, ma'am. Please be clear. If at all I'm selling a tour package where the cost of tour package is up to 10 lakhs, straight away flat 5% TCS. Flat 5%. I open Make My Trip. I want to book a overseas tour package. I want to go Maldives, for example. 2 lakhs is a package cost. 2 lakhs plus, how much is the percentage? 5%. 10,000 they will collect from me. Straight away they will collect from me 10, because no, I am buying Make My Trip overseas tour package. You can just find open Make My Trip, you will find holiday packages. 5% they will collect if at all. The cost of foreign travel is up to 10 lakh. Suppose if the traveling is more than 10 lakh in a year, this is per annum limits. In the entire year up to 10 lakhs, 5%. If at all your overseas tour package overall cost is crossing 10 lakh, then 20%. On the extra amount, 20%. Are you clear? These will operate as a slabs. Understood OTP? Overseas tour package understood, which means is there any zero TDS on OTP? No. Even from starting 1,000 rupees, if it is a overseas tour package, 5% TCS will be collected. Straight away, 5% TCS will be collected. Understood or not? Next, suppose I am remitting under LRS money ma. Here it is not about tour ma. I am remitting money. Why are you remitting money? Abroad my son is studying, or abroad my relative is having a medical issue, or abroad my friend is there where he is asking me some money to lend. I am lending him. Whatever the reason, I have to send money abroad. How I will send? Through authorized dealer. Under what scheme I will send the money? Remittances scheme. Liberalized remittances scheme of RBI. I am sending the money. Okay, fine. What is the TCS rate applicable on that? For what purpose you are sending it? Sir, I am sending it for education or medical purpose, sir. I am sending it for education or medical, sir. If that is the case, on up to 10 lakh rupee, what is it? Up to 10 lakh rupee, 0%. Up to 10 lakh rupee, what ma? 0. Beyond 10 lakh rupee, 5%. What is beyond 10 lakh rupee? 5. Old limit is 7 lakhs ma. New limit is 10 and 10. Sir, you know what? I'm sending money for education of my son. This money is not mine also. I borrowed a loan from a bank. I borrowed that money as a loan. Out of the loan I'm sending, sir. If the amount is remitted for education out of borrowed money, 0% TCS. Earlier it was 0.5%. It was earlier how much ma? 0.5%. Finance Act 2025 amendment. How much is the amount if you are remitting under LRS? You are sending. I took a bank loan 40 lakhs for my son's education abroad, and this 40 lakhs I have to pay. My son has to pay fees abroad. He has to pay fees abroad. Okay, so 40 lakhs I have taken from him and then sending him abroad ma, out of the loan. What is the rate of TCS? 0. The dealer should not ask me TCS if at all I am remitting out of the loan. I should prove that it is out of the loan, then he will not collect any TCS. Suppose I am sending out of my pocket, then up to 10 lakhs 0. Beyond 10 lakhs 5%. Easy. Sir, I am remitting for some other purpose, sir. Not medical or not education, sir. Some other purpose I am remitting, sir. Up to straight away 20%. Up to first 10 lakhs is how much ma? For some other purpose. Up to 10 lakhs how much ma? 0. Beyond 10 lakhs how much ma straight away? 20%. Until now clear? Now biggest logic. Suppose no, sir, here by beyond 10 lakh it is what rate ma? 20%. Here up to 10 lakh it is 5. Am I rate of OTP? Now look at, sir, I am a seller. Sorry, I am a person. I bought OTP package and I'm also sending money for my son's education purpose outside India. Now here I bought 10 lakhs package already. Now I'm sending money beyond 10 lakhs to my son. Yes or no? I'm sending money again. Now here 10 lakhs is there, right? Are there separate limits? That is the question. For OTP, this is separate. For entire this, first 10 lakhs is separate. You see here, first 10 lakhs, 0. First 10 lakhs, 0. Under LRS, no, first 10 lakhs. Are you sending for education? Are you sending for medical? Are you sending for other purpose? I won't question. First 10 lakhs under LRS, 0 TCS. Sir, beyond 10 lakhs I am sending. Then I will ask you the purpose. Education, medical, other purpose. Sir, you said education, medical, then 5%. Other purpose you said 20%. You are remitting out of education loan, 0. Clear. Sir, I am sending money for purchasing a tour package, sir. Then up to 10 lakhs, flat 5. Beyond 10 lakhs, it is flat 20%. Are you clear? So again tell me, which means for education and medical separate 10 lakhs, for others separate 10 lakhs limit. Is that correct? No. Under LRS 10 lakhs. Under LRS you are remitting 10 lakhs, 0. Beyond 10 lakhs you are remitting purpose I want. For what purpose? Education and medical 5%. Other purpose 20%. Remittance out of education loan 0%. Now for OTP separate 10 lakhs limit again. First 10 lakh 5%. Next 10 lakh 20%. Over. Easy all of you. TCS provision understood or not? Now next. There are some clarifications, ma. Okay. That's it. I mean, these are not required. 2061 no. If at all you are buying timber, tendo leaves, all that. If at all you are a resident buyer and you are using the goods for power consumption and not for trading, you are using it for manufacturing and power generation, not for trading, then no TCS will be attracted. If at all you are buying timber, tendo leaves, forest to produce, all that, no, that for further manufacturing you bought, or for power generation you bought, not for trading purpose, then again no TCS will be collected by seller. That's it. Rest main theme of the provision I completed, ma. Theme of the provision I completed. Here no, I have CBDT circulars, remittances in foreign exchange. That circular only I told. First 10 lakhs, next 10 lakhs, that entire discussion I told. No, that's nothing but this circular only. Are you clear? Now what else is biggest amendment? In TCS no, in TDS no, earlier we have two more sections. 206 AB in TDS provision. 206 CCA in TCS provision. Up to Jan 26 attempt, these sections used to be there. Now they were removed. What are the sections, you know? If at all you are not a regular filer of IT return, this year you have to deduct TDS at a higher rate. This year you have to collect a TCS at a higher rate. Suppose from whom I have to collect TCS, he is not a regular filer. From whom, while paying amount, I should deduct TDS. If the payee or if the seller, if the buyer is not a regular filer, we have to deduct more TDS, we have to collect more TCS. That sections they deleted. 206C1H, seller of goods should collect TCS. That section also got deleted. Understood everybody? Those two sections were deleted. And next, further, higher rate of TCS if at all buyer is not giving PAN number. If buyer is not giving me PAN number, I should collect no seller. As a seller, TCS I should collect no. If at all he is not giving PAN number, then 2 times the rate I will collect. Then how much I will collect? 2 times the rate or 5%. Max rate cannot exceed 20. By the way, here 206C1H max 1, I said no, this section itself is removed. By mistake it was still there. Please strike off. This section is removed now. Okay, 206C1H got removed now. Whereas TDS, sir, you know, I'm a person paying the money to another person and he is not giving PAN number for deducting TDS, then rate given in the section or 20%, whichever is higher. For TCS, higher rate of TCS, what is the logic? 2 times the rate or 5%, whichever is higher, but cannot exceed 20. 206A, rate given in the section or 20%, whichever is higher. That's it. Easy. But for 194Q, maximum TDS 5%. That's it. So with this, TDS, TCS is completely done. Clear?